many of the world's largest oil producers, particularly those in the Middle East. US futures, meanwhile, move modestly higher as investors focus on a fresh batch of big tech earnings and the upcoming Federal Reserve policy announcement. Crude holds on to gains amid no breakthrough in stalled US-Iran peace talks. And Indian benchmarks ended their day on a lower note on Tuesday amid uncertain global cues regarding the US-Iran war. Weakness is likely to persist amid crude jolts and volatile global environment. The last and final phase of voting is underway in Bengal. More than 1,400 candidates are in the fray for 142 assembly seats across 7 districts, including Kolkata. Results will be announced on May 4th. Good morning. You're watching Markets Today with me, Shreyanti Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that and get you the handover for Wall Street as well. Now, Wall Street largely cooled off, and that's after Monday's records, with both the S&P 500 as well as the Nasdaq really retreating. And when you talk about the downtick, about 0.5% cut coming in for the S&P 500, Nasdaq 0.9% lower, and Dow Jones just a little bit of a downtick or a negative bias, if you can even call it that. But when you talk about the US futures picture, let's also take it in alignment with what investors are bracing for. And it's largely a heavy earnings slate that you're looking at after the bell, with 4 of the Magnificent 7 set to report. So you're looking at Alphabet, Amazon, Meta as well as Microsoft. So those 4 earnings that you're keeping an eye on, aside from the Federal Reserve decision as well. But you do have Dow Jones that's up about 0.2% in terms of the futures picture. And similar moves coming in for S&P 500. Nasdaq is the one that's up about 0.5% thereabout in terms of the US futures picture. But let's also talk about the bigger move in energy as well, because oil jumped sharply on fresh geopolitical jitters, with WTI settling near that $99 a barrel mark and Brent around $111. Now, this of course is putting inflation concerns also firmly in play, but you do have that 0.5% uptick, already elevated levels that Brent is largely building on, but $111 a barrel is quite the important level that you're looking at. In terms of some of the other updates, of course, you do have King Charles, who was being honored at a state dinner hosted by President Trump as well and First Lady Melania Trump. It's the first formal white tie event that you're looking at there since you did have President George Bush, in fact, hosting Queen Elizabeth back in 2007. So that's also something else that you're looking at. But with that in mind, quickly, let's also get back to the markets, take a look at the picture for Asian markets as well. And it's looking a little bit tepid, at least for Hang Seng right now. So that's largely the kind of picture that you have for Asian markets. Of course, you do have Nikkei that is down about 1%. Hang Seng, just the one that is outperforming, and Shanghai also a little bit of a negative bias that you're seeing. But let's also get back to oil. Talk about the major fault line that is emerging in the global oil alliance. Of course, you have supply concerns that are very much top of the mind right now. The UAE's exit from OPEC and OPEC Plus is something that marks more than just a policy shift, and it also signals a recalibration of power within the cartel. Now, Abu Dhabi controls roughly 4% of global oil supply and over 12% of OPEC's output. So that's something that you're looking at in terms of the control that they have as well. When you talk about the investment, the plan was really set in place before the regional conflict really kicked in. And when you talk about UAE, it's the second largest OPEC producer after Saudi Arabia. Now, in terms of word coming in from analysts as well, let's take a very quick look at that as well. Now, they're seeing this particular move as political and not purely economic. In terms of the regional power rivalry, they see that also intensifying. And you do have regional rivalries from Saudi, Pakistan defense ties to differences over Yemen and the UAE's deepening alignment with the US as well as Israel. So, bunch of factors that you're largely looking at. But of course, this departure is something that could really weaken the unity, just as energy markets are right now remaining stressed, with geopolitics also dictating oil flows. So broadly, that's the context that you're looking at when it comes to this particular exit. But with that in mind, let's also move on and get you the word going. As far as some of the counters that you should keep in mind are concerned, Eternal, in fact, reported a strong set of numbers in the fourth quarter with profitability exceeding analyst estimates. In fact, Mahima is joining in with some more details when it comes to this one. Mahima.
Right, Shanti. So overall, what we're trying to decode here is as to what's worked for Eternal in Q4. And as you rightly mentioned, profit did, of course, beat the analyst estimates. Plus, both food delivery as well as quick commerce have seen a good growth, robust performance. In terms of food delivery, it's grown slightly more than the 20% guided range given by the management. Quick commerce is improving in terms of profitability. The beat coming in from margins has largely come in from Blinkit profitability turned around. Margins increased to around 2.8%. The guided range still remains in that 5% range. District Hyperpure remained steady. Cash surplus is healthy this quarter as well. There's negligible impact from the macro situation of course, LPG crisis, West Asia crisis, etc. In terms of guidance, the management has gone ahead and talked about the 3-year CAGR growth in terms of where quick commerce stands. There is going to be at a 60% CAGR of NOV. Adjusted EBITDA outlook of around $1 billion by FY29. So this amounts to implied margin in Blinkit for around 3 to 3.5% in the next 3 years. And management hinted towards 70% growth in Blinkit and not 100%. Till last quarter, they were talking about a 100% growth in Blinkit, but this is on account of the aggressive dark store expansion that they're doing. In terms of key management commentary, monthly transacting users addition remains strong, on track to achieve 3,000 dark stores by March is what they've maintained their stance on. Profitability is non-negotiable aspect for them in terms of growth. They're prioritizing healthy growth over aggressive market share grabs is what the overall commentary takeaway is. In terms of brokerages, largely brokerages have maintained their stance, and just Citi has gone ahead and cut the price to 360 from 400. They're saying that revised guidance adds near-term wiggle in the room. Morgan Stanley has maintained overweight but hiked the target price to 347 from 345 earlier. Street could show mixed response to Q4 print, but they liked the internals. Outlook for quick commerce growth should lead to Street holding estimates is what they're saying. Investec has maintained buy with a target price of 375. Strong visibility into the future is what they're saying, that they do not rule out the near-term volatility driven by competitive intensity but remain positive on its execution. Lastly, UBS has maintained buy with a target price of 310. Solid medium-term aspirations have been laid out and something that they're liking. Lastly, Macquarie, the only bearish one on Eternal here, maintained underperform with the target price of 200. Sequential growth moderation, optimistic guidance, but competitive intensity will remain elevated, and this will turn blunt economics at macro market level is what they're saying. So this is the overall view of how things have worked for Eternal and what brokerages are saying about the Q4 earnings.
No, absolutely, and thank you so much, Mahima, for joining us with that detailed lowdown. So there you go. That's only one brokerage that is largely bearish when it comes to this particular counter. But let's also get you the word coming in from the management as well, because in the earnings con call, you do have the CFOs mention that they're planning to add over 3,000 dark stores by the end of March FY27. And the management is also saying that its quick commerce segment's growth guidance is on track and is likely to be over 60%. And that's for the next 3 years. Let's go across and listen into that bit of commentary.
On the store addition, I think we are on track on our guidance for March for 3,000 stores. I think we remain firmly on track. And beyond that, I don't think beyond that, we're going to give any guidance, or at least at this point, we don't think it makes sense. I think we've given overall guidance of 60% CAGR, and that would obviously mean some reasonable store expansion, but we're not planning to give out any specific number guidance on that.
Alright, and there you go. So that's Eternal. That's one counter that's definitely going to be in focus. But with that in mind, let's quickly get you the word coming in for the FNOQs. And after that, we'll of course move on to Maruti, and that's also one counter that you should be watching out for. But against a little bit of a mixed handover that you're looking at right now, Puneet, let's take a look at the FNOQs.
Well, most certainly, and we've seen yesterday as well that 24,000 as a key level continued to be under pressure across levels, but at the end, at least the implied open suggests a start in the green by almost 37 odd points, but not material enough to form a trend, and consistent rundown will be something to watch out for. But the positive yesterday was that we ended above the 24,000 mark for the Nifty 50, just a tad there, just 5 points away from that key level as well. Now we continue to monitor how the market reacts to certain earnings. Today is a big day. Eternal, as Mahima highlighted, Maruti will also be in focus. But in terms of the Nifty Bank, yesterday it took a knock because of the ECL provision mark and slipped back to the key support level of 55,400 to 55,500. Now once it slips below this, there's not too much support until 54,800. So you have to monitor this index today, how it performs in terms of key aspects. But if it recovers from yesterday's news flows, will be something to watch. In terms of what we've seen for the rollover data as well, that's been consistent, and probably we'll come back to that in just a bit. But foreign investor cash positions has actually yet again seen a selling. Domestic investors continue to plow in money, and the index long for foreign investors that we've been highlighting slipped a tad below 20%, has actually materially reduced to just 13% now. So a lot of those positions with the monthly expiry have been cut down, and fresh positions will probably be built in today, but we continue to monitor that. But it has slipped to a low of what we've not seen in the last 6 to 7 weeks. Put call ratio also slightly inched up because of longs being cut, calls being cut as well. Open interest distribution across key levels continue to be one of the key aspects. Now we've seen reduction of 24,000 level both for the calls and for the puts, while 24,500 continues to be a level which out of money call favors have been seen. So as and when there's been a reduction to 24,000 odd levels, the 500 point uptick essentially at call level continues to be one where investors keep focus on. Finally, in terms of stock-specific action, we've seen that in terms of gainers, Sammaan Capital was one, as well as Tata Consumer, which saw massive build-up of shorts yesterday. Waaree Energy saw longs being built in the system for this particular counter. But in terms of open interest losers, we've seen Vedanta and HCL Tech being longs were being unwinding, but the open interest thins out very quickly. So overall, very stock-specific action expected today, and likely earnings driving the conversation in terms of stock impact as well.
No, absolutely. And speaking of just that, Puneet, like I mentioned, let's quickly take a look at Maruti Suzuki as well. Largely looking like a mixed set of numbers. The revenue growth is strong, decline in profit that you're looking at. How are you looking at all of these numbers in terms of the earnings fine print, but also how a brokerage is looking at it?
Well, we did have the earnings coming during market hours, and you saw that market reaction coming through very, very quickly. But numbers, the profit was marred by a one-time impact because of the other income, which was at 500 crores versus almost 1500 crores. But in terms of revenue as well as EBITDA, a strong 27 to 28% growth each seen in this particular counter, and numbers largely in line with estimates that we continue to maintain as well. One-time impact which we spoke about, the net profit was also visible, but brokerages continue to maintain a very positive view on Maruti Suzuki. Morgan Stanley target price of almost 17,895, strong FY27 volume target, given that, and margins were also strong in this particular quarter. The management has guided for a 10% volume growth in the domestic market in FY27, which is 200 basis point above what Morgan Stanley had estimated. So that's a key positive for today for Maruti specifically, which the street will take focus on. The company is also adding 5 lakh units in just one fiscal year in terms of capacity addition. A lot of that is brownfield, so this will limit the fixed cost impact according to Morgan Stanley, and exports a key driver for this outperformance as well. The other brokerages that have also maintained a positive view is something as Citi. They've actually hiked the target price to 18,500 from I think 18,200 earlier. They've specifically mentioned that, of course, a one-time impact was visible, but when you look at the other ones, that they continue to maintain that management has specifically noted that the demand continues to be strong post the GST rate cuts, even for the smaller car segment, and the cost pressures are rising, but they could impact margins in Q1, largely what we've seen in terms of the geopolitical crisis. They've also increased their volume estimates slightly, which is also leading to the price increase as well. But slight trim in earnings, but a very positive view. Finally, Macquarie, 15,893 is the target price. Growth, of course, has been a focus in a tough macro environment at this point of time, is what Macquarie suggests. But the optimistic management related to demand is leading to them maintaining the target price at this point of time, while there could be some risk downside earnings at times of management. But overall, a very positive view nonetheless from Morgan Stanley, where they feel that There could be a slight constraint in the near term, but overall maintaining their buy as well and an outperform rating. So overall, most brokerages continuing to maintain their stance. Some have high target prices, but a good quarter for the company.
No, absolutely, and thank you so much for joining in with that entire lowdown as well as far as Maruti is concerned. But let's also quickly take a look at what the management also had to say. In fact, in the press conference, my colleague Danish asked R.C. Bhargava, the chairman of the company, about the future of small cars in India, especially given the ground reality of fast adoption of SUVs in the country. Let's go across and listen in to his reply as well.
I think that India is a country where small cars have a long-term future. The large part of the population in India, if they have to have decent mobility, have to have low-cost small cars. India is not a rich country where everybody has a per capita income of $40,000 and everybody can buy big cars. It's not happening, not in a long time.
All right, and there you go. So that's the word coming in from the management of Maruti Suzuki when it comes to the adoption of SUV cars, as well as the challenge that the country might be facing on that front, and small cars in terms of the future there. But let's also take a look at Bandhan Bank. That's also going to be in focus on the back of its Q4. Now, you do have the company's profit that surged as asset quality improved as well. In fact, Shivam is joining in with that earnings fine print there. Shivam.
Well, yes, Bandhan Bank has released a good set of results for quarter for FY26. So let's quickly take a look at the key points that have helped in the profits gaining better result. The margins of the company has improved on lower cost of funds, and yields have also improved. The other income growth was strongly supported by the growth in the fee income, and there has been a sharp decline in provisions, which has led to improved credit cost. Operating profit has seen a slight decline, and that was on the basis of higher operational expenses, while the MFI and unsecured loan challenges that were prevailing in the EEB book segment previously has been seen as normalized. Now, the profit of the company has also seen a strong growth in and has grown by 68% to 534 crores. Now, looking at the brokerage views, Mercury has maintained an underperform rating on the Bandhan Bank with a target price of rupees 130, and has stated that the recovery of the bank is underway and the growth is coming back. The PAT has beaten the estimates which were driven by the lower credit cost, and lower borrowing cost has also supported the expansion in net interest margin. Now, next is the Investec on Bandhan Bank, which has maintained a hold, and they have increased the target price to rupees 180 from 165, and they have stated that the lower credit cost has driven the improvement in return on assets by 1%, and asset quality has also improved in quarter 4.
No, absolutely, and thank you so much, Shivam, for joining us with that entire update coming in for something like a Bandhan Bank. So that's one counter that you should be really watching out for. But let's also talk about some of these other counters that are going to be in focus. So something like a BHEL, RVNL, Reflex Industries, and a bunch of counters that actually make it to Varsha's list bright and early this morning. Varsha, good morning.
Good morning. Let me start with the first stock which will be in focus is, of course, BHEL, wherein the company will be in focus as because of transfer of tech pack with DRDO. Then Ujjivan Small Finance Bank will also be in focus as they are expected to fund raise via equity. RVNL will be in focus on the back of order win, where company has received 39 crore order from NMDC. Now, Dr. Reddy's will also be in focus because they got the approval from Canada for their semaglutide, and company was expecting this approval. So this is a very big news, when it comes to Dr. Reddy's, and because of that, One Source Specialty will also be in focus because One Source is a CDMO partner for semaglutide, which treats type 2 diabetes for Dr. Reddy's. And One Source will also in focus on the other news as they received EU GMP nod for sterile product. Enviro Infra will be in focus as company is expected to acquire 51% stake in Suyog Urja. Reflex Industry will be in focus because of tax demand set aside by Madras High Court. Even CMAC, if you see, so they've got contract with ONGC, so this counter should be in focus. Keep a watch out on CMAC. Ratnavir Precision is expected to raise almost 330 crore as they've got approval from board. Piccadilly Agro have approved sugar business demerger, so this counter should be in focus. Then Blue Cloud will also be in focus because of MOU with GICB Africa. But few stocks which will be, in pressure or are expected to be under pressure is Greenply Industries, as their joint MD and CEO resigns, and Solara Active will be in focus as company has received 483 observation form 483 observation from US FDA. So these all counter will be in focus, but the two stocks which should be in focus and which you should keep on your radar is of course Dr. Reddy's and OneSource Specialty on the back of semaglutide approval, generic semaglutide approval in Canada.
Absolutely, and thank you so much, Varsha, for joining us with that entire update. So there you go, that's Dr. Reddy's also that should be making it to your list as well, and we'll talk about it in greater detail perhaps, but let's also take a look at the government's commentary as well coming in terms of stepping up efforts to support the textile sector, with trade advisor Bipin Menon also flagging a series of duty rationalization proposals. These include potential cuts on the caprolactam and nylon chips, along with duty elimination on key inputs that includes rayon grade wood pulp and certain inorganic elements as well. There's also a push to ease anti-dumping duties on select yarn segments. Let's go across and listen in to that bit of commentary.
We're also further taken up some other inputs that are not part of this notification, which includes caprolactam and nylon chips. We've also been pressing for the rayon elimination of duty on rayon grade wood pulp, which is an input for the viscose segment, and also inputs for the glassware manufacture, where I think there are a lot of inorganic chemicals which are inputs for that.
Alright, then there you go. That's the word coming in for the textile sector. Let's quickly talk macros before we get back to Dr. Reddy's. Like I was mentioning, India's industrial growth though has slowed but still managed to beat expectations. Now the index of industrial production, or IIP, grew about 4.1% in the month of March, marking a slowdown compared to 5.2% in February. Despite the moderation, the number came in higher than street estimates, offering a little bit of relief. The slowdown comes amid global uncertainty, including ongoing geopolitical tensions linked to the Iran conflict, and that's also something that you're looking at as well. And in terms of the sector-wise picture, the drag came largely from weaker performance in key segments like manufacturing and power, which pulled down overall growth. But the fact that growth remains above estimates suggests that underlying demand is holding up at this point in time, even as external risks really continue to weigh on sentiment. So that's largely the story that you're looking at. But with that in mind, quickly taking a look at Dr. Reddy's, like I mentioned, and like Varsha also mentioned, you do have Canada that has approved its first generic versions of the blockbuster diabetes drug Ozempic, marking a key milestone in the global race to make GLP-1 therapies more affordable as well. And the country's regulator, Health Canada, has in fact granted drug identification numbers to semaglutide injections developed by Dr. Reddy's labs. Semaglutide is the active ingredient, mind you, in Ozempic, originally developed by Novo Nordisk, and that's something that you're looking at in terms of this particular approval. And this is quite important to take a look at one other counter that you should be watching out for. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New Year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. Now, let's begin with the big one. And the shocker yesterday, Alex, was UAE walking out of OPEC Plus. That was the big headline. And of course, they want to sell more oil. They don't want to be constrained.
Yeah.
But the timing raises a lot of questions.
It's been brewing for some time. You said it, actually. There have been differences on the policy front, particularly with regard to holding back oil supply for a while between Saudi Arabia and UAE, as you pointed out. It's going to be interesting once that blockade opens up, though, because from India's perspective, remember, UAE is the closest in terms of oil suppliers.
Yeah.
And so from that perspective, we could get a lot more supply. They could, from what I've read, double capacity. And that's quite a bit.
That's what they want to do. But I wonder if it's only about the oil. Is it also about realignment after what has happened in this conflict? So here's what's happening. UAE is exiting OPEC and OPEC Plus. They produce 3.5 MBPD of oil. That's million barrels per day. The capacity expansion target is up to 5 MBPD by 2027. Investment plans set before the regional conflict itself. And UAE accounts for 4% of the global oil supply, 12% of total OPEC's output. UAE, in fact, is the second largest OPEC producer after Saudi Arabia. Why are they doing it? Move is seen as political, not purely economic. Regional power rivalry is, of course, intensifying as well. And while Saudi Arabia forges a defense pact with Pakistan, Saudi Arabia and UAE do differ on Yemen's strategy. UAE is deepening ties with US and Israel. Their OPEC exit, though, is not unprecedented. They were most compliant with the production quota in the past, and exit may weaken OPEC's unity amidst the stressed markets. There are a whole host of countries, so this is not without precedent, whole host of countries who have come into OPEC and then left, and then some of them have even rejoined. Let's see if UAE does that. But their timing of moving becomes very, very crucial. But that's not done much for oil either here nor there. Let me go through what the global setup has been like. And US markets ended lower, dragged down by tech stocks. Tech stocks stumbled after the Wall Street Journal reported OpenAI has missed revenue targets, and it just had a domino effect. If you pull up the indices, all three in the red in trade yesterday, but it was the Nasdaq which was down about 1%. Futures, let's pull up futures as well. A bit of a stalemate going on as far as this entire negotiation between US and Iran is concerned, which is why not much movement on futures either. All eyes, frankly, are now on Mag 7 earnings and the Fed outcome, which is going to come. Some of your major tech companies are going to report tomorrow and tonight, India time, and tomorrow. And last year, when they reported at this period, they announced major capacity expansions. The question is, will they continue in that trend? Bond yields, meanwhile, are steady ahead of the Fed decision tomorrow. This will be Powell's last Fed meet as chair. So it's an important one to watch. And in any case, what the Fed thinks about the world right now. 10-year is at 4.34%. Crude prices have stayed elevated. No sign of a US-Iran deal at all. Brent is at 111. And of course, UAE leaving OPEC Plus is not really helping, because even if it increases its production, that's not going to happen anytime soon. Let's pull up Asian markets and how Asian markets are trading right now. You have the Nikkei down about 1%. Hang Seng is up about 1.5%. Let me pull up the implied open for you before we start off our first conversation with David Roche. You're showing a 38-point uptick. So nothing major moving in Indian markets either. David Roche joining in this morning. He's Strategist Quantum Strategy. David, a very good morning to you. Want to get your take first on how you're seeing UAE's exit from OPEC Plus. Is this a larger reset at play?
Well, I think you summarized it very well. You don't need me at all. But I'll try anyway to emulate your expertise. The first thing is it doesn't change the price of oil for the moment because you can't move any oil. It's as simple as that. The blockade has stopped the movement of oil, and that's a major threat to the world economy, which is probably going to start to bite as inventories start to run out in places like Australia, the UK, and Europe within the next 4 weeks. So we can pass on from that. The UAE is not going to save our bacon there. What they can do is increase the production, as you said, to 5-6 million barrels a day from approximately 3.5. Now, that is very significant. That would add probably about 15% to the output of oil of the Gulf states. So that would be a really big increase. And if you take the world picture, it's probably going to add 2-3% to world output. Now, because the price of oil is extremely inelastic, which means there's a small change in volume produces a big change in price, what this would do is actually to lower oil prices down the road on a global scale by 5 to 8%. So you get 2% more oil out of the UAE in terms of global production, and that is enough to change the price by twice as much in terms of percentage. That's very significant. Now, the third thing I would say is that you quite rightly said that this is not all about oil or economics. It's all about politics. And I think the risks are that you will now have a completely fragmented front of minor and major Gulf states which don't get on together, looking for alliances with Pakistan in the case of Saudi Arabia, with Israel in the case of the United Arab Emirates. And these different allegiances and potentially nuclear dimensions, because Pakistan is nuclear, Israel is nuclear. So this is a core instability in the region. Now, I would put it to you that if Iran retains its strategic control over the Gulf, which I think is highly likely, then Iran is going to be faced with not a united front from the Gulf states, including Saudi Arabia, but a disunited front. And that, I think, is a recipe for instability and indeed local wars down the road. So those three aspects, I think, are the most important.
Okay, so therefore, the only thing that we can do at this stage, David, is build scenarios. And you've just laid out one overarching scenario. If the control of the Hormuz Straits remains with Iran, assuming that passage starts again, and you, in conversations with us in the past, you've pointed out that the absolute core aspect in anything near term is the movement of oil. Assuming that once again restarts, if you're talking about 3.5 million barrels per day going up to even 4.5 or 4, what are the implications for oil prices? Previously, we were talking about the possibility of it coming back to $80 to the barrel. With that increased supply, is it possible that it will fall further?
Well, now, as you say, the only thing we can do is make scenarios. That's not quite true. We can also pray. I think you have quite rightly identified two currents which are contradictory. The first is that the increased production of UAE would have a disproportionate effect on the price of oil, which of course is very good for countries like India, which import oil. But the reality is that a small change in the volume of output influences prices by a much bigger percentage than the change in the volume of output. That's just the nature of price inelastic commodities. So if you got an extra 2% of world production out of the UAE, you probably would get a fall of between 5 and 8% of world oil prices. Now, the second thing you identify was that if Iran retains strategic control of the Gulf, then the ships are not going to flow through the Gulf in the same way as they did in the past. So let's take a scenario and let's say that only half of the ships, instead of 150 ships a day, you got 70. Okay, that would not be enough to move enough oil to reduce the oil price below, say, $90. So balancing one thing with the other, the instability of a stronger strategic Iranian position, plus the added output of the Gulf, what can I tell you? Volatility. But my own personal, being naturally very pessimistic, my own personal preferences for a scenario where the improvement in price from the UAE extra output is more than offset by the instability of actually the control of Iran and the difficulty of getting that increased output to market.
It depends on whether you see the glass half full or empty. David, thanks so much for taking the time. Pleasure speaking with you.
And you.
Right, so to that last point, if you're an optimist, then anything that starts moving and any improvement in Iran will lead to a dramatic downside in oil beyond what was initially being penciled in.
Yeah, it's becoming clearer though now what needs to be sorted out. I think that's a bit of a positive from all of the commentary. And this is something that Marco Rubio also said, because there is a proposal from Iran. Iran is saying open up the strait, and we'll talk later about nuclear. But now America is saying, but who's going to run the strait? We're not going to have a situation where Iran gets to decide who goes through the strait and pays how much to go through.
Yeah.
So that needs to be tied up, which doesn't seem as impossible to come to a solution as it was looking like a few weeks ago. So let's wait.
Fingers crossed, fingers crossed. Let's talk about...
Just the comment from the Shell CEO on the blockade was interesting, right? That he said, he's quoted as saying that we are talking about roughly 900 million barrels that haven't been produced in the last couple of months and have been replaced by drawdowns. His assessment is that this damage of oil will last well into 2027. I mean, this is the Shell CEO, so you probably give it a little bit of credence about him knowing what's happening. That is not a pretty picture, unfortunately.
Well,
my only question is, before this happened, there was a glut of oil in the world.
There was.
The oil prices just wouldn't move. All your energy agency outlooks were about demand going down and too much supply. So where did all of that supply suddenly go?
And the other thing is...
It's stuck. It's not disappeared.
And the other thing is that we have to bear in mind that these are countries, the producers, that are going to be incentivized to get that oil out as quickly as possible.
Yeah, there might
We're
just
talking
be a
about
fire
a
sale.
third or 4/10 of their economy that's depending on oil prices.
Good for India.
So, yeah, good for India. In that scenario, with the buyers coming back into play. All right, let's talk about what happened in trade yesterday. And you had foreign institutions that continued to sell. They've sold for a few sessions in a row. They net sold equity worth 2,100 crore rupees. Domestic institutions net buying to the extent of 1,700 crore rupees. The Nifty 50 erasing half of what it gained on Monday, holding above that 24,000 mark, in fact close to 24,100. The Nifty Bank was the underperformer in trade yesterday, down about 1.5%, and it was the PSU Bank specifically that weighed heavy. So the PSU banking index dropping as much as 2.15%. It was the worst sectoral performer in trade yesterday. The broader markets actually outperformed the benchmark. They ended in the green. Just very marginal gains though, just about 0.1% for the mid-cap index and less than that for the small-cap index. You had most sectors that ended in the red, with the banks, as I said, underperforming. And you had the IT index that also lost about 6 to 0.7% or so. The market breadth tilted in favor of the declines. And once again, you have earnings that is front and center, a lot of sharp reactions to that.
A lot of sharp reactions to that, a lot of very interesting results slated to come out today. Ignore the Nifty, but beyond that, and we'll get to that in a moment. I don't know if Tamanna is going to highlight some of those, but some very interesting numbers today. But before that, the trade setup. Yeah. It almost seems, I don't know if you guys feel like that, that markets seem to be wanting to rally and dips to be bought into. That's at least the texture of the screen is telling you that. But I wonder if oil at 111 on Brent and 100 on US crude poses that caution, warrants that caution. My guess is yes, but maybe the market looks at, are we closer to the end? And maybe the market is looking at for the last 2 weeks that we are closer to the end, but it's not happening. Hopefully it will happen soon. Very interesting that we are seeing all forms of energy related stocks doing well on individual days, and we've been highlighting it, all three of us, like broken records for the last few days. Look at what happened yesterday, right? I think HCC had some activity, Valchan Nagar had activity, and everything else around it, BHEL, some profit booking otherwise, but broadly, I think you see those set of stocks, they're really making a move, anything related to nuclear, if you will. And cement companies are posting good Q4 numbers. Maybe the top lines are not quite there, but the revenue, the margin performance and the bottom line performance is there. We've seen 3 now, and all 3 have looked decent, and there have been reactions. So I wonder if that continues to stay center stage. And just those earnings, guys, today, we'll see Adani Power right there. We'll see Granules today, and just the rally before the earnings has probably points towards the numbers looking good, and I'm pretty excited. I won't be there tomorrow, but I'm pretty excited to hear the management first on our channel tomorrow. So that is there. HEG, with all that happening, graphite electrodes. Naveen Fluorine, I remember Somit telling that the dealers are telling him that the numbers are going to be blockbuster. Then there's Sterlite Tech, Vari, Bajaj Finance. It's a day which will have some very interesting and positive numbers, very likely. So looking forward to the earnings today and the commentaries tomorrow on our channel.
Yeah. You know what I found also quite heartening, and this happened right as we got into close yesterday, Eternal's numbers that came in and the kind of swing that Eternal took. You should pull up the intraday actually. And Swiggy mirrored it, even though it was Eternal's numbers. Much ahead of expectations. It was a 5% upside nearly. Yeah, an intraday swing. And Swiggy mirroring what was happening with Eternal as well, because what was that segment and that company's reportage telling you about? Whether, and even their commentary which came in after their con call, is the LPG crisis hitting? Is demand getting hit? That doesn't seem to be happening. And that, I think, will be something to watch out for today as well in that entire space. It's just giving you a peek into that economy and into that space. Of course, the numbers are for the previous quarter, but in their commentary, in their con call, they're also talking about how
very interesting.
They've not really seen any hit of LPG prices. And that's the first place you'd see it, right? If suddenly restaurants can't deliver and then orders were going down.
But I wonder if cloud kitchens have switched to induction, because smaller kitchens would have the ability to switch faster.
But then that's telling you that there was enough flexibility in the system to adapt fast enough so that there was not enough damage. So I think that's one thing I would just highlight. Apart from that, of course, the May F&O series is kicking off with a clear tug of war between bulls and bears. The Nifty managed to cling on to the 24,000 mark. The technical setup suggests a sell on rise mentality. In contrast, broader markets continued to outperform. The Nifty mid-cap index broke above the 60,350 to 60,400 resistance zone to close higher. The small cap index also moved decisively past the 17,900 to 17,920 range. The index is currently trapped in a no man's land between its short-term and medium-term moving averages, signaling a lack of directional conviction. Resistance levels for the key index right now, 24,150 to 24,200. This is the primary supply zone. The 50-day exponential moving average, that's the DEMA, currently sits around 24,200 and has acted as a stiff ceiling for 2 consecutive sessions. 24,500 is acting as the ultimate barrier for bulls. Support levels now at 23,950 to 24,000, the immediate psychological and technical floor. 23,800 to 23,810 is a decisive support zone. A breach below last week's low, that was 23,813, could trigger a cascading sell-off towards 23,500. For the bank Nifty, it's showing more significant weakness than the frontline Nifty, fallen below short-term moving averages and the previous week's low. Immediate support sits at 55,270. A breach here opens the door to 54,700. Resistance, significant selling pressure expected at 56,000. So those are some of the levels you need to look at. But yeah, the May series is in place. Puneet, what's the setup looking like?
Well, thank you for that. We did see yesterday in terms of rollovers being a very interesting data point when you get that update today as well. But largely just a mild uptick at the implied open. We did close just a tad below the psychological 24,000 mark. So continue to monitor that. and slipped on the Bank Nifty to 55,400 odd levels. Now, that's largely led by what happened in the ECL norms and the reaction to all those banking names. So we're there at yet again a key support level, and barring this, we don't have too many support levels below at the 54,000 odd levels as well. So again, a very, very volatile period. Could be something to watch on Bank Nifty. If it continues to sustain these levels, move above close to that 57,000 mark, yet again will be something to watch. But this will be a key one, at least for today. We've seen that the rollover data yesterday for the Nifty was almost at 57% as well. Now, of course, a lot has increased in a 19% jump again for the May open interest. But for the Bank Nifty also yesterday, the positions changing from April to May have gone at almost 30% today as well. We've seen an increase to 32% as well on this index as of now for the Nifty Bank. Finally, in terms of what we see in the foreign investor positioning, yesterday sold 2,100 crores, but the index long, which was at almost 19.5%, has actually slipped to 13.0% now, which indicates that a lot of positions have been cut down yesterday. Fresh ones will be built in today, but not too many rolled over by foreign investors, at least in yesterday's trading session. And put call ratio also signifies that similar longs as well as calls being cut. And the open interest distribution close to levels, very similar picture there. That 24,000 is a key level for both calls and puts, and 24,500 for the calls. Finally, in terms of stocks, we've seen a couple of stock-specific action yesterday. Sammaan Capital and Tata Consumers saw build-up of shorts, while in terms of the others, open interest losers, not too many. So only Vedanta was the one which saw longs being unwind in the system. May 1st is, of course, the deadline for demerger. But apart from that, HCL Tech, longs unwinding, but not with too much rigor. So yet again, a day where a lot of stock-specific action will be seen, and a lot of results, especially on the benchmarks, will continue to be in focus.
Okay, thank you for that, Puneet. Let me go across to the stocks that are on my radar. I'm starting with Motherson Sumi Wiring. It's a thumbs down. You have to look at this company in a couple of ways. The quarter right now saw a few misses. The EBITDA missed estimates, which is why the thumbs down, and margins were down about 143 basis points Q on Q to 8.2%. Having said that, the company's internals and fundamentals are very strong. So look at it in that context. The EBITDA margin miss was led by the persisting copper price inflation. There was a complete pass-through with a 3M to 6M lag, which will be visible in the first quarter numbers for FY27. The new Pune plant is still at 50% as a customer postponed its model launch. A delayed ramp-up of new plants has also impacted utilization and margin recovery. Here's what MK is saying on the numbers. They've maintained a buy with a target price of 45 rupees. They're saying the Q4 results were a mixed bag. Revenue growth accelerated, but margins took a knock. EBITDA missed estimates. It was about 4% below the street estimates and 11% below their own estimates. The stock also trades at 30 times FY28 earnings. Nuvama maintains a buy with a target price of 60 rupees. They've said EBITDA inched up 1% year on year to 270 crores, below our estimates of 290 crores. They're focusing on strengthening its presence with 30 facilities to support demand from customers for ICE, hybrid and EV wiring harness. They are also looking at the multiples, which is 40 times. So mixed bag on Motherson Sumi, but looking at the overall numbers, maybe a thumbs down at that point. Of course, you will hear from the management at 10:15 this morning. Any thoughts on Motherson?
So Puneet was telling me that their new plants coming up consistently is hitting their EBITDA every quarter, but it's a part of a strategy that they've given. Now, independent of that, a margin hit is a margin hit, and I think the markets will not like it. So I'm completely in agreement with you.
Yeah, that's really the concern. Garden Reach Shipbuilders was a thumbs up. Revenue up 29% for the quarter, 2,119 crores. EBITDA up 61% at 355 crores. EBITDA margins have also improved at 16.8% versus 13.4%. Net profit up 24.1% at 303 crores. Remember, this last quarter was a soft one for all defense companies. This one for Garden Reach at least seems to be a decent one. Star Health is the third one on my list, and it seems like a strong set of numbers. Revenue, which is net premium earned, is up about 14% at 4,327 crores. Net profit at 111 crores versus 51 lakhs. Here's what Citi is saying. They've maintained a buy and hiked the target price to 665 rupees. Their earlier target price was 650. They're saying the business turnaround is gathering momentum. Net incurred claims ratio improves even on the back book, unlike most vintage retail health products of ICICI Lombard. New business momentum to sustain even as moderating from peaks. Star Health remains their preferred non-life insurance pick for Citi. So there's another insurance company that's reported Go-Digit, but that was a bit of a mixed bag.
It was. I've also got earnings on my list, and all three. CEAT was expected to post a good set of numbers. Remember, in the run-up to the earnings season, you were already getting priced in for a few of these tire companies. But take a look at some of the key takeaways. You have had healthy volume growth, and that was led by the OEM as well as the international business lines. Replacement volumes were a little flattish, and remember, for CEAT in particular, it accounts for over 50% of the total volumes. The realizations were up marginally on a year-on-year basis, and they were flat on a QOQ basis. But raw material costs was also flat on a sequential basis. So you have had a significant expansion in the margin both on a year-on-year basis as well as QOQ, and that has resulted in the numbers that you see on the screen. So take a look at the snapshot, a 23+% improvement in the revenue, EBITDA up as much as 53%, and the margin expanding to 14% compared with 11.3% in the comparable quarter. The PAT number as a result is a multiple of what you saw in the comparable quarter, 244 crore rupees. Watch out for this one. It was expected to do well. It has. Bandhan Bank. Now, in most metrics, this is a bank that has posted a good set of numbers, and I'll talk about the one niggling aspect. Asset quality is improved, and this is central for this bank because it has been plagued by this issue, but the core growth was flat. That is the NII growth. The fresh slippages have actually fallen. They've remained elevated at 10,300 crore rupees, but it's a far cry from the elevated levels that you've seen in the past quarters. The credit cost as a result has fallen to 2% versus 3.3% even in the third quarter and 3.9% in the same quarter a year ago. Advances have grown at a decent pace, close to 13%, and deposits are up as much as 10%. They've seen CASA ratio improvement, again positive from the perspective of cost of funds, a 204 basis point improvement on a sequential basis to 29.3%, and the net interest margin has shown an improvement of as much as 30 basis points to 6.2%. Now, critically, the return ratios have also improved. The ROA has improved 40 basis points and 68 basis points respectively year-on-year QOQ to 1.1%. So these are better numbers that you've seen in a long while for Bandhan Bank, and they're also showing certain improvement in asset quality in their microfinance book, which is good to see as well. And finally, Sanofi Consumer Healthcare. Quite a few things that were going badly for this company have started going well again for Sanofi Consumer, and particularly it has to do with the relaunches of certain recalled products that have come through. Domestic sales have improved as much as 15.5%, led by those relaunches. Export sales have risen quite substantially, and the EBITDA margin expansion, or the EBITDA expansion, is led by lower material costs as well as or rather as a percentage of the revenue. If you look at that metric, there's a significant improvement that has taken place. All told, again, you have the margin that is improved to 38.7%. The PAT number is up as much as 36% at 67.8 crore rupees.
Yeah, no, interesting choice of stocks. I have 3 stocks, guys, and then I have 3 more, and I'll explain why. Okay. First, my 3 stocks, which we have which are from amongst our 9 stocks. So Greenply is the first one on my list. Revenues were up 19% at 776 crores versus 649. EBITDA up 37% at 93 crores versus 68 crores. And a net profit at 86% at 30 crores versus 16.5 crores. Now remember, yours MDF prices have risen in the months of March and April. I presume that this good piece of the EBITDA performance may well last into quarter 1 as well. I'm looking forward to talking to Parag Thakkar today because he had mentioned about this being as one of his key holdings. The only fly in the ointment is that they've announced the resignation of Manoj Tulsian as the joint managing director and CEO. Does this hamper the sentiment on the stock? Small cap stock, I think from what I remember, Parag Thakare said available at 1 times price to sales. Let's wait and watch what Greenply does today because of their EBITDA performance that they've given. Skipper, revenues were up 29.4%, EBITDA up 40%, EBITDA margin at 10.4 versus 9.6, and net profit up 62%. So pretty strong performance out there, 78 versus 47 crores. The FY26 revenue growth, though, despite this Q4 EBITDA performance, the revenue growth has come in at the lower end of the guided range. It's come in at 20%. The guided range was 20 to 25%. So not necessarily a blowout here. And from what analysts who track this company are saying, that exports may face headwinds in the near term. The order inflow growth slowed down to 6% in FY26 because Q4 order inflow just plummeted substantially. So on the ordering side and the export side, there are headwinds here. Don't know if Skipper really has a rara move and then continues, because FY27 outlook may not necessarily be the best, even if margins have performed well in Q4. Very quickly, what could do actually really well is MV Photovoltaic. It's not an expensive stock, by the way, in the power ecosystem, but revenue is up 62%, EBITDA up 58%, so a slight dip in the margins relatively. So 32.8 versus 33.7. In that sense, it's a bit of a dip, but the net profit up 89% and brokerages are very constructive. The first cuts that I read were good, and Jefferies in the note have hiked the target price to 360 from 320, and they speak about how there is a beat in strong growth visibility, valuations are okay, power demand looking okay, find valuation attractive. The last line of this note, find valuation attractive at 35% discount to peers. Wonder if this leads MV Photovoltaic higher. And guys, these are my 3 stocks, but 3 other stocks which will be in focus. Varsha told me this is worth talking about before you guys sign off. Semaglutide.
Dr. Reddy's.
So Dr. Reddy's, one source because it's the CDMO partner for Sema for Canada, and Shelley Engineering Plastics because it manufactures the pen for this thing. So viewers, as you would know, Dr. Reddy's has gotten a clearance for semaglutide in Canada. It's a big deal. The stock will react. We'll talk about it in detail, of course, but that's the...
If I remember correctly, even in the recent past, the stock went up, what, 8-9% on one day?
It's been rallying because there's a process to actually get approved, and once they got registered, their DIN number, etc. got registered, the stock started rallying, then the company had to come and say, no, this is just process, we haven't got it, then it cracked. You know what, we'll take a very short break. Let's get Varsha on the other side to explain why this is important. We'll be right back. I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Welcome back. You're watching India Market Open. Mixed set of numbers for Maruti Suzuki. Let's first set things up before we get you a conversation with the management. Puneet joining in. Puneet, what stood out?
Well, thank you for that. Definitely the EBITDA number was one of the big key aspects and a positive one for Maruti in this particular quarter. Profits missed by almost 500 crores, but that's largely because of an other income component. So other income was 500 crores versus 1500 crores in the same time last year. Hence that differential, but largely positive numbers. Brokerages have also continued to maintain a positive view. The two key aspects, of course, one was EBITDA, but the other commentary that came in the analyst call was that the management expects a 10% growth in the domestic market for FY27. Now, this has come for in the conference call where the SIAM estimate is just 5 to 7%. So it could be a year where FY27 number is a key positive, and Morgan Stanley has also picked up on this growth aspect. Citi has also hiked the target price to 18,500, now giving substantial upside from these levels. But overall, numbers that were in line with estimates, margins were strong, and growth guidance for the next year is also quite positive.
Right, brokerages were quite bullish on Maruti Suzuki. All of the, in fact, Morgan Stanley clearly mentioned that the 10% growth of volume that they are looking for FY27 is nearly 200 basis points more than what they were estimating. So that's a positive point coming in for Maruti Suzuki. But the only concern that the street is now seeing is largely on the commodity cost. And now to discuss that, we are now joined by R.C. Bhargava, chairman of Maruti Suzuki, to talk on the results and more. So firstly, to start off with, crude prices continue to remain high. Now, at this moment, the impact of the same has not been passed on to consumers. But if petrol prices increase, what could be the impact of that? Historically, has Maruti seen any impact on demand whenever retail fuel prices have shot up?
Normally, petrol prices or diesel price increases have not had any sustainable impact on demand for cars in the past.
Okay, speaking about the commodity cost, now until March, commodity cost for the company was largely benign because of the war. But now I believe company will start seeing the impact of higher aluminium, copper and steel prices. What could be the impact of the same on the margins? And if you don't pass it on to consumers, what kind of price hike would you require?
That's not correct. If you look at our last year's accounts, it's the commodity prices last year which resulted in a 2% increase in the material cost as a percentage of sales. And so prices last year actually were adverse. This year, we are considering the whole matter. We haven't taken any decisions yet, but we have to take all factors into account as to the war, the impact on prices, exchange rates, what will happen. And then we'll take a decision on what should be the price. I can't give you anything more exact than that.
Right, sir, but I was specifically focusing on the war. Because of the war, the increase in commodity prices was still not impacting Maruti in fourth quarter. But starting Q1, will that lead to increase in cost?
The war impact has still not been fully felt at all. You know, the war has mostly affected the supply of goods passing through the Hormuz Straits. And fuel prices have gone up generally.
But sir, aluminium prices have also increased because of war, specifically in that time period. So won't that have any impact on Maruti's margins in the first quarter?
I am not able to give an answer to that question straight away because I don't have the data.
Now shifting focus on the demand, post GST cut, passenger vehicle was seeing a double-digit growth. Now second half was great on the back of that, but April month registrations have been in low single digits. So is it that the GST related benefits are now largely behind us?
No, you please remember also that when there is a waiting list of 190,000 cars, customers are reluctant to register and then say, we'll have to wait the 1 month or 1.5 months or more than that to get their cars. So one of the conditions for demand to be steady and strong is that waiting list periods have to become reasonable, which happen gradually now. But I don't think demand has decreased.
So you mean to say that GST-related benefits are still not behind and we could continue to see double-digit volume growth?
We are expecting double-digit growth, 10% growth this year also, yes.
Right. So the 10% is your FY27 volume guidance. Also, if you could give us some understanding on the extent of order book of your products?
The order book, as I said, we have 190,000 cars which were pending at the beginning of this month. And that hasn't changed very much in April. So, and of that 190,000, 130,000 were cars which were in the 18% GST bracket. More than 2/3 were in the GST bracket of 18%. Small cars.
When it comes to the export market, we have seen a decent performance in FY26. But when it comes to FY27, what is your target and any newer markets that you're looking at?
We have to keep adjusting because of the war. There have been certain changes in the demand pattern. And there have been areas where we will be exporting afresh. So all in all, this is not something which is fixed forever. But we expect that the total exports this year will be very similar to what we exported in 25-26, for about 4.5 lakhs.
And because of the war, was there any delay in shipments for Africa and Europe market?
Nothing significant so far. The exports to the Gulf area have stopped. They have just recently, I believe, resumed for Saudi Arabia. But at the moment, the Gulf countries are not taking cars.
And Gulf would be what percentage of your total exports?
Not a big percentage, but it's being made up with other places, no?
Okay, just one question on the financial side. Now, other income declined significantly both on YOY and Q-on-Q basis. What is the extent of MTM losses, mark-to-market losses in this?
No, it's not a loss. It's a market and it's an impact of mark-to-market. As you know, the rules require that your investment should be marked down or up depending at the close of the month. And most of our investments are debt instruments. And debt instruments fluctuate depending on the yields on those. Recent times, the yields on securities have gone up substantially. Therefore, the interest rates and the value of their value has declined. That is what is reflected. But this keeps changing. It's not a real loss in any sense.
Thank you, Mr. Bhargava. Thank you for joining us and giving us the way forward for Maruti. Well, the 10% volume growth is the key takeaway coming in from Maruti for FY27. Back to studio.
Thank you for that, Sumit. You know, I'm always astonished and I admire the gusto with which Mr. R.C. Bhargav has been at the helm of Maruti through all of these years. With his seniority, he's on the ball. It's just amazing, the passion that he brings to it. I mean, apart from the numbers and everything, just because these are people that we've been speaking to for so many years, it's just amazing. And how they have moved that company forward.
He epitomizes the original concept of Maruti Suzuki and its mileage, right?
Yeah. Just mileage is going on and on and on. Absolutely. Hats off to Mr. Bhargav. But let's talk about how the numbers were. Kush, Bora, Parag, Thakkar in our studios today. Very good morning to you. Should we start with the index call?
Absolutely. Yesterday we spoke of the 24,000 straddle at play. Played out beautifully. The Nifty went on to hit the 24,200 resistance zone, but closed just at the 24,000 mark, just under that. So, all the premium for the options writer, for option writers, in the pocket. There is mild exhaustion. There is mild exhaustion being witnessed, but even now I would say that the texture is positive. So despite having broken the 24,000 mark, even if it's very briefly, as long as the 20-day moving average at 24,700 and 23,700 and 23,800, that zone is protected, you could stay long. Going long will require a comfortable close above 24,100, and then you're immediately looking at the resistance of 24,300. While the while the bias for the last couple of days has been consolidative to negative, even indicated by the RSI, there's a good possibility that even this consolidation phase is a base formation for the next leg of up move. So as long as 23,700 is intact, I think you can hold your long positions. I wouldn't really say go long because the momentum just isn't there yet.
Kush, I have a bone to pick. How does it matter if I have an existing position and therefore I can stay long versus starting a new position? Because effectively call to ye lena hai कि यहाँ से long करना है कि नहीं करना है.
True.
Right? So even if I have sometimes I wonder, like you say, okay, oh, if you've bought the stock before, then you can stay long, but don't initiate a fresh long. Why?
It has to do something with two things. One is the opportunity cost and two is the psychological impact of it. Opportunity cost से मेरा ये मतलब है कि अगर मुझे लग रहा है कि for example Nifty यहाँ से consolidate करेगा and then there is either a stock or a sector or let's say Bank Nifty which could do well, तो आप वहाँ जाके long कर सकते हो. That's the first part. And the second part is if it is in a consolidation phase, मेरी तो लॉन्ग पोजीशन ऑलरेडी है, आई माइट एज वेल होल्ड. लेकिन जब तक ब्रेकआउट नहीं आता या कोई ऐसा टेक्निकल इंडिकेटर नहीं मिलता विच शोज कि यहां से और ऊपर जा सकता है, why would I go out and initiate a fresh position? So as I said, opportunity cost and the psychological aspect of initiating a trade.
What about ideas, Kush, today?
Still going with a mix of long and short, and the reason that I pause and smile is because a lot of stocks that I have been scanning are now starting to show exhaustion. You know, Alex, you'll recall we had that conversation where 333 out of the NSE 500 stocks had risen more than 30% in a month's time. So obviously exhaustion was par for the course, but we're starting to see some of that. So not a bad idea to take some money off the table in stocks where you have humongous profits if you've bought them at lower levels. That's why a mix of a long and short. GNS Par, LG Equipments, these are your two long ideas. LG Equipments, by the way, is a repeat of last week. It's still consolidating in a market that's seeing sideways to consolidative moves. GNS Par has broken above the 200-day moving average. Good moves here. 322, 333 are your targets. 300 is where you keep that stop loss. LG Equipments, to reiterate the targets, 569, 585 and 540 is where you keep that stop loss. Tata Elxsi yesterday had a consolidative move, but that was largely on account of expiry. But the negative bias on this continues. So keep a short on Tata Elxsi for targets of 4090, 4030. Stop loss at 4210.
Okay, I just want to get a quick word from Parag Bhai on two of the results that came in right before closing, and then you have a whole host of others that we want to talk about as well. Let's talk about Maruti first, and then of course Eternal.
So Maruti, my view remains that stock has corrected nicely. Company has revised the guidance for FY27 higher from 7% to 10% in terms of demand. And according to management, just we heard that GST cut tailwinds are continuing, according to them. But in my view, near-term momentum in terms of product launches is missing. That Victorous, I think the momentum is not yet building up. It is underwhelming. And plus, as Sumit was asking, the steel, copper, aluminium, all prices have gone up substantially. And so that might hurt margins. And already in this quarter also margins were softer.
They were already soft.
Already, the EBITDA growth on an absolute basis was good, about 25%. But I would say the margins are under pressure for all auto OEMs.
Okay. And have you looked at the Eternal numbers?
Yeah, I have looked at it. So basically, this quarter, I think they did EBITDA close to 500 crores. Which is a good number. So the run rate is around say 2,200, 2,500 crore kind of thing. I read some notes which are saying that EBITDA can be 7,000 crore by FY29. So this is a very high growth business.
7,000 from 500 crores to?
No, from 2,200 crore to 500 crores this quarter.
Okay.
So 2,200 crore to 7,000 crore by FY29 is what the analysts are.
In 2 years.
Yeah. So it's a great growth story. But at 2,50,000 crore kind of market cap, 7,000 crore EBITDA is already priced in my view, but stock might react positively.
Yeah. Okay, let's go across to Sumit Sarkar on what is the chatter from the dealing rooms this morning. Sumit, what are you picking up?
The first stock on the list is ABB. Now, there are sell flows on the large HNI desk. The street is concerned about the expensive valuations and given the fact that they are expecting first quarter of FY27, not the March ended quarter, but the June ended quarter to be on the weaker side for ABB. For Amber and Dixon, both EMS names, there are buy flows on PMS desk. Street is anticipating JV approval for each of the companies. Now, Amber has applied for a JV with Oppo, and I believe Dixon has done it with Vivo. For Glenmark Pharma, there are buy flows on institutional desk. Dealers are expecting strong fourth quarter numbers. Vari Energies, there are buy flows on HNI desk, expectations of strong number, but apart from that, the street is expecting that the company might come out with some long-term targets very soon. And lastly, when it comes to Adani Enterprises, there are buy flows on institutional desk that is expected even today, and this is largely because of the rebalancing activity. Now, the partly paid shares of Adani Enterprises will turn into fully paid, because of which the weightage of Adani Enterprises in Nifty 50 is expected to increase, and hence some passive inflows are expected in Adani Enterprises today.
Got it, Sumit. All right, thanks so much. So quite a few stocks to keep on your radar, but we began speaking about this cohort of stocks led by Dr. Reddy's Laboratories, most importantly, with regard to its approval from the Canada regulator for the launch of generic semaglutide injection. That marks its entry into the GLP-1 segment. We've got Varsha joining you to talk about the implications for this company as well as the other two possibly that Neeraj had mentioned. Varsha, how important is this?
Well, this is a very big news and positive news, and investors were actually waiting for the, Canada approval for generic semaglutide, which treats type 2 diabetes and of course helps in weight management. Now this marks company's entry into a highly competitive GLP-1 segment in Canada, also opens faster regulatory approval pathways across Brazil and other emerging market. While this is the first generic approval in the G7, Canada is the first country to give that, and this sets a global precedent for other regulated markets. Now this is a major win for Dr. Reddy's as it strengthened its position in complex generics. Also, this being among the first approved gives a competitive head start for the company, and company will have no competition for at least next 6 to 8 months in Canada for this product. Talking about the strategic importance beyond market size, so Canada itself is a $2 billion market, pre-generic market with 10 to 12 million of pens sold annually. However, its bigger value lies in enabling global regulatory acceptance. Onto the near-term earnings, when it comes to this product for FY27, Canada launch could contribute almost 150 million potential of revenue in FY27. That's a meaningful contribution at least in this year. Volumes are expected to scale 2 to 3 times as price declines. 6 more players in Canada are expected to get this approval, with Apotex and Sandoz likely to follow. Early approval gives Dr. Reddy a timing edge despite future competition. But emerging markets will be a long-term growth driver for the company going forward. India and rest of world are expected to have significant growth in FY28 and FY29. Lastly, the other stocks which should be in focus on the back of this news is of course OneSource Specialty, as that is a CDMO player for semaglutide for Dr. Reddy's, and of course the Shell Engineering, which makes injections or pens for semaglutide.
Okay, got it. Thanks so much for that. And those 3 stocks certainly should be on your radar. But importantly, Parag Bhai, for Dr. Reddy's Laboratories, the question was always about how they would shore up their overseas revenue. And this is something that aids them in that direction, right? So are you positive with this?
I think recent rally of Dr. Reddy has priced in this event. And we'll have to see how that goes. Generally in such markets where in pharma what we have seen is when something is taking too much of a time to launch, there are enough players. So I am not sure whether 3 months, 6 months down the line again you will have competition in Canada also for the same product. And recent spike in the stock price already I think mostly captures this event.
What about the suppliers? OneSource is a CDMO, so that will continue to supply.
Correct. So those guys will stand.
No, they will benefit, but are they good buys? Is the question.
Shelly has also moved up recently from 1650 to 2400. So that has also captured the upside in my view. And I think on trailing PE basis it looks very expensive. But of course we have to look at future. But I would say that large part of the rally is done in mostly.
So then if it's a sentimentally positive move and you could see an upside on that today, Kush, the question is, do you build on this or do you stay away?
No, you book profits. both on Dr. Reddy's and Shelly in particular. One source, very limited data, so I'll skip that. But if you look at Dr. Reddy's, there is a resistance around, immediate resistance around 1380 and then about 1400. So it's approaching multiple technical resistance zones, already run up quite a bit. You might want to take money off the table. If you still want to hold, then at least partially. Shelly, I think, is a good idea to book out because it's risen 38% odd in the last 6-7 odd sessions. So quite a steep run up on this one as well. So yes, at least a partial profit book, if not an entire profit book on both of these names. Certainly not initiating fresh longs.
Okay, let's talk about what could be in focus once again today. They reported a short while before markets closed yesterday, and we saw a strong reaction on the stock. But now that you have the con call done, more details on the performance, what do you look at Eternal today like? Mahima joining in. Mahima, strong Q4, but what are brokerages saying today, and what was the big takeaway from the con call?
Right, Tamana. So, a lot of takeaways, of course, but I'll start with, a few points as to what has worked this quarter overall for Eternal. In terms of overall profitability, that was completely a beat versus the analyst estimates. Both food delivery as well as quick commerce has had a robust performance. Of course, quick commerce doing the more heavy lifting part. Food delivery is growing slightly ahead of that 20% mark versus the guided range of that 20% mark. Quick commerce has improved a lot in terms of profitability. Margins stood at 2.8%. District has remained steady and cash surplus is also healthy. There's negligible impact as per management in terms of the macro situation. In terms of guidance, management has said that Blinkit net order value CAGR growth will be 60% for the next 3 years. Adjusted EBITDA outlook, they've given of $1 billion by FY29. That implies a 3 to 3.5% of margins for quick commerce business in the next 3 years. And they've hinted towards 70% growth for quick commerce, considering the aggressive dark store additions that they are going to take versus that of 100% earlier. In terms of key management commentary, they've said that overall monthly transacting users addition has remained strong. They're on track to achieve the 3,000 dark store guidance that they've given for March. Profitability is a non-negotiable aspect for them in terms of growth, and they're prioritizing healthy growth over aggressive market share gains is something that was one of the key takeaways or highlight for me at least. In terms of brokerages, largely they've maintained their stance on Eternal. Citi has slightly cut the target price to 360. They've said revised guidance adds near-term vigor in the room. Morgan Stanley has maintained overweight and hiked the target price to 347. They're saying that the street could show mixed response to Q4, but they've liked the internals. Investec has maintained buy with a target price of 375. They're saying that there's stronger visibility into the future. UBS has maintained buy with a target price of 310. They're saying solid medium-term aspiration has been laid out, and that is something that they like. Macquarie, being the bearish one here, has maintained underperform with a target price of 200. What they're saying is that competitive intensity will remain elevated, and this in turn will be bad for the entire market as a whole for the quick commerce business. So this is the overall view of how things have fared in Q4 for Eternal and what brokerages are making of it.
Okay, thank you for that, Mahima. In fact, I think we have a snippet of the conference call from Eternal, which should run as well fairly quickly, where they have talked about some of these factors that Mahima has spoken of. Now, the interesting thing is this is also the first quarter they're reporting with Albinder Dhinsa at the helm. He's now the group CEO and taking complete charge. But after reporting a robust quarter, Eternal's management has announced in its earnings con call that the company is planning to add over 3,000 dark stores by the end of March FY27. Listen in a snippet of some of those conversations.
On the store addition, I think we are on track on our guidance for March for 3,000 stores. I think we remain firmly on track, and beyond that, I don't think beyond that we're going to give any guidance, or at least at this point we don't think it makes sense. I think we've given overall guidance of 60% CAGR, and that would obviously mean some reasonable store expansion, but we're not planning to give out any specific number guidance on that.
Okay, so very quickly, since we're on the subject of Eternal, Kush, on the charts, Eternal Swiggy combo, would you buy into one or both?
One, Definitely an avoid on Swiggy. Has seen lower high, lower low formation, some attempt at recovery, but nothing meaningful. So, so count that out. Eternal, let me just put it this way. There was a lot of excitement, up until a month or two ago, but that's just fizzled out. And primarily because if you see the price volume action also not very encouraging. I will give it a silver lining though, which is the risk reward ratio from here on is very attractive. 220 on the downside is a support zone. On the way up, you have resistances at 275, 310 and 330, at higher levels. The momentum isn't really there. I mean, you could see, some moves here and there, but from a medium term perspective, it's not there. So if you want to play a positional bet for a favorable risk reward ratio, then you can enter with a tight stop loss at 220. But from a near term perspective, I think, it could perhaps consolidate for some more time around that 270, 275 mark.
Okay, 2 minutes to go. A lot of earnings reactions expected. We've got Sharad joining us to tell us about what stood out to him. Okay, so but some of these are actually things that we've spoken about, and they are likely to be winners in trade today. SIAT is something that I marked. Greenply is something that Neeraj looked at. Orient Cement, seemingly a turnaround quarter as well. I wonder whether you have a view on the tire manufacturers. They were running up, Parag Bhai, in the anticipation that they would post a good Q4 number. SIAT was one of them. 23+% revenue growth, improvement in margins, all looking positive.
Yeah, absolutely. See, I'll tell you, in this, all this, till March, you're seeing the numbers of Ultratech, you've seen of many companies' numbers. It is not actually reflecting what is right now happening, right? Where that Brent we saw yesterday at 114, today it is 110. Or whatever shortage which can happen after 15 days of the energy shortage. So one has to just apply that thing, that what is right now happening has to end. The SIAT is fundamentally a good company, and it had a great tailwind of GST cut, which I was saying that 70% is replacement market, so they can actually not reduce so much prices, but and so them, the margins were going up.
For them, for SIAT, it's only about 50% of their volumes. Replacement.
Yeah. But generally for the tire industry, 50 to 70% is the replacement market.
Okay. 9 a.m. By the way, a lot of pockets that we'll talk about. Remember, as we said, the nuclear plays went up yesterday. Some of the infra companies did very well. But 9 a.m., let's see what are the reactions on some of the earlier ones. Remember, Adani Enterprises too in focus because of the Nifty rebalancing and slight uptick in the weightage. But the first nits coming off. Okay, let's wait and watch how they shape up. Dr. Reddy's should come up on your screen. That's an advantage, Dr. Reddy's for sure, and then maybe we can see what's happening to OneSource as well as Shelly Engineering Plastics, because those two could be beneficiaries because of the semaglutide approval. Shelly, maybe 6%, maybe not. SIAT, Greenply, a couple of names that are interesting to focus as well. Let's see if it starts off higher. Greenply 12%. Oh my God. Okay, let's see whether these rates change or not. But
discuss Greenply.
Yes, and we will talk about it, Parag Bhai, 100%. But just that so many companies which have reported numbers, and some good ones at that, or some shockers as that, which we'll talk about. Sharad first joins in to talk about all the key earnings that we'll be tracking today. Sharad.
Well, looking at the key earnings, of course, we had mentioned about Greenply industry. There's a very strong set of numbers coming in, especially from the margin approval increase which is happening. SIAT, of course, better than analyst estimates. Number coming in. AWL Agriel, if you look at the bottom line numbers, they have done well. Sanofi Consumer, for the third straight quarter, they have given a strong outperformance. Star Health, the PAT has more than doubled, but the most important ratio to track is the combined ratio. It has fallen below 100. That means underwriting profits are there. Skipper, strong growth continues in the engineering segment, while for GRSC, there is a strong execution also. Interestingly, if you look at the Orient Cement, the magic lies in the bottom line numbers. That's where the turnaround has happened. And MV Photovoltaic, the revenue is up 62%, and the brokerage have also turned bullish. While for Sanofi India and Piramal Pharma, there is losses happening, and one-time impact loss has come in for Piramal Pharma as well.
Sharad, thank you for that. Let me go across to Amit Goyal, welcoming him to the show this morning. He's a CMT SEBI RA partner and co-founder at Blue Oak Wealth. Amit, very good morning to you. Let's start by talking about index call. We're seeing a pop of green today, about maybe 0.5% up in the pre-open session.
Yeah, hi, good morning, Tamanna, and thanks for having me. The index has been moving up, but we had expected the index to, probably inch towards 25,000, which was not to be. And right now it is consolidating at a fairly strong base of 24,000. So as long as the gap of the announcement, of the ceasefire announcement holds, which is 23,800, and the moving average, which is at 23,950, as long as these levels hold, we should expect, an eventual uptick in the market, within the nearest term resistance being 24,600.
Okay. And Amit, good morning. What are your stock recommendations for the morning?
Yeah, the two stocks that I'm looking at are purely momentum plays. We have been seeing capital markets and the metal index, post very handsome gains in these turbulent times. And I'm just trying to follow that up and continue to be bullish on BSE as well as on Hindalco. I would enter BSE only once it starts trading above 3639, because that was the high that it made yesterday. So I would like to see the continuation of this momentum, and I will keep a stop loss of yesterday's low, which was 35.43, for targets of about 37.92. This is more of a swing trade, so one could hold on for it to the stock for about 3-4 days also.
Got it. All right, let's go to the big brokerage call of the day, and we've got Nomura that has initiated a buy on Indus Towers, and Sharad joining in to tell you what they're saying. Sharad, what exactly are they saying here?
Well, there's a positive news flow coming in for Indus Towers. Nomura has initiated a buy with a target price of 490 rupees per share, and they've stated that the story is structural, and Vodafone Idea's positive outlook is a key growth rating trigger for Indus Towers as well. They are expected to be beneficiary of the data consumption and Vodafone Idea's expansion plans, and the dividend resumption. That is a little bit of overhang. In the last meeting there wasn't any announcement, and that's why the stock had fallen. Now if that resumption starts taking place in the dividend policy, it becomes a re-rating trigger. Valuation is at a discount to the global peers and the domestic telecom companies, and they expect Indus to capture 70% of Vodafone Idea's incremental network rollout and directly boosting Indus Towers' core revenue and the EBITDA, and that is why the bullishness is coming in from Nomura.
Indus Tower about 1% up right now. I want to look at what some of the newsmakers are doing. Let's pull up Dr. Reddy's. Let's see what that semaglutide or deal or nod is doing for the stock. About 1.5% up, pretty muted, frankly. We talked about one source as another company that could see some impact. That's about 6% up. So more of an impact there than Dr. Reddy's. Shelley Engineering was the other one, the guys that will make the pens for the semaglutide, 5% up. Though oral formulations of the drug are now becoming more and more popular as well. So Shelley Engineering, they're in focus. I want to look at what's happened with an Eternal and a Swiggy. After the reaction that we saw yesterday, is there a bit of a profit booking? No, Eternal is 5% up in the pre-open session. Watch out for this one in trade. I wonder if Swiggy is doing a follow-on trade. Yes, it is. About 2% up as well. Some of the ones which posted results, let's look at a Motherson Sumi. A bit of a mixed bag. We gave it a thumbs down because of the fact that there was a miss in EBITDA, about 0.5% down, not too bad. Let's look at a Garden Reach, another strong set of numbers that we saw reported today, and there are a fair bit of those. 4.5% right now. SEAT, Bandhan Bank, Greenply, all of those companies which have been reporting are seeing a bit of a pop in the pre-open session. So overall, good numbers are being rewarded well, and some of these that you're tracking, you were talking about Greenply a short while ago.
Yeah, so Greenply we discussed, I think 4-5 days ago, just as a casual discussion. We hold very small quantity, very small weight.
Yeah, at that time the news was that the MDF prices are going up. So that was the context, but the numbers are pretty decent.
Yeah. So as I said, they're all factories are running at 100% capacity utilization. They are doing well on plywood and MDF both sides. And as they have reported numbers, I think EBITDA was 87 crore versus 46 crore, and PAT was 31 crore versus 17 crore. So they have reported fantastic numbers. As I said, the stock is extremely cheap compared to its brand and all. EV to sales is just 1x. So company is doing well, but there is a news that MD and CEO has also resigned, but I think he has become an advisor now.
Okay.
And I think promoter will now, of course the promoters were fully involved in the business. Now their involvement will further increase in my view. So but it's a very cheap stock and results are very good.
This is But viewers, this is the beauty of the conversations. Yes, there is a lot of chatter when we speak to Parag Bhai on ICICI Bank, on an HCL Tech, etc. But somewhere, like if you saw the show 3 days ago, it was a 3-minute conversation on Greenply and why the valuation looks attractive, MDF prices have gone up, etc., etc. I'm sure he didn't know the results the way they are coming, but just goes to show that if sometimes you buy value and if you hear things closely, you can actually make money, and that's what's happened. Greenply is up 9% as we speak. Well, good going for that one. I wonder if MV Photovoltaic is the other one which has done well. Just below, the numbers looked okay. Yes, 5% higher. And Kush Bora, kudos, just in case you felt left out. Some of your picks have done really well. So I'm not
no, I did not. No, I did not. He has his days, I have mine, so I absolutely did not.
Yeah, but you know, MV is one of the stocks that has actually made some decent moves in the recent past, right? Is it time to book profits, or can somebody who has a position stay long?
Let's start with Greenply very quickly.
Okay, sure.
Because here too you're seeing a good up move. Now the stock's actually gone into overheated territories, and with this kind of a gap up, there is a good chance that you should book profits partially and hold the rest. Risk reward ratio very favorable for a positional bet, but on decline. So closer to maybe again 255, 260 odd levels. Quick word on photovoltaic. Yes, here too you're seeing similar structures, but I think there is still room for upside. So on the way up about 300, 315, these are the levels that the stock could go out and hit. Supports placed at 275. So yeah, it's more of a hold with a stop loss at 275.
I have 3 stocks to add to that list, and all stocks that are doing particularly well, those that we have marked out for you. CEAT is one of them, is up 8.3% after the pre-open session. Garden Reach Shipbuilders also reacting to numbers, and Tamanna had pointed this out, 7.8%. Another that was on her list, Star Health, which is up about 5%. So these are all stocks that are looking like they're going to start very well today. Would you hold or would you exit at this point?
Star Health is a hold, and I think it's got room on the upside, and considerable one at that, about 575, 600 plus levels also on the cards. And this is typically not a trader stock, so you buy and hold this one. So my suggestion would be, yes, you can continue to hold, pump up your trailing stop losses to about 525 zones. The other two, I think it's a good idea to book profits. GRSE already had a splendid run before the results came out. Now it's actually opening up, a gap up. I think it's a good idea to book profits, maybe consider on declines close to 2950 odd levels. The entire tire pack is seeing pressure. So if you are getting levels where you can exit, I think you should take that. So CEAT right now is an exit, GRSE partial exit, and buy again on declines around 2950, 2900 levels.
What is a strong conviction buy? Because I can see from a lot of your calls that you're in the mood to play it thoda safe.
Very, very beautifully observed. In fact, this is exactly what I was referring to in my opening commentary, where I said I have been scanning a lot of stocks. We usually do, right? And you can hear it in my commentary with exactly what I see on screens. There are signs of exhaustion, and when you see that, and I have seen that especially in the last 2.5 years play this out, this playing out, which is when you start seeing this consistent pattern, often, down the road, there is a reaction to that. So if a lot of stocks, a host of stocks are seeing exhaustion, even in this mid space where the indices are doing well, correct, there could be a profit booking around the corner. So very well observed, and hence I'm saying it's not a bad idea to book partial profits. Now to answer your question, which is a good conviction buy, GMDC. Yesterday we spoke about this one for targets of 720, 740, went on to hit the second target, then along with market saw some profit booking. I think the structure on this one is still beautiful, still intact. You could play it for momentum or positional depending on your time horizon. So I will suggest a stop loss at about the 675, 680 zone for significantly higher levels of 780 and about 825 plus. So GMDC, like I said, momentum and positional bet both.
Just on the subject of GMDC, I know you've said in the past that you've seen it at a couple of 100 or maybe less.
100 rupees only.
At 100 rupees. And
it was not moving for 3 years.
And so from that perspective, now it does not look attractive.
It is out of my radar. There is a rare earth mineral story, there is a narrative. This company has a right to win in that. They have got lignite mines. Now they can mine some other minerals also, and they'll get all the rights. It's a PSU company. So right to win is there, but it is just simply out of my radar right now.
Okay, let me ask you this.
Just due to price.
Okay, at what price would it be attractive?
So let me get back to you.
Okay, all right. So one stock that stood out actually, Nelcast, and it seems like it's up and about. Let's pull that up if we can. Nelcast is, if I'm not mistaken, seeing Okay, I don't see that moving too much. Do you see that on the charts? No.
No, I mean, in fact, this one's not had a run like the other one. So maybe, a gradual up move is something preferred over a sharp uptick. So yes, I would suggest if you have this one, you should continue to hold. 142 is a stiff resistance, but beyond that, it has rooms for about 148 and higher levels. So steady up move. I like this structure better compared to a lot of other names which have zoomed higher. So continue to hold. I would suggest a stop loss around the 129 mark for an L-cast.
Okay, Amit, what are you spotting after the pre-open session that's looking exciting to you, and what would be the call, say, on an Eternal and a Swiggy?
So Eternal, definitely there is momentum in Eternal, and we could look at entering once it crosses 265, which is the recent high. So I would be a little more bullish on Eternal once it crosses that level and then sustains there for, let's say, about an hour or so for a positional trade. Whereas I continue to be bullish on metals space, and Hindalco is one of my top picks. Again, I would want it to show the continuation of the momentum, and if it crosses the 1079 mark, which is yesterday's high, I would enter into it and keep a stop loss of 1055 for eventual targets of 1112.
What about a Maruti this morning, Amit?
Let me just look at it. Not Maruti. From the trends, if I see, the Maruti is actually in a consolidation phase, and I do not look at it until I would look at it only once it crosses 13,198. Which is the moving average on the daily time frame. Once it crosses that and sustains above it, then I could enter into it, keeping a stop of below 12,800.
Got it. Kush, 10 seconds. Dr. Reddy starting off flat. Is that an opportunity? 10 seconds, Kush.
No, I would not buy fresh. Book profits if it goes slightly higher from here on.
Okay, good to know that. Good to get that call, that is. Viewers and traders can decide their positions according to their fashion. We're just trying to get your opinion. Here's how the markets are starting off. 0.5% higher. Not a bad start, you have to admit. Banks are participating, yes, but once again, the pattern for the last few days that the market breadth is positive because the broader end of the spectrum is really doing well. Even in today's session, I reckon that the small cap index too could be in the green yet again, 1%. The SMID resilience of the last 7-8 days is to be noted. Bring up the heat map up on the screen. Tell you what the large caps are doing. Eternal, after that swing of 5% yesterday, another 4% today. Maruti starts off well, by the way, 2.5% higher. Surprise, Interglobe Aviation is up 1.5% despite Brent being at 111. Is the market telling you something that maybe we are not quite realizing right now? Let's wait and watch. Dr. Reddy's 1.3%, Coal India 1.2%, Adani Ports 1%, Shriram Finance, Airtel, Infosys. In some sense, it's a mixed bag. From a news perspective, I think you got to mark the top 3 names and ONGC primarily because of crude prices rising. So I think, yes, there is news there. What's losing out? Some bit of Hindalco, really. Asian Paints marginally lower, ICICI Bank, etc. Nothing too much. More green than red, which is actually very constructive. But very, very surprised, Tamanna, with the kind of move that Interglobe has made. Of course, it's cooled off a little bit, but I would have thought that Brent at 111 would mean it's curtains for Indigo. Not quite.
Maybe the SOS that airline companies put out to the government yesterday, and there is maybe a consensus that there will be some more relief coming in, because the Federation of Indian Aviation Companies put out an SOS to the government saying, please give us more help with ATF, otherwise we'll have to start curtailing our operations. Maybe there is a hope or a reading there that there's going to be some kind of relief coming soon. So watch out for that pack in any case. Maruti racing to the top. 4% up right now, so not too shabby at all for the company, and it's doing pretty well. And remember, all investors must have heard from R.C. Bhargav this morning. He's done a slew of channels, including of interviews to channels, including to NDTV Profit, and he's talked about how he thinks the tailwind from GST still continues. All right, let's pull up the Nifty contributors very quickly. India VIX is looking nice and benign, so no issues over there. Reliance is firing. Maruti, Bharti Airtel, L&T all pulling up. ICICI Bank, Hindalco, Axis showing a bit of softness. The broader end of the spectrum is definitely looking more robust. The mid-cap, small-cap are good. 3/4 of a percentage points up on the mid-cap 150, the small-cap 250, almost a percent up. Advanced decline looking very, very healthy this morning. And the sectoral index is something that we should pull up as well. I mean, even IT is doing okay. IT banks all doing okay. India Defence about 2% up, and this is few stocks in this one index, but we should pull up the Eternals as well. Garden Reach, etc. have had good results. Maybe that's why Maruti possibly driving the auto pack. Nifty consumption doing well. I don't know if Eternal is on that index, and that's the reason. Metals are a little soft, and financial services are flat. It's largely a green screen, I think, apart from a few metal counters here and there. Let's get to specific stocks this morning and see what's happening there. We're talking about the results, right? So let's look at CEAT, Bandhan Bank, Motherson Sumi, how they're doing. CEAT about 10% up, cracker numbers there, and being really welcomed by the street. Bandhan Bank also about 6.5% up. Motherson Sumi was a bit of a mixed quarter. We gave it a thumbs down. The street seems to agree, about 3% down. Greenply 12.5% up. Our technical analyst call is to sell on rise, by the way, just to tell you that as well. MV Photovoltaic also coming in at that point, about 7% up. Skipper, Star Health, all of these with great results. The reason the SMIDs are doing well is because the companies are performing. Star Health, look at that, about 10% up. Citi's top non-life insurance pick. Semaglutide nod has come in, and that is going to be positive for some players. We saw Dr. Reddy's. Dr. Reddy's cooling off now, and we talked about this. Would it be a sell on rise? Again, Kush's call was that if you see a bump up, sell off over here, 1.5% down. One source specialty at the back end as a CDMO player may still have some steam to go. Shally Engineering is also okay. This news has just been in the ether and in the atmosphere for too long, so I suppose once it's confirmed, there's a cool off coming there. Just want to look at Eternal and Swiggy as a twin over there, and look what's happening as well. Eternal about 1.5% cooled off now. Swiggy about 0.5% down. Canada HSBC, I suppose, as a result, which has been strong, is also doing well this morning. So Alex, overall I would say that all things being equal and Brent still at 111, market has found a way to chug along.
It has, and quite a bit of that action is in the broader markets, as you very aptly highlighted. 0.5% gains for the benchmark Nifty 50, and you've actually highlighted most of the movers today, Tamanna. So just a few more to add to the list. 5-star is losing about 2.8%, one of the biggest losers on the 500 stock Nifty 50, Nifty 500 index. And then the pair of REC PFC are looking a tad bit weak today, both of them losing about 2.5% or thereabouts. You have Cohance Life, you have Nalco, you have Hindalco. So the aluminium players are under a tad bit of pressure. But we've covered most of the ground. On that note, I'd like to thank both Parag Bhai as well as Kush for joining us in the studio, as well as Amit Goel joining us remotely. Thank you so much, gentlemen, for taking the time. We're joined on this leg of India Market Open by Amish Shah, who's the head of India Research at BofA Securities. Amish, thanks so much for taking the time and for speaking to us on NDTV Profit. Front and center is crude oil prices, the movement of crude, the fact that we're at $111 to the barrel, and the implications that has for the Indian economy. We've seen the way that the rupee has moved in the recent past. Where do you peg the level of sensitivity for India's companies and corporate results heading into the new financial year?
Sure, Alex. So clearly, the Iran conflict, as you mentioned, is a pressure on crude, therefore currency, and therefore a variety of macro factors, including current account, fiscal account deficit, inflation rates, all sorts of things. So we do think that a combination of deteriorating macro on the back of it, as well as higher commodity prices, are going to impact corporate profits. We have already downgraded our earnings in early March on the back of it, and we are currently working with 8.5% Nifty earnings growth expectations for FY27, down from 14 that we were estimating earlier.
Amish, hi, good morning. Tamanna here. Let's just talk about how the energy crisis is going to play out over the next 6 months. For now, it seems like there is a bit of a ceasefire even in the Indian markets as far as pain about oil and West Asia is concerned. People have put that aside and they're chugging on. Do you think the impact that we will see of this kind of disruption, which has been described as the biggest oil shock so far, is being underestimated?
So Tamanna, look, nobody fully knows how long will this last and how much of a supply shock will it be. What we are doing is being a bit conservative in our numbers. So we are working with an average crude price of $92.5 for the calendar 2026, which basically means an average of $100 per barrel for the remainder of this 8-9 months of this fiscal.
Where do you think then the action moves? Even as we wait and see what happens with crude, where do you think the action moves in terms of safe spaces in the Indian equity ecosystem, Amish, right now? Would you stay away from companies or from the kinds of businesses which will be very impacted if crude prices don't settle down soon?
So Tamanna, clearly till the time this goes on, the risk reward as we look at it is quite balanced for Nifty right now. So if you assume that the conflict goes beyond June, then I think in our worst case we talk about 9% downside for Indian markets from where we are. At the same time, if the crisis were to come to an end, in our base case we are assuming market delivers 9% returns from current levels. So I think at this point in time, the risk reward is quite balanced. Our base case is that the crisis will come to an end by June, and therefore we are more on the optimistic side, assuming that there will be 9% gains. But in the near term, clearly, given the uncertainty, you would want to stay away from the crude impacted and the conflict impacted sectors and stocks. So we are looking at a combination of some cyclicals, defensives that can outperform even during this crisis as it goes on. And then longer term, we do think that India will have to pivot towards energy security and look to be self-sufficient or have import substitution from the imported energy and fertilizers that we have.
Amish, good morning. Neeraj here. And just on that point, the value chain that exists in that energy security sector theme, if you will, is very large. And I hear comments on both sides that some of the stocks are extremely expensive, some of the stocks still give value. And because it's a vast chain, where is it that you find favored the most within that very large ecosystem?
So Neeraj, two ways to look at this. First of all, if you assume that the government policies do not pivot towards energy security and we continue to be importers of oil and gas as we have currently, in that case we find value in the power financing companies, in the regulated power generating companies and some cable companies. So this is the spectrum that we like. But if you assume that the government policies will indeed pivot towards energy security, then that spectrum widens, and we like stocks linked to the ones that will do biofuels, some of the transformer companies, engine manufacturers, construction equipment manufacturers, so that spectrum then widens to a variety of other subsectors as well.
Amish, sorry, I have a question on FPIs too, but just very quickly a follow-up here. You had turned negative on transformers, I believe, a year and a half ago. With a presumption that the government does pivot, you are now turning constructive on transformer companies.
So Alex, the short point, as I was saying, is that if the government does go on the energy security, then we do think that transformers make sense even at these valuations. But if you assume business as usual and if India continues to import oil and gas, then I would argue that transformer stocks are already quite expensive.
Okay, Amish, one more question is on FPIs. I'm presuming your team tells us that you've been busy traveling. I would love to know what are global money managers thinking about when and if to put money into India. Would it largely be passive flows, or could the valuations as they stand right now, if the conflict were to come to an end and if crude comes off, make them make the non-passive buyers relook India again, because it's been 10 straight months or maybe longer of incessant FPI selling?
So Neeraj, the way I would think about that, and basis the feedback that we have from these trips, unfortunately foreign investors have alternatives right now, and therefore despite their, despite the heavy selling that we've seen over the last 18-20 months, FPIs will go where they find returns. Unfortunately, from a growth versus valuation matrix put together, India still from their framework appears as a very expensive market. There are alternative markets like China, Korea, Taiwan, Brazil as a commodity play or an AI play that continue to look attractive to them. So I think till the time there is a visibility of growth improving in India, Indian valuations are quite expensive. Think about some numbers. Korea currently is expected to deliver 150% earnings growth. It's a 7 PE market. Taiwan is 35% earnings growth, is a 18 PE market. China is 13% earnings growth, it's a 12 PE market, and Brazil is cheaper as well on the back of commodities. So in comparison to that, India is, in our view, India is likely to deliver 8.5% earnings growth. It's a 20 PE market. So clearly valuation adjusted for earnings growth, it's still very expensive for India. So India has got cheaper versus its own history, but continues to trade expensive versus the rest of the EMs. And that's why I would like to believe that the foreign flows will continue to be negative. The only caveat I would put to your point is that as and when the Iran conflict comes to an end, the shorts on India from the hedge funds, that I think will get squeezed out for the short term. But through the year, I think for the year as a whole, we are working with FII outflows rather than inflows.
All right. I want to supplement that question from Neeraj Amish and ask you about two cohorts of stocks, or rather two sectors that have traditionally found interest from the foreign institutional investors, which is banking and IT. Both, one might argue, for frontline stocks in particular, the multiples are significantly lower than they have been in the past. So does that valuation attractiveness nudge people on the border at least to start nibbling in?
So Alex, for financials, yes. For IT, no. Because think about it, the IT companies that are listed in US or Europe, they are currently trading at 11 to 12 times P multiple. Despite the correction that we have had in India, the large cap IT companies in India are trading between 16 to 18 times P multiple. Mid caps are trading 25 to 30 P multiple or upwards. So clearly valuation again for Indian IT companies are quite rich in comparison to elsewhere. Besides, most people are of the view that AI will be a disruptor and therefore growth will be weak, and these companies should therefore see valuation contraction. So IT, I don't think foreign investors are still wanting to nibble in. Financials was cheap as a sector, and after the during the conflict, because of constant FII selling, has become cheaper. So financials, I totally agree, is a value space in India, and as and when the Iran conflict comes to an end and the FII outflows stop, we do think that there will be a lot of interest in repositioning themselves into financial stocks.
It's just, as we're speaking, and I'm sorry, I'm coming back to the energy crisis and its impact over here. We're focusing a lot on crude right now, and what happens with crude prices, etc. But things like fertilizers, gas, do you think that, again, these are warning signs that we need to look at a little more carefully before we think that, okay, this all wraps up in June? Even if it does wrap up in June, and I hope it does, and I echo your optimistic sentiment, we still have some kind of damage done which will take time to fix.
So absolutely, Tamanna, and which is why, so think of it, markets, as we know, is a multiplication of earnings growth or earnings into valuation multiples. We have paid them down both. So earnings growth, as I was saying, we are working with 8.5 versus 14% earlier. Valuation multiples, we think that the current levels of 20 times, which is just 5% higher than the long-term averages, there is no scope for further valuation expansion. Earlier Indian markets were trading at 23, 24 times P multiples. We do not think that markets will go towards those levels. So despite the 9% upside that I'm talking about, if you look at the Indian markets from 1st January this year to the end of this calendar at 31st December, markets, we are arguing, will be flat. and that too in rupee terms. So if you're a foreign investor, you are looking at markets, you're looking at negative returns in dollar terms. So I think point to point for this calendar, Indian markets will give you zero returns and will underperform the EMs. But given that the markets have come off or sold off because of the Iran crisis, we do think that from current levels, there's a 9% rupee returns to be made.
Okay, all right. On that note, Amish, thanks so much as always for taking the time. Always a pleasure speaking with you on NDTV Profit. Okay, all right. Let's talk about one of the big stories internationally this morning, and it has to do again with crude oil and crude oil production going forward, at least once this conflict is resolved. A major fault line appears to be emerging within the global oil alliance. It has been described as a cartel by some, the OPEC, the oil producing nations. The UAE has announced that it is going to exit from the OPEC from the 1st of May. This is on account of trouble that was brewing in that group for quite a while. But let's put things in context. And we're going to be joined by MK Surana. But before we speak to him about the implications of this, let's first go to Somit, because there is a story to tell with regard to the background of this. Somit?
Yes, UAE is quite an important partner when it comes to OPEC. It produces nearly 3.5 million barrels per day of oil and has been making investments to increase this production capacity to nearly 5 million barrels by 2027. Now, this was before the war started. UAE is around 4% of the global oil supply, 12% of OPEC supply, and second largest player after Saudi Arabia. Now, analysts believe the reasons for this exit may be more political than pure economic. There has been regional rivalry that has been growing as per analysts, and multiple issues is what they have cited, like Saudi Arabia made a defense pact with Pakistan. Saudi Arabia and UAE are not on the same page when it comes to the Yemen strategy, and UAE is also getting closer to Americans and the Israel. And this is not the first time someone has quit from OPEC, but UAE was its most compliant with the production quota in the past. So this might impact oil prices going forward. Now, this could also weaken OPEC's cohesion at a time when global markets are already under stress, as per analysts. Now, multiple countries have exited OPEC in the past. Ecuador has done it in 1992, then they rejoined in 2007, and then again exited in 2020. Gabon exited in 1995. Post that, they joined in 2016. In Indonesia has also exited a couple of times in 2008 and in 2016. Qatar had exited in 2019 because they were more focusing on gas from then, and Angola had exited back in 2024, and now UAE is will be exiting from the 1st of May 2026.
Got it. Okay, so that puts quite a bit into perspective. Thanks so much, Amit, for that. MK Surana, former CMD of HPCL, joining us to tell us the implications of this. Mr. Surana, we've been talking about this since morning, and the fact that there is expected to be, once this entire Hormuz Strait issue gets resolved, and hopefully it does sooner rather than later, the production of oil from the UAE is expected to pick up. The question to you is, from India's perspective, is there likely to be a bigger advantage that some of the other net importers would have, purely from the perspective of the geographical placement of India vis-a-vis UAE?
Yeah, good morning, Alex, and thanks for inviting me to your show. There was quite a good background which was put by you just before this. In perspective of that, I won't repeat that, but currently UAE produces around 3.6 million barrels of crude, and they have got a capacity to produce up to 5 million barrels. In fact, UAE is one of the few players who have got a spare capacity, and that has been a point of dispute between the OPEC countries to increase the production, because UAE has invested a lot recently and they want to monetize it. Now, UAE had an excellent relationship with India, and it has only strengthened in recent times. And due to geographical proximity, definitely it opens up an opportunity for India to tie up for the crude with UAE. And the type of the crude which UAE produces, the Murban, the Das blends, it suits well for the Indian refineries as well. Now, in addition, around 1 or 1.25 million barrel of crude coming into the world market, and also the possibility of more countries within OPEC trying to vie for more share of production, increasing the production. it augurs well for the countries like importing countries like India, because it will put a downward pressure on the oil prices. Of course, the timing is such that right now, because there is nothing coming out, it may not be immediate impact on the prices. But once the hormones get normalized, there will be more crude in the market. A part of it will be offset by the desire of the countries to fill up their strategic reserves, which they would have used recently. But over a period, I think it should help in normalizing the oil prices. And it augurs well for countries like India, especially considering their diplomatic relationship. Also, the balance of payment, because a lot of our people work in UAE, and UAE is slowly trying to position itself as a economic hub. Also, they are diversifying their economy away from oil. They invested substantially in renewables, and they are trying to position themselves along with the other OECD countries. So I think it augurs well for India.
It does. And Mr. Surana, it was being described earlier today by another commentator and who was talking about the inelasticity of demand and the fact that even a small increase in the supply can have an outsized impact on the pricing. And so from that perspective, if in 2027 you have 5 million barrels per day, hypothetically, that comes into play from 3.5, and they're not producing that 3.5 right now, what is the impact that you see happening with the price? I know that you're saying normalization, and there was already a supply glut before the conflict started. So what, in your opinion, happens in 2027, assuming we don't have a conflict?
See, it will bring around 1.25 million barrels of oil additionally to the world market. And as I mentioned to you, there may be a reason for OPEC to consider increasing the production to make up for the losses which the OPEC countries would have made during these last 2 months and to balance their own budgets. So we should see some increased supply. And also one of the reasons is they are all full right now to the brim, and they have to dispose of the inventory to continue with their production. So I think that once the hormones normalize, there will be a sudden supply increase. We should try to bring down the prices, which will get partly offset by the desire to fill up the strategic reserves. But 1 million barrel or 1.25 million barrel, or let's say additional supplies, does have an incremental impact, because there is the oil prices work in a very tight balance of supply and demand. And if there is an incremental supply coming which is over and above what the world is consuming generally, it will create surplus inventory. It absorbs the shock because of the news flows, and it does have an impact on downward pressure. But I would assume that in a normalized condition, the prices should hover around 7.
Got it. Mr. Surana, one is of course UAE's big move, but two, we had a geopolitical expert in the morning talking about how the decision making in the Middle East will now be fractured in multiple ways because of the alliances that each country will make as well. Does this have a meaningful impact on the OPEC or OPEC Plus's ability to respond to either a crisis or a glut?
If you see, OPEC Plus was controlling around 40-42% of oil supply to the world, and only OPEC was around 28%, let's say. Now, UAE is having around 4% of the total supply. Now, there will be a possibility, because some fissures were already observed because of the disputes in the way the production cut should be taken. So while Saudi is on one spectrum, while many other countries were on another spectrum, and that was the reason to avoid cracks in OPEC. There was a fast rollback of the voluntary production cut which OPEC has taken earlier. I definitely see there will be some impact on the way the OPEC operates. It was basically a very tight group with mostly dominated by Saudi. But the total geopolitics is also changing with the foreign policy stance which is being taken by UAE versus Saudi in Yemen, or let's say Sudan. Also, UAE is trying to position themselves as an economic hub away from purely oil. And one more important thing is that UAE economy is more interpersed with the world economy because of the various investment, Dubai, etc. And therefore, what affects world economy affects more to UAE compared to the other Gulf countries. While a higher oil prices will be in benefit to other Gulf countries, it will impact the world economy and it may not be that much positive for UAE. So there are different perspectives on the economic and strategic future of the nation. And the foreign policy stance which has taken, that also has got an impact of, like, Saudi is getting into an Islamic type of military arrangement with Pakistan, while UAE having a close arrangement with Israel on after Abraham Accord. So and also UAE having the close relationship with US, and also the currently during Iran war, a grudge which UAE has that the Gulf countries have not done enough when they were being attacked. So all this, and of course in Yemen when Saudi and UAE were on the allies once upon a time to fight the Houthis, but subsequently they found themselves supporting the rival groups. So all this is coming to close, but UAE, possibility of UAE exiting OPEC was known for quite some time, when some time back UAE launched their own benchmark indices on crude.
Got it. Okay. Well, Mr. Surana, great talking to you as always, sir. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you very much.
Well, that's MK Surana. And well, in some sense, this is very notable. Also, from an Indian perspective, I think the majority population in UAE is India. So it's almost like an extension of the country that is UAE per se. Or Dubai for sure is. Okay, let's swap topics. Just before we move on to the next conversation, want to mark that equity markets are still holding out okay for themselves. Nifty IT is rip and roaring up about 1%. So that one is doing really well for itself. Keep that at the back of your mind. Individual pharmaceutical names, for example, OneSource, Concord Bio, etc., all seem to be doing okay. Indigo, though, has slipped into the red. So that is possibly on expected lines. Okay, moving on. Bharat Coking Coal reported a weak Q4 performance. Well, you could argue impacted by lower volumes, maybe rising cost pressures as well. More perspective on the earnings. We are joined by Mr. Manoj Kumar Agarwal. But first, Parth brings us more details. Parth.
Thanks, Neeraj. So, Bharat Coking Coal reported a weak Q4 that was driven by lower volumes and cost pressures, like you rightly said. The company has hiked prices in their washed coking coal, but those were effective from the April month this year. Last quarter, the company saw a strong push on their inventory liquidation, which was supported by some discounting schemes that were ran by the company. If we have a look at the Q4 numbers, then their revenue was down around 15% to reach 3,283 crores. Their EBITDA, in EBITDA terms, they reported a loss of 335 crores versus a profit of almost 62 crores in the same quarter last year. Their net profit was also down around 60% to reach 27 crores. So it was a really weak quarter for the company. If we have a look at the operational performance as well, then in FY26, their coal production saw a decline of 12% to 35.5 metric tons. Their coking coal production also declined 13% year on year. Their offtake was also down almost 14% year on year. So this reflects the weak demand that the company is currently witnessing right now. If we talk about their pricing and strategy as well, they have hiked their washed coking coal prices to 13,403 rupees per ton. They have also hiked their medium coking coal price to 10,937 rupees per ton. They have also increased the evacuation charges across their many product categories. And also the discounting that we spoke about earlier, that was used strategically to clear the high inventory which the company had in the previous quarter. So now going forward, the two key things to watch out will be, with the coal prices rising, can the volume sustain in the coming future, and also can we see a margin recovery in the next financial year, which is FY27, after the price hikes that have been implemented by the company.
Okay, Thanks for that part. Let's get in Mr. Manoj Kumar Agarwal, Chairman and Managing Director of Bharat Coking Coal. Sir, thanks so much for taking the time out and being with us, Mr. Agarwal. How would you sum up the quarter? Is it weak volumes which were the principal culprit or something else?
Actually, we are highest producing coking coal company. Our 30% coal is washed volume wise, and 70%, 65% goes to the thermal power. Now in fourth quarter, every thermal power is having sufficient coal stock at their end. That's why the demand was less in last fourth quarter, and that's why we can't supply sufficient and we didn't liquidate our coal. That's why the revenue generation was less. But now demand has increased and we are supplying more. More racks are going. Now onwards in FY27, first quarter will be rather more improvement we will see there.
Kind of improvement, sir? So, I mean, relative to what volumes have been clocked in as an average for FY26 or in quarter 4, how do you expect volumes to shape up for Q1 or for the first half?
Our volume will also increase and we have improved our quality also. In that sense, less coal will generate more power. In our first quarter, 27, our volume will increase in comparison to last year. I think it will be more than 10% increment will be there. That will be a very significant improvement with related to the last year first quarter.
Interesting. Okay, so 10% uptick in volume expected in the first quarter. Good morning, sir. This is Alex joining into the conversation. I'm just trying to assess the implications of the increase in the prices as well. So if you can talk to us about coal pricing and what the trends are there and what that means for realizations for you as well in FY27.
See, our coal prices, especially for coking coal, it is in the range of 9,500 to 14,000 per ton of the coal, of the vast coal. Especially, we dispatched it to the Shell, and it is the 62% of the Australian FOB price for the PCC. And what we are planning this year, we will talk to the Shell, another steel company, and we will go for the rise in price. One cess of Jharkhand government 450 rupees per ton is also imposed on us, which is not we are taking from the Shell steel companies. Like this, there are sufficient reasons to increase the price of the coal, and that will directly impact on our revenue. One way is this. Another, our demand is increasing in the first quarter as summer is also going its stock peak, and that our stock is having more than 9 million ton, and we will produce this year around 39 million ton. Our dispatch will increase. Quality has already improved of the Bharat coking coal mines, and our vast coal by improving the washing capacity of our washery, that is 13.65 million ton per year last year to 15.65 million ton. So vast coal will also increase, and after washing price is increased that will impact our revenue very much.
Mr. Agarwal, this may be a very basic question, but please explain it to me as somebody that does not necessarily understand the chemical composition or the way that coal is produced. You're saying that the quality of coal will improve, and so therefore you will get more energy for the same amount of coal. Does that also have a bearing when you consider it as a pricing? Does better quality coal get priced higher than other lower quality coal? And if you're saying that the mix will improve in this FY27, to what extent will the mix improve, and to what extent will your realizations also improve?
Our realization will improve around 10 to 15%, and our volume will increase similarly 10 to 15%. And you see, if our quality coal will go to thermal power in higher grade than the declared grade, then we will get more price. And similarly, if quality coal, vast coal will go to steel companies more than the declared grade, then we will get more price. In that way, I have told you, our revenue will be increased and our quantity will also go up.
You've already mentioned that you've seen demand pick up, Mr. Agarwal, from the energy space, from the thermal space. But specifically on demand from steel, what are the trends that you're seeing?
Demand of the steel is ever demanding. Whatever we will produce, whatever we can supply, they will take. That's why we want to reduce the import of the coking vast coal. So in a steel company, there is no limitation of the demand. That's why we are improving our washing capacity, and in 3031, our washing capacity will be of more than 50 million ton. So there is no any issue of the demand with the steel company of the vast coking.
So can I then therefore confirm, sir, that the discount schemes that we saw are a one-off? Because the way that you're seeing it, you're describing it, the demand seems to be robust and intact.
Yes, yes. Demand for the steel company will be never come down, but for the thermal, there are various other coal companies and other supply sector. That's why thermal power coal or vast power coal from the Vasri, though the demand of this type of coal, thermal coal, will be less as other companies are also supplying, and our thermal power, all thermal powers is having sufficient coal. That's why to reduce, to liquidate our coal to get more revenue, we have given schemes of this discount scheme. And you know what is the discount scheme? It is 100 rupees per ton to 600 ton per ton of coal, and it will continue as per the situation.
Got it. All right. Mr. Agarwal, thank you so much for taking the time and for speaking to us on NDTV Profit. Wish you all the best for FY27. All right. Let's go across now to talk about what is lined up for the automotive space, and specifically in Ola Electric. We've seen a significant up move in the stock. It was beaten down for quite a while. It's up in trade today as well, but the recoup that you've seen in the share price is quite considerable. Is that backed by fundamentals? What's at play right now? Puneet has some of those answers. Puneet?
Well, thank you for that. Well, we've seen the month of April actually see some revival in sales, and essentially, Ola recouping some of those lost sales essentially at this point of time in the month of April. So when you look at the market share down at the bottom, it was 4% in the month of February, and that was the lowest, down from almost 35% it did back in FY22 to just 4% in the month of February. That has steadily inched up to 8% now. They've also crossed 10,000 units for the second consecutive month, and we'll get to that in just a bit. But if we can just go to the previous slide yet again, because we see that TVS, Bajaj Auto as well as Ather Energy continue to dominate the market, but you've seen 1 to 2 percentage point changes here and there for both Bajaj Auto, Ather Energy as well as Hero, and that has been one of the key reasons for Ola Electric. So it's largely just change essentially from 1% each from other players, and largely the market continuing its growth momentum. So you've seen snatching essentially of 3 to 4% market share from other players for Ola Electric, but it's been a year to forget for FY26. For Ola Electric specifically, it was down 52% to just 1.6 lakh units sold in FY26, while you see for the other players, it's a growth from almost 25% all the way up to almost 200% for players like Hero MotoCorp. So you've seen a big change here for Ather Energy, who now is the number 3 player on a yearly basis, while TVS and Bajaj Auto continue to maintain their momentum, and Ola Electric hence continue to slip up. You're also seeing Hero MotoCorp with its Vida scooters, overtake Ola Electric now in FY27 as we've seen in the last couple of months. But as I mentioned, 10,000 vehicles for the second consecutive month. This will be something to watch if it's sustainable as well. The other aspect that the market share has been a key function and a key fraction essentially over the last 2 to 3 years. I said 35% it was in FY22, now slipped to 8%. So there is considerable loss of market share and hence they've slipped to the number 5 position now. They're also under threat from the smaller players like Greaves Auto, but number 5 not sustainable at this point of time given the valuations also. Ather as well as Hero MotoCorp have continued to see the strength, but what's the final plate here that 377 crores is what Q4 revenue is expected, so it's going to be a fall of 38%, but hopefully for investors free cash flow will definitely be a key monitorable at this point of time for Ola Electric, but a lot to watch for commentary in Q4 results as well as if this 10,000 volumes is sustainable at this point of time.
All right, thanks so much, Puneet, for that. Ongoing event, Economist Resilient Future Summit, and Sagar Adani delivering the keynote address. Listen in.
Let's put the scale of India's challenge into perspective. On a per capita basis, India's consumption is about 1/3 of the world average and 1/5 of China's. So if India is to become a developed country by 2047, we are not talking about incremental growth. We are talking about a structural leap. We're talking about adding nearly 2,000 gigawatts of new capacity to the India's energy grid over the next 2 decades. All this while ensuring that this energy remains affordable, accessible, and increasingly clean. That, my friends, is a scale of the opportunity, and that's India's most defining challenge. When you look globally, countries that have built resilience at scale have always done one thing exceptionally well. They've always secured their energy foundations. Most developed and prosperous countries are either energy independent or have built deep strategic energy partnerships. We don't have to look very far, as Vijayji was alluding to earlier, to find a more relevant example. China, despite being constrained in both oil and gas just like India, has systematically invested in significant energy resources domestically. They've built strategic reserves and they've strengthened and hardened supply chains. Yes, of course it remains dependent on global energy flows, but the level of resilience it has built over the last 2 decades is very remarkable. And the outcome is not just energy security. It is industrial strength, economic stability, and global competitiveness. For India, the path forward is clear. We must electrify everything. We must reduce structural dependence on imported energy. We must build an energy backbone that is anchored in resources that are available within our country. That is India's only credible path to long-term stability. But of course, electrification at scale demands one thing above everything else, and that is a massive growth in electricity supply. And this is where we must be pragmatic. Renewables will and must scale rapidly. Storage technologies will continue to evolve, but there are real constraints, particularly both around land and intermittency. Which means that to truly close this gap, India must adopt a portfolio approach. We must leverage fully every single energy source available to us. Renewables, yes. Hydro, yes. But also efficient thermal and nuclear. Because without firm, scalable baseload power, the math simply does not work. This is not optional for India, it is inevitable. It would be very incomplete to not recognize the role that the government and the country's leadership has played in enabling this journey. Over the last decade or more, India's leadership has played an exceptional role in cutting red tape, getting rid of unnecessary and outdated regulations, revitalizing public undertakings, and encouraging private enterprises. Countless macro and micro policy initiatives by the government have resulted in an environment where businesses can grow, flourish, and prosper. India has seen a clear, consistent, and increasingly execution-oriented policy stance. From accelerating infrastructure deployment, expanding renewable capacity, strengthening transmission networks, and enabling long-term investments, there has been both clarity of intent and continuity of action. And that continuity is the most critical enabler for resilience. Coming to the role of industry and specifically the Adani Group, at our core, we see ourselves not only as infrastructure operators, but as fundamental builders of India's energy backbone over the next several decades. Our chairman, Mr. Gautam Adani, has committed over $100 billion towards energy transition, one of the largest private sector commitments globally. But more importantly, it is not a mix of isolated investments. It is an integrated strategy. We are building one of the world's largest renewable energy portfolios, investing in large-scale energy storage, expanding transmission networks, and looking to develop green hydrogen ecosystems. Beyond energy, our presence across ports, logistics, airports, and data centers is a part of the same vision. And that vision is that resilience can never be built in silos. It can only be built through integrated ecosystems. Energy powers industry, logistics enables trade, and digital infrastructure drives productivity. And when these systems work together, you don't just create growth, you create durable resilience. So if I were to leave you all with one thought, it would be this. The real question is not whether India will need more energy. That already is very clear. The real question is how fast can we build it? Because in the end, resilience can never be built through intent alone. It is only built through execution, through the ability to create infrastructure at scale, at speed, and with purpose. And if India gets this right, we can deliver, if we can deliver abundant, affordable, and clean energy at the scale that is required, we will not just secure our own future. We will not just elevate 1.4 billion people. We will help stabilize the future of the global economy. Because India does not operate in isolation. What happens in India matters everywhere in every single corner of the world. That, my friends, is both our opportunity and our collective responsibility. Thank you so much.
All right, strong statement being made by Sagar Adani, talking about the opportunity and the responsibility. Of course, the group is putting its best foot forward when it comes to energy transformation, and the stocks are doing particularly well as well at this moment. In fact, the equity markets at the high point of the day, the benchmark Nifty 50 trading with gains of about 0.9% at 24,200 and holding at least for now. Let's see if that remains the case after this very quick break. Do stay tuned. Interesting conversations and a lot more stock-specific action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11.
Welcome back. You're watching India Market Open. We're holding with gains of 0.9% for the Nifty 50, 24,200 on the charts. But May has been a blockbuster month in the past for Dalal Street. With the new month now knocking on the doors, and particularly on the back of the April that we've had, let's get Somit in to give you a breakdown of the historical trends and what markets could expect in the month of May. Somit?
Yes, April has been quite a strong month for the market, but when it comes to May, it's a mixed bag that we are seeing, at least after analyzing the last 10 years of May month. What we are looking at for the benchmark here is that the benchmark has managed to close in green 6 times. Average returns have been just 1.3%, and 2% plus positive return is something that we have seen in only 4 years, that is 2016, 2017, 2021 and 2023. When it comes to the broader indices, that is a mid cap and the small cap index. Mid cap index has managed to close in green 6 times. Small cap has closed in green only 5 times. Average returns for mid cap is 0.6% and for the small cap is negative 0.1%. Now, if you look at the sectoral indices here, Nifty Auto stands out. 8 out of the last 10 Mays, it has closed in green. Average returns of positive 4%. FMCG and bank has closed in green 7 times, average gains of around 2 to 2.4%. For real estate, it has closed in green 6 times, average gains of 2%. Metal index and IT index have closed in green 5 out of the last 10, but average returns have been anywhere between negative 0.5 to positive 1%. Energy index 4 out of 10, closed in green, average returns flat. Pharma is the only index which has performed the worst. Minus 3% average returns is what we have seen in the month of May, and it has managed to close in green just 3 out of the last 10 years. Now comes the most interesting part on the stocks. Now these are the stocks that have managed to close in green at least 8 times, and average gains have been more than 5%. Bharat Dynamics clearly stands out. All of the 10 years of May month, it has closed in green with average returns of around 16%. KEI Industries, M&M, Container Corp, all of them have closed in green 9 times, average gains of anywhere between 6 to 9%. Uno Minda and Godrej Consumer and Siemens have closed in green 8 times, and average gains have been anywhere between 6 to 11% for these counters. On the flip side, these are the stocks that have closed in red 8 times, and average returns have been negative more than 2%. Sun Pharma, SRF, PNB, Steel Authority of India, Blue Star, Bank of Baroda and Oracle Finance Services. These stocks have closed in red 8 of the last 10 months, 10 May months, and the average returns have been negative 2 to negative 6% on an average in the month of May.
Well noted. Somit, thanks so much for giving us that interesting assessment. Nirav Sheth, CEO Institutional Equities at MK Global Financial Services, with us on the show. Nirav, good morning. Thanks for joining in. Could it be sell in May and go away for Indian markets, or will it be difficult to predict May until we know the resolution of the conflict?
So, good morning, Neeraj. And I don't know why we are even keen to predict what happens in May, right? So you made a point that we can't necessarily call out the resolution of the conflict, and the channel that it hits us through is obviously the capital flows and the current account deficits because of what happens to the oil prices. But I think the general expectations of the market is that there'll be a resolution sooner than later, because if you look at the last I checked, the December crude futures, they were trading at about 74. The current Brent prices are about $110 and all. And it's very asymmetric. I've held this view for a long time. So far, I've been wrong, right? So, it's not that Iran is trying to win the war, right? They're just trying to have a saving face so that once you called out ceasefire for good, the current regime has legitimate reasons to rule, right? So, so I'm in the optimist camp. You still have earnings growth in the region of about 12% for FY27. trading at roughly about 17 odd times, which is lower than historical last 5 year historical averages. Yeah, so I'm fairly constructive on the markets, Neeraj.
Interesting.
And I mostly am.
But Nirav, the point being, the telltale signs are not necessarily the most positive, because two things, right? We don't, three things actually. We don't know when the conflict will end. Frankly, at best, it's a guess. Nobody quite knows. Brent, as we speak, is at 111, which is what it was during the worst period of the conflict in the last 30 days. So in some sense, no respite from crude either. And almost every FII that we speak to, or a broker who caters only to FII says that their clients have a lot of options right now. They don't want to come to India because other markets growing better are available cheaper. Why should Indian markets do well?
Right. So I think, to get slightly into more details, right? So you can make a case that, for example, South Korea is cheap, right? Because earnings are growing very fast and that's a part of an AI trade. So let me give you a sense, right? You can argue that TSMC or some of these memory companies, Hynix and all, they're trading at about 8 or 9 times earnings, around 30%. The variability in their margins is from 5% to 85% operating margins, right? Today you are operating at 85% operating margins, right? And therefore to try and assume that you will have peak multiples on peak margins doesn't necessarily make sense. So that is the nature of the beast. It's like saying that Hindalco trades at 6 times EV to EBITDA. It deserves to trade at 6 times EV to EBITDA. I concede that unfortunately India is not there in this AI space ecosystem. That is something that we need to find a solution to this, right? My personal view is that it is a tremendously path-breaking technology. We don't know when it's going to hit us, but it is surely going to hit us at some point of time in the future. To that extent, we are not a part of that AI trade. And my personal assessment is that it is not so much about growth. It is about the fact that we just don't have an AI play. And therefore, when you're talking about a $5 trillion market cap of NVIDIA, when you're talking about 1.5 trillion market cap of TSMC, we don't have a corresponding bet in the Indian market, right? And to that extent, I think, yes, will not be the favored market for the FIs. Now flip the question and think about it, that what are the options that the Indians have got? You got fixed deposit, which is sort of getting about 5.5–6%. Property markets are almost giving you a similar kind of returns. And in the worst case scenario, end up going 9 or 10% in the Indian market. So you should not get too worried about where the Indian savings are going till the time we open up capital convertibility, which is not going to happen for a long period of time. It's a cause of concern.
Okay, Nirav, okay, so good point. But so the argument, I think, my opinion, and so of course, it should not be that we don't have an option and so therefore we have to invest in equities. That is actually something that shouldn't come to pass. I'm just focusing on the 12% earnings growth that is being penciled in. I'm wondering, Nirav, if that is a little optimistic given what we know so far, and the fact that Brent is likely to stay elevated as per anybody's guess. At this moment it's at 110 plus. So do you think that you might have to revisit that maybe in towards the end of the first half?
Well, very possible. So one of the things that we want to keep in mind is that the 12% earnings growth we are talking about now for FY27 also comes on the back of the fact that my FY26 earnings have been downgraded to some extent, right? So also please try and appreciate the fact that, let's say this conflict were to continue for 3 or 4 months, then it's very likely that we will have a couple of percentage notches downgrading the earnings. That doesn't do anything to my FY28 earnings. Please understand that. There is only so much valuation that you will give to my next 2 quarter earnings. A lot of the value for most of the companies will sit in terminal value, right? Unless you are making a case that India is a banana republic and then... So even if you take $110 today, the total hit to the government, right? If I don't increase my retail prices of the petroleum will be close to about 3 lakh crores for the entire year. You are running a gap of roughly about 15 or 18,000 crores a month on petrol and diesel, and you add about another 8 or 10,000 crore that is coming because of reduction in excess duties that the government has taken. Is it a hit? Of course it is a hit. But can we take it on our chest and move on? Of course we can take it on our chest and move on.
Okay. To what extent, and Nirav, the follow-up to that is that the impact of this is going to be unequal, just as geopolitically, and if you look at it globally, the impact of the conflict is also unequal. If you look at higher energy costs, there will be pockets of resilience, relatively speaking, and there will be opportunities to be had as well. People have been talking about the energy transformation story as one of those. But the only point is that if you look over the last 1 month, the kind of rally that you've seen across the board in April means that if you're trying to deploy right now, quite a few of those opportunities don't look as mouth-watering as they did earlier.
Yeah, exactly. Because, a month back, you would have worried more about what is going to happen to the conflict. This is exactly what we are discussing right now. And there's a price to pay for that, right? So every time that you want to have more certainty, you'll have to end up buying something at a price which makes you slightly uncomfortable. But I'm in the same camp. I think electrification, renewables, these are big themes, and it's high time that India understands that. You are spending about $110 billion on oil. Why would you not spend a couple of $1 billion in subsidy and try and, force feed the electrification story going forward? And this will happen as we move forward. So, yeah, you need to be slightly more, the point I'm trying to make is that it is during this period of uncertainty that you'll have to try and deploy the capital, right? So, we've gone through pandemic and see what has happened, right? You're nowhere close to what was happening in pandemic. So, and we'll have these kind of problems occasionally. It happens all the time. There's nothing new.
Okay, Nirav, I saw a note from the House of MK around how your 13-day trip to China leads you to believe that there is maybe a cycle of sorts coming into chemicals. In fact, if I'm not wrong, the note said that for bulk chemical producers, there could be a new bull cycle coming. Tell us, because this sector has been a bit of a slumber for the last 5 years.
Well, I'm not an expert on that. I think the limited point that I think the note tries to make is simply the fact that, and this is a well-known story, the involution story that we are talking about in China for a long period of time. You're seeing that is now being played out even in electric cars. Just look at the BYD results that were declared yesterday, right? The profits are down significantly. So I think it is coming to a stage that beyond a point of time, your cost structures move up, that the prices have to move up. And that is the limited point that we are trying to make over there. And obviously, the stocks have not gone anywhere over the last 3 years. So you had a pandemic-induced supply shocks, the prices ran up, the profits peaked out, and from that, there's been consolidation. And we believe that that consolidation phase is by and large over. And then within that, you look at which are the chemicals that try to benefit and which are on the positive side of the trade. But yes, the limited point is that there is a pricing discipline that seems to be coming around in parts of that sector for sure.
Okay, Nirav, one last question. Autos, a quick 1 minute, please. But autos peaking out, you think? Market discount 6 months ahead, GST benefits will go away, or the base effect will go away, oil higher, etc. Autos peaking, you think?
So I think that we have got a fair line of visibility in terms of where the volumes are going to head. But our understanding is that you may want to look at four-wheelers with a different spectrum and two-wheelers with a different spectrum. There is far more disruption that is happening in four-wheelers, right? So you got this Nissan and Renault and all of them are coming back. Electrification is picking up and new leaders are emerging in that space, right? And you had a similar kind of disruption that happened in two-wheelers, which is now well settled, right? So you got Ather and you got one more guy, and then the incumbents have come back very strongly in that space. We are far more constructive on the two-wheeler space. And then we believe that against passenger vehicles, probably even commercial vehicle makes sense. Obviously, there are concerns about increase in diesel prices and all that. But the volume trajectory and the competitive scenario over there is far more secure for the incumbents than it is for the passenger vehicles. So that's the broad take. It is not so much about the volumes for cars, but in terms of how that profit mix shapes up in next couple of years. And the valuations will depend on that.
Okay, Nirav, we'll leave it at that. Thanks so much for taking the time out and being with us today. Really appreciate your time.
Thank you so much for having me, Neeraj.
Well, let's see if the DI buying helps the Indian markets. Okay, very quickly, a couple of questions with Motherson Wiring. They reported, well, not the best of quarters really, especially on the margin front. We're joined by Gulshan Pahuja, CFO of the company, and Anurag Gehlot, COO of the company. Anurag, let me start with you. Can you highlight the Q4 results for us?
MSWIL has given a very strong performance with growth in revenue and EBITDA both. Q4 remains the highest ever quarterly revenue of 3,335 crores, which has grown by approximately 33%, whereas market has grown by only 11%. If you look the yearly revenues, they have crossed 11,478 crore, and we have crossed the mark of 10,000 crore as well. So we have outperformed the market, but coming back on your questions on the margins, the profitability from existing business remained stable. There has been no underlying pressure on margins, excluding the pass-through impact on account of high copper price. There is a significant increase in copper prices quarter on quarter, approximately 18%, which will be offset in the most coming quarter, in 1 quarter or 6 months, as per the contractual terms with the customers. If you review our annual performance, it is evident that a substantial portion of the cost impact from earlier quarters has already been passed on. So overall performance continues to be strong. The margin impact from copper price fluctuations are temporary in nature and does not affect the underlying strength of the business. And we are a ROCE company instead of more of saying on the margins. We have kept our targets more than 40%. We are consistently performing very, very strong ROCE. And I think this reflects the robustness of our margin profile.
Gulshan, net startup cost of new plants has impacted profits this quarter. I believe the number is what, 116 crores? What's the number looking like for FY27?
Giving the number would be very difficult, but I can tell you that it is 400 crore for this quarter, and now we have come so far in the greenfield plant that we are at a stage where there will be a stabilization and see some optimization level at the greenfield plants. So if I just go one by one, Kharkhoda is going as per the plan. The volumes have already ramped up. They're running at a capacity of 80%. Go to the Navagam, for which the one product SOP has done in the quarter 4, this quarter itself. So it will be ramped up in 1 or 2 quarters. And Pune is something for which the volumes have not come up, for which the customers have projected in the beginning. So that capacity would be diverted towards some other, to cater some other customer or to that customer with their new product. But I would see the next year would be the same, seeing the growth volumes we have achieved this year. There is positive sentiment that we continue to sustain the same volume or better than this year in the next year.
All right, and Gulshan, what's been the commodity impact? Has been passed on completely this quarter, or will we see the impact ahead?
So the commodity prices has completely passed through. That is the contractual understanding with our customers. So there is no single element sitting in the commodity cost where we will not be able to pass through. It's just that there's with some customer we have a 3 months understanding. I mean, after 3 months lag, we will be able to pass through, or with some customer we have 6 months understanding. So if you look at the profitability for a whole year, we are able to pass through substantial cost elements already to our customer, as Anurag has also mentioned. So it's just that we are seeing a continuous spike in the copper prices quarter on quarter. There was a spike in quarter 3. There was a spike in quarter 4. And there's no respite in the copper prices in the last 6 months or like three quarters. Right. First is this. Second is when it is a pass-through arrangement with same level of cost sitting in your cost and the same level of the element is sitting in your sale price, there's always a denominator effect which gets impacted your profitability. So, but answer to your question in very precise manner. Obviously, for this quarter, for this quarter also we would be able to pass through our commodity prices or increase in the commodity prices to our customer on the new volumes in the next quarter.
Gentlemen, thank you so much for taking the time out and being with us today. Really appreciate your time. Very quickly, before we wrap up India Market Open, the markets are doing really well. 1% higher for the Nifty 50, led by Nifty IT, which is up 1.5%. But 4 stocks before we wrap up. Garden Reach, 12.5% higher. Bandhan Bank, 10% higher. That's a large market cap, moving up 10%. CEAT has an 8.5% uptick. This is despite Brent at 111. Something that the markets are telling you. And the big boy Maruti Suzuki is up 4.5%, making a serious move in the session today. So watch out for these, some of these names, and in fact queries around that on Ask Profit up next. Thanks so much for watching India Market Open.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome to NDTV Profit exclusive interaction with Bandhan Bank MD CEO Partha Pratim Sen Gupta. Mr. Sen Gupta, thank you for talking to us. We have seen that Bandhan has gone through a cycle of MFI stress over recent period. Now that trends have improved, actually zero sort of SMAs in fresh disbursements, MFI disbursements. I want to understand, core income continues to be a challenge while other income has risen across players. From FY27 perspective, sir, what are you doing to improve your core income or NII?
So let me just tell you that this year the net interest income was largely affected by the repo rate cut. It was 125 basis point that we had to pass to our borrowers immediately. Whereas from the deposit side, on the liability side, the effect of the reduction in interest rate or the moderation or the interest rates that has happened. So that took a much longer time, and that is how it behaves. So In Q4, actually, we said that we will get some effect of the reduced cost of funds. So our cost of funds, which was 7.1, has come down to 6.4. Q1, Q2 will continue to get the effect of the reduced cost of funds. I hope that the interest rates remain, but we will have to see how it behaves because of the war-like situation and the inflationary trend that is going around. So that will definitely have some impact, but we will have to see. As of now, I can say that up to Q1 and Q2, the trend is quite okay as per the interest rates are concerned. The second thing is that my advances growth, if you will look in the Q4, that is almost 50% or more than 50% of what we have made in the entire year. The effect of this income is going to start coming from this quarter because advances were made, say, in the month of March or 15th March or 16th March for that year. So those advances were not fully, we have got the benefit of that. So that will also start to come. Third is that and maintaining the asset quality. You see, the tremendous improvement in the asset quality has been maintained. And if we continue with that level or that improved asset quality, then I can say that the interest reversals that would be reduced to a large extent. So if you give the combined effect, the other income is always a focus area. As you rightly said, everyone is giving much stress on this other income. So we are also giving. And if all these things actually work together, I think that Q1 and Q2 of the current year, I can say that this profitability would more likely to be maintained. But I am just talking from the YOY perspective.
Thank you for that, sir. Actually, if you could guide us on the loan and deposit target, loan and deposit growth target for FY27.
So we are thinking at the market, how their industry, how are they behaving, considering the growth rate that is happening in the industry and our base. I would like to have at least 100 and 200 basis point more than what the industry is doing. That is my guidance regarding credit. Regarding deposits, we have always said that we don't normally set a target. We just say that whatever growth we are achieving in credit, we will do a little bit more in deposit rates. But as you see, the industry is behaving a little bit differently as of now. From November onwards, the incremental credit growth is more than the incremental deposit growth. So that since we are also a part of the industry, so we will also have to closely watch. But definitely the competition is intense in deposits, and we are coming with lot many products, with lot many initiatives. I would like to maintain the ratio of 15% credit growth and a little bit marginal higher growth in respect of deposits.
Correct. And in terms of your CASA ratio, which is at lower end of 29%, what are you actually doing to improve the share of, low cost deposits in your liability mix?
So let me first tell you that CASA, which was 31% last year, got reduced. But from Q3 onwards, I can say that we are recouping at a much faster rate. So Q3 we were around 27%, Q4 we could improve to 29.3%. And I think we were first targeting that we should achieve our previous milestone of 31%, and then we can set up our new targets. But what is good in this entire CASA history, I can say that my current account book is growing, and it is growing at a much higher rate. The average current account retention is also quite high. In the savings bank, we have moderated the interest rates, and we have lost almost around 18,000 in the higher buckets. So in the higher buckets, I can say that which were having an interest rate of around almost 7% and above. For that interest rates, since we have moderated, we have lost those chunky deposits, but it has eventually, I would say, helped us in gaining the CASA, because in the retail front, or the actual retail deposits, I have gained by 16,000 crores. So currently the difference is 2,000 crores. And with the introduction of new products, our new corporate salary package, our new M-Bandhan, that is the mobile banking app, we are very sure that we will soon reach the milestone of 31%, and then we can fix a new target going forward.
Okay, another important aspect in the industry right now is the RBI's ECL new circular that has come out. Provisions, if you could give us some color on the amount of provisions you will need to make to comply with the ECL norms. Also, the hit to your CRAR, what would it be? Because certain analysts say that banks with a higher degree of MFI loans on their book will face higher hit from the proposed ECL norms. Have you made an estimation on the needed provision, sir?
Circular has come only yesterday, the final circular. So we are still analyzing, we are still working out. But December figures, we have roughly made an estimate of 1200 crores. So, but that is on the December figures, but Q4 has been much better. So I think maybe a little bit of provision requirement may come down. And this will be, as you know, that for the capital adequacy purpose, we can apportion it in 5 years for that. So almost 240 crores. So with the December figure, I can say 0.20 or some basis point will be the impact on the capital adequacy. But definitely, if we can do much better in this financial year and in the coming years, I think this can be recouped to a large extent. So, and number two is that, you see, for Bandhan Bank, for the EB book, we are maintaining a standard asset provision of 1%. So that is one thing we are continuously maintaining. As of now, also, I have got almost 1070 crores of provisions in the standard assets, which has some also special provision in my books. So I don't see that it will be a major challenge, but yes, going forward, maintenance of asset quality is definitely a challenge because we are in the MFI segment. Although our MFI segment ratio has come down, so it was at one point of time more than 60%, we have now come down to almost 35%. But definitely, if the quality of improvement that what we have seen in Q4, if you're able to maintain it, I don't think that this extra provision would be a much challenge to us.
Sure. I want to understand the share of micro loans currently is at 35%. Do you aim to further lower the share of micro loans in your loan book?
No, so we have a guidance. The guidance is that exit of 27, I should have 58% secured and 42% unsecured. We are near to the guidance. So at least till FY27, we are not going to change it. Maybe 60-40 can be the maximum, 60 secured and 40 unsecured. So we are a leader in the EV segment. We continue to retain our leadership position. There is no second thought on that. We have remodeled the entire EV business. We have introduced new technologies. We have introduced different underwriting process, I would say, a much more revamped underwriting and onboarding processes. So with these things, we are already seeing the results. And in future also, I think it will be a strong point of Bandhan Bank. So unless uncertainties come on account of external factors, we are quite confident with this portfolio. As of now, there is no guidance to reduce it further.
Well, this was the management of Bandhan Bank, Mr. Partha Pratham Sen Gupta, MD and CEO at Bandhan Bank. Back to you, Mahima and Puneet.
Thanks so much for that, Piyush, and viewers, welcome back. You're watching Ask Profit, and if you haven't already, do start sending your queries. Of course, this is results season, so apologies for the delay in starting the question and answer session, but you can start sending in on the WhatsApp number that's flashing on the top of your screen as well. You can call us on the landline number that's flashing on the top of your screen as well. But markets are continuing to be buoyant at this point of time. We've seen the Nifty 50 level crossing 24,200 and building onto those gains, up 1.13%. The heat map also for the Nifty 50 shows you that perspective as well, because seeing a lot of individual movers gaining in trade today. Eternal definitely one of them. It's come off the highs actually, and slipped below the top 10 gainers as well, up 1% right now. But Maruti Suzuki, on the back of strong results, is continuing to maintain the momentum and taking Mahindra with itself on this positive ride. We've seen Tech Mahindra, Bharti Airtel and Coal India also respond positively to the session. But the sectoral heat map though, very quickly as well, shows you yesterday PSU banks were down and out in trade because of the ECL norms. Today at least in the green. But the Nifty Auto, because of Maruti, is up 2.3%, the biggest sectoral gainer. So is the Nifty Realty and the Nifty IT as well. The advanced decline ratio as well very quickly shows you that largely yesterday was a day where you see quite a lot of volatility now. At least for today, it's a 2:1 ratio in terms of advances as well as declines, and the mid cap and the small cap too gives you that perspective as well. Up 0.7% now for the mid cap 150, the small cap 250 also up with a similar percentage. But it's a day of individual movers, and the BSE 500 will show you that. Bandhan Bank on the back of results, we just played out the conversation with the management for you. CEAT, Star Health are the other two big gainers there. We spoke about Maruti as well. And Cohan's just taking some breather after a relentless, 2-day up move of almost 15 to 20% on the stock. Let me welcome in Vaishali Parekh, Vice President Technical Research at PL Capital on the technical side. Mahesh Ojha, VP Research, Business Development at KC Securities to answer all your fundamental queries. Both of you, thanks so much for joining in as well as patiently waiting by. The first question coming in now, it's on Grow, and a viewer wanted to buy 100 shares of this particular counter. Mahesh, strong quarter four results. Would you recommend that it's a good time to still buy and look at this counter even at these levels?
I think investors should wait for further any correction from these level limited upside. So I think if any downside nearby 180, 190, that could be an area where grow can be added. Yes, definitely outlook is positive, but from these level we are seeing limited upside. So from my view, if any downside nearby 180, 90, that can be a good area for it.
Got that view, but let's go across, take the next question as well, because and this one's coming in on Muthoot Finance. Now, our viewer is holding shares of this particular counter at 3534 rupees per share, asking what he should do. And this is Usha from Bangalore holding 50 shares. Is it a good time, Vaishali, to add more in this particular counter? Is this question? Very good morning to you. What should you do?
Very good morning. I think stock is showing signs of improvement. So I think 3400 acts as a good support. And once we see strength, this can go towards 3700, 3800 to start with. So with 3400 as stop loss, you can consider buying more.
That view, Vaishali. The next question coming in now. This one's, on Hindustan Aeronautics. Now, a viewer, Ramesh from Bengaluru, is holding shares at 4,700 odd rupees, and he's holding since August of 2024. So, currently is in loss, asking if he should continue to hold this counter or sell out. Mahesh, what would be your opinion?
Definitely, they can hold the same. I think HL has a good potential for upside. At least 5,400, 5,500 level can become in HL. So from my perspective, HL can be hold. If anyone want to add from a longer term perspective, they can add further on this level.
Got that view, Mahesh. The next question coming in now, it's on JBM Auto, and it's Sudeepto from Mumbai is asking a very short-term view on this. What would you recommend, Vaishali? Is it a good buy now at these levels?
So JBM Auto has been in momentum since a couple of days. So even if a short-term perspective is looked into, 620 would act as a good support. And I think if this momentum continues, this can go towards 680 to 690. That would be the short-term view.
Got it. Well, the next question now coming in, this one is from Charan from Bengaluru on Marksans Pharma. Now, he's holding shares at 346 and over 100 shares here, and he's been holding on since 2024. So he is a long-term investor, but currently in a loss. Mahesh, he's almost down 40% from the buying price. Would you recommend him to average down on Marksans, or probably continue to hold or sell out his position?
If any downside nearby 165, 170, that can be area for a average further. Yes, definitely some upside from these level can be expected. So averaging is a little bit good idea for the Marksans Pharma. So from my perspective, if further downside, they can average the same.
Got it. Well, the next question, this one's from Sayak Pal, and it's a question that we also put some spotlight on today is Ola Electric. Now, the news being that the company has crossed 10,000 vehicles in April, and we put out perspective in India Market Open. You can catch that if you missed it. But Vaishali, I think we spoke to you a couple of weeks ago on Ola Electric when it was at that 40 odd level. Briefly breached that and now slipped back around to that 35 odd mark. Do you feel that there's enough evidence to go back to those levels? What do the current charts tell you?
So, well, it is showing signs of recovery. We saw a bottom happening at 24, and from there on, we saw the stock going towards 40. So, currently, 35 acts as a very good support. I would just call this a consolidation level. So, as long as 35 levels are held on, and once we see a clarity, the stock needs to move past 40 levels to see a further strength going towards 44 and 45. So, 35 should act as a support. 40 is the near-term resistance. A move above that gives us clarity for further higher move up to 45 to start with.
Got it. Well, so 40 is the level to watch out for, at least coming in from Vaishali, and then subsequent levels follow through. Viewers, you can also call us for stock-related queries as well. The landline number is flashing on the top of the screen. Next question on JSW Cement. Now, our viewer Lakhan Kumar Bazari from Bangalore is holding shares at 130, so not too far away from the current price. He is a long-term investor asking what he should do with his 450 shares. Now, Mahesh, stocks not moved too much, since the IPO price as well. Is it a preferred pick? We've seen some good numbers coming in from Ultratech.
Okay, stock has fundamentals are good, so some upside can come from my perspective. Numbers are quarterly number can be watchable, but from these level we can expect at least 145, 150 level. So from my perspective, that is the hold. If anyone want to add further, if any downside from these levels, they can add further. So it is a good add from these level.
Viewers, before we take or a lot more of your stock queries, time to dive into the BSE FNO market setup, and Sharad is joining in to give us that perspective. Sharad, over to you.
Thanks a lot for that, and of course we are at the start of the new series also, and that is why we are seeing new positions being built across the portfolio and sea of green coming in. M&M, Maruti, Tech Mahindra, all of them doing well in trade. All these stocks more than 2% up, and of course it's pretty interesting. The technical reversals are also at play, and there might be a little bit of hint coming from the West Bengal state elections as the second phase of voting starts. Nothing much when it comes to the sell-off, but the technical positions are strong across the board. Even in this includes for BankX also. But let's see the stock specific moves, what's happening. Long build up, and we see Bandhan Bank, a very strong set of numbers coming in, especially the operational numbers to look at, and Maruti Suzuki also holding the fort. Let's look at the short covering candidates, what makes it to the list. And Vodafone Idea, the stock has been seeing a good buying last 3 to 4 trading sessions. There might be a positive news nearby, and of course it's a mirroring, and today we had taken in the brokerage also is IndusInd Bank. So both of them are seeing a good volume based buying. Let's look at the long unwinding. Nalco and PG Electroplast makes it to the list, but not worth of a trade, and short build up is there for REC and JSPL. You should be looking at REC. Some kind of profit booking is happening from the recent rally. So these are the stocks which should be on your radar, which are buzzing in the FNO space.
Got it. Well, thanks so much for that, Sharad. But let's go across, take the next question now. This one's Vaishali directed towards you on Tata Power. Now, our viewer wants to buy these shares at 387, and he's been holding on to 250 shares. So currently sitting in profits of almost 18,000 rupees. Asking that if he should continue to hold this, or is it a time to sell? What would you recommend?
I would say continue holding with a trailing stop loss, because right now we see that the stock is, after a very long time, given a breakout at around 430 levels, and my expected target is around 520. So I think keep a stop loss of 445 and continue holding.
Got that view, Vaishali. But taking the next question now on Emcure Pharma. Our viewer Ganesh Iyer from Mumbai holds shares at 1450 rupees per share, and he's holding 550 shares here. So he's currently sitting on gains of almost 1.5 lakh rupees. Mahesh, what would be your opinion? Should she continue to hold on or sell out right now?
Parcel for 50-60% profit booking is advisable on these levels, because the stock has run a lot from lower level. Some profit booking can be come on these levels. So from my perspective, if they bought in lower, then at least book 50-60% on these levels.
Okay, all right. The next question that we have, I think, is on Cochin Shipyard, and this is from Ramaya, who's writing us from Nellore. She's holding 82 shares at the levels of 1600 per share. Wants to know the target price from a 2-year time horizon. Mahesh, I know target price would be difficult, but your view on Cochin Shipyard?
From Cochin Shipyard perspective, we are optimistic for some more upside. At least we can see some handsome growth in this counter, and fundamentals are looking are very attractive. So from my perspective, if your horizon is a more than 2-year hold, at least we can see 2100, 2200 level in 1-year horizon. After that one, we can review on the same.
Got it, Mahesh. But the next question coming in now, and this is from Ellen Parkhe. He is a regular viewer of the show, and he's sent across a very interesting question. Now, he's holding shares of Hitachi Energy, and if he can load up the question, also shows gains as well, because he bought it at 6,990 rupees, and he was smart enough to buy 100 shares of Hitachi Energy. So his investment is roughly around 6.9 lakh rupees. That has ballooned to 33 lakh rupees from just this one investment. Now, Mr. Parkhe, I would have really loved talking to you about what you saw in that time. But Mahesh, he's selling on stellar gains. Just in terms of where the theme is, we're seeing consistent need for energy, and Hitachi being one of the gainers there, as well as the buying price of almost just 7,000 odd rupees. Would you recommend Mr. Parkhe to continue holding this counter for the long term?
See, the sector is still doing good. So from my perspective, upside is there, but very limited upside. So if your horizon from current level is more than 2 years, then you can hold. If your horizon is less than a year or 6 months, then I think partial profit booking on advisable on these levels. So it's a sector doing good, but your perspective need to more higher. If you are looking from a 2-year horizon, then can be hold. Then we can see some further upside. But from shorter term perspective, I think limited upside is there.
All right, time for a rapid fire round. Vaishali as well as Mahesh, you both know the drill. Try to keep your answers as short as possible to buy, sell and hold. The first is Oswal Pumps. This is a good buy from long-term perspective right now. Mahesh?
I think from pump perspective, KSB Pumps looks good.
Sarad Babu from Dubai is actually holding on to Apollo Microsystems, Vaishali. He's bought it at 347. Asking if it's a good time to average now. What would you recommend?
Average near 270 levels.
ITC bought at the levels of 300. 500 shares is what our viewer is holding. Good time to exit, Vaishali?
313 is resistance, a short-term exit, but long-term hold.
Eureka Forbes bought from Mahesh at 646. He's holding 40 odd shares here. Asking for a 2 to 3 year view. Mahesh, what would be your opinion?
If anyone want to add these on these levels, they can add further. From longer term perspective, I think hold.
Skipper Limited bought at the price of 345. What should I do now? Hold, sell, Vaishali, on the charts?
Continue holding. Look for a target of 500 to 20.
Okay. Got it. Well, it's also a result reaction today coming in on Skipper. But the next question coming in from Ramesh from Chennai. He's holding shares of transformers and rectifiers at 344. Now, Vaishali, he's saying that he's bought it yesterday itself and then has seen a correction. Is this a weak one? Should he exit?
No, it's in fact showing signs of improvement. Keep a stop loss of 300. Let this stock go above 360. You'll get higher returns.
Okay, the next one is on Kalyan Jewellers. Anish from Australia has bought 1,000 shares at the levels of 417. 3 to 6 months view on this one. Vaishali?
Kalyan Jewellers 416. Continue holding with 400 as stop loss and 460 as target.
Okay.
Jindal Steel and Power bought at 900 rupees per share by a viewer. He's holding 500 shares of this counter. Vaishali, it's currently trading at almost 1,200. Would you recommend him to sell?
Book profit for now.
Okay, the next one is on SGS Enterprises. Murli from Bengaluru is bought at the levels of, let's try to pull that up. Okay, 1714 per share. Wants to know the target for the 6 months. Vaishali, on the charts?
1671 current market price, and it can go to, for 6 months, look for a target of 1900.
SpiceJet bought at 11.15 by Kumar from Bengaluru. He's holding 20,000 shares of this counter, Vaishali. Would you recommend him to exit or continue holding?
Exit.
Okay, the next one is on JSW Infra. San from Kolkata is holding 750 stocks at the levels of 270. From a long-term perspective, Mahesh, can you continue to hold?
I think they can hold the same 340, 360 level can be achievable.
Rajiv from Delhi is asking a 6-month view on Power Grid Vaishali. What would your opinion be?
Power Grid can go to 345.
Crompton Greaves and Consumer Electricals. What is the target price from a short-term perspective that our viewer can expect if she enters right now, Vaishali?
290 is the target.
Abdul Vishal from Kerala has bought into ONGC at 263 Vaishali. He's holding 200 shares and asking what could be a potential target.
325.
Eternal bought at the levels of 222. Continue to hold for the next 18 months, Mahesh?
Yes, definitely they can hold the same. At least we can see 340, 350 range if your horizon is more than 1 year.
Sachin from Kerala is holding CDSL as well as CAMS for the last 1 year but is currently in a loss, Mahesh. Should he continue to hold both these counters for the near term?
From near-term perspective, I think counter can be hold, but yes, limited upside is there for if your view is very shorter term. I think these counter can be hold for a longer term.
Got it. That's the end of the first round of the rapid fire in this edition of Fast Profit. But Vaishali and Mahesh stay on. A lot more stock-related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations. And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to.
Welcome back. You're watching us Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call or send us your query on the WhatsApp numbers that will be flashing on your screen in a while up there. By the way, Harsha from Vijayawada has done the same and gone ahead and asked a question on Infosys. He's bought around 100 shares at the levels of 1540. Wants to know whether to hold or sell on this particular counter. Vaishali, your view on the charts from a slightly long-term perspective.
I think keep a stop loss of 1130 and look for a target of 1350.
Got that view. The next question coming in now. This one is on Cohance. Now, last 2 days, very stellar moves on this particular counter. Let's look at the 5-day chart actually to get you that perspective. And Gayatri from Palakkad is holding shares at 498. She bought it yesterday itself. So there you go, that 5-day 30% up move, largely led by the last couple of days. Now she's purchased 200 shares. Vaishali, I know it's a very volatile chart in that sense. Stock was down 68% in the last year and then this 2-day move. But should she hold on to this counter now?
I would say so, but always as a disciplined trader, keep a stop loss of 430. And if this momentum continues, this can go towards 600 to start with. So 600 would be a level to watch.
Okay, all right. The next one is coming in on Reflex, and this is an interesting one because this was, one of the stocks that had gained a serious momentum in the last year. Shivani from Mumbai is holding 50 shares at the levels of 250. Wants to know if she can add more from a perspective of 6 months. Vaishali, if I'm not wrong, it's lost its momentum so far in this year, but do you think that it's found its bottom and possible bounce back in the next 6 months possible?
Yes, it's already attempting to get into a trend. So if one has to average, I think wait for a little bit of a dip, probably at around 245 to 50 levels. And that is also a crucial support level. So if these support levels are held on, I think this stock can go towards 320 to start with. So my view, it's positive. 240 would act as a support.
Got that to your view. Mr. Reddy from Mysore is actually holding on to Central Bank of India. Now, he sent across an interesting query. He's been looking at the chart of this and is saying that it's been oscillating at 36 for a while, and the 52-week low is around 32. Vaishali is his analysis. He feels that it's a good time to buy this for a slightly more longer term based on charts. Would you agree with him?
So based on charts, I think it can see. Currently, it is at a cluster of moving averages resistance. So 37, 38 is acting as a resistance. Only if we see the stock sustaining above that, yes, we would be looking at higher targets, and it could perhaps go towards 43, 45, since longer term is the idea. But to buy at this level, I would say accumulate between 34 and 36.
The next one is on Geo Finance. Our viewer Arun from Hyderabad has bought 130 shares at the levels of 285. Wants to know if you can hold or sell from a long-term perspective. Mahesh, your view on Geo Finance?
Can hold the same from a longer term perspective. We are very optimistic for good handsome upside in Geo. From a at least if you are holding Geo, keep you at least 2 to 3 years, because the business can do well in more 2 to 3 years. I think at least 325 level can be achievable in 1 year horizon.
Got it. Well, Rohini from Bangalore is actually asking if there are 1 to 2 stocks in the auto pack that she can hold for the next 1 to 2 years. Now, Mahesh, does Maruti feature on the list, and what would your recommendation be?
I think Mahindra and Mahindra are very good place, and if you're looking from a number perspective, numbers are very good. And say in second line TVS Motor, where I think their two wheelers are doing very good. New model are doing very good. So from my perspective, Mahindra and TVS both can be added in the longer term horizon for 2 year two wheeler prospect.
Okay, all right. The next one is coming in on RPG Life Sciences. Our viewer Raja from Chennai has bought 40 shares at the levels of 1985. Whether to hold or sell? Vaishali, on the charts?
Well, on a chart, this too is showing signs of bottoming out. So I would say observe a range of 1950. 1950 would act as a support. And once we see the stock moving about 2100, this can go also towards 2400. So
well, the next question now coming in, and that's Vaishali's view, of course, on RPG, but this one's on Fractal Analytics, and Sushil from Bangalore is actually holding these shares at 888 for the last 2 months. So he's currently sitting in gains. Vaishali, he's currently slightly more unsure of what he should do with this counter. Any view? I know it's a recent listing, but any view on the counter now?
Yeah, so from whatever data I have, I think it's holding on to a good strong upward trend. It's consolidating right now. 940 should be the level to watch. It's all fine as long as 940 level is held on. And if the new round of momentum is setting in, this can go towards 1000 to 1020 for now. So this is my view. Continue holding. View gets negated below 940.
Okay, the next one is coming in on BSC, and this question is directed to you, Vaishali. Our viewer wants to know as to what is the entry point on the charts for BSC right now. Padma from Bengaluru is asking this question. Your view?
So it's continuing to make new highs. So actually, a fair value to at this level, I think 3400 would be the actual level that one should get in.
Got that view. Mahati from Hyderabad has also sent across a very interesting query. She bought into BL 1,000 shares at just 97 rupees per share. So going back a couple of years is when she would have invested, sitting in a massive gain. She's invested roughly 9,70,000 and has ballooned that investment to almost 44 lakh rupees. So Mahati, firstly, very good on you to buy it at that level. Mahesh, would your opinion be for her to continue holding this counter given the gains, given the attractive buying price?
Company is doing very good and order book are very fantastic. So from my perspective, if you are holding it from a longer term perspective, BEL is a counter where we can see 520, 525 level in 1 year horizon. After that, what if we can review on the same, because sector optimistically doing very good. So from my perspective, hold the same from at least 1 year horizon.
Okay, the next one that we have is on MCure Pharmaceuticals. Ganesh Iyer from Mumbai is holding 550 shares at the levels of 1450. Should I hold or sell? Vaishali, on the charts for MCure Pharma, up 7.6% today. It's seen a lot of knocking in the last week, but probably seeing buying action today.
Well, so I would say continue holding. It's in a very robust up move. This can go even further high, probably towards 2000 levels. So continue holding.
Got it. Well, the next question is on Bajaj. Bajaj Housing is what our viewer means. Rajesh Kannan from Chennai is asking us this question, and he's holding on to shares at 91 rupees. So might have bought it very, very recently. He's holding on to 150 shares and asking if he should continue to hold. He's not mentioned his if he wants a fundamental view or not, but how do you view this counter now, Mahesh? The quarterly results also just came in a couple of days ago. What did you make of it?
See, the sector are doing good, and we can see some good upside in from current level. So, 115 level where we can see the stocks in upcoming time. I think from a 1 year horizon they can hold the same.
Okay, the next one is coming in on Godrej Properties. Anjali from Bengaluru has bought at the levels of 1802 and 50 shares is what she's holding. Wants to know whether to hold or sell. Vaishali, on the charts for this one?
So in fact, since couple of days, we're seeing good pickup coming in overall realty sector. And talking about Godrej Properties, continue holding. It's already on the verge of moving past the resistance level. So 1750 would be the near-term support. If it goes below, we can weaken. But in my opinion, this can surge high towards 1950 to 2100 levels. So please hold. This is the target as far as the trading strategy is concerned.
Got it, Vaishali. But Jaykrishnan from Kerala, who's another regular viewer, he's holding on to HCL Tech, bought at 1710 for the last 9 months. Now, his question largely being if he can exit and shift to Eternal. Again, not mentioned the price yet, but what's your opinion here, Vaishali? Because the broader correction in tech stocks in February, results are also quite weak on the fundamentals. Would you recommend him to exit?
I would personally definitely say so, that give IT a miss, because right now most of the stocks are getting beaten down. But also, if he does not want to book so much of a loss, he's held on for so long, hold on with 1190 as a stop loss. And if we see some pickup coming in just as a bounce back, exit at around 1300 level. So it's your call, but yes, a shift would be suggested.
Okay, Bandhan Bank is the other one. Madhu Babu from Hyderabad is holding 100 shares, wants to know the short-term target on this one. Of course, it's been flying in trade today, Vaishali, on the back of numbers. But overall, your view on the charts?
Yes, so it has given a breakout. Today already it is risen up so high. But my next projected target comes to 220. So 190 should be the stop loss. Hold for a target of 220.
Got that view, Vaishali. The next question now coming in. This one is on NSDL, bought at 1300 rupees for the long term by Rajkumar from Bengaluru. Now he's holding 200 shares here. Mahesh, would your opinion be on the stock to continue holding at this point of time?
They can hold the same, but yes, a limited upside is there. So from my perspective, if any upside nearby 10 to 15%, then they should try to exit and shift in CDSL. So that shifting can redirect further for your losses.
Okay, all right. The next one that we have is coming in on Bharat Dynamics. Abin from Kerala wants to know whether he can make an entry into this one right now, or Are there better counters in the same space at the current levels is what he's asking. Mahesh, your view?
I think we can hold the same. And if you want to take the BDL, then your view should be at least 2 to 3 years. From there, these level, we can see some good upside. But yes, in defense sector, because education are the key triggers, so your view horizon should be more than 2 to 3 years. So if your horizon more than 2 to 3 years, we can see some handsome upside in this count.
Sorry, Mahesh, you mentioned what could be the key triggers for Bharat Dynamics?
Education of the in defense sector, education of the any orders. So that is the trigger key for the defense stock. So I think that would be watchable from that perspective. I think the horizon should be long, more than 2 to 3 years.
Got it. So execution continues to be a key factor here. Got that view, Mahesh, on Bharat Dynamics. RBI Bank is the other one that our viewer Rajiv Mukherjee from Bangalore actually has a question on. For the next 2 to 3 months is what his question is. Disappointing earnings this time around, but stocks up 6% today in trade. Vaishali, what's your view on the stock now?
So RBL Bank also the near-term hurdle lies at 340. Today, of course, we've seen good big bullish candle. So if the stock moves past 340 levels, this can then go towards 370. So if 6 months is the view, then I think 300 acts as the support. 340 is the near-term resistance. If it sustains, we are looking at 370 levels.
Okay, Coforge is the next one. Our viewer, I think Biren Deep Singh is asking about this. He says that he's bought it at the price of 1230. Should I continue to hold or sell this counter and buy ITC? He says he's looking for from a result point of view. Mahesh, I don't think that trading from a perspective of result is a good idea, but your view on his question?
Horizon should be long, at least mid to long term, at least 6 to 12 month horizon, then they can hold the same. I think Cofor is the counter where we can see some good upside in IT sector as well. Cofor, Persistent, both the counters are doing very good. So keep horizon more than 6 to 12 months, then we can see good upside. Currently, IT sector is hard beaten down, so it's a consolidation move. So I think hold with a patience 6 to 12 months should be horizon. Coforce definitely we can see 1600 at least.
An ambitious target, that's 1600 on Coforge. I think a lot of investors would love to get that target on Coforge, given what we've seen. Very, very important earnings. I think reporting results on May 5th, so watch out for that. The next one coming in from Nadella on Aster DM. Now, his question largely being, Vaishali, if you can buy into this counter right now at the current price for a slightly more longer term, 9 to 12 months, what would be your opinion?
So I would say if you are to buy, then I think wait for a little bit more of correction, maybe at around 660, because we've seen a one-way rally right from 540 to now making a high of 720. So wait for a dip. And then I think because the way the charts are showing on the longer term perspective also, this can go towards 850 levels. So I would say buy, but at lower levels.
Okay, the next is an interesting one. Devyani International is what our viewer Pawan from Bengaluru has bought, and he bought it during the IPO. Says that it was his buying price was around 90. Currently, if we can try to pull up the charts for Devyani, it's hovering around that 112 mark. But he's bought 1,000 odd shares and wants to know if he can continue to hold now. He's been a patient investor for sure. Mahesh, do you think he should continue to hold Devyani International, considering that it's not done anything for him since IPO?
See, the valuation is there, but numbers are not so much encouraging. So keep your target little bit 140, 145. That is the area where they can book partial profit or book profit on the same. So from these level, yes, some upside is there. So we hold for the at least 6 to 12 month horizon.
Got it. Well, hopefully Pawan had a chance to grab a slice of pizza, because it's been a frustrating ride most certainly, and he's been a very patient investor as well. Stock was up at almost 190 odd levels at one point of time. Now the merger with Sapphire is something to watch from investors' point of view as well. But the next question coming in now, it's on Jio Financial Services, bought at 227 rupees per share by Mohit. He wanted to know a long-term view here. Mahesh, is it worth holding?
Definitely, they can hold the same because Geo is doing very good, and currently they are focusing on the AUM. So once their AUM is increasing, also their expenses are on infrastructure, IT, and related to AI. So that can be like an investment. Their expenses is like an investment. So from my perspective, on a longer term horizon, Geo can do well. So hold from my perspective.
Okay, all right. The next one that we've got is on TVS Motors. Karthik from Chennai is holding 50 shares at the levels of 2448. Wants to know whether to hold or add more at the current levels. Vaishali, your view on TVS Motors? Vaishali, the question's to you.
Okay, so I think you can add more because auto index on the whole is just showing now strength and we are seeing revival. And this is technically well placed. You can add more.
Well, the next question coming in now, this one's on solar industries. Now, another interesting question. Why? Because Abhijit from Kerala bought into this counter at 1,025. So he's up 15x from that price, and he's also holding 150 shares. So there you go. That investment now ballooned to 21 lakh rupees, and good on you, Abhijit. Would have loved if you could have called, told us what you saw it at that time. But his question, and that's also the 50th query, by the way, that we've taken, is if you should continue to hold on to this counter or sell out. Now, Mahesh, definitely one of the better picks in the defense space, given the buying price, given what's more to come. Do you feel that he should continue holding on to solar industries?
We can hold the same because their buying is very low level, so they can hold easily. From these level, I think 18,000 level can come from a 1 year horizon. So at least keep your horizon 1 year, and if you want to exit, then at least take a 17,000 to 18,000 level.
So that's the view coming in on solar industries. The next one is on CG Power. Our viewer wants to know, Vaishali, and this is for you, whether to make an entry at the 650 level on CG Power or not. Seeing the charts, what should be the entry target, and what could be the time frame, for the chart to come back to those 650 levels to make an entry into this counter. First of all, is that the right strategy? And secondly, do you think it makes sense to make an entry at those levels?
Well, currently it's at 836, so 650 is very far-fetched. So I would say there could be, the way the trend is, and most of these power stocks are doing so well. I don't see this falling to 650 for now unless there is really something drastic happening. So according to me, purely on technical levels, 800 would be the support. Start accumulating even now because it shows a lot of strength and this can go towards 880 to start with and then from there on even higher. So for me, it is showing a lot of strength. I don't see this going to 650 for now.
Got it. Well, the next question coming in now is from Parvati. Now, she has sent across an interesting one that the larger energy transition theme continues to be one of the good sectors for the future. But any stocks, Mahesh, that you can recommend here? I think we discussed Hitachi Energy. But in the energy transmission space, anything that you like right now?
Siemens Energy, if any downside in Siemens Energy, they can be added from longer term perspectives. Siemens Energy is doing good, and I think fundamentals are good. So from my perspective, Siemens Energy is a good add in any lower or in any correction.
Okay. The next one that we have is from Ramya, who's writing us from Chennai, asking about Apollo Tyres. She's bought 150 shares at an average price of 513. Can I accumulate more at the current levels is her question. She wants a long-term view on this one. So Mahesh, your view on Apollo Tyres?
If any correction nearby 390 to 400, that could be area where they can average or add for a fresh.
Got that view, Mahesh. The next question now coming in. This one is on SW Solar. Now, it's arguably been one of the stocks that's been continuing to be in focus, and our viewer Sunny is holding 800 shares. Now, Sunny, if you've been watching our show, you know there's a particular expert who likes stocks. So probably when Sunny is there, it's a good time to ask this question yet again. But his question is he wants to hold for the next 2 to 3 years. Mahesh, would you recommend that he should continue to do that, and if it's a good time to buy more right now?
I think this is a good time to buy or good time to accumulate the same. From a longer term perspective, definitely stock can do well, and fundamentals of stocks are very good. So from my perspective, accumulate and hold for a longer term horizon.
All right. The next one that we have is on Keynes Tech. Nitin from Nellore wants to know the entry price for this one. Vaishali, on the charts?
Well, I think Keynes is at an attractive level. Accumulate with support of 4,000, and once we see the stock moving above 4,500, 4,600, it shows further conviction. So you can add more even then to look for a target of 5,200, 5,300.
There's a crucial earnings for Keynes Tech expected this time. A big number of revenue growth that they have to show to meet the guidance. So while Vaishali of course has suggested some of those factors on the charts, definitely one to watch out for on the fundamentals as well. The next question now coming in, this one's from Srijit from Kerala, who's a regular viewer of the show. So thanks so much for sending in your query, Srijit. He's holding on to AKS Limited, bought at 122, and he's holding roughly 750 shares. Now, Mahesh, the stock has continuing to be in focus. Any view on AKS?
Partial profit booking is advisable on these levels because stock is doing good. So from my perspective, at least book some profit because the stock has done good. But yes, in the longer term horizon, still we are positive on the same.
Okay. The next one is on Persistent Systems. Sridhara Murthy from Bengaluru is holding 125 shares. She's not given us the buying price but wants to know whether to hold or exit. Vaishali, your view?
So I would say 4,700 acts as a good support. We've seen the stock getting into a trend, and now again we saw some correction. So 4,700 acts as a support, and first hurdle comes at 5,500. So till then hold, then we can have a relook.
Got it. Well, the next question coming in from another regular viewer, Satyan. He's shared his question on CCL products bought at 1,080. Now, his question being if there's any steam left to touch roughly around 1,200 rupees on this counter. What would your opinion be, Vaishali, on the charts to his question?
So CCL product, I would say so because, well, for near term, you may see some resistance at around 1,200 levels. But I would say that the trend is so good that one should continue for longer term perspective. Coffee, I think this does coffee. So coffee is always going to get more expensive and never go out of demand. So according to me, logically, this would go even higher. But purely on near-term basis, yes, 1,200 is a resistance. So you may book partial profit.
Okay, all right. It's time for our rapid fire round. Try to keep your answers as short as possible. The first one is coming in on Hindustan Petrochem. Sanjay from New Delhi is bought 500 shares at the levels of 380. Vaishali, hold, sell?
Hold.
Shankar wants to enter Irida and he's trying to buy 1,000 shares. Vaishali, is this the correct level?
Yes, buy.
Cantabil, from a short-term perspective, Mr. A.K. Bhalla from Jalna wants to know whether he can continue to hold the 2,500 shares that he's bought at the levels of 254. Vaishali?
240 stop loss, 265 resistance.
Kirloskar Pneumatic bought 70 shares at 1,250 by Dilip. He's asking Mahesh if he can hold on for the long term.
Hold the same.
NSTL, Pradeep from Bengaluru wants to know if he can continue to hold from a long-term perspective. Is bought at the levels of 500. Mahesh?
Hold the same.
Priyanka from Mumbai is holding on to Godfrey Phillips, bought 600 shares at 2,123. Can she hold, Mahesh, for the long term?
Yes, definitely they can hold the same.
Okay, a good banking name to add to your portfolio from a 2-year perspective. Mahesh, Gaurav Baheti from Hyderabad wants to know.
I think in banking, ICICI Banking, DCB and Bandhan Banks are looking attractive from shorter to longer term perspective.
Anjani from Hyderabad is holding to OFSS, Oracle Financial, Vaishali, at 8,300. Now, the 9,000, 9,200 mark was a crucial one, I think. But what's your opinion on the stock now? Should she continue to hold?
I would say book partial profit.
Okay, Garden Reach Shipbuilders. The next one is from Dr. Murthy from Mumbai, who's holding since the levels of 750. Can you continue to hold, Vaishali?
Short term book profit, but otherwise hold for long term.
HDFC Bank bought at 850 100 shares by a viewer. Mahesh, are you in the camp for a long-term view, a buy on HDFC now?
Yes, there is a limited upside, but yes, 850 to 900 range can become in 12 months or a.
Okay, Suzlon sitting on a 43% of profit. Exit range for the next 2 to 3 months. Jose from Kerala wants to know. Vaishali?
2 to 3 months, I would say exit at 58.
Got it. Well, we took Vaishali's view, but Ola Electric, a funda view as well from Sandeep Patil. He's bought at 39. What's your opinion here, Mahesh? Is there enough evidence?
On our perspective, we have to need to watch quarter-on-quarter number. From my perspective, we are not looking much for upside in Ola. But yes, their products are doing good, then we can review on the same.
Right.
Got it.
Okay, ICTC bought at the levels of 970. 200 shares is what Joshi from Mumbai is holding. Continue to hold. Vaishali?
Exit.
Netweb Tech bought at 3,620 shares by Kiran. Now, Vaishali, she's asking if what's a good price to sell Netweb. What would you recommend?
It's currently at 403. I think it can go towards 4,500 to 4,600.
Can I buy Sagility India at the current levels is what Balaji from Chennai is asking. Vaishali, your view on the charts?
Buy.
Swiggy bought 5,000 shares at 280 by Srinivas from Hyderabad. Asking if he should exit right now or average down. Vaishali, what would you recommend?
Swiggy, keep a stop loss of 270 and 290 is the resistance. So,
Poly Medicure bought at the levels of 1520. 30 shares is what Ravi is holding. Should he continue to hold, Vaishali?
Hold.
Deep Industries bought by our viewer and asking if he should continue to hold this counter for the long term. Mahesh, should he do that?
They can hold the same in longer term. Stock can do well.
Got it. Well, that is the end of the rapid fire as well as this edition of Fast Profit. Vaishali as well as Mahesh, thanks so much for helping us solve all these stock related queries at this point of time. We've solved quite many today as well in this edition of 73 queries. But thanks so much to both of you for giving us your views. But viewers, all the time on this edition of the show, the second leg of Fast Profit at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, a show where we get you the hottest companies in KYC. And right now, of course, the flavor is earnings season. So I've got you something which is hot and fresh. But before that, I'm going to give you some hints. Try to guess it. It's very easy. It's the largest private health insurer in India. This is the first hint. The second hint, a very strong Q4 results have come in, and yes, this is something which you can guess it very fast because it's happening right now. Also, let's look at the third hint. It's backed by Rekha Jhunjhunwala, and also remember folks, they are promoter as well. The stock is up 30% from January 2026 lows as well. So there has been a good momentum in this stock, and when we talk about this company, of course it's easy to guess. It is Star Health Insurance, and of course Allied Services is also there, and this is the company which we will talk about. And of course the most important reason is the Q4 numbers. A good turnaround is happening in this business. Largely the size of this business is larger for a KYC show, but nevertheless the interest is very high in this counter. Business turnaround has gathered momentum. Now what are the key triggers ahead? That's the first question we'll pose to the management. Apart from this, there are a lot of questions which I have marked. What led to a strong Q4 numbers? Is there a sharp improvement in the loss ratio? Their underlying profit which is there, that has actually come up. Remember, there are some accounting adjustments at play as well, and the revival of new business channels by diversification. That's what the brokerages have given a thumbs up. But what's the outlook ahead for FY27 and the market share loss in the retail health segment? Is this systemic, or will this continue going ahead as well? That's a one concern in my analysis, but net the strength or the positivity in the Q4 numbers are strong. Streets expecting further price hikes to offset medical inflation. That's the key query to be asked, and we'll try to understand that as well. And also the net income claim ratio, that has been better versus ICICI Lombard. So definitely the street is bullish on this counter. And to understand the entire picture, we'll have Nilesh Kambli. He's the CFO at Star Health Insurance. Well, he'll give us the entire picture. But before that, let's understand what is Star Health Insurance. I've given you a little bit of hint. A lot of you will understand what the company is all about. But for our viewers and for the uninitiated, it is India's largest standalone health insurer. Apart from that, they offer health, personal accident and travel insurance. Of course, these are the ancillary services which I'm talking about. And remember, it's the first insurance to settle over 1 crore claims. That's an interesting take I've picked out from their exchange filings. The network is over 900 offices and 8 lakh agents, a strong banker and an FI tie-up. When a banker, it means bank tie-ups. Company has over 15,000 hospitals and over 18,500 employees. That is the coverage we are seeing for Star Health. Digital channel is driving almost 20% of the fresh retail sales, and that's a key trigger for this. Also, 81 bank assurance partnership, that means with 81 banks, इनका धंधा हो रहा है. That's the way to put it in a very simplified manner, and of course backed by Rekha Jhunjhunwala and as a promoter. Interesting. But before you understand, there are some key abbreviations you should know when you are judging an insurance company. It's very technical, but nevertheless I'll make it as simple as possible. GWP means gross written premium. Let's see the second abbreviation which should be there in your radar. This is GEP, which is nothing but the gross earned premium. I'll try to give you a net premium so you understand what are the operational parameters to look at. But this is very much important. It's called COR. So it's called combined ratio. This is very much important to judge a company on overall how an insurance company is doing their works. But enough of abbreviations. Let's see the claim snapshot, how things have panned out. The retail claim settlement ratio is higher, is at 92%, and this is actually auguring well for the company. Almost 11,900 crore plus claims were paid in FY26. So this is the claims data which I'm talking about, but the fourth quarter numbers were really strong, and that is why we are calling this company to understand growth and operational metrics largely have improved if I had to simplify it. But if you want to ask Sharad, इसमें कुछ details है क्या? So the third highlight, let's pull out and show you what are the details. The loss ratio that has improved for the third straight quarter. That means you can see the company's overall profit which is there is going well operationally speaking for an insurance company. The retail health market share that has declined, that's a bit of concern. Also the profit recovery that has gained momentum, and the brokerages have turned bullish for this counter. So the Q4 highlights are strong, and the underwriting profit that has turned positive at roughly 206 crore rupees. So this is very much important when you judge a company. Ind AS numbers, they have normalized it for an 8% investments, and that band actually stands at 1100 crore rupees. That means there are two accounting strategies, and of course they are following what IRDAI has stated, and from 1st April onwards we will see one single accounting strategy. For last 2 years they have been showing both of these numbers. So these are the Q4 highlights, how the numbers were, and largely the performance for Star Health. But let's talk about the operational parameters, what it means for the company. But whenever we get a company, of course it's an insurance company, so I have tweaked the operational parameters also to judge the company. So I have got key ratios instead of the cash flow statement. Of course income statement, balance sheet थोड़ा अलग लगेगा आपको, क्योंकि कंपनी ही अलग है और इसको हम एनालाइज भी करते हैं तो अलग ढंग से करते हैं. Return ratios would be there, and let's get into the more details about it also. This includes of course the shareholding pattern, the street trade, how much money has been made in this counter, and the valuations. We'll try to check this company's valuations over the last 5 years and where does the company stack. And lastly, the analyst take. What is the analyst community actually looking out for? How many buys, how many sells, how many holds? We'll get you all of those details. But let's start the first parameter, and of course I've taken them in a sequential manner so you understand a little bit more about it. Operational profit, slightly it has recovered from Q3 numbers. It's coming at 154 odd crore rupees. But net, the top line and bottom line numbers, they have done really well. Remember, there's a lot of technicalities at play, and just to put that simplified manner, the operational numbers have been really good for the income statement. But net, I would say it has beat the street estimates, what the street was estimating. So I am giving this a strong thumbs up when it comes to the income statement. Let's talk about balance sheet. And balance sheet, remember, इंश्योरेंस की कंपनी है. इंश्योरेंस की कंपनी में रेगुलेशंस बहुत रहते हैं, सो दे आर बाउंड टू फॉलो व्हाट IRDAI हैज टू से, especially on the ratios front. So their discipline will be very strong. So that is why if you look at the net worth or investment, these are the numbers, you can track them. But net, to put perspective, it's a very stable balance sheet and a stable business to actually look at. So इसमें ना कुछ बहुत बढ़िया दिखेगा आपको, ना कुछ आपको बहुत खराब दिखेगा. So put that in perspective, neutral rating देंगे balance sheet के लिए. But let's talk about key ratios. No, cash flow is not that important because of course the business model is different. Key ratios is very important. This is where the combined number comes. I'll explain you what combined is. Combined is something when you have something below 100%, which we are seeing here, that means you are doing well, and that augurs well. Even the solvency ratios at an average is at 1.5 times, and this is comfortably holding above the 2 times. But the best number to look at would be that. But remember to understand that this is the important graphics. Combined ratio is below 100, it's better for insurance companies. That is where the company has come out with a good numbers. Solvency ratio should be 1.5 times or higher, and that is also doing well. So dono tick hua. And overall the return ratios, I will be giving this a strong thumbs up as well. Apart from that, let's talk about return ratios, how things have panned out. And largely in an insurance business, you generally get something in single digit of return ratios. आप कोई peer को उठा लीजिए या कोई global peer को उठा लीजिए, ज़्यादा ROE नहीं मिलता. This business model is as such. It's at 3%, it's around 6.9, it's at around 6%. So definitely they might look for new venues, but it's a very stable model. So that's why I've given a neutral rating for this setup. And let's looking at the return ratios, the investment yield of this insurances, this is also very stable. So बहुत stable return ratios देखते हैं, तो there isn't much to look at here. Because of that, I will be giving this a neutral rating as well. So balance sheet and return ratios, both of them have been, you could say, in a neutral rating. But apart from neutral ratings, let's talk about shareholding, and nothing much has moved. Remember, Rekha Jhunjhunwala as a promoter, they are there and they haven't sold any stake. This is the last 2 years data I'm talking about, but there is a change. FI's favorite 27% stake, and then they have started selling 19% here, 15% here, and that's where the concern comes. FI selling has intensified, but on the other hand, DIs have been lapping from 11, 15 and now 20%. So pretty much interesting, and it actually evens out. What FI is selling, DI is buying, promoters are holding it steady. So steady moves in this shareholding segment. So I would be giving this a neutral rating. But apart from that, let's talk about the street cred, how much money has been made. Of course, if you're a long-term investor who is holding it for the last 5 years, IPO के बाद आपने profit देखा ही नहीं. That's the concern. 5 years, stock is down 39%. So the stock has tested the patience of the investors. But in the short-term basis, if you have added your positions, January lows, stock is up 30%. And in the last 1 year itself, also the stock has done well. It's up 39%. Fourth quarter, business turnaround, and a good technical setup is also coming in, at least for the short-term positional traders. But long-term basis, the valuations were pretty high on their IPO. That's what the street is concerned. So net, it's a neutral rating. Valuations, look at that 5-year peak valuation, which was this is the peak, 8.5 times price to book. And even if you even that out, for the last 5 years, the average is at 3.95 times, but now you see it's at 3.79. So the stock, after giving an up move recently, also is still below its 5-year average numbers when it comes to the valuation. So right now also valuations seem attractive. That's why I've given a strong thumbs up when it comes to Star Health Insurance. So let's talk about the analyst take. What analysts are talking about it. Remember, a total 23 analysts have coverage in this stock as per Bloomberg I have taken. In that, almost buy and hold, दोनों को जोड़ दो, 83% of the analysts are still bullish on the stock. Stock has recently, gone up, and because of that, the target potential is almost near that market price of roughly 534 rupees per share. But net, the analyst community is quite strong, bullish on this counter. So there is a strong thumbs up when it comes to the analyst take. But let's do the revision for the KYC ratings, which we have got this company today, and this of course is good. Income statement, key ratios doing really well, and this fourth quarter there was a good surprise coming from the company, and it also beat the street estimates. Shareholding and street cred, let's give it a neutral rating right now, but the valuations and the analyst take still suggest a bullish sentiment for this counter. So let's add up all the KYC ratings, and this comes to 6 out of 8 for the company, and it's pretty much interesting on the higher side, and will be pretty much interesting. And to understand more about it, we would be joined in by the management as well. But I had a conversation with the management. Do listen in. We are having the CFO of the company, Nilesh Kambli. Good afternoon, Nilesh. Always a pleasure to speak with you. A very strong turnaround in this quarter, which we have seen in terms of numbers, especially the loss ratio is something which I have seen. Just could you give us the key details about what led to this strong performance?
Thank you for having me on the show. Q4 traditionally has been a great quarter for us. This year, more so with the various initiatives that we have taken. We have been talking about price increase in our portfolio. We have been talking about underwriting guidelines, which have been strengthened. We have been talking about quality of the business with the strengthening of underwriting guidelines. We have been talking about claims initiatives in terms of preventive and wellness measures like home healthcare, telemedicine, condition management program. All this initiative started since the last 4 to 6 quarters, and that has started to give us results consistently. If you see the loss ratio, it improved in quarter 2 by 80 basis point, quarter 3 by 100 basis point, and we see a improvement in quarter 4 as well. And we believe, with the kind of initiatives that we have taken, we should continue to see a gradual improvement in the loss ratio.
All right, so gradual improvement in the loss ratio, that's the guidance coming in. But just to put in perspective, what are the targets have you set internally, or if it's in public, for FY27 for your key parameters to be tracked?
See, we are not giving any short-term targets. What we have mentioned is by FY28, we'll have a profits around 2,200 crores, which is an ROE of mid-teens to high teens. We believe we are well on course to achieve that profitability target with a mix of a healthy combined ratio and investment return.
Important data or the number which you should be tracking if you are tracking Star Health. But apart from this, there has been a revival of the new business. I've seen in the numbers also, the new business numbers have been really strong. Is this because of the China diversification, and will this continue for this diversification in the next 2 to 3 odd quarters?
See, we believe, the GST reduction has given a good boost to the industry, and we believe structurally, the growth will continue for the entire industry. It will slightly taper down compared to what the growth rates that we saw in Q3 and early part of Q4. But we believe on a steady state basis, a mid-teens to high teens growth in retail portfolio is something which will be experienced by the industry with a mix of both volume and value growth.
Right, and I was just checking your numbers. There is, of course, the accounting. If there is GAAP, there is IFRS also, and the way your PAT numbers are there, looking at those numbers, it goes after the adjustment post, a stronger 1,000 odd crore rupees. I just want to understand a little bit about this migration which is happening from your accounting estimates, and by when we can see the normalized numbers, you will start reporting. Will it be the next financial year, or side by side both of these, reportings will happen, both of these accounting treatments?
Yeah, a very good question. IRD has now made it mandatory for IFRS to be or Ind AS to be implemented. They have given an option either 1st April 26 or 1st April 27 for companies. We are going ahead and implementing IFRS effective 1st April 26. Our official set of numbers, which will be regulatory reported, will be 30th June 26. So there is no confusion at all. We started this process since the last 2 years. On a quarterly basis, we have been reporting our Ind AS financials, which will now be official effective 30th June, and that is what we have always maintained. This is an accounting norm which will reflect the true set of profitability for insurance companies, and that is a welcome step from the regulator. In terms of FY26, we see that our underwriting profit is very strong, and based on the normalized investment yield, the normalized profit is 1,200 plus crore, which is a 13% ROE for FY26.
So these are the numbers even I was checking. So it's pretty much, of course, the accounting treatments are there. So one should take that as well in your analysis and your investment objective as well. And once that happens for the entire insurance industry, then definitely we'll have more buyers, and the Indian industry, the insurance space will have a good chance of re-rating. But I was just checking, brokerages did raise a little bit of concern. The fourth market, in this fourth quarter, there was a market share loss in the retail health segment. Is that pertaining in this quarter also, and what's the outlook ahead for this?
One has to look that Star Health has a 31% plus market share, and it has maintained this market share in the last 4-5 years in spite of competition, in spite of new players coming in. And we have been focusing on growth with profitability. We just don't want to grow for the sake of growth. With such a healthy market share and a growth rate of close to 20% in retail health, we believe, it's the right strategy to go forward. And the market also will normalize around 15 to 18% growth rates, and we are well positioned to maintain that growth rate. So we believe we'll be 30% market share in the near future as well.
Pretty much interesting. And of course, the street is expecting some calibrated price hikes also, because medical inflation is also at play. So can we expect some kind of a price hike, or are you going to wait it out at least for a couple of more months?
See, we have maintained that, price hike will be an annual affair. We have seen in the past, when you take a price increase after 3 years, a 20-25% price increase is something which is not appreciated by the customers, and it's very heavy on their pockets as well. A small annual price increase is something which is preferred. We have tested that in the last year. The results are really good, and we believe that strategy of price increase will continue in the future as well. This will help us to beat inflation, as well as it will be affordable to the customers as well.
I was just analyzing the company, and the brokerages also are bullish, especially in the net income claim ratio. That has improved and it's better than ICICI Lombard, at least for their health portion. I just want to compare, don't want your view on your peer, but I just want to understand, industry leading numbers are coming in and this will continue going ahead for this net income to claim ratio.
Yeah, I think the loss ratio is a function of the portfolio mix, the retail versus group portfolio. And I think one has to focus on the overall combined ratio also, because a loss ratio with a higher expense ratio will not be beneficial. So I think it is company specific. It is based on the, the portfolio maturity, the portfolio segments in which you operate. And it's very difficult to compare across the sector, but we believe we have one of the best in class combined ratio and we'll continue to improve on that.
Right. And the company has got an underwriting profit. That is a very important technical parameter to track. But apart from the technical portion, AI and digital aspect, that is something which your company is also focusing on. But just explain us, just to give us, you don't need to give us numbers, but explain us the AI. How much is it changing for the company and for the industry as a whole? Because this is a very important portion, especially on the insurance front as well. So how are you deploying it and what benefits are coming?
So in terms of deployment, we have just initiated and we are starting to deploy it. But yes, across the segments, across the business verticals, it will make a lot of difference. To give an example, in the digital business where we use telecallers, we believe a lot of that work can happen through the AI. Customer service, we deploy more than 500 people. A large portion of that can be handled through AI. We do a lot of claims processing. We process more than 25 lakh claims. And with the help of AI, along with human interventions, we can reduce the errors which happens and, provide a best in class customer service. So, and at speed, which is not humanly possible with the kind of tag that we have to adhere to. So across business segments, across verticals, we believe AI can make a big difference. We have started in a small way in each of these sectors, doing POCs, but we believe we should be in a better position to implement it as we move.
Well, that's the management of Star Health, as they have, talked about their Q4 earnings and also importantly, their growth outlook going ahead. Of course, they haven't mentioned the FY27, but for FY28, they have given a good set of, growth outlook. And remember, there's an accounting adjustment also at play. That means they will be coming to the new accounting standards, the globally accepted ones, from 1st April 2026. So it'll be pretty much interesting to talk about that. And the operational parameters, if I talk about it, that has done well. And the loss ratio, which I'm sure you must have known by now, that has done really well. So bullish commentary and a stable business and definitely a good up move coming in recent times. And right now also we are seeing a good movement in the stock prices. So that's all, folks, for this company, in a very stable company, but net, it is a very strong move coming in, especially on these numbers. So that's all, folks, for KYC. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Dalal Street powers higher today as benchmarks extended gains. The Nifty moves back above 24,200. Sensex jumps over 900 points, and broad-based buying in auto and real estate stocks lead, with most sectors firmly in the green today. Dr. Reddy is in focus after scoring a key regulatory win, secures Health Canada approval for its generic semaglutide injection. The clearance marks the company's entry into the high-growth GLP-1 segment. Earnings drive stock-specific action today. Bandhan Bank is rallying on a sharp turnaround led by retail strength and improving asset quality, while Garden Reach Shipbuilders is surging after a stellar quarter powered by stronger execution and rising defense momentum. Oil prices are holding at elevated levels, with Brent hovering close to $111 a barrel amid the persistent disruptions near the Strait of Hormuz. The UAE is set to exit OPEC from 1st of May, dealing a fresh blow to the cartel cohesion and keeping the global oil outlook tense. The last and final phase of voting is underway in Bengal. More than 1,400 candidates are in the fray for 142 assembly seats across 7 districts, including Kolkata. Results will be announced on 4th of May. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and it's a good day of trade today. In fact, Nifty 50 is gaining over 260 odd points at the current moment, over 1% gain, and it is consistently really keeping that momentum going. A large part of the contribution is really coming in from 2 players with huge focus on the telecom space, remember, because Reliance Industries, after its results, has been gaining Bharti Airtel. These 2 combined heavyweights have been really adding to half of the contribution of Nifty 50 out of the 260 odd points gain that it has really at this particular moment, 271 at the moment. Now, when we talk about the other players, it's the IT sector which is really adding its weight, and we know that IT has been volatile. It has seen a huge amount of cut and pressure because of the results, and now is coming out, and that is really helping the overall market momentum as well. But what's really not performing up to the mark or is clearly underperforming the key indices is the banking index, and that, remember, is a very big reflection of the global view on the Indian economy, and that's where it is showing pretty gains. But remember, it is an underperformance to the key indices today. When we take a look at the advanced decline ratio, it is showing a healthy return. Almost all the sectors in the green except media, which is a very small component. So that's a snapshot of the market clearly. Bhavin Shah, who's the founder and CIO of Samiksha Capital Private, joins in now. Bhavin, always a pleasure chatting with you on NDTV Profit. My first question, directionally, what's your view on the overall market? Because even though there are gains today, there has been a consistent phase of volatility based on the global cues.
Right. So I think the global cues continue to be somewhat volatile, and as you said, and that I think is also weighing on the market. Obviously we have seen Brent crude in particular back above 100, and still lack of clarity on how this whole the Middle East war situation resolves, and so that I think is weighing a little bit on the market. But I think there are also some positive news with OPEC related with the UAE and so on, and I think market probably taking a cue from that. I think what is important to understand is that before the start of the war, the fundamentals for the Indian economy and corporate earnings were looking pretty robust. And so if, obviously we have had this disruption, which I think is also causing a fair bit of spike in prices in many categories. And so there is that risk also looming here for the short term. But, perhaps the view would be that, it will be somewhat, transient, and eventually we go back to, benefiting from many of the structural positives that we are likely to see, especially all those trade, the free trade agreements, or more attractive trade agreements that we are either working on or have put in place. I think those benefits of those are going to be pretty profound. And I think market probably also taking cues from that.
That's right, Bhavin. Those are important positives to note, and it's a short-term transient view that the volatility is really reflective of. But Bhavin, if we can really look at the immediate few months, because the war is continuing, much against the expectation and wishful thinking of many in the market that it's a short-term war, but this particular crisis really continues with a stalemate on the negotiation front. Putting that into perspective, now if we look at the short-term view on the economic impact of lower than expected monsoons, which is being talked about by IMD, and the second, the impact on the upcoming earnings for this present quarter because of the crisis continuing. How are you really seeing this short-term view and the next quarter's earning momentum?
I think we will probably see some, impact in, like, for example, one category where we have seen very high price increases is in building materials. If you ask, people in the industry, they will talk about significant jump in cost of construction. Now, how it plays out in terms of, if there are, if it slows things down, then it will affect the companies that participate in that space. And similar cost pass-throughs probably happening in other areas as well. A lot of chemical prices of raw chemicals and so on have also gone up, which then feed into a wide range of sectors. So it is conceivable that overall consumption demand may have a little bit of an impact in the June and maybe even September quarter. That, I think, is something we have to be aware of.
That baked into the market right now, Bhavin, or it's yet to come?
I don't think it is baked into the market. I think, market is sort of in that, recovery mode right now. So I don't think it is baked in.
Right. So that's one important takeaway coming in, that the next quarter's momentum, which could see some pressure points because of the crisis, may not be baked into the market right now. But Bhavin, what about the IT sector? It has gone through a huge amount of volatility, pressure, consolidation. Today, of course, is a good day. But you have tracked this sector very closely for a very long time. How do you see this present valuation? And how do you see the next couple of years momentum for our top 5 IT companies, with the AI thrust as one of the pressure points, and the investors who are invested in the companies right now getting their returns, and what is the potential?
So I think the correction in the sector, in the share prices, is reflective of fundamentals, but I would say that we are still not at a point where one could, buy these stocks based on some kind of a value, purely because of the value. I think the way I would think about it is that, we probably don't have, much of a top line growth. Maybe even modest decline is possible, because of the size of these companies. I think I keep going back to one important fact that, pre-COVID, the growth rates for these companies were dipping down to mid-single digits, or maybe even slightly less than that. COVID gave a bump, and that is gone. Now we have this AI-led meaningful deflation, which I think is definitely going to have an impact. And I think the other thing is that we are still in that journey of improvements in AI models. So there is still incremental productivity boost that is coming our way. And there was one big positive, surprise, if I can call that, in terms of the productivity boost that came in December with the launch of some of the new models for Anthropics and like. And I think that journey, that disruption probably is still not completely done. And so I think it is, more work getting done with fewer effort. I think that's the theme that is still playing out. And in that scenario, it is very difficult, frankly, even for the, the market watchers, analysts, to figure out what a revenue growth to project for these companies for next 2-3 years. And, I think the base case may be close to zero, maybe slightly low single digit. And that I think is not good enough to be to excite anybody even at these prices.
All right, Bhavin, so that pressure point really remains an indecisive on the growth prospect of the IT sector and the top IT companies and AI pivot and disruption that to be watched out for. Now, when we talk, Bhavin, about most of the big banks which have already come out with results, and they also are a mirror of how the markets really view the overall economic trajectory. How are you seeing the banking space? And also, is there a sector of choice, finally, if you can leave us with, which could be a good buy, and in terms of valuation as well as potential growth, that is a sector of choice for you?
I think the large banks, they definitely have a challenge with growth. We are looking at a relatively lower nominal GDP growth, and the size of these banks also is now coming into play, where we are starting to see say 10%, slightly more than that kind of growth rates, being sort of a more likely scenario. And so one has to look at that and figure out whether there is that is good enough for meaningful share price appreciation. So that I think is a bigger challenge for the large banks, that I see as of now. I think then there are obviously going to be specific sub-segments within the financial space. They may still experience higher growth rates. And so it boils down to selecting those companies if one is really looking at generating superior returns from that space.
All right, Bhavin, I've got your point on that. Large banks with some challenges, and of course, the other pockets of the sector, there are AMCs, there's insurance and the others, which may show some growth momentum there. Bhavin Shah, always a pleasure speaking to you. Thank you so much for getting your insights on the market momentum. Thank you. All right, so those were the takeaways coming in on the market, and at the current moment, over 1% gain on Nifty 50. We'll take a break and come back with more on the market action and the news of the day. Don't go anywhere.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in
Welcome back. You're watching Markets at 12, and let's now shift our focus to another important component of the market, which is also impacting the overall view on India as well as Indian equity, is the rupee market. And take a look at rupee momentum. Today, it's having a down day, 0.27% down at the current moment, 94.8 to a dollar. Very inching closer to 95 mark, which has been a worrying level for the RBI RBI that we have seen in the past. If you really take a look at the weekly chart, we've lost almost 14% on rupee as well. All right, let's take it straight across to Naveen Mathur, who's the Director Commodities, Currencies and Gift City IFSC at Anand Rathi Share and Stock Brokers. Naveen, always a pleasure, welcoming you and chatting about the rupee momentum. With this last few days of consistent depreciation, what do you make of the rupee movement and what are the pressure points? Of course, RBI eased some of their measures in the recent past, and after that is it right to say that after that the depreciation momentum has built up again?
Thank you, Nisha, for having me on this particular show. Thank you for kind words too. So yes, the rupee has depreciated and continues to be kind of depreciation mode itself. Definitely the geopolitics, the Federal Reserve upcoming meeting, the decision on that particular front, the crude oil prices particularly, and the kind of uncertainty hovering around the markets, the global markets, definitely is putting pressure on rupee. And therefore, the trend remains bearish, which is a depreciative rupee against the dollar. Now let me share certain perspectives with you. We have the FPI outflows to an extent of around $18 billion last year, which is 25 calendar year. Just in the month of April itself, Nisha, we had around $8 billion worth of outflows. And that is another component of the rupee depreciation. Apart from whatever the noise is, whatever we are seeing in the geopolitics, the tariff to an extent, the tariff matter, the US tariff matter to an extent has been settled now. We are down from 50% to 18% basis the Supreme Court ruling there, the federal court ruling there. So I think the positives for India are not outplaying versus the global market scenario, and particularly the inflationary concerns. Every $10 increase in price of crude hits a fiscal deficit to an extent of around 40 to 50 basis points. So all those things which we are seeing in the market are overweighing on whatever positives India has as a story. Our resilience to the markets have been pretty great. We are still doing wonderfully well in terms of our data coming up. The manufacturing index data came out yesterday, although it was down slightly from 4.3 to 4.1%. But I think still that is something which is very much positive for India. So I would say all said and done, the things are pretty much fine. We are doing pretty well. Up till and unless the geopolitics or I would say the dollar index stability or the FPI outflows does not settle down, we do not see any respite in terms of the depreciation slide. But whatever we have seen over the last 2 months or so, that volatility would not be continuing. The RBI has done much of the efforts. They are not, I would say, happy to see rupee going beyond 90, but at the same time, they are not managing their reserves to hold the volatility. They or hold levels of rupee against the dollar. So I think the volatility has somehow petered down, but then still rupee has a bearish or a depreciative stance against the dollar, Nisha.
Right. So Naveen, last time when RBI came up with some measures on speculative trading by the banks and the treasuries, and that really averted the fall momentum that we saw. But soon enough, after a little bit of relaxation, the depreciation trend has really built in. And to your point, the balance of payment, the fiscal deficit, oil import bill are all going to have pressure points on the economy. The rupee market, the money market, as well as the equity market are very divergent in their trend, where rupee is continuously focusing on showing those pressure points while the equity markets are again getting robust.
Very fair point, Nisha. I think this kind of a divergence happens sometimes in the markets where we see, I would say, a lot many news coming and building up the uncertainty. As I said in my opening remarks, the India markets are looking good. Our our economic numbers, the data is pretty much resilient than the other countries. So it's a double-edged sword. When the markets do good, you get to benefit as a country. If you're doing pretty well, then your competitive countries, like, say, I would say, even to an extent, Malaysia, Thailand, Indonesia, or other countries. So I would say it is more of a question which is related to the global uncertainty, and therefore the impact as country overall in part of the global things or the global things which are playing out. So I would say more to do particularly with the global markets or with the global uncertainty than India specific.
Naveen, thanks. Yes, no, thanks for laying down that point. And while you continue your other point, very quickly also, are we penciling in, the lowest level that we had touched below 95? Is that being penciled in? What is the in-house view on this depreciation trend?
Yeah, Nisha. So 94.64 was yesterday closing of rupee. Today we are at around 94.80, as you said rightly. So I would say the future market anyway are at 95. So 95 would be the threshold. I think where we won't see much of the rupee slide from there, but still 95.10 would be the support on the downside for rupee against the dollar, and we see 94.30 as a resistance appreciative against the dollar. So this would be kind of range of 94.30 to 95.10. But 95 would be one of the very critical marks in the spot where the RBI would not be looking forward to take the rupee further downside from that particular level. Nisha.
All right, Naveen Mathur. So there is some sort of a base on 95.10. There could be some resistance to the further downfall, but 95 itself is a very worrying level. We have seen it in the past, and RBI action is also anticipated. Thank you so much, Naveen Mathur, for joining in with your views on the rupee movement, and this could be a worrying trend once again. All right, let's shift back to the equity markets, and we are in the thick of the earnings season, and earnings-led rewards really coming in for Eternal as a stock. Eternal says that the competitive landscape has really changed materially, and neither has its strategy. In fact, management remains focused on executing its plan, confident of delivering on the targets despite the ongoing competition. Listen in to the management of Eternal after the performance, which really rose that particular counter. Listen in.
Competitive activity hasn't meaningfully changed from when the last time we were on a call. And I think our stance about it is also the same, that we will sort of keep an eye out for it, but do the right things for the business. And to the extent, we've mostly delivered on what we thought we would be able to accomplish in face of whatever the competition is going on, and whatever guidance you're giving, we're not really changing our outlook on that either.
All right, moving away from that to a major fault line that appears to be emerging within the global oil alliance. Now, the United Arab Emirates, UAE, reported exit from OPEC and OPEC Plus signals more than just a policy shift. It really points to a broader recalibration of power within this cartel. Now, to discuss this further, we are joined by Somit, who's getting us the insights on what really this means for the oil market and therefore the impact on India. Somit has done a great deal of research on that. Somit.
Yes, UAE is quite an important partner when it comes to OPEC. It produces nearly 3.5 million barrels per day of oil and has been making investments to increase this production capacity to nearly 5 million barrels by 2027. Now, this was before the war started. UAE is around 4% of the global oil supply, 12% of OPEC supply, and second largest player after Saudi Arabia. Now, analysts believe the reasons for this exit may be more political than pure economic. There has been regional regional rivalry that has been growing as per analysts, and multiple issues is what they have cited, like Saudi Arabia made a defense pact with Pakistan. Saudi Arabia and UAE are not on the same page when it comes to the Yemen strategy, and UAE is also getting closer to Americans and the Israel. And this is not the first time someone has quit from OPEC, but UAE was its most compliant with the production quota in the past. So this might impact oil prices going forward. Now this could also weaken OPEC's cohesion at a time when global markets are already under stress as per analysts. Now multiple countries have exited OPEC in the past. Ecuador has done it in 1992, then they rejoined in 2007 and then again exited in 2020. Gabon exited in 1995. Post that they joined in 2016. In Indonesia has also exited a couple of times in 2008 and in 2016. Qatar had exited in 2019 because they were more focusing on gas from then, and Angola had exited back in 2024, and now UAE is will be exiting from the 1st of May 2026.
All right, it's a big event in the recalibration of oil cartel globally. Thank you, Somit, for all the details. Now, at The Economist's Resilient Futures Summit 2026, Sagar Adani, who's the executive director at Adani Green, outlines India's clean energy ambitions. Listen into a slice of what he had to say in a conversation with NDTV Profit.
The government has provided any and every policy support that it needs to provide. It's done, again, as I said, an exceptional job. If you see the manufacturing capacity that's been added in the country over the last couple of months and the last 2 years, pretty much, it's been north of 50 gigawatts of manufacturing capacity that's come up in the country. That's all due to the policy encouragement by the government of India. Last year, we crossed 55 gigawatts of renewable energy installations in the country for the first time ever.
All right, with that, it's a goodbye, but keep it with NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters.
Hi, thanks so much for joining in. You're watching Trending Stocks. My name is Alex Matthew, and in the news pit, very close to where all of the action is Sharad Dubey. Sharad, it's a great day so far, at least for the benchmark Nifty 50. We're trading 300 plus points higher, and quite a bit of action for the heavyweights. Reliance Industries and a couple of other heavyweights really swinging it today. What are the factors that you're paying attention to?
Thanks a lot for that, Alex, and good afternoon. And yes, we are at the day's high level when it comes to Nifty. Look at that, a move coming in. The index is up more than 1.25%. Nifty Bank also we see largely a strong up move is happening over here. Over here also we are seeing we are at the day's high level for both of the benchmark indices. The first and the foremost reason for this is, remember, this is the first day of the May expiry, and remember, new positions are coming in, and because of that we are seeing a sustained moves happening, at least in the index heavyweights. Technical setup remains bullish for Nifty 50 as compared to Nifty Bank. And interestingly, there are other triggers also which should be in your radar. The Q4 numbers which have been recently coming out have been largely in line or better than the street estimates, and that's also aiding the sentiment for the markets. Apart from this, the buying is happening in three of these indices where all of them have gone up past the 2% mark. It includes realty, auto and the FMCG pack. And apart from this, if you look at the other key triggers, is definitely going to be the small and mid cap. That is where the show is happening. Strong momentum for the second straight day, and that is what is helping the advanced decline ratios as well. But remember, key state elections outcome is on Monday, and West Bengal is having its second phase of voting as well. So that is also showing a little bit of sentiment. But three important earnings today: Bajaj Finance, Federal Bank and Adani Power, where we are seeing the immediate reactions just ahead of the earnings. And importantly, global earnings also is there. Tech, we have Alphabet, Amazon, Meta and Microsoft as well. So a lot of focus is on earnings right now, as the geopolitical tensions or issues have taken a slightly backstage. But nevertheless, it's a great day for the markets, especially on the start of the May series.
Yeah, absolutely, Sharad. You couldn't have put it better. Particularly at a time when crude oil prices are where they are. Brent crude still above $110 to the barrel. Let's talk about the watch list and which stocks stand out as the key gainers today. Garden Reach Shipbuilders, it's a strong Q4 result that they've reported a PAT growth of as much as 25%. The stock is up and about. Bandhan Bank in double digits today, gains. This is on the back of a pretty strong performance in the fourth quarter. Several metrics are doing well on asset quality in particular. CIAT, another good set of numbers. It's beat analyst estimates. Star Health has had a strong Q4. Maruti Suzuki as well. The outlook for FY27, volume growth of 10% is something the street is cheering. Dr. Reddy's Laboratories, significant update in the form of the semaglutide approval in Canada. Shelley Engineering, for that same reason, it supplies to Dr. Reddy's Laboratories. MV Photovoltaic, a strong performance in the fourth quarter, and so too for Greenply, which was up in double digits as well. A couple of volume buzzers, you have MCure Pharmaceuticals as well as IKEO Tech, both up and about. Bajaj Finance, ahead of its numbers, is buzzing, and so too is Federal Bank. Federal Bank, by the way, has an earnings conference in just a short while. Let's go across now to Sharad to take us through the rapid fire. Sharad?
Thanks a lot, Alex, for that. And joining us, we are having Gaurav Sharma. Good afternoon, Gaurav. It's always a thanks a lot, Alex, for that. And joining us, we are having Gaurav Sharma. Good afternoon, Gaurav. It's always a pleasure to have you at NDTV Profit. We'll start our rapid fire round, and first stock would be Bandhan Bank. Of course, the numbers were really strong, and we're seeing a good up move coming in. This is, of course, a trader's favorite stock also. Important levels to watch out for, and is there any risk reward ratio, or is advisable to book a little bit of profit here?
Hi Sharad, thanks for having me today. Always a pleasure. Yes, on back of stellar numbers, a 68% jump in the net profit. The stock is trading 13-14% higher in trade today, backed by good amount of volume as well. As we speak, it's over 8.5 crore shares that have exchanged hands. Going ahead, I see the stock heading towards 210-218 levels. Hold is a suggestion that I'll go.
So hold is the suggestion when it comes to Bandhan Bank. Next stock, CEAT. Good set of numbers, and we have seen the tire maker stocks also buzzing in trade. Do you think the momentum will carry forward as well?
Some bit of momentum is fizzling down. The CEAT opened with a steep gap on the higher side, could not hold the same, and it is tumbling down now into the gap zone. Further, some more profit taking towards 3600 is pretty much likely. So I think this is the time for intraday traders to book their positions and take out their money.
Right, and Gaurav, Star Health, of course, there has been a good up move coming after a very strong operational set of numbers coming in. Management also sounded bullish when I spoke with them in KYC today. Your views on this counter?
Well, management was quite optimistic about their business model. The stock went up sharply, and as good as it can be, it is just coming down now. Again, just the likes of CEAT, it is at the onset of filling that entire leftover intraday gap. Again, intraday traders should consider booking their positions. Stock is likely to test 520 odd levels soon.
Right, and for the second straight day, we are seeing Maruti Suzuki also doing well in trade. Of course, yesterday we saw a good up move, largely inline set of numbers. There was, of course, a surprise also in the PAT, and overall, we are seeing a good momentum coming in. And next 2 odd days, we'll have the sales numbers as well. Any trade being made for the next 2 to 3 days?
Sure, absolutely. This is a portfolio stock. These are good levels. One can enter from a trading standpoint. 13,750 the immediate upside level. Thereafter 14,250 is possible. But I think this is one stock that should be kept in the portfolio for a little longer time. I will be interested in targeting 16,500 in the next couple of months. So these are the things that I'm actually interested into. 12,500 is the stop loss that one should take.
Right. Thanks a lot for that, Gaurav, in the rapid fire segment. But a very interesting development is happening. Let's tune into PM Modi talking about the inauguration of Ganga Expressway.
प्रणाम करता हूं. यहां से कुछ किलोमीटर की दूरी पर मां गंगा कृपा बहाती हुई गुजरती है. इसलिए ये पूरा क्षेत्र ही तीर्थ से कम नहीं है, और मैं मानता हूं यूपी को एक्सप्रेस वे का यह वरदान, ये भी मां गंगा का ही आशीर्वाद है. अब आप कुछ ही घंटों में संगम भी पहुंच सकते हैं और काशी में बाबा के दर्शन करके भी वापस आ सकते हैं. साथियों, जैसे मां गंगा हजारों वर्षों से यूपी की और इस देश की जीवन रेखा रही है, वैसे ही आधुनिक प्रगति के इस दौर में उनके समीप से गुजरता ये एक्सप्रेसवे, ये यूपी के विकास की नई लाइफलाइन बनेगा. ये भी अद्भुत संयोग है कि पिछले 4
All right, so that's the Prime Minister Narendra Modi speaking at the inauguration of this Ganga Expressway. It's going to cut the distance between those two cities quite dramatically. But it's back to earnings conversations, or actually significant developments for Dr. Reddy's Laboratories in this case. It has received approval from Health Canada for its generic semaglutide injection, and that marks a key entry into the GLP-1 segment. My colleague Varsha spoke to Erez Israeli, who's the Chief Executive Officer of the company, about this new development. Listen in.
Starting with the Canada, which is the first major regulated market to greenlight a generic semaglutide, how significantly does this Health Canada approval accelerate your filings in other, non-G7 markets like Australia or UK?
So very significant. First, it's a great recognition by a very respectful health authority. So we have a deep respect for Health Canada and for the way they conduct their applications and registration process. It's obviously the approval in India, which was very, very important for us as well as Canada, allow us to use this approval with the registration process in the other markets. Eventually, we want to get for more than 90 markets, including the 2 markets that you mentioned. The last one will be in the United States when the patent will expire.
And you've also stated a goal to launch in 87 countries by 2026. Now, with the Canada approval secured, which specific emerging markets are now the immediate priority for the next 12 months?
Yeah, no, we targeted and we are in the process of all those markets using both the Indian approval as well as the Canadian approval. Notable markets will be markets like Brazil, Turkey, markets in Southeast of Asia, market in Latin America. Basically, every market that from IP standpoint, from patent point of view, we can launch a product.
Right. And Mr. Israeli, talking about the competition, as more companies are expected to get the approvals, but you are amongst the first in the G7 market, how much of a timing advantage do you realistically have before competition can catch up?
I believe that the market in Canada will be competitive relatively soon. Not that many players, but we are not expecting to be alone. Having said that, it's not an easy product to get approval. So we are going to see a period of time in which there will be relatively less competition. And obviously, as time will go by, more and more companies will get it. At the same time, we believe that the demand for the product, especially when there will be more affordable prices, will increase as well. So it's a very nice opportunity for actually quite a few years to come.
Right, but on that note, sir, with 5 to 6 players expected, how sharp could price erosion be over the next 2 to 3 years, if you could, highlight us?
So I don't know exactly how steep will be the price, but it will be a normal generic in a way, as at least in Canada, the price is linked to the reimbursement price. The reimbursement price, when more than 3 players are coming, is normally going down around 75%. So I'm assuming that something similar will happen also to this product.
Right. And Mr. Israeli, when it comes to the target market share, what is the expected or, your target market share in Canada in maybe, in next 12 to 18 months?
As I believe that there will be at the beginning 1 or 2 generic players plus the innovator, we should have a very decent market share. We are preparing ourselves to sell even up to half of the market if will be needed. I don't know if we'll get that, but I'm assuming that it will be a significant market share, more than you normally get, let's say, when the market is more crowded, let's say, number of players. So let's say any number from 25 to 50% will be very reasonable in this case.
Right. And also, sir, I just wanted to highlight on the Brazilian market also, as the, regulatory body has rejected a registration request for generic sema version. Your views on the same, what's the next update, if you could give us on the Brazilian market?
We will be in Brazil, for sure. We got the comments from the Anvisa, and obviously we will work on them, and we are working with the partners in Brazil, and I believe that we will get approval in the next coming months.
Okay, understood. So in India, you're setting up the Obesity Center of Excellence. Is this a strategy, you plan to export to markets like Brazil or Turkey to, build brand loyalty before the generic wave hits those regions?
Yes, just in those markets, we will not do it by ourselves, we'll do it with partners. Naturally, we are an Indian company and we have the capability to do that in India. In the other markets, we will have to do it with the partners. But it's very, very important for us to address both diabetic as well as obesity. And we just need to remind everybody we will not launch eventually only generic version of Ozempic. We will launch also Wegovy, as a generic version of Wegovy, as well as generic version of the oral product. So altogether, we believe that obesity is very, very important phenomena that we want to help, of course, to manage for the entire humanity, actually.
All right, that's a word coming in from Dr. Reddy's Laboratories talking about the entire GLP-1 space. Let's pull up the intraday chart and see what it's doing. It is losing a little bit of steam at this point, down about 1%, but it's had quite the rocky journey so far today in intraday trade as well. But let's take a look at what the trending stocks are. And this is, of course, a Google Trends report that we're pulling up for you today. And you have, of course, Reliance Power that is up and about in terms of the volume searches. Bandhan Bank, for good reason, because, and we were talking about this, quite a few metrics on the asset quality are starting to look significantly better. The provisions number was down, and you had slippages that were above 10,000 crore rupees, but they were significantly lower both sequentially as well as on year. The gross NPAs as well as net NPAs have actually improved, and you have return on assets that's climbed as much as 40 basis points on a sequential basis to above 1%. So all reasons why the stock is up and about. CEAT as well from the tire pack is off the high point of the day, but still trading with gains of 5%. The 23+% improvement in revenue is doing well for CEAT, including its improvement in EBITDA margin as well. Gaurav, these two names, Bandhan as well as CEAT, would you buy, would you hold if you have it, or would you avoid it at this point?
Good afternoon. I will hold CEAT at the moment, taking a stop at 3450. While in case of Bandhan, this is a good stock. We can even consider adding it as reasonable room towards 218 is still there. So we can, a trader can even consider adding the stock, maintain a stop at 195.
Thanks a lot, Gaurav, for your time and giving us important views, especially on the technical aspects. It's always a pleasure to have you. But moving on, our focus is on Maruti Suzuki. Second straight day of gains coming in, and brokerage is also steam bullish about it. Puneet, just give us some details about Maruti Suzuki. For 2 straight days, good moves in the stock.
Well, results came in yesterday. It was a strong show for the company. The revenue grew 27%, so did EBITDA. Net profit was impacted by a one-time impact because of other income, but largely the market focusing on the strong EBITDA margins of 11.7%. And also that the growth is quite strong for next year. So someone like Morgan Stanley has maintained a target price of 17,895 and overweight rating as well. And they've highlighted that the volume picture for FY27 at 10%, which is much more than what SIAM projects at 5 to 7%, shows you the growth for this counter. They've also mentioned that it's almost 200 basis points ahead of their own estimate, and hence continuing to maintain the positive view. Second one, Citi, they've actually gone ahead, hiked the target price to 18,500 versus 18,200 earlier, and they feel that the cost pressure could be one of the key aspects that could be rising in the near term, but they feel that the market is confident, and so is Maruti Suzuki, and hence increasing the volume estimate as well. Macquarie also maintains the target price of 15,893 and has said that while the near-term earnings could see some commodity impact, it's largely a positive result.
Thanks a lot, Puneet, for that analysis. And joining us, we are having Gaurang Shah, Good afternoon, Gaurang. It's always a pleasure to have you. We're just discussing about Maruti Suzuki, good strength coming in. You had also spoken about it earlier. Your views on this?
Hi Sharad, good afternoon to all your viewers and to you and your entire team. A small disclosure, all recommendations that I'll be sharing with you on your show this afternoon, they are part of our fundamental team recommendations from a long-term point of view. By our company Jujit or myself, we do not have any kind of personal investments, no conflict of interest, no financial interest, but we share recommendations on similar lines with our clients. They might have their investment interest. So it's quite a relief to see the kind of uptake, because post the numbers were announced, there was a negative reaction on the counter of Maruti. But I think this morning I was listening into the management commentary, and of course, as a disclosure, we do have a positive coverage. 17,000 plus approximately is the target. Earnings will derive whether the targets remain there or they get revised. Export market is opening up as a huge opportunity in the last couple of month-on-month numbers that we have witnessed, not only for Maruti but for other auto manufacturing companies as well. And I think if they have to ramp up their EV portfolio with few more new launches I'm talking about, Sharad, then I think that should augur well.
All right, Gaurang, got that view. Thanks so much for that. By the way, we've got sources that are telling us that lower-end cigarette prices are set to be hiked again. And this is soon after the last round of hikes. Remember, Mahima joining in to give you some context, and perhaps that's the reason why ITC is at the high point of the day, Mahima.
Right, absolutely, Alex. So channel checks are suggesting that another round of price hikes is happening for cigarettes as a whole. Now, the conversations with distributors points towards a 17% price hike expected. Overall, gold flake premium prices are expected to move from 115 per pack to almost 135 per pack in May 2026. Gold flake premium contributes around 35 to 40% of sales volume of ITC. Overall volumes, and in terms of similar price hikes could be expected from Godfrey Phillips also going forward, and other categories of cigarette for ITC as well. There's also channel checks suggesting that Classic Connect could also see price moving from 390 per pack to 420 per pack. This is what distributors are telling us right now. So price hikes on the card, yet another round of price hikes, let me put it that way, on the cards for all of these cigarette makers.
All right, thanks so much, Mahima, for that. But while you're with us, let's also talk about Eternal. It has reported a strong performance in the fourth quarter, with profitability exceeding analyst expectations. What are the standout features of this performance, and what did you hear from the commentary from the management as well?
Right, Alex, so overall it was beat in terms of profitability. Margins also improved to 2.8%. Both food delivery as well as Blinkit business has done very well. Food delivery, in fact, grew over that 20% mark, which was guided by the management earlier. Blinkit profitability improved to a large extent. Margins went up to 2.8%. Even Hyperpure and District have seen a steady growth. Cash surplus is also very healthy this quarter. And there's negligible impact coming in from the macro situation is what the management has said. I think the important and key takeaways from the management commentary was that they've said that Blinkit over the next 3 years, the NOV growth is going to be, that is the net order value growth is going to be at a 60% CAGR. So that means that the business will grow 4 times in the next 3 years. Adjusted EBITDA outlook for till FY29 is around US dollars 1 billion, and implied margins according to this could be anywhere between 3 to 3.5% for the Blinkit business. Management of course hinted towards a 70%-ish growth in terms of the overall business for quick commerce versus that of 100% guided earlier, and this is only because of the aggressive dark store expansion that they're doing. So this is the overall view as to how guidance has changed a bit. In terms of key commentary coming in, monthly transacting users have remained strong. They are on track to achieve the 3,000 dark store additions that they're expected to do by March, and profitability is a non-negotiable aspect for them. From here on, they're prioritizing healthy growth over aggressive market share gains is what the management has said. I think this was the key takeaway for me from the con call yesterday. So this is the overall view how things have fared for Eternal in Q4.
All right, thanks so much, Mahima, for that. Gaurang, a view on Eternal, and how does this stack up against Swiggy? There's a reason why the stock price is doing what it's doing right now. The only question is, does it still warrant an add to the portfolio?
Hi Alex, good afternoon to you as well. So as a disclosure, we have a fundamental positive coverage on Eternal, earlier known as Zomato. And as Mahima was, putting the numbers and the business commentary with respect to the outlook of business, my personal belief, Alex, was that Blinkit is going to do wonders to the contribution as far as the balance sheet is concerned. 3,000 dark stores by March, I think they are very well capable of doing that and venturing into newer geographies whereby you will get a larger market share and a wider audience in terms of customer base. Food delivery platform, there was no complaints. It did contribute and it will continue to contribute. The only near-term problem, Alex, is any new entrants coming into this business is going to throw open a lot of freebies and discounts, which may create a short to medium-term migration of customer base. But I think when things get back to normal and chargeable, you will see back performance coming back for companies like Eternal, that is Zomato. Swiggy, we don't have a coverage. We covered it during IPO time, but standalone, no coverage on Swiggy. And I think Eternal happens to be one of the most preferred investment ideas in this sector.
Eternal is something which we'll be watching out for. But another stock, Bandhan Bank, that's also doing really well on back of strong quarterly earnings coming in. We spoke to Partha Pratim Sengupta. He's the MD and CEO of the Bandhan Bank about FY27 guidance and loan growth outlook. Do listen in.
So we are thinking at the market, how their industry, how are they behaving, considering the growth rate that is happening in the industry and our base. I would like to have at least 100 and 200 basis point more than what the industry is doing. That is my guidance regarding credit. Regarding deposits, we have always said that we don't normally set a target. We just say that whatever growth we are achieving in credit, we will do a little bit more in deposit rates. But as you see, the industry is behaving a little bit differently as of now. From November onwards, the incremental credit growth is more than the incremental deposit growth. So that since we are also a part of the industry, so we will also have to closely watch. But definitely the competition is intense in deposits, and we are coming with many products, with many initiatives. I would like to maintain the ratio of 15% credit growth and a little bit marginal higher growth in respect of deposits.
Well, that's the management of Bandhan Bank. Stock up almost 14% in the day's trade, near the day's high level right now. But we have a shortage of time, and Gaurang, we'll definitely keep asking you more questions in this show going ahead as well. But that's all for today, and thank you very much, Gaurang, for joining us and giving your precious time to us. And folks, that's all for the trending stocks today from me, Alex, and the entire team who has set up this show. But keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the
The Wall Street powers higher today as benchmarks extend gains. The Nifty moves back above 24,300. The Sensex jumps over 1,000 points as well, and broad-based buying in auto and realty stocks lead, with most sectors firmly in the green. And Dr. Reddy's in focus after scoring a key regulatory win, secures Health Canada approval for its generic semaglutide injection. The clearance marks the company's entry into the high-growth GLP-1 segment. Earnings drive stock-specific action today. Bandhan Bank is rallying on sharp turnaround led by retail strength and improving asset quality, while Garden Reach Shipbuilders is surging after a stellar quarter powered by strong execution and rising defense momentum. Oil prices, meanwhile, are holding at elevated levels, with Brent hovering close to $111 a barrel amid persistent disruptions near the Strait of Hormuz. The UAE is set to exit OPEC from May 1st, dealing a fresh blow to cartel cohesion and keeping the global oil outlook tense. And moving on, then, the last and final phase of voting is underway in Bengal. More than 1,400 candidates are in the fray for 142 assembly seats across 7 districts, including Kolkata. Results will be announced on May 4th. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But while we do that, let's quickly start the show by taking a very quick look at the markets right now. When you talk about the sectoral picture, that's also indicating some strength, and even when you talk about Nifty 50, you're seeing those 300 odd point gains also coming in. When you talk about Sensex, that sort of uptick is in fact much higher. It's just about 1,000 points thereabout. And when you talk about some of those sectors as well, all of your major sectors in fact are holding on to a tinge of green. So it's actually realty that's making it to the top of that pack. Along with that, auto, FMCG, consumption, IT, Nifty Bank, PSU Bank, all of those sectors in great shape right now. What's not doing so well perhaps is media and metals, and that's also just sort of taking it a little more harsh on some of these sectors, because they're still holding on to a tinge of green right now as we speak. But let's also quickly talk to you about some of the gainers as well at this point in time. So something like a Bandhan Bank, after that robust set of numbers in the fourth quarter, that's also perked up in trade about 13.5%. Sapphire Foods, Garden Reach, RBL Bank, Chennai Petro, also some of the other counters that are in focus and buzzing away in trade. When you talk about the Nifty 50 pack as well, Maruti Suzuki, ITC, Tech Mahindra, Coal India, all of those are your top gainers. And what's not doing so well from within this entire pack is something like Interglobe Aviations, Apollo Hospital, JSW Steel, Hindalco, as well as Dr. Reddy's. The top loser in terms of the Nifty 50 pack right now, and it's in focus on the back of also receiving an approval from Health Canada for its generic semaglutide injection, marking a key entry into the GLP-1 segment. In fact, let's get in Varsha to get us all of those details. And of course, we do have expert insights, but before that, Varsha, you're quite an expert yourself. Let's quickly take a look at what this approval really entails for them.
Well, you know, everybody was waiting for this approval, but we are seeing some pressure in the stock because I think everybody was expecting this, and we are seeing that profit booking in, Dr. Reddy's. But overall, the Health Canada, so basically in a simple language, Dr. Reddy's has got approval for semaglutide in Canada. Semaglutide is nothing but, which is used in, it's an API, active pharma ingredient, which is used for treating type 2 diabetes and also helps in weight loss management. Now, this marks, so Health Canada has authorized a generic semaglutide injection by Dr. Reddy's, and this marks company's entry into a highly competitive GLP-1 segment, also opens faster regulatory pathways across Brazil and other emerging markets as well. Now, this is the first generic approval in the G7. Canada is the first G7 country to approve a generic semaglutide. This sets a global precedent for other regulated markets as well. Now, this is a major win for Dr. Reddy's. The approval strengthens Dr. Reddy's position in the complex generics. Also, this being among the first approved gives a competitive head start to the company, allows early market captures before peers receive approvals. Well, Canada itself, if you see, is a $2 billion market with 10 to 12 million pence annually. And the near-term earnings support, if I were to talk about, well, Canada launch could contribute meaningfully for FY27 earnings. Analysts are pegging in almost $150 million of earnings or revenue potential in FY27. Volumes are expected to scale 2x and or 3x as pricing declines. Well, 6 players in Canada with Apotex and Sandoz are likely to follow, and early approval gives Dr. Reddy's a timing edge despite future competition, and emerging market will be a larger long-term opportunity. But overall, if I were to talk about semaglutide in Canada, and when it comes to India also, has lost a patent on 28th March 2026, and lot of companies have actually came out with their version or generic version of semaglutide. You have Dr. Reddy's, of course, which has come out with a semaglutide pen for rupees 4,200. You have Natco, you have Zydus Life, you have Glenmark, Sun Pharma and Alchem Lab. Whole lot of companies are actually into this. So overall, if I were to talk about Shreyansi, this is a big the next leg of growth for all the pharma companies. But to speak more about the overall semaglutide opportunity and also how this will augur well for Dr. Reddy's, we are here joined by Vishal Manchanda, who is a Senior VP Institutional Research at Systematic Shares and Stocks. We are here joined on a phone with him. Well, Vishal, welcome at NDTV Profit. How are you taking this announcement, considering this was expected, but it was also a big thing for Dr. Reddy's launch of semaglutide in Canada? What does this mean, and what is the expected revenue from this in FY27, according to you?
Yes, so I think getting the first approval is important and should help them carve a good share of the market, while we'll see other approvals also coming in shortly in the next few months. But a first approval is definitely positive, and it gives you a good opportunity to carve a good share of the market. It's about $1 billion market, and my forecast says they can do about $100 million this year from semaglutide in Canada. So that's where I am on the numbers.
Right. Vishal, I think almost 6 more companies are lined up when it comes to approval for SEMA in Canada. Do you think, how much timing difference are you pegging in for that first mover advantage that Dr. Reddy's will give? Because you have, whole lots of companies who are waiting for this approval also.
Yeah, so I think we'll see a staggered entry. Maybe not all of the others will come immediately. Probably we'll see the second entrant coming 2-3 months down the line. So I think among the other filers, Apotex, Sandoz, Teva, Sun, and there are a few more, Aspen, and so these are the other filers in Canada, and we should probably see each one of them coming maybe 1 or 2 months later. Not all of them together, but maybe one by one.
And also, Vishal, we all know that the Brazil Health has actually rejected the approval of semaglutide in Brazilian market. Though Dr. Reddy's is confident of achieving that approval also. But how are you pegging in that the news, and what are your estimates when it comes to the approval in the Brazilian market for this?
Brazil, again, there are several filers in Brazil too. I think more than 10 filers, 10 to 15 filers in Brazil. Is also going to be very competitive, that market. Since Reddy's approval has been rejected, we'll have to figure out whether the others get an approval earlier than Reddy's or not. So we'll have to wait and see how the competitive landscape pans out. If the other players get an approval ahead of Reddy's, probably it will be challenging for DRL to gain share there.
Right. And also, Vishal, do you think, now we all know that, Revlimid, which is expected to taper off, eventually, will the GLP portfolio, will GLP portfolio fill up that earnings gap post the phase out of Revlimid for maybe for every other company I'm talking about?
My sense is that Revlimid was quite large for Reddy's. In the best case, this can probably do about 10 to 15% of what Revlimid was contributing, maybe 20% of what Revlimid was contributing. That would probably be the best case here. And the rest, they need to get other drugs to replace the rest of the cash flow they would lose on account of generic Revlimid going soon and the exclusivity expiring on generic Revlimid.
Right, absolutely. And this is Shreyansi as well joining in the conversation, Vishal. I quickly wanted to try and understand if you think this particular approval really improves the chances in other regulated markets as well. You're looking at a very tightly regulated market, that is Canada. Does that make the chances better for Dr. Reddy's in other markets?
So it does improve the confidence here, but then the other important variable is what? So Brazil is the other important regulated market after Canada. So we'll just need to kind of figure out how the Brazil regulator prioritizes, because there's an internal priority that they have for local manufacturers in Brazil, local companies in Brazil. So potentially we'll see first the Brazil companies getting approval and then followed by companies outside Brazil getting approval. So that should actually impact prospects for the late entrants.
Right. Vishal, talking about the Indian markets, now we all know that post the patent expiry, a lot of companies have came out with their first version, the generic version of semaglutide, ranging from 1,200 rupees to almost 8,000 rupees. I understand that there's a difference between a vial and injection and oral also, but again, if you could give us a generic view, considering the price point, considering the volume and everything, which of those companies have that advantage, considering the growth prospects this segment has?
So my sense is the pens will always be preferred more over vials. So that's what my thought process is. And even if you look at the initial trends, the pens are seeing higher preference in terms of the market share that we can see, the early market share trends that we can see in India markets. Vials probably will eventually gain share as the market gets deeper and probably it gets used in a wider population where there is affordability issues. But I think initially the market will be towards those. I think it will be probably penetrate first the higher income group, and then probably we'll see a wider penetration. And as affordability becomes important, vials should start becoming important. Vials are already important; they are being prescribed well, but pens I think have a dominant share as of now.
Vishal, I wanted to ask you from that angle that which all companies will you see benefit the most when it comes to this segment, considering the pricing point that they have?
So I think price would be important, but your relationship with the physician, your track record in terms of the quality of supplies, all of that would also play a role here. So my sense is those who are already well penetrated in diabetes would be the winners here. So companies like Sun Pharma, Eris Life Sciences, Torrent Pharma, Lupin, they should do well in terms of market share.
Well, absolutely, and I just wanted to try and understand if you're looking at this as a new engine of growth for the entire pharma sector as a whole, because there's going to be a demand explosion that you could perhaps be penciling in here.
I think about we can see the IPM growth getting lifted by about 100 basis points because of this therapy. Maybe higher, but maybe around, I think 100 BPS would be a right figure to go with initially, and then we can look at how well it penetrates.
No, absolutely, and that makes sense in terms of how you should be looking at the entire pharma sector as a whole. Thank you so much, Vishal, for taking time out and joining us this afternoon. So there you go, there's going to be an IPM growth expansion that you're penciling in. Other than that, you do have a set of winners, and that list really expands beyond Dr. Reddy's as well. In terms of other regulated markets, Varsha, he's very clearly mentioned that, Brazil is the next key goalpost that you're looking at for this one.
Yes, absolutely, because, Dr. Reddy's approval got rejected when it comes to the Brazilian market, and now Brazil becomes the next, I would say, the hub for Dr. Reddy's. And in an interview that we took, we spoke with the CEO of Dr. Reddy's also, and they clearly said that they are expecting the Brazil approval very soon. So, overall a positive one, I would say, for Dr. Reddy's going ahead. And also, the other thing is the CDMO companies will also be benefited, because OneSource Specialty will also be benefited, considering being a CDMO player of Dr. Reddy's overall.
No, absolutely, and it's very clear why you could perhaps see that profit booking also really be reflected through for this particular company. The stock that you mentioned, OneSource Specialty, let's quickly take a look at the stock price there as well, because you're looking at about a 1.4% uptake thereabout for something like a OneSource Specialty Pharma that Varsha also mentioned right now. So that's something that you're looking at right now. But with that in mind, it's time for a very quick break right here on Lunchtime Trades. Thank you so much for tuning in. See you on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to get you a check going on commodities. And before we do that, taking a very quick look at what the key commodities are doing right now. Oil prices, you do have that shock really persisting through, but oil prices largely steady. Similar picture that you're seeing coming in for gold as well. But when you just talk about the triggers for oil prices, first up, you do have the fragile Iran peace talks as well that you're really looking at right now. Strait of Hormuz remains nearly impassable even at this point in time, and that's really why the supply concerns are very much top of the mind for investors, and why Brent prices are hovering close to $112 a barrel, We'll get your check going in terms of how sustainable this level of price is right now, just a little while from now. But when you talk about gold prices as well, largely stabilizing as geopolitics offsets rate pressures. With that in mind, let's quickly take a look at the insights that I talked to you about. Vandana Bharti, Head of Commodity Research, SMC Group, is joining us right now. Vandana, a very good afternoon to you. And very quickly, I just wanted to get a sense of what you think about oil prices, because look at that price level for Brent, especially $112 a barrel is something that you're looking at. And you've talked about it on this very show itself, that, you know, that level is something that you could be penciling in when it comes to some of those supply concerns really lingering.
Yeah, hi Shreyanshi. Actually, Trump, he has told to prolong the blockade of Strait of Hormuz. This is not the good news for oil world. We are already facing this scarcity, and sharply the inventories are going down across the globe, whether it is what China is having, OPEC is having, and US is having. Inventories are going down, and we are moving towards the peak demand season. This is a concern for the market, and because of that, and despite the news that UAE is exit of UAE from OPEC, it is not giving any kind of pressure on the prices, because ultimately it will increase the oil flow in coming days. So market is concentrating on the supply squeeze pressure in crude oil, and we are expecting that very soon we are going to see 105, 108 kind of level in WTI. And if we talk about Indian market, we can see premium trade in oil, because INR is already near the level of 95. So expect 10,200 kind of level in oil, and we are not expecting a decline in the prices anytime soon, because both of the sides, they are not ready to go for any concrete decision.
Vandana, and that makes a lot of sense in terms of the way that you're looking at oil prices. I quickly also wanted to bring your attention to the way that prices are trading right now. When you talk about Brent, you're looking at about $112 a barrel. When you talk about WTI, you're looking at that gap really reflecting through, right? Yet again, that $12 thereabout gap, yet again back in, in terms of the spotlight right now. So how are you looking at that entire spread that is really widened when it comes to WTI and Brent, and what does that really indicate for you?
Yeah, more the intensity of war, more the gap. It was of around 32 kind of dollar when there was a peak demand, war tension was there. Slowly it was moving towards $5 to $8. Now again it is $12. So if the intensity of war increase in Strait of Hormuz, clearly it will give impact on the Brent prices. WTI crude is safe with US, so the premium will be more on Brent, and this time we are expecting $15 kind of level of Brent, and we have concern with the Brent crude prices if we consider the Asian economies apart from Middle East. So yes, it is going to increase again towards the level of $15, and there is a peace talk going on, but that is I can't say that is very effective. Now the two countries, they are again on the same front, that they are not going to increase the Strait of Hormuz and the naval blockade. So earlier it was only Strait of Hormuz controlled by Iran. Now it is US Navy control. So there are two control of the Strait of Hormuz, which is decreasing the shipment movement from there. Few days back, it was 12 to 15 ship that crosses the Strait of Hormuz on daily basis. Now it is only 3 or 5. So ultimately, double blockage, it is giving impact on the crude oil prices.
No, absolutely. And thank you so much, Vandana, for all of those insights and for waiting by patiently as we came to you on the show as well. Thank you so much for joining in with all of those insights. With that in mind, let's also get you a quick check going in terms of the broader backdrop for oil prices. A major fault line appears to be emerging within the Global Oil Alliance, and the UAE reported exit from OPEC and OPEC Plus, signaling more than just a policy shift. It points to broader recalibration, in fact, of power within the cartel. To discuss this further, Somit is joining in with some more analysis.
partner when it comes to OPEC. It produces nearly 3.5 million barrels per day of oil and has been making investments to increase this production capacity to nearly 5 million barrels by 2027. Now, this was before the war started. UAE is around 4% of the global oil supply, 12% of OPEC supply, and second largest player after Saudi Arabia. Now, analysts believe the reasons for this exit may be more political than pure economic. There has been regional rivalry that has been growing as per analysts, and multiple issues is what they have cited, like Saudi Arabia made a defense pact with Pakistan. Saudi Arabia and UAE are not on the same page when it comes to the Yemen strategy, and UAE is also getting closer to Americans and the Israel. And this is not the first time someone has quit from OPEC, but UAE was its most compliant with the production quota in the past. So this might impact oil prices going forward. Now, this could also weaken OPEC's cohesion at a time when global markets are already under stress, as per analysts. Now, multiple countries have exited OPEC in the past. Ecuador has done it in 1992, then they rejoined in 2007, and then again exited in 2020. Gabon exited in 1995. Post that, they joined in 2016. In Indonesia has also exited a couple of times in 2008 and in 2016. Qatar had exited in 2019 because they were more focusing on gas from then, and Angola had exited back in 2024, and now UAE is will be exiting from the 1st of May 2026.
Anothan, thank you so much for joining us with that detailed analysis as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of Aimtron Electronics. Now, the company has reported a stellar second half of financial year 2026. Revenues are up nearly 46% and the stock is up nearly 38% in the month of April, which is the biggest monthly gain that we have seen for this counter since its listing. Secondly, we'll be also speaking with the management of Ratnavir Precision. Now, if you look at the stock, it has been gaining for the last third consecutive session. It has hit its fresh 52-week high and the board has recently approved a fundraise of close to around 330 odd crore rupees. So how are they going to use this fund is the key question that we'll be asking the management on the show today. Apart from that, we'll be also discussing the results of Greenply Industries. The stock had hit a 4-month intraday high on strong numbers. If you look at the company's revenue, EBITDA and net profit, it was the highest ever that the company has reported in at least the last 3 years. And lastly, the stock that we'll be discussing is IQ Tech. The stock has jumped the most since September 11, 2025. And if you look at the volumes, they are quite strong. They have jumped nearly 100 times its 20-day average. So this is probably what we'll be discussing on the show today. Now, if you look at the markets, it's a very strong day. Nifty is up nearly 300 points in trade, and after today's move, we are now comfortably above the 50 DMA. That's for the benchmark index. Mostly all the sectoral indices are trading in green. All the major ones are trading in green. Nifty Real Estate and Nifty FMCG are the top sectoral gainers in trade, followed by Nifty Auto and Nifty Bank Index. Also, it's a good day for the small cap index. The Nifty Small Cap Index is also trading in green. But let's get in Mahima to understand what are the key stocks that are buzzing here.
Right, so the Nifty Small Cap 250 Index almost trading at its day's high point, up by about almost 1%, and the stocks that are leading to that uptick is one of them is Wheels India, which is seeing an uptick of around 8%. Ecolite, that we're going to talk about in detail in this show, is up about 15% odd. SR Shipping is also seeing gains about 12% odd. You have MIC Electricals, which is up 9%. Lincoln Pharma, which is also up 8%. Something like in oil countries also, Omax Auto is also doing fairly well, up 8%. Greenply, as Soumit was saying, on the back of its numbers, seeing good gains coming in. On the flip side, you have something like an Asian Granito, which is down by about 13% odd. Infobeams Tech, yet another day of profit booking for this one, down by about 10% odd. You have Krishna Foschem, which is down by about 6% odd. And something like Glottis is also seeing a downtick of around 5% odd. Something like a Medi Assist is also seeing a downtick of around 4% odd. So both the sides we're seeing, both in terms of gainers and losers in terms of where the small cap buzzers go. But let's bring in and start with our first conversation for the day. Amitron Electronics is the company that we're putting spotlight on the back of its numbers. It's been in focus. And to discuss as to how FY26 has fared and how things are shaping up for FY27, we're joined by Sneh Shah, who's the whole-time director at Amitron Electronics, joining us now. Sneh, thank you so much, of course, first of all, for taking out the time. Mahima this side. My first question to you is, with regards to how FY26 has fared, you've almost doubled in terms of where revenue goes as compared to where you were in FY25. Margins have also seen an uptick from 20% to 22%. What have been the biggest drivers in terms of this top line growth coming in, and how does this fare going forward in FY27?
Sure. Thanks for connecting. So probably if you see like FY26, the main driving factor has been our end-to-end ODM capabilities, because that has been like we just not only partner with them on manufacturing side, but we just ensure that we are into the complete entire product life cycle. So that starts from design and engineering to prototyping, and even for testing and full scale up to the production, like box build system integration, along with PCBA, which is a core part of it. And when we try to upscale this value chain and becoming a technology and innovation partner, rather than just a pure EMS player, we have created deeper customer engagement and have higher value addition and sustainable revenue growth, which will help us to sustain in coming this financial year as well.
Okay, but could you just take us through, like for the next 4 to 5 years, are you expecting such a high growth rate of 50-60 odd % to continue for the company?
So if you see the history, like it's been 2 years we got listed. We have been maintaining 40 to 50% CAGR, and next couple of years we are eyeing on 1,000 crore journey, and that will be part of organic as well as inorganic growth, a combination of both. In next 2 to 3 years we are eyeing on 1,000 crore. So we are even coming up with one more greenfield project in Vadodara. That is Amitron Mechatronics, and as a part of it, we even acquired one company in US in January. That is Amitron International Controls.
Okay, Sneh, I wanted to understand that ODM still remains a small part of your business, where overall in terms of margin also this business turns out to be better. Just want to get a sense, any plans in the next 3 odd years to increase the revenue share from ODMs going forward?
See, ODM typically would be less than 5%, or I would say basically it would be in a single digit, because just an example, we clocked in 112 million UPS order for data centers. Data center story in India started now. We have been working with Fortune 500 company based out of US, where we have been developing like 1 kV, 2 kV, 3 kV UPS for data centers, and they are providing it for Google, Met, and such kind of tier 1 companies. So if you see, the design cost would be like, say, a couple of crores, like 5 crore, 6 crore kind of an activity, but it helps us to tailwind towards the manufacturing. The manufacturing, we have 5 years manufacturing licensing, exclusivity signed with them, which help us with 100 crore kind of a top line. So it is going to be like single digit for ODM, but when it comes to the overall revenue size, contribution from ODM, it helps us from designing to the manufacturing side.
Okay. Also, if you could give us some color on what is the current order book of the company, and along with that, if you could also tell us what is the total orders for what you have already placed bids, and what has been the success ratio of the same in past?
Sure. Certainly, if you see the current open order book with consolidated numbers are somewhere around 550 to 600 crores. And typically for us, execution timelines are 12 to 18 months. And as of now, if I talk about Amitron India, which like founder Mukesh Vasani and me are taking care of that part. And we have one more company, Amitron International Controls in US. We recently acquired that company where Nirmal Vasani is completely heading that facility as of now. So Nirmal, as of now, to what he has been stating, the open order book there is somewhere around 10 million approximately. And over there, we have a strong tailwind of RFQ, 50 to 60 million kind of an RFQ as of now. And in US, basically, we have turnaround of 35 to 40% approximately. And same goes with India, where we have opportunity of RFQ pipeline of somewhere around 900 crores.
Okay, so Sneh, right now your domestic contribution is approximately 74%. Considering this acquisition in place, how will that number change in terms of ratio of domestic is to exports, to international revenue, let's say 1 or 2 years down the line?
Even if you see Indian contribution, but if you see, they are more of an international clientele. So just an example, again, that 12 million order. So companies basically based out of US, but they are looking out for execution in India. It's China plus one story, where as of now, they're getting things done out of other parts of the world, where they are now saying on how can they go domestically within the India under Make in India mission. So that is where we are supporting them. And so contribution for export definitely is going to be around 30-40%, which is going to increase down the line from here. And probably we are just trying to see on how can we come to 50-50 kind of an activity between domestic and export play.
Okay. How about your capacity utilizations right now? Where do they sit at, both considering the new plan that you talked about? And overall, what is the aim to grow that capacity utilization in the next 1 year?
So if you see, as of now in India, we have two setup. One is in Vadodara, Gujarat. Another one is in Bangalore, Karnataka. So there we are in India, we have 5 SMT lines. So as of now, we are somewhere around approximately 70% utilization. And this year we'll be running full capacity. That is approximately 90 to 95%. And that is where we came up with Greenfield project from now itself. So as of now, we are coming up with Mtron Mechatronics. There we are planning 4 to 5 SMT lines, and we are even looking for forward integration with injection molding, sheet metal, and basic of stamping, CNC machining, and all that in-house. So that will help us to generate revenue of 1,000 crore. And in US, to what we have, it's as of now around 54% kind of a utilization, where within next 3 years, we are eyeing to take that capacity utilization to 90%.
Okay, so given the fact that you're already expecting your utilizations to increase, plus the new plan comes in, that will also be ramped up very soon. So say over the next 3 years, what is the total capital expenditure that you will be required, and will the entire capex be funded through internal accruals?
So we recently had a fundraise of 97 crore. So that 97 crore will help us to go with the Greenfield project phase 1 and phase 2. So that will be done. That will help us to generate somewhere around 400 to 500 crore kind of an activity. And US, we had debt. We recently took some debt of 25 crore approximately. But as of now, if you see the current capacity to what we have, it can help us to, because 9 SMT lines, 4 in US, 5 in India, and 1 SMT line, 3 shift typically approximately help us to generate 100 crore kind of a revenue. So as of now, we don't think any major capex is required up to 1,000 crore. Anything after that, definitely we are eyeing on something more apart from 1,000 crore as well.
Okay, one last question, Sneh, from my end is margins. You did 22%, FY26 closing. Just want to understand as to how it will fare going forward in FY27. Do you think these levels are sustainable, or you can do better?
Certainly, see, that is how our business model has been. And that is how the thought process of Mukesh and Nirmal has been from day one, who are our founder team, Basani family. So if you see that has been what we have been focusing on is more of an niche market technology, niche market upcoming trending technology, something that we eye on. So if you see that's almost, almost $500 million kind of an activity is going around globally, where we are just eyeing on 1,000 crore kind of an activity. So I definitely feel, or we definitely feel, this margins are going to be sustainable, and we want to create a benchmark, being in SME, being in EMS sector, or as an ESDM player, that this margins is something that are sustainable, and we can go even beyond that as well. So PAT, we are trying to maintain around 15%, and EBITDA about 20%.
Okay, all right. Thank you so much, Sneh, for helping us answer all those questions so candidly, and thank you so much for taking out the time. So that was, of course, the management of Mtron Electronics. But let's also welcome in our guest for the day, Narendra Solanki, Head Fundamental Research at Research Investment Services at Anand Rathi, joining us now. Narendra, a very good afternoon to you. You heard the management, your view on this particular counter?
Good afternoon, Naima. First of all, let me start with disclaimer. We do not have any active recommendation and coverage on this stock. However, whatever we have seen the management talk about this stock, I think firstly, we like the space. We like EMS as a sector and as a segment, which is emerging, growing very fast across the countries. And there are mainly two reasons to it. One is the concentrated focus of our government in order to improve and increase contribution from manufacturing of electronic components within the country. And the second is the global diversification of supply chains away from China into different countries, including India. So both these two factors are very strong driving factors for the sector as a whole. Now, coming to the company, I think the scale at which the company is operating, being in SME space, is small at the moment, and because the EMS space is very huge and the growth is also the sector is also growing to grow at a very fast speed. So being at a lower base, I think the growth rate may continue to be at a high rate for next 3 to 5 years. Now it is up to the capability of the overall management team in order to achieve that. So far, the company has shown decent numbers, and I think if it continues to show this kind of growth and margins, so there's ample room for the company to grow for next 3 to 5 years down the line. Uh, it's just being in an SME, I think the risk profile would continue to remain on a higher side. So accordingly, client can assess and think for investments as per their needs.
Moving on to our next management on the show, Vijay Sangvi, the Managing Director of Ratnavir Precision Engineering. Sir, firstly to start off with the 330 crore fundraise that you have approved, how are you going to use these funds and by when do you expect this to complete?
Yes, thank you so much for this opportunity, and I would be address that company board has been approved for 330 crores of the new fundraise. This fundraise, we have been recently receiving the approval of the project of copper clad laminates. This could be 5 lines to be installed, and the company will be get the approval in last March. And we have been having over the 2 years. We have been spending the greenfield project for the working capital of this copper clad laminates as well as for the greenfield projects. And the first line already been into the process, and the civil work will be into the full swing, and the orders of the machine already been placed. Inspection of the machines already been done, and the last week our team would be visited the China for the machines inspections, and all would be in place. And we have targeted to this line to be in place, erectioning, commissioning, and starting of the line by November 26th. So this would be the fundraise can be used for the greenfield projects as well as to the working capital of this electronic division. It could be a new line. Copper clad laminate would be 100% import substitutes, and we are the first mover into this line in a country. It could be a proud moment for a company, management, as well as to the nation, that we could be might be a first player for the starting of this project, and it could be a game changeover for the company itself. It's having a huge mileage over the product, where the electricians are been moving, where the next 20 years of the data center as well as the semicon chips and the PCBs industries, where we have been serving as a first player in a country. First mover advantage and the opportunities we are looking the fantastic, and the company can be moving into the new change of the direction, this copper clad laminates line.
Got it. Just want to understand on that, Mr. Sangvi, that you have received an approval under the ECMS for copper clad laminates project. How big is this for you? What is the kind of revenue potential that this will bring to your table?
So once upon a time, we can be complete the over the 2 years for the 330 crore of the capex. The revenue we have been expected by the 800 crore as a top line, with the EBITDA of 22%, with the PAT of 15%. So this could be without any kind of the subsidy advantages which are already been approved. So this would be a fantastic plan to the company for achieving the bottom line and the top line to the reach to the company. And in next couple of years and the 3 years of the line, company can achieve the 2,500 crores of the top line with the EBITDA margin, consolidatedly EBITDA margin of 13% with the PAT margin of 9%. So this was the fantastic move by the company, and the approvals have been receiving, and we have a technology partner also been tied up, and the placement of the machines can be done, and expected production will be started by November.
Also, if you could just give us some understanding on what is the current order book of Ratnavir Precision, and say for the next 2 years, what is the kind of growth that you're penciling in?
Okay, thank you so much, and I definitely highlighting that the company having a very strong order book right now into the hand for the couple of quarters in hand, and the last couple of years, the company has been reported the profit of the growth of the 40% plus CAGR growth. So this would be continuously maintained in next couple of years after the consolidation of this both the capex for the current year of the stainless steel business as well as to the copper clad laminates. Company will be reaching to the 2,500 crore as a top line with EBITDA of 13% with the PAT of 9% plus. So this would be a big changing move into the company, and the company would be into the looking forward for the fundraising of 330 crores, which can be boost up the company's top line, bottom line, and EBITDA as well.
Right, okay, so Mrs. Sanghvi, in terms of your overall guidance for FY26, that was around 1100 odd crores. I think to achieve that Q4, you have to do around 280 odd crores. But considering that has been the run rate in the last quarters, I believe that would be achievable in FY26. But from an FY27 point of view, what is the growth targets that you've penciled in internally?
Yes, we have already been completed and executed very successfully in a stainless business, the capital expenditure for the greenfield projects that can be already in line. And this year we have been utilizing the capacity of more than 80% plus, which we have been comments last 50% capacity utilization in the last year as a first year. So this year also we have been targeting to achieve the 30% of CAGR growth into the PAT top line as well as into the bottom line as what we have been doing last 12 quarters consecutively. So this last year capex was been successfully done. It would be in place. So this can be help us to growing for 26, 27 as well. And equally, there is a greenfield project of the first line of CCL is also been in line by November. That also can be coming up. So in 27, 28, our targeted top line would be maintained.
And lastly, sir, just wanted to understand, given the fact your credit rating was just upgraded recently, by how much would your borrowing cost come down?
Yeah, so that would be good news for the company and the investor as well. That company's credit rating would be upgraded from BBB to A minus stable. That can be help us to increase that can be help us to credit rating, and the company's credit score can be improved. It can be save a cost of the finance cost of the total cost can be improved, and almost we have been targeting that 0.3% of total finance cost can be go down, total cost can be go down, and the finance cost can be improved significantly. So this could be a step ahead. This could be increase the confidence of the investors, confidence of the finance controlling team, and improving to the A minus stable would be a good score in a credit scale.
Thank you, sir. Thank you for joining us and giving us the way forward for Ratnavir Precision. Let's get in our fundamental guest, Narendra Solanki. Narendra, any view on this counter? The fundraise seems to be quite positive for the counter. The stock is up nearly 7% in trade.
Definitely. And even the space in which the company is going to invest, which is CCL. So it is a very basic starting material for any electronic manufacturing company. So the PCB, all the PCBs are based on this product. So the demand is going to be huge. So now only thing remains is how the company is able to execute and how the volatile copper prices blend into the cost of materials, and how the company manages the overall execution of the projects remains to be seen. Otherwise, I think the investment going ahead is in a good sector which is rising, and I think the overall CCL market is poised to be multiple times in 3 to 5 years here in India.
That's the view coming in on Ratnavir Precisions. But time to look at the F&O space, and we have Sharad joining by to give us to help us understand, in fact, as to what the cues are looking like. Sharad, over to you.
Thanks a lot for that, Mahima. And this is, of course, the first day of the May series as well. A good buying and a new positioning coming, and that's what you're seeing, a sea of green all across. There was, of course, an exclusive story by us. At ITC is up almost 4%, followed by Tech Mahindra, Maruti, Bharti Airtel as well. And largely the earnings have been in line or good, and nothing much to be concerned about. Of course, Interglobe Aviation, that's down 2%, but the market sentiment is still on the positive and it is sustaining. Let's look at the long build-up stocks, which stock should be in your focus. And Bandhan Bank and Godfrey Phillips, both of them doing well. Bandhan Bank up almost 14% after a strong quarterly earnings and management commentary. For short build-up, there is REC and PFC, both of these counters are seeing selling pressure. And if you look at the short covering candidates, we have ITC, which I had spoken earlier about, and Maruti Suzuki on back of broking upgrades as well. And apart from that, of course, the long unwinding, also certain stocks are there, but not major trade positions coming from it. But net, the entire F&O space, we are seeing good buying happening, especially on the long build-ups.
Thank you, Sharath, for that roundup. Now let's get in Jasmeet to understand what led to such a strong quarter for Greenply Industries. Revenue, EBITDA, net profit, highest ever in the last 3 years.
Well, thank you for that. As rightly said, company has reported the strongest Q4 in the last 3 years. Now, if you look at the overall, what the company does is company is into interior infrastructure company where they manufacture plywoods and also does trading of plywoods and MDF material. Now, in terms of stock performance, the stock is nearly up over 60% in last 1 month, but over a year, it's still down 4%, getting the recovery altogether. If you look at the Q4 results, the overall revenue was beat in terms of the estimate, and what worked well for the company is the overall volume expansion. The plywood business saw an uptick of 15% while the overall MDF volume surged 45%. This is because Q4 marks the first quarter for the company with expanded MDF capacity, and increase in MDF capacity would lead to overall volume increase, which has led to the overall growth in the top line as well as the realization also has increased for the management. If we look at the other key aspect, the overall manufacturing-led growth is somewhat supporting the margins as well. The revenue is up about 19%, while the EBITDA is up 37%. The margins also have expanded by nearly 150 basis points, while the net profit has nearly doubled. It's about 86%. If we look at the outlook of the management, it remains strong with a guide for a double-digit growth going ahead. They also guide that overall MDF will have a 16% of margin band and over that in the coming year. Given the companies into trading as well as into the manufacturing, in this quarter, we have noticed that manufacturing has increased considerably from 55% in the previous to 65% in the current year, which is leading to the overall margin expansion and the overall growth in the revenue as well.
Right. Narendra, any view on Greenply Industries? Would you recommend this stock to your clients post this 12% surge in share prices?
Yeah, Soumit, we have a buy recommendation on the stock, and if you see the results in this quarter, it was very good, and it was expected because last quarter there was a miss on the margins because of some production-related issues. Plus, in this quarter, we have seen the growth coming back and the margins also coming back. And now for next 2 to 3 years, we expect the MDF volume to significantly continue to grow at the higher rates in upwards of about clock CAGR of about 40-41%. So I think next 2 to 3 years, company is going to continue to post a strong growth, and I think we have a buy rating on the stock at the moment.
All right, okay. The stock trading around 12% higher as we speak. With that, Narendra, thank you so much for taking out the time and helping us, understand all those small cap buzzers that we discussed on the show today. But with that, viewers, completely out of time on this edition of Small Cap Buzzers. Do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headline
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani and with me is Puneet Zaveri, and I think markets are in a good mood today. Just the first day, of course, for the May series for the FNO, of course. Probably that is the action that we're seeing, but overall Nifty is seeing an uptick of almost 1% as we speak, well above the 24,200 levels. The Bank Nifty also holding up equally, up about 0.9 odd percent, touching that 55,900 levels did touch the 55,900 levels and has come back to that 55,800 levels. But in terms of the overall picture, of course, the trend so far is looking very strong. Let's try to pull up the Nifty 50 heat map to see as to what are the counters that are pushing towards that gain of a percent. You have counters like ITC, which is up 3.7%. NDTV, of course, it did break that. Sources are saying that there's another price hike round for them, or about 17 odd percent, and that's probably the reason as to why it's buzzing. There's Techem, which is now seeing some gains coming in, up 3.7%. Maruti Suzuki on the back of numbers. Coal India also second day of gains coming in for this one. But on the flip side, you have Dr. Reddy's, which is now gone back to that red territory, seeing profit booking probably today. Interglobe Aviation down 1.9%, followed by NTPC also down by about 0.8 odd percent. Let's quickly put up the sectoral heat map and see as to what sectors are doing at this hour of trade. You have your realty topping that chart, up 2.3%. FMCG is also doing very well, up 1.8%, followed by Nifty Auto. The only one in the red right now is Nifty Media, which is down by about 0.3 odd percent. Let's quickly pull up the advanced decline ratio, and that will give us a perspective as to how the broader end of spectrum is looking like. Not as good as what the benchmarks are doing, but still, you have around 1,400 odd advances versus that of 1,100 odd declines. But unfortunately, the gap, Puneet, is narrowing.
Well, most certainly, we've gone from a 2-to-1 kind of favor in terms of advances now to a tad below that, and you can see that last hour of the trading session has been one of the key factors of converging both those. So it becomes important how we end today. Largely a day of broader markets as well. So the mid cap and the small cap also is the other key aspect. Now starting to see what's visible in the advanced decline ratio, that you've seen some selling and deceleration for the mid cap 150 as well. The small cap too is the other key factor where you've seen selling also from the day's high, but still continuing to maintain some bullish momentum there, but it's been a day of individual movers and outperformers in terms of quarterly results. And Bandhan Bank, Sapphire Foods also yesterday, and it is taking along with itself Devyani International, are some of the three stocks which are doing well. Pull up a CEAT, that also is one of the key factors that are doing well in trade today. Garden Reach, Shipbuilders are some of the other counters. CEAT has seen some selling from the highs, so has Star Health today as well. Let's pull that up, and so has Garden Reach. So over the last hour of the trading session, once those were rewarded in the morning, are seeing some selling gains as well. But let me welcome in our guest for today and start taking all your stock related queries now. I'm being joined by Kunal Shah. He is the senior technical and derivative analyst at Mirae Asset Share Khan, and Nirav Asher, head equity research at Latin Manhala Securities. Gentlemen, both of you, thanks so much for joining in. Let me go across, take the first query now on Finolex Cables, and Jaya from Bangalore wants to know if she can enter this counter right now for the long term. Nirav, a very good afternoon to you. One of the cheaper players in the cables and wire space, is it a preferred pick, or is it a good time to enter the stock now?
Good afternoon, and thank you for the invite. Well, definitely the power generation and the power T&D space, both of them are in a very sweet spot at this point of time. And we've seen very good performances coming in from cable manufacturers. Cables have been doing very well, especially those which are catering to the extra high voltage space. So I think definitely does make a case for a long-term investment bet as far as Finolex Cables is concerned.
Okay, the next one that we have is coming in on Anant Raj. This is from our regular viewer, Ekambar. I was writing us from Hyderabad. He's got 25 shares of Anant Raj, bought at the levels of 540. Wants to know if he can go ahead and sell this one and invest into something like an NCC. So he's already sitting on a loss. Kunal, very good afternoon to you. Would you recommend that trade?
I think not right now currently. I think what we have seen in Anantaraj, there has been a lot of volatility. 460, 465 has been the demand zone for the stock. We have been reversing from those levels on the technical. That is important for the stock as well. So if it breaks 465, then probably one can see some selling pressure coming in Anantaraj. Overall, I feel there will be a consolidation here in Anantaraj. So I'm not expecting some big outperformance to come in, but probably I will tell him to divert it. If he wants to shift, then probably he can start accumulating at these levels, Bharti Airtel, and I think there could be a good upside in this month, where I can expect at least levels of 1950, 2000 on the upside.
Well, got that view, Kunal, but let's go across, take our caller for today. Vijay Vada is where the call is coming from, and Aruna has a stock query for us. Aruna, very good afternoon to you. What's your query?
Yeah, hi sir, good afternoon.
Good afternoon, Aruna, go ahead.
I'm having Apollo Tyres, sir. I'm having 500 quantity at 420 average. What is the long-term and short-term view on this?
Got it, Aruna. And did you buy this very recently in terms of stock price? And because it's very close to the price where you bought it, so is this a recent purchase?
Yeah, yes, sir. Yes, sir.
Got it. Well, Nirav, we've seen some commodity impact, but CEAT earnings actually were very, very positive, and the stock was reacting today. Are you as positive on Apollo as well for Aruna?
Well, I think tire companies have been doing generally quite well on the back of strong replacement demand, OEM demand, as well as export demand. But the raw material sensitivity is likely to play out in the first quarter, because till now, whatever stock is being used is the stock which is already there as a part of consumption. The inflated value stock will now come into play as far as Q1 is concerned. So we could see some raw material sensitivity which can impact the margins in Q1. So it's better to be a little bit cautious before entering into raw material sensitive sectors at this point of time.
Okay, all right, so that's the view coming in on Apollo Tyres. The next one that we have is from Thomas B. George, who's writing us from Cochin. Is mentioned a lot of names here, but mostly from the defense pack. Wants to know, so I'll not take the name of all the stocks that he's mentioned, but basically from the defense pack, Nirav, from a long-term perspective, which one would you bet on right now?
Well, there are a whole host of stocks, but I think what stands high in the list of priority is Bharat Electronics Limited, Bharat Forge. We could also be looking at solar industries, data patterns. I think these are a few stocks which are looking quite good. And apart from that, of course, the shipping companies which have been doing quite well, Garden Reach Shipbuilders, Cochin Shipyard.
Got it. Thanks so much for that list, Nirav. But let's go across to the next question. Tamil Nadu Mercantile Bank came out with its earnings this week and has been a positive response to it. Now, Ramesh is asking this question and he has a 6-month view on the stock. He's bought it at around, he's asking if it's a good buy at 743. Stocks moved up from those levels. But Kunal, would you recommend that?
Can you just help me out with the code for the bank?
Yes, I can. 1 second. I'll just check it. TMB, Kunal.
Okay, thank you. Okay, so again, so it has been a one-way move for the stock. There is a clear breakout what we have seen on the technical charts, and probably this move could extend higher. So I'll suggest him to continue to hold the stock. Probably we have the stock going towards the mark of 770 on the upside.
Okay, all right. So that's the view coming in on Tamil Nadu Mercantile Bank. The next one that we have is on Oracle Financial Services. Our viewer wants to take a fresh entry in this one from a slightly long-term perspective. Would you recommend that, Kunal?
See, I think, yeah, over Oracle Finance, what we have seen already a sharp rally that has come kick in for the stock. So no fresh entry at the current levels. 9,800 has been the resistance for the stock. So it's 150 points from the current market price. And the rally has been very steep. So I think probably utilize declines to buy the stock, not at the current levels. Now, again, the support for the stock on the lower end is around 8,745, 8,800 zone. So I think probably a dip towards those levels would be a good opportunity to buy the stock.
Got that view, and you have earnings from Federal Bank flashing on the bottom of your screen. It's a key one that we continue to monitor. Profits up 22%. And as we look at some more details that come in, at least on that metric, it's stocks seem to start to react a little bit at this point of time. But of course, a lot more on provisions and NIM is something to watch. Gross NP also has come into favor at 1.62%. But and the net NP also improved materially at this point of time at 0.2% on a quarter-on-quarter basis. But crucial earning for banks, as we've seen, the pressure on the index yesterday and day before on the back of the ECL norms. You've seen certain hits and misses in terms of reactions on the banking names as well. ICICI was definitely a hit. Axis was a miss in that sense, and you had a positive reaction on IndusInd too. But continue to monitor as we flash more numbers, and we'll keep coming back to it. Let's stick with the financial space though, and that's the provision number, as Mahima was pointing out. It's inched up materially on a quarter-on-quarter basis. So I think at this point in time, despite what's interesting is despite that almost a double increase in provisions on a quarter-on-quarter basis, you've seen a PAT increase by 22%. So the NII growth would be very strong for the company. So would be the other income, and we'll continue to monitor all those numbers. But decent numbers, at least on the face of it, from Federal Bank, and coming back to it as well. But next question also coming in on the financial space, and Gautam from USA is writing into us asking about ICICI AMC and if it's one of the recommended ones in the AMC space to buy. Now, Nirav, we've seen almost a 50% move from the IPO price. Is it still one of the picks according to you? We've seen Canara Bank actually disappoint. So did UTI, but ABSL was good. What's a good pick according to you?
Well, I think one can accumulate ICICI AMC from a long-term perspective.
Okay, all right.
But it is advisable to accumulate on dips.
Okay, all right. So that's the view coming in on ICICI Pro AMC. We've got Mohan calling us from Mysuru. Mohan, very good afternoon to you. What's your query about?
I want to buy team lead services. Whether can I buy for long-term horizon?
Okay, Mohan, got your question. Nirav, any view on this one?
This provides staffing services, and basically the fortunes of the services industry. So if there's a pickup in the services industry, especially the IT sector and the banking side, then we can see an improvement in the prospects going forward. So I think this can be accumulated, but in a staggered way.
Got that view, Neerav. But let's go across, take another call now from Hyderabad. Ravi has a stock query for us. Ravi, very good afternoon to you. What's your question?
Yeah, very good afternoon. My query is on Vedanta. Since it's going for demerger and today is the last day for eligibility. How just want to know post demerger what will the share price of Vedanta and other entities, and also is it a good time to enter into this stock? And my time horizon is next 1 year.
Got it. Well, Ravi, of course, there will be a value discovery process, and the division of the shares is already mentioned because it's 1:1. So based on that, I think the company will be decided. But your second question, quite pertinent. Neerav, coming back to you, do you feel that Vedanta is a good prospect to look at before the demerger right now?
Well, definitely yes, because of course post demerger you will have a lot of value unlocking which is likely to take place. And as we've already spoken earlier also, that there's going to be a lot of focus on capital allocation. What kind of capital allocation is required for each of the respective businesses? Their fortunes are going to be different, their prospects are going to be different. So it's going to be an exciting play going forward once the demerger takes place.
Okay, all right. The next one that we have is coming on Cohen's Life Sciences. Our viewer says that it's up almost 30%. What is the right levels to make an entry? Kunal, your view?
I think yes, definitely we have witnessed a sharp move. Already the stock was beaten down. So here now the supports for the stock shift somewhere around the mark of 420, 430. So I think that would be a good level to accumulate the stock, and probably from those levels one can see the stock coming back towards 500 on the upside.
Okay, we've got Anjali calling us from Bengaluru. Anjali, a very good afternoon to you. Go ahead, ask your question.
Yeah, very good afternoon to you, ma'am, and all of you. Yeah, ma'am. Actually, I'm having one stock that is
HBL Engineering.
HBL Engineering. Yes, ma'am. So it's a long back I bought it at around 970 average of 400 shares. So I just wanted to know what is shall I average or shall I hold?
Okay, Anjali, got your question. Kunal, your view on the charts for this one? It's trading at 818 right now. Her buying price is 970. Do you think it makes sense to average right now?
I think 740, 750 has been a good demand zone for the stock, and we have been able to protect that and reverse from those levels in the recent move what we have got. So I will not recommend to average at the current levels. Continue to hold what you are holding at the current levels. Probably you will get an exit point in this move. On the lower end, if 740, 750 zone is breached on the downside, then probably one can expect a further correction into the stock that could take down the stock again back to the swing lows of at least 450, 500 on the downside. So I think 740, 750 is a good level to watch out for. If that is breached, then exit your longs.
The next question, and got your view, Kunal, is on Muthoot Microfinance, and a viewer, Ajit, has actually bought into this counter at, let's pull up the counter actually, at 258 he's bought at. So he's currently sitting on a loss holding 400 shares. Should he continue to hold here, Kunal, or average down? What's the chart view?
Here, the 200 has been a very strong hurdle for the stock. Whenever we have been trying to surpass that, there has been selling pressure. So since we are trading around 191 on the current market price, if 200 breaks, then probably there could be a move that could take the stock towards 220 on the upside. My suggestion would be to keep a stop loss of 182 on the downside on a closing basis. If that is triggered, then exit your long positions in Muthoot Finance.
KFin Tech is the next counter that our viewer wants to know about. Can I purchase this counter at the present price from a 1 year time horizon is what he's asking. Kunal, would you recommend that trade?
See, no, definitely not. We have seen the Nifty capital market has been making new highs, and there are certain stock within this space which have been trading in a downtrend and have not been able to surpass the previous swing high. And KFin Tech is one stock which is there in my radar. Today is the result, so probably there would be some volatility there into the stock. I would not recommend to buy at the current levels for the stock. On the higher end, if the stock surpasses 1040, 1050 on the upside, then a buy could be triggered. But from the current levels, definitely not an entry point.
Got that, Kunal. But Kunal, Neerav, as well as our viewers, it's now time for the rapid fire round in this edition of Fast Profit. Request you both to keep your answers on buy, sell, and hold, so we can take as many queries in the next 3 minutes. First question coming on Indian Bank. We've seen the result just flash before Federal, holding 200 shares at 952. V. Murli is asking Nirav, any view on the stock?
Hold.
Garden Reach bought at the levels of 2846. Continue to hold, Kunal?
Yeah, definitely continue to hold. Probably we can see new highs towards 3,500 on the upside.
Good set of numbers for Garden Reach today as well, and so for CEAT. Now, Kunal from Chennai is actually holding shares at 3787, asking what he should do now. Kunal, what would you recommend?
I would think exit at the current levels for CEAT, probably book some profit, and you will get low levels.
Good time to invest into BHEL, Nirav, from a long-term perspective?
Yes.
Praj Industries bought at 528, 200 shares by a viewer. Kunal, should he continue to hold? Has been a volatile counter in the last year.
Yes, definitely continue to hold, can see further upside.
Balu Forge holding 100 shares at the levels of 450. 6 months view on this stock, Kunal?
So I think again the 6 month view is positive. Looks like the stock is likely to go towards the mark of 600 on the upside.
On HDFC AMC, we took an AMC view on Funda, but on HDFC AMC, Kunal, do you have a view for a slightly more longer term based on charts?
So I think, yeah, definitely we can see some more upside into the stock. 2880 is what I'm eyeing in the very short term.
The next one is from Parth Shah. Lumax Industries and FIAM Industries is where his positions are. Continue to hold, Nirav?
Yes, hold.
Partha from Chennai is asking why does PFC trade at such low valuations? What's your view here, Nirav?
Well, I think asset quality issues is something which continue to haunt the stock. So I think that is something which one needs to be wary of.
And should he hold if so?
No, I think we should exit.
Okay.
SJVN from a short-term perspective, is this a good time to enter? Shankar from Bengaluru wants to know. Kunal?
So I think again power stocks have witnessed good rally. Continue to hold. If you are holding it, keep a strict stop loss of 77 on the down.
Okay.
Aptus bought at 274 by a viewer MM Kapoor. What should he do now with this, Kunal?
I think continue to hold. We can see the move getting extended towards 285 on the upside.
Tata Steel bought at the levels of 191. 4,000 shares is what Nageswara Rao is holding. From a long-term perspective, continue to hold. Book profits, Nirav?
Add.
Vari Energy is bought at 3470 by Dipti. Should she continue to hold here, Nirav?
Yes, hold.
Skipper Limited, new entry in this counter or continue to hold what our viewer is holding? Kunal, your view?
Again, continue to hold.
The next question is on Bank of Baroda. Our viewers holding shares very close to the current market price. Nirav, should he continue to hold?
Hold, yes.
Okay, the next one is on HDFC AMC. From a 1 to 2 year point of view, is this a good time to make an entry, Nirav?
Yes.
Rajo Engineers, I know Kunal, a very small counter, but our viewer Saurabh has bought into it at 65. Should he continue to hold the 600 shares?
No exit.
Eternal bought at the price of 300, I believe. Sitting on a loss right now. Can he continue to hold, Nirav?
Yes, hold.
Is L&T a good pick or wait for more time for the results to come in, Nirav?
Wait for the results.
IDBI
Not to enter at the moment, sorry.
Okay, got it. IDBI Bank bought around 77. Hold or sell before quarterly results, Kunal?
Hold with a stop loss of 72.
Geo Finance bought at 358 by Gautam. He's asking a short-term view here, Kunal.
Continue to hold, can go towards 270.
270, got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. But Kunal as well as Nirav, thanks so much for helping us solve 29 to 30 queries in this half an hour. And with that, that has helped us to cross 100 queries for today. So thanks so much to all you viewers who sent in your queries. But all the time in this edition of Ask Profit, thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो सुबह केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better.
Welcome, you're watching India Market Close, and it's been quite an afternoon. You're about 200 points up at 24,200, but it's been a fair bit of a cut on the Nifty, and the advanced decline ratio actually narrowing through. Pull up the intraday chart and you'll see what I mean, that this 1% and this 200 point uptick is definitely looking good, but in the last half hour or so, you've seen a bit of a slide coming in and a fair bit of profit booking, but we're holding up above the 24,200 mark. Alex, I think that is one big reason for relief, that you're holding up above 24,200. A lot of factors coming in, including the new series.
Absolutely, and quite a few of the frontline companies in focus, but I do want to talk about the broader markets as well. This slide that you're seeing for the benchmark Nifty 50 is also visible if you pull up the intraday chart for the mid-cap index, which has erased all of those gains.
Much sharper.
And you pull up the small cap index as well, and you will see that we're trading now with gains of just about 0.6%. We were over 1% higher at the start of trade today, and we more or less held that. And take a look at the advanced decline ratio that Tamanna was mentioning. You now have a meeting of those two worms. They've been inching closer together in that last half an hour, and they finally met.
Let's pull up the Nifty heat map for you and see where the pressures are, and the sectoral heat map will also help us see where the pain point is. We reported that ITC is going to increase its prices, and those channel checks have shown some price hikes have already been taken. 3.5–4% up on that NDTV Profit news break coming in. Tech M has made a smart move up. Maruti after his results. And remember, the first reaction to the results was negative, but once the street has heard from the management, the con call, the interview, completely. That one data point and amongst other things has seen Maruti boost up. Coal India is doing well. RIL is firing today, which is why you have enough and more to continue to celebrate on the Nifty. DRL, this is profit booking because they actually have pretty good news, right? They have the nod for their semaglutide product in Canada that's opened up the pathway for them. That's about
about 2% down. Indigo seeing profit booking. It had opened up very strong through the day. That's about 2% down. The Nifty contributors gives you that picture even more clearly, that you've had some profit booking coming in, but not a negative move. The ICICI Bank is making up half of the 36 points that is down on the Nifty today. But the sectoral heat map is also important to watch, Alex, from the point of view of where the pressure is coming in, and it's just a smattering of stocks really. Consumer durables, mid-cap select, and yes, there is a drop from highs, but FMCG is what's firing today.
It is, but my eyes are drawn to the Nifty Bank and the private banking index, right? Because just about flat for the private bank index or the PSU banking index, and the Nifty Bank just about 1/3% higher. There hasn't been too much of a participation for the banks, but you said it. FMCG is up and about 1.8%, realty is buzzing again, and auto as an index is doing particularly well. Just at the end, I want to very quickly pull up the individual names from the broader markets, and quite a few stocks that are reacting to numbers. You will likely see Bandhan Bank if you pull up the constituents for the Nifty 500, and we'll have a look at that if possible. You have Sapphire Foods, you have Bandhan Bank that's doing particularly well. Godfrey Phillips is doing significantly better than ITC from that perspective. RBL Bank also reacting sharply. Vedanta to the numbers
I
as
would
well.
say Devyani and Sapphire are also the eternal impact, because the kind of improvement they've seen in food delivery business as well is telling you people want to order and want to order a lot of junk maybe.
And PFC REC stands out on the other end in terms of the pair that is losing ground.
PFC REC losing ground. Cohan's Life in for profit booking, which is very understandable at this point. Just the Nifty intraday. Let's just see the Nifty intraday. The Bank Nifty intraday for a second. Nifty intraday is also fine, but I want to see the Bank Nifty intraday for a second, because if you're wondering where all of the pressure is coming in, it's here. It's the banking stocks which from its high have pared down a fair bit. And that's the real story, isn't it? Nifty is seeing selling pressure above 24,300, but has managed to find support at the 50 DMA. That's 24,170 to 24,200. That's the range. The small and mid caps are showing strong momentum for a second day. FMCG, auto, real estate are leading among sectoral indices. Supports now for the Nifty at 24,170 to 24,100. Resistance at 24,300 to 24,350. The Bank Nifty continues to show weakness compared to the benchmark and is struggling to get past the 56,200 mark. Supports at 55,400 to 54,300. Resistance at 55,800 and 56,000. So early gains really have come off completely. Kush Bora joining us this afternoon on the show, we'll get a quick word with you. Sudeep Bandupadhyay also with us on the show this afternoon. Kush, that knock that's coming off, that profit booking that's coming off, do you see that deepening?
Hi, first of all, very good afternoon. I know this is a short weekend, but markets still have one more day to go. I wonder what they're celebrating, right? This is a good run. This is a good run that the markets have had. I would say slightly unexpected, perhaps bordering on slight irrational exuberance. But it's good to see that there is some money being taken off the table, because you don't want to get overheated or run up too fast. So it's a good thing that the markets are cooling off just a tad bit. Now, on the whole, if you see the setup, yes, remains positive. In fact, after today's move, I would reiterate the view that I had this morning, which is it's still a hold on Nifty and not a buy, because now you're actually at the resistance of the 24,200, 24,300 zone. If you take this out, then perhaps a new rally towards 24,600 and about 25,000 begins. But for now, we have seen the market respect this level and retrace from here. So more of a hold rather than a buy. So yes, and what's also interesting is the fact that for the kind of moves that you're seeing on the Nifty, the mid-cap index is practically flat and the breadth is even Stevens. So like I said, just a little caution, perhaps some exhaustion on stocks as well. But yes, if you have a Nifty position, you could continue to hold. Support has shifted higher from 23,800 to 24,000 now, which is also being indicated by the put pace that has been formed today.
Your afternoon picks, and are you revising any of your morning calls?
Good question.
Alex's prompt, by the way.
Oh, is it? I think he tracks my calls more closely, I suppose, right? But no, he's quite right. I have two updates, in fact, three of them. Let's start with the picks first. Ingersoll Rand was the weekly pick we had, this Monday. The stock is doing well, gaining ground. The eventual target on this one is 4,600. But with the kind of up move, you could still buy or definitely hold for targets of 4,400 and 4,600. If you did buy at lower levels, you can shift your stop losses higher to about 4150 levels, 4100 levels. The risk reward ratio is still favorable. Pondi Oxides was a call yesterday, and the stock's gone on to hit the second target of about 1290, 1300. So yes, you can continue holding this or even initiate a fresh buy now with revised targets of 1340, 1370, and bump up the stop loss to 1280. Now the three updates I have are in the first stock that we discussed, or rather the stock that we discussed when you asked me for a conviction buy, and that is GMDC. Look at the kind of moves this one has yesterday, irrespective of what market was doing, and today along with the markets. So yes, this has a good move. It's a very clear hold. I think 780, 800 plus levels very much on the cards on this one. LG Equipments, RK Forgings, these are the two other updates just recently. In fact, LG was something that we discussed today also. So if you have these two positions, you can continue to hold. The reason I'm suggesting a hold in some of these names is because along with the price action, the volume action today, surprisingly in these names, is actually high. So indicating that there could be further upside momentum. So even if you want to book partially, but continue holding on to some of these names.
That you should keep an eye on. Sudeep, good afternoon to you, and let me start before we get to the stock of the day and individual counters with a mood check with you, because as I look at the screen and I look at the price of Brent crude, it's at $115 to the barrel, and despite that we're seeing the kind of gains that we have seen. There you go on the screen, $115 to the barrel. Sudeep, particularly in the broader markets, looking at the way April has panned out, there seems to be a little bit of fatigue that might be creeping in. So what would your strategy be at this juncture, even if you're trying to build out a long-term portfolio?
Well, Alex, I like one word which Kush just now used, irrational exuberance, bit of irrational exuberance. I think that's probably a mild way to describe what the market is doing today. The news from the West Asia and the oil front is terrible. It's remained above 100 for a considerable period of time now, and the way the negotiations and the dialogues are, I think the stalemate is going to continue in the foreseeable future, which ensures that oil continues to remain above 100 for a longer period than was originally expected. Now, this doesn't augur well for India. Look at what's happening in the currency. I think somewhere we are going to breach that 95 mark very soon. It's a matter of time before we breach that. And none of these, sits well with Indian capital market. So I think it's better to be a bit cautious. On the domestic front, we have an El Nino staring at us, which may lead to deficit monsoon rainfall. Again, that's not good news. So under the circumstances, I would say a bit of caution is what should be, cautious approach should be taken. Caution is advised to the investors. As far as building a portfolio and looking at a long term is concerned, Alex, yeah, of course. I mean, you can start nibbling in slowly, good quality stocks. I think nobody can catch the bottom or the top. So if you are planning to build a portfolio for long term, yes, there are opportunities to do so. Results are coming out every day, and you can look at what the companies are doing, which companies are performing well. So you can think of building a long-term portfolio, but short-term, there is tremendous volatility and uncertainty ahead of us.
Okay, let's talk about the stock of the day. It's Bandhan Bank that is getting that top slot, rallying sharply today after strong Q4 earnings backed by positive brokerage calls. Sharad joining in for more. Sharad, why is this stock of the day?
Well, interestingly, it is doing really well when it comes to the bottom line numbers, and it seems like there is a turnaround at play as well. But let's look at the key reasons why Bandhan Bank is buzzing in trade. The stock is up 14% in today's market session, and good volumes is also coming in. It has touched its 1-year high on an intraday basis, and also looking at the key levels, the bank has reported a strong set of quarterly numbers. But let's get into the details about it. The slippages and the SMA pool that has declined steadily. So net the operational numbers, that seems good. The asset quality has improved, and also there has been an improvement in the yields and the funding cost, and that is why we are seeing a good up move in the stock. Apart from this, the other income that has been supported by a strong fee income growth as well. These are the key reasons
for which we have seen a good move coming in, and of course the PAT growing on back of lower credit costs. So 2-3 operational parameters doing really well. The MFI and the unsecured loan challenges is still there, but it has normalized a bit from its EEB book. This is one of the categories which we track. The share on the secured lending, that has also improved to almost 56.2%. Of course, we had seen a little bit of correction in the stock, and the base itself was on the lower side. Because of that, the management commentary also seems like the turnaround is at play. We had a conversation also with the management earlier, and that is what we are seeing. The recovery is underway and the growth is also doing well. And of course, the target prices which have been set by the broking houses, they also seem to give a bullish look, and right now the stock is trading near that 200 mark.
Sudeep, and thanks so much for that, Sharad. Sudeep, specifically on Bandhan, asset quality improvement is there, but slippage is still over 10,000 crore rupees in the quarter gone by. Having said that, the return on assets improvement of 40 basis points to over 1%, several other metrics looking good, credit costs coming down. Do you think that the worst is over?
I do. I think, Bandhan Bank used to be predominantly an unsecured book with the predominance of microfinance loans. Microfinance went through a really, really tough and bad phase. Things are improving in the microfinance front, and I think pretty much every company having exposure to microfinance sector is coming out with numbers which are much better than what they had come out in the last 4, 5, 6 quarters. Bandhan Bank is also pretty similar. They have increased their secured book as well significantly. So the balance is coming in the book, a balance between secured and unsecured. Credit cost has come down. And of course, undoubtedly, the stock was really, really beaten down. So things are looking good at this stage, and definitely worth looking at these levels.
Let's just quickly listen into what the Bandhan Bank management has said when they spoke to us today.
So we are thinking at the market, how their industry, how are they behaving, considering the growth rate that is happening in the industry and our base. I would like to have at least 100 and 200 basis point more than what the industry is doing. That is my guidance regarding credit. Regarding deposits, we have always said that we don't normally set a target. We just say that whatever growth we are achieving in credit, we will do a little bit more in deposit rates. But as you see, the industry is behaving a little bit differently as of now. From November onwards, the incremental credit growth is more than the incremental deposit growth. So that since we are also a part of the industry, so we will also have to closely watch. But definitely the competition is intense in deposits, and we are coming with lot many products, with lot many initiatives. I would like to maintain the ratio of 15% credit growth and a little bit marginal higher growth in respect of deposits.
Okay, let's come to the big question on everyone's minds, and a lot of people have been asking me since morning that crude is at above 115. Results are fine. Okay, there is a new series in FNO, but what really is market indicating? And here's what we put together. Here's my take. Is the market giving early indicators of poll outcomes? Remember, something very important is happening today. There's polling in West Bengal for the second phase. We will have exit polls after 6:30 p.m. this evening. Don't forget to tune into the NDTV network for all of those latest numbers, and results will be coming out on the 4th of May. But markets usually price in factors earlier, because we've seen this happening, right? Markets have been zooming in mid-morning trade, and if you pull up the intraday of the Nifty, it will show you the kind of uptick that's coming in. So as we speak right now, second phase of polling in West Bengal is still underway. The voter turnout has been pretty robust. In fact, in phase 1, there was a record voter turnout at 93.19%. Till 1 p.m. it's 61%. Just for reference, in phase 1, last election 5 years ago, the voter turnout was 89%. So the voter turnout has jumped up. Now, traditionally, though there could always be exceptions, a large voter turnout indicates that people are coming out to vote for change. It could or could not be one factor. So what is market factoring in? any kind of increase in seats for the ruling party is possibly being seen as a positive. And this fight is clearly between the TMC and the BJP. Most early polls, this is before the actual votes, have been talking about maybe a head-to-head photo finish, and we'll have to wait and see what happens. We're not here in the business of predicting election results, but what is the market telling you? That's what we're talking about. A higher seat share in state assemblies, if that happens for the BJP, would give a boost to their Rajya Sabha numbers, because the way the Rajya Sabha seats work is that you get proportionate representation in the Rajya Sabha depending on how many seats you have in various assemblies. So West Bengal, for example, has 16 seats in the Rajya Sabha. Currently TMC has 13 because they have the most seats in the West Bengal Assembly, and the BJP has 3. And like I explained, Rajya Sabha representation is proportional to your strength in the state assembly. In NDA's current strength in the Rajya Sabha is 148 seats out of 245. This has gone to 148, including the 7 Aam Aadmi Party Rajya Sabha members who joined the BJP just a few days ago. That's taken the number up to 148. To get a 2/3 majority in the Rajya Sabha, the NDA needs 163 members. They are at a 13-14 seat gap right now. So you do the math. Why do you want a 2/3 majority in any house and in the Rajya Sabha? Because if you want to pass constitutional amendments, you need a 2/3 majority. So this could be the back of the mind math which is going on. And maybe it's not even this complicated. It's a sentimental booster, right? If the ruling party in the center wins a large state which has a huge say and a lot of potential unlocking, it also tells you that people or voters in this country are still finding a particular party in favor or not. So which means the opposite of this also could happen if the results turn out in that manner. More than anything else, it eases the pressure of the government to have more populist measures if it does win a large state. What are some of the companies that are based in West Bengal that you should keep an eye on? And we'll pull up some of those counters today. Bandhan Bank, by the way, is one of them, but there's Shree Cement, for example, there's Berger, there's Bandhan Bank that we spoke about, CESC, Imami. We should look at some of these companies' stocks as well and see how they're doing. RK Forging, Titagarh Rail, Birla Corp, a lot of West Bengal based companies which could be in focus over the next few days. So watch out for that. I'm going to go across to Saurabh, my colleague from NDTV, Saurabh Gupta is in Kolkata right now getting us a ground report of what's happening. Saurabh, we're hearing about these large voter turnouts. What are you picking up on ground?
Well, definitely large voter turnout, and there are 3 reasons for that. One is because of the SIR. A lot of these, voters who didn't exist, or voters who had moved, or voters who've died have been removed from the list. Then there have been deletions for logical discrepancies, which is a significant amount of deletions, which brings down the baseline, as a result of which the voter turnout percentage increases. And after that, what we've also seen is a massive mobilization by political parties as well, because this is such a hard-fought election. So you see more people coming in. And I'm actually in one of the districts that is also seeing a little bit of, tussle today. A lot of headline-grabbing stories coming from this district. So obviously, this is an election that has been built on the premise or built on the campaign and the, narrative of jobs, industry, bringing businesses back to Kolkata. Kolkata, as you know, at one point was, not only the financial capital, but, also, the industrial capital of the country. And that title has shifted to Mumbai. So there's a lot of campaign around those issues and bringing businesses back. And that's been the center point of the BJP's campaign, to bring jobs back, etc. So yes, that's one of the key issues in this election.
Absolutely, Saurabh. Thank you for that. It looks very hot out there. Stay hydrated, stay safe. And we'll keep getting you those ground reports. Nilanjan Mukhopadhyay, a senior journalist, also joining in just to give us perspective of what could turn out to be an important story that the market watches over the next couple of days. In any case, markets love watching elections one way or the other. There's always an interest in what's happening. Nilanjan, how pivotal is this election?
Well, it is very important because West Bengal has been kind of the last fortress, which Mr. Modi has been wanting to, go and actually politically capture. For Mamata Banerjee also, it's very important to win this election because this is coming at a fairly, at the end of a fairly long tenure in politics. She's been in politics from 1984 parliamentary politics when she defeated very stunningly the left CPIM stalwart Somnath Chatterjee, who was at a later point the Lok Sabha Speaker. So it's a high-stake election for both the two leading protagonists, Narendra Modi, the Prime Minister, and Mamata Banerjee, West Bengal's Chief Minister. It's also been an election which has been fought by both parties on very similar issues, identity. But then the definition of identity has been different for Trinamool Congress or Mamata Banerjee and for the BJP or Mr. Modi. The BJP has repeatedly been saying that this is essentially about Hindu consolidation. Suvendu Adhikari, the BJP candidate who is challenging Mamata Banerjee from Bhawanipur, her assembly constituency, has been openly saying since morning that all Hindus are voting for the BJP, which clearly means that the BJP is not looking for non-Hindu votes. Now, in contrast, Mamata Banerjee has been playing up the inclusive Bengali identity, which does not talk about religious identity, but only talks about the subnational Bengali identity.
Yes.
Likewise, the fear factor which we keep on talking about. One is that there has been electoral violence in Bengal right from 1977 onwards. So even during Mamata Banerjee's period, it has continued. So there is talk of some kind of a fear.
So that's important context to give, Nilanjan. From the standpoint of the markets and investors looking at this as well, though, is when it comes to these state elections, often in the past, and we've seen in recent times as well, there is a situation of promising the moon. And there is a question mark about dole and there's a question mark about freebies. So is that something that could come into play once the dust settles on these elections?
Well, doles and giving grants has become endemic to Indian politics. It starts with the center and it has gone to virtually every state that we can think of. And I do not think in the near future this is going to end. So as far as largesse being given out, many people say that India is becoming a charity state, that large number of people would not be able to survive had it not been for the food which the center has distributed after COVID and for various other schemes which has handed out cash. We have seen several BJP state governments since 2024 actually handing out cash and greatly electorally benefiting. Bihar was the latest instance of it. So that is going to be endemic. I have heard this murmur about jobs, that if there is change in West Bengal, there will be jobs. I find that very paradoxical because have we not been hearing for a long time from the Prime Minister himself asking people to become job givers and not job seekers, which clearly is an admission that jobs are going to be more and more difficult to come by. So we have to look at more and more entrepreneurship models. I guess that is what we are going to be moving towards. Yet, yes, job is a lower middle class and middle class security which people will keep on chasing despite what the leaders keep on saying.
Well, fair enough. Nilanjan, thank you so much for joining in. And of course, we've spent an enormous time talking about West Bengal plus, but do remember Kerala, Assam, Tamil Nadu and Puducherry will also have results coming in, and you'll see those post-poll numbers coming in today.
That is at 6 p.m. At the moment, it's all done and dusted.
Yeah, that's true. For the rest of them, absolutely. In West Bengal, I suppose the game is still on. Thank you so much, Nilanjan, for joining in. All right, Kush Bora there with us, as is Sudeep. Sudeep, just want to get your take on whether this is more of, I would say, interest of the market, or is it an actual serious factor that we're looking at?
Well, honestly, Tamanna, I think it's the interest of the market. There are multiple factors which are steering the market, which I talked about: the global oil prices, currency, El Nino and monsoon deficit. I think they will have significant impact on the market one way or the other. The West Bengal election, yeah, it's a sentiment, it's a feel good factor, one way or the other. But beyond that, I don't think it does have a actual impact on the markets. Some Kolkata companies may be happy, may not be happy, but that doesn't move the needle. I think it's definitely a sentimental impact, nothing beyond that.
Okay, all right, and some of these companies are buzzing in trade today as well. Bandhan is in fact the stock of the day, but it's cooled off from the high point, it must be pointed out.
Bandhan is because of his good numbers.
Sure, I'm not stating otherwise. But what are the stocks that are buzzing and what is the chatter in the dealing rooms? There's quite a bit that is happening. We're at the start of a new series. There's earnings to talk about, there's election results to talk about. Somit Sarkar joining in to tell you what he's hearing from the dealing rooms. Good afternoon, Somit.
Good afternoon, Alex. A few stocks, yes, the market has been a bit volatile in the last 1 hour. We did see a downtick coming in, largely led by banks, but few stocks continue to remain in focus and continue to lead the uptrend. Firstly, it's Bharti Airtel. Now, there are buy flows on institutional desk is what dealers are indicating. Both foreign and domestic institutions have been accumulating this counter in trade. Dealers indicate that the selling pressure is largely over and all the negatives are now priced in for this counter. For Religare, there are buy flows on the HNI desk. Dealers expect that the record date for the demerger will be announced very soon in this counter, and they're also expecting some stake sale news in the insurance arm that could come in going forward. For Honasa Consumer, there are buy flows on the large HNI desk. There's a buzz of a potential acquisition announcement that could come in from the Honasa's side. And lastly, when it comes to Exide Industries, there are buy flows on the PMS desk on this counter. The stock is on an uptrend and dealers indicate that the fourth quarter numbers specifically are expected to be quite strong operationally, and that is one of the reasons why there are buy flows coming in on the PMS desk for Exide.
Okay, all right, thank you for that, Samit. We've been talking about domestic factors, but the fact is that global markets are still very watchful amidst the ongoing geopolitical tensions and uncertainty around energy flows, trade routes, and so much more. The latest coming in on that front, as per reports, is the US administration claiming the Iranians have asked for more time on the latest proposal. They want to get an okay from their supreme leader and then come back, and they've asked for a few days. So that's where it stands. Maybe that's some of the pressure that's easing off the markets as well. But to get a sense of how this entire situation can progress with Brent at 115, we're joined now by Martin Wolf. He's a veteran journalist and the chief economics commentator for Financial Times. Martin, thank you so much for your time and joining in. We seem to be in the middle of an uneasy truce between both sides. Do you see this sustaining?
Well, first of all, one has to stress, I think, that nobody knows what is going to happen next. Possibly not the administration in the US, and particularly Donald Trump, or the Iranian government. And I certainly don't know. But the impression one gets is that both sides would like the fighting to end. And I think both sides would like the Straits of Hormuz to reopen. The question is whether they can reach terms and trust each other enough to achieve this.
You know, Martin, you've said recently that oil could hit $200 a barrel if this situation continues, and this is easily one of the biggest crises to the free flow of oil in recent times. Does that seem less likely to you now?
Yes, that rested on the assumption, that forecast, possibility that the Straits would remain closed for up to a year, and there would in addition be substantial, long-lasting damage to oil facilities in the Gulf. Obviously, the Gulf is a fantastically important producing region, so if its output is out for a very long time, it's going to have a dramatic effect on world prices. That now seems much less likely than feared a few weeks ago, because the fighting has, at least for the moment, stopped, and it looks as though both sides would like to make that permanent. as I said before, the question is, can they reach a deal? And if they can't reach a deal, will this very uneasy ceasefire last? And finally, in that situation, will the straits actually open? But at the moment, things look better than the worst possibilities as we saw them a few weeks ago.
Definitely seems to be the case, which is why not too much panic in equities, even with Brent at 115. But do you see any situation, Martin, where we go back to the world how it was before, where passage through the strait is free?
Well, it looks less likely. But that we will go back to the situation before the war. It's one of the costs of the war. On the other hand, it's not easy to me to see how the situation in which one side charges will be stable either. I don't think the Americans and America's allies, who are important in this, very important, as allies and as producers, will be happy just to pay Iran sort of protection money. On the other hand, I think Iran will be very happy if the US unilaterally starts charging all these tankers. So what is difficult for me to see at the moment is how that set of issues about who controls the straits, who guarantees openness in the strait, and who gets any revenue if there is one, and how, all that seems to me just exactly a sort of core issue in this negotiation. That's one, and the other core issue, of course, is Iran's future as a nuclear power.
Definitely, those are the two key ones. From India's perspective, how long before oil importing nations like India start seeing some serious economic impact?
Well, my understanding is, and it seems pretty logical, even if the straits were open tomorrow, it would take quite a while to clear the straits of the existing tankers and get the whole system for shipping oil and all the other commodities that come through the Gulf going again. In addition, there has been damage. So getting back to normal, what it was like before the war started, might take, it seems to me, quite a long time, months at the very least. We're not going to be able just to switch it all back on to what it was before then.
That sounds likely. Thank you so much, Martin, for speaking with us. This is veteran journalist Martin Wolf on how he sees the situation, and our attempt always to get you a variety of voices right here on NDTV Profit. We'll take a very short break, but on the other side, markets still going strong. What should be your top strategy as we get into market close? All of that when we return.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Welcome back. You're watching India Market Close, and we may be off the high point of the day for the Nifty 50, but we're holding with gains of above 0.8% and very close to that 24,200 mark. The broader markets having slipped more than the benchmark Nifty 50. The mid-cap index still holding on to green territory, and so too the small-cap index with gains of over 0.5% at this point. It is even Stevens on the advanced decline ratio as well. We're joined by Shivangi Sarda, analyst, equity derivatives and technical at Motilal Oswal. Shivangi, thanks so much for taking the time. It's been described as a sell-on-rise market in the recent past. Does that continue to be the case? And would you take money off the table if you managed to ride the rally in April?
So very good afternoon. Thank you for having me. We've seen that, of course, April has been quite volatile, but over and above, we've had a good amount of short covering move that has kind of given a decent rollover, not ahead of its 3-month average. But of course, we've seen that this immense amount of OI shedding has been quite positive for the entire index if we talk about the entire April series. Now, looking ahead for the May series, we've seen that the indices had, of course, started on a very good note and inched towards 24,350 marks. But then again, we've seen some bit of profit booking at the higher levels, which is still not a problem because we've not breached the important support levels and we're still making higher bottom from the last three sessions. So overall, your buy on decline should continue over here. Of course, volatile cues would continue because of the global concerns and the election results that we are awaiting next week. So watch out for those cues. But of course, stock-specific action could be capitalized in this kind of a market.
And speaking of that stock-specific action, Shivangi, what would you point out as the key opportunities that you're seeing?
So for the stock specific, first up, I'm of course looking at some of the metal names. Of course, today we've seen a bit of it giving up strength at the highs, but overall this entire space is quite positive. Some of the auto names, specifically the two-wheeler stocks, are picking up in momentum, and one could look at Aisha Motor for that matter. But overall, one can also look at some of the fertilizer name stocks. On my radar, Deepak Fertilizer has been one such stock which has consistently shown higher top, higher bottom on the weekly basis and is consolidating at the higher zones from the last 8 to 9 odd trading session, which is making a comfortable base out here. So these space and stocks could be looked out for.
Okay. Shivangi, stay on with us. Time for a special report. If you're wondering why, despite higher Brent prices, there doesn't seem to be any panic, and yes, this is a well-managed situation, but what could have been a severe impact of the Strait of Hormuz closure on global crude supplies has turned into a relatively lesser problem or lesser harsher problem, with traders opting for alternate routes to fulfill demand. So Amit Sarkar is explaining to us how oil seems to be leaking through even with the Strait of Hormuz shut. So
Yes, the Strait of Hormuz is shut, and that shutdown could have impacted around 20 million barrels per day of crude and final product movement. As you can see from Strait of Hormuz, nearly 20 million barrels per day of crude and final products used to move pre-war. But now, given that war has started, war is ongoing, the Strait of Hormuz is shut. But then still, despite that, there is some oil that has been flowing Firstly, it's the oil that is coming in from Iran. On a limited basis, around 1.2 million barrels of that is continues to flow via the Strait of Hormuz. So that is one factor. Apart from that, then there is that UAE by routes that are been followed, and from there around 1 million barrels per day of crude continues to move. So around 2.2 million barrels from Iran and UAE continue to move. Now the biggest one comes in is from Saudi Arabia, the East-West pipeline. From there, around 5 million barrels per day of crude is still flowing. So this total comes to around 7.2 million barrels per day of crude that continues to flow despite the fact that Strait of Hormuz is shut. Apart from that, there is IEA emergency release, which stands at around 1 million barrels per day. Russia's floating storage, that continues to be available at around 2 million barrels per day. And then there are some of the tankers that are still moving across the Strait of Hormuz. As per analyst estimate, that counts around 0.5 million barrels per day. So in total, around 10.7 million barrels per day still continues to flow despite the fact that Strait of Hormuz is shut. And that is nearly 50% of what could have been the actual impact. 20 million barrels per day is the actual impact that could have been because of the shutdown of Strait of Hormuz, but around 10.7 million barrels through other routes and some of it via Strait of Hormuz continues to flow despite this shutdown. And that's the reason we are still not seeing a panic situation in the market or in countries which are actually net importer of crude. In those countries, we are still not seeing a panic situation because of this that has been happening globally.
Well put, Sobit. I'm just wondering if some of these routes or alternative measures can sustain things like emergency, reserves of the IAEA, etc., or the Economic Agency. Can they sustain beyond a point? So that's going to be interesting to see. Ashish Chaturmota, Managing Director and Fund Manager at Apex PMS, joining us in the conversation. Of course, he's from JM Financial. Ashish, very good afternoon to you. Why do you think markets are ticking? And do you think it's time for some profit booking at these levels, or more momentum is what you see?
Hi. First of all, as far as markets are concerned, we have seen some sharp uptick from the lower levels of almost 22,500 to close to 24,500 kind of trajectory, and then some cool off in the last 4-5 trading sessions. More to do with what is happening with rupee, with the volatility index, and particularly the kind of inflows we have seen in the equity market from the retail as well as the domestic institutional investors. But yes, as you rightly mentioned, the risk is still on, because if you look at the real impact of rising crude and other commodities will start getting reflected from the second quarter of the earning impact of most of these companies, because typically most of these companies don't keep inventory more than 1 to 2 quarters, and typically all this inventory will get exhausted, and then we will see a real impact of crude coming into these companies, margin profile as well as the profitability. So market is a little bit nervous about that fact, and I think that will keep markets in a kind of sideways trajectory. We don't expect market to see a sharp sell-off from current levels. In fact, on any day you will see a lot of buying interest which will start coming. So ideally anything anywhere around 22,800, 23,000 people are waiting to get into the market. But at the same time, it's not going to be easy for market to really cross or sustain about 24,500, 24,600 on a sustainable basis, because most of the large cap sectors like banking and IT are not ready to participate in the rally.
Understood. We're seeming to have a little bit of trouble with your line. Let's fix that. In the interim, let me go across to Shivangi on a couple of these private sector banks. That's exactly what Ashish was pointing to. So if there's been a tad bit of pressure on the downside for ICICI Bank in particular today, and the Nifty Bank has failed to participate in the recent past, is there something that gives you the impression that that could change in the near term, or are we likely to see further pressure on the downside?
Looking at the banking index, we've seen this has been underperforming from quite a bit. And looking at the overall structure, we've seen that, PSU banking names have been stronger out of the lot as compared to the private names. ICICI Bank has given up strength from the last 6 trading sessions, consistently making lower top, lower bottom, and now broke its key exponential moving average as well on the daily frame. So there will be some bit of pressure that could continue here. And this could only improve if Bank Nifty, manages to hold above 56,000 levels. So one could wait and watch in this space.
Okay, let's look at result reportage and Federal Bank. Optically, a good set of numbers. There were some one-offs which seem to have boosted the bank's balance sheet as well, and that's perhaps why you've seen that downtick in the stock price after the numbers were out. Shivam joining us with more details. Shivam, on the face of it, the bank's numbers look good, but there is a tax refund which has helped, hasn't it?
Well, yes, the Federal Bank has reported good set of numbers, but if we look at the numbers excluding the one-offs, the numbers have been overall in line. And looking at the key highlights that have been aiding the results, starting with the net interest income, which has been improved on the good credit growth in CV and gold loan segments. The fee income and the commission income has also been at the highest ever levels. The treasury income has decreased due to higher yields, and the operating expenses have remained on a steady level. Now the margins have improved slightly, but was partly offset by the lower yield on advances, and the cost to income has also declined, and asset quality has improved slightly. And there were a few of the major one-offs, as you said, that the bank has received a 456 crore interest return on IT refund, and the bank has also created a 456 crores floating NPA provision, and the bank has also reversed 115 crores worth of income tax provision too. So overall, the numbers are in line if you look at the numbers excluding the one-offs.
All right. Yeah. So let's take a look at the intraday chart for Federal Bank. So there's been quite a bit of a chop and churn, a little bit of a drop from the high point. The numbers, at least on the face of it, look okay. But as we've pointed out to you, there are one-offs to consider here. Bajaj Finance is the other major player in the NBFC space that is set to report its numbers today, and quite a bit to take account of, right? Because you've had the business updates that give you a sense of what to expect, but the internals are what we have to pay attention to, and possibly commentary heading into FY27 as well. Shivam, what are the key aspects that you're focused on?
Well, starting with the first key aspect that we need to look on to is the margins, which are expected to improve as the fixed rate portfolio are going to reprice in this quarter. The cost of funds are also expected to improve, and which will aid in the improvement in margins. The asset quality remains a key monitorable, as the credit cost is expected to decline, and that will be on the basis of lower provisioning that in quarter 3 the company has provided for higher provisions for ECL. Now in this quarter there will be no additional ECL provisions, so the provisions will be lower in this quarter. Also, the operational expenses are expected to normalize in Q4, so this will aid in the profit up 21%, and NII is expected to be up by 6.3% to 12,000 odd crores. Also there are few AUM figures such as the asset under management has crossed a significant milestone of 5 lakh crores and is expected to grow by 22%, and new loans have also seen a growth of 20.5% on YOY basis.
Okay, thank you for that, Shivam. Shivangi, good time to have a BTST call. Do you see this kind of a momentum continuing, though we have come off the highs of the day, so some profit booking is already set in?
Absolutely, we are seeing that some of the counters have given up strength. But as per BTST, I think my focus would be still on some of the stocks which are still holding up. On my radar is STL Tech, which has given a good amount of moves today, and this has been one stock which has resiliently moved upwards from the last 4 weeks, and even on the monthly basis it's given a breakout, closing at gains of around 67% in the April month. So definitely one of the strongest counters in the entire pack, and this one's looking quite positive. So Staylight Technology would be a buy here for the BTST idea. And the next targets that we're looking out for this one is around about 306 with a support of 288 level.
Okay, so those are a couple of picks there for you. Just wondering, Shivangi, how you're looking at a Sapphire and a Devyani. If you hold it, should you book? because they're just going from height to height in the last couple of days. Sapphire mostly and Devyani following through.
So if you look at Devyani, it's up by almost 15% today, and we've seen an excellent amount of surge here, and it has recouped the losses of the entire month in just a couple of sessions. So definitely quite strong, but even though we've seen a strong up move today, these levels need to sustain. So as long as it holds above 124, it could see an up move towards 135 odd levels, but 124 would be an important support to watch out for.
Okay, all right. The other big one to watch out for today is HUL, set to report Q4 tomorrow. Mahima joining in to tell us what to expect.
Right, Tamana. So overall, the expectation is of a high single-digit growth in terms of top line, driven by volumes. In terms of the estimates that Bloomberg is suggesting, revenue may see an uptick of around 7%. EBITDA may rise around 8%. So EBITDA will grow faster than the top line number. Margins could improve at that 23.1% mark versus that of 22.8 earlier, and net profit could see a growth of around 6%. Now, what to expect? Analysts are expecting like-for-like growth to be around 5 to 6%. Volume growth may be around 4 to 5%. If this is the case, it would be an impressive volume growth coming in for HUL. Margins might see some pressure. This is very subjective because some brokerages are saying that margins might be under pressure. Some brokerages are saying that margins might improve. We'll have to watch out for as to how they fare considering the raw material cost inflation due to West Asia conflict. Urban demand might improve considering the GST cuts, and that's something that we'll be watching out for in terms of commentary as well. In terms of key things to watch out for, of course, the price hikes that they've taken, and on the back of that, how much of a volume growth they do going forward. Commentary on demand, especially urban demand recovery. Impact overall of West Asia conflict, and overall impact of the harsh summers that we are expecting going ahead, because a lot of their revenue depends on rural demand, and that might get impacted because of harsh summers and lower monsoon. So this is the overall view of how and what you can expect from HUL Q4 earnings.
Okay, Ashish, I want to understand what HUL is expected to do and how you are looking at HUL, because FMCG companies have largely had a good run.
So generally, we are avoiding the broader, I would say, FMCG space, considering the way their volume pickup is happening, because we believe that most of these companies are facing challenges because of the volume uptick. So yes, maybe some realization improvement can lead to top line growth, but what we really need is the volume pickup, which is not happening. And if you look at the valuation front, most of these FMCG players are trading at 40-50 multiples. So that also makes the PEG ratio very, very expensive. So keeping this in mind, I think we are avoiding HUL for that matter at current levels. But within FMCG pack, I think one or two names which looks very promising. One is Marico, which has surprised on many fronts in terms of the volume uptick. So I think this is one stock within the FMCG basket which looks quite promising. Or maybe the new age platform companies could be a good proxy to play the entire consumption. So that's where companies like Eternal looks more promising, because there we expect the growth to be far superior, and we have seen numbers through this operating margin or EBITDA margin going to almost 4 to 5% can lead to serious re-rating in stocks like Eternal for that matter.
Okay, Mahima, you're still with us. Another story that we put out and you're seeing the impact today is that lower end cigarette prices are set to rise after a hike in king size packets, isn't it? What are the details?
Yes, Tamanna, so yet another hike coming in for these cigarette companies and the product, of course, as well. The expectations are, dealer checks are suggesting that the price hikes could be up to 17% for cigarettes in May 2026. The gold flake premium prices are expected to move from 115 per pack to almost 135 per pack. In terms of Classic Connect as well, the prices are expected to move from 390 per pack to 420 per pack, and similar price hikes can be expected going forward coming in from Godfrey Phillips as well. So both of these counters have remained in focus in trade today on the back of this news flow, and the expectations going forward could also be that further high price hikes could be taken because of the entire tax hike that the entire industry is facing. So this is the overall view of why all of these counters are buzzing in trade today.
Absolutely, Mahima. And second round of price hikes, right? And already we were seeing that there was an implication on the volumes and on the kind of consumption that is taking place in cigarettes. Ashish, on ITC though, at 315, it's made a little bit of a comeback, but it's still a far cry from those 400 levels. Do you see it reclaiming that ground anytime soon?
So we don't expect it to, at least go till 400, but maybe some another 10 to 15% upside could definitely be not ruled out in ITC because cigarette volumes are picking up, and I think the way realization is also improving, it is going to benefit not just ITC but even a player like Godfrey Phillips. So I think both these companies could be beneficiary of this uptick which is happening into the cigarette volumes. But apart from that, the FMCG business is not doing so great. So I think we are paying a premium to just the cigarette business at current levels. And keeping this in mind, we need to understand ITC has significantly underperformed in the last 1.5-2 years, and it has seen a correction from 500 to almost 300 trajectory. So I think yes, at least in the shorter term, a 10 to 15% upside could not be ruled out. So there could be a good tactical upside which can be seen in ITC.
Okay, so ITC also on track. What about some of these QSRs, Ashish? Devyani, Sapphire, anything that exciting you?
Honestly, not. See, we need to understand. There's a lot of intense competition which is happening in this space, and we have seen consolidation taking place within the industry. So this is a clear sign that most of these players they are struggling with high fixed cost, and at the same time with inflation picking up, we will see some incremental cost jump for most of these players, which will get reflected into the margin profile of these companies as well. So yes, there is an uptick in today's trading session, and which can happen for maybe 1 or 2 days. But I think it should be used as an opportunity to reduce the exposure into this QSR space.
Okay. On the charts though, with Devyani up as much as 14.5%, Shivangi, if you managed to get it, would you take money off the table?
Yes, absolutely. Devyani, something that we just discussed a few minutes back. So we've seen, almost 15% uprise today, and it has seen an excellent amount of surge, recouping all of its losses of the previous month and up another, few points. Now, of course, Devyani has to hold above 124 levels. This will be an important support to watch out. If it holds above the same, then we could see an up move towards 135 level.
Okay, Ashish, just before we let you go, wondering how you're looking at some of the mid-rung banks that have reported. We talked about Bandhan earlier, has done fantastically, but IOB numbers are out, Bank of India numbers are out, Federal numbers are out. Anything that stood out for you, or are you building any kind of thesis on a banking investment?
So see, we are heavy on the BFSI space, but particularly into large cap and PSU banking basket, where our belief is that there's most of these PSU banks, because they are trading at 1.1 time price to book, or even below 1 time price to book. But if you look at the credit quality, or also if you look at into the credit growth, most of these PSU banks are outperforming or maybe doing better than their private peers. And that's where our belief is, if there's any good correction in stocks like SBI or Canara Bank, then that's a very good opportunity to enter into these names, because there is where we believe the structural uptrend could be witnessed. As far as smaller or mid-cap private banks are concerned, yes, their numbers have been good, and that this got reflected into Bandhan's number today, which has seen tremendous amount of change in terms of the operating parameters, and this get reflected into the price behavior as well. So yes, there could be a good tactical upside which can be witnessed in Bandhan as well as RBL Bank.
Okay. Thank you so much, Ashish and Shivangi, for speaking with us today. Great having you on the show as well. And let's hope we see this kind of a momentum continue. All right, before we wrap up the markets, another story that's important is the Fed, the FOMC meet outcome will be known later tonight, and rates are largely going to be seen on hold. But I suppose what's exciting is that it is Jerome Powell's last stint as Fed chief. He remains in the Federal Reserve because he has a position there. So Trump wants him to go. but it is his swan song.
It is his swan song. I wonder what he's going to say as the outgoing chair, because there is this the whole case and just the last few months of him being in charge, that acrimony that came into play with Donald Trump is something that will take the headlines, I think.
Yeah, so it's going to be Powell out, Warsh in. And Warsh has talked about a regime change that he wants to bring in the way the Fed functions. So exciting times. All right, we don't know if there is going to be any kind of regime change because, 4 states and 1 union territory is going to post results. Let's look at markets, guys. It's going to post results on the 4th of May. Exit polls will be out this evening. Watch it on the NDTV network, 24/7, India, whatever suits you better. Here's how markets are ending off its highs. A bit of a cut going there. Advance decline ratio is actually turned negative. Declines over advances now as we're getting into the close. Bank Nifty has dipped into the negative. So has the mid cap 100. That's where the losses are. Pull up the intraday very quickly for the Nifty 50, the mid cap and the small cap. Let's do that in succession. So Nifty 50 has actually lost lesser because the heavyweights have held up. But that's not seeming to be the case for the mid cap, and it's likely the mid cap banks because some of those results weren't too exciting which came in. So a big drop over there. The small cap has managed to hold on, done better than the others actually, about 0.5% down.
And that is where the breadth is reasonably okay, and at the broader end of the spectrum as well. I just want to point out through the sectoral indices though, you will see a situation where the Nifty Bank is a significant underperformer sectorally. Not as much red on the screen than you would have thought, right? So you have a flat end to the Nifty Bank and you have the PSU banking pack that's losing about 0.5% or so. What has worked is FMCG, is realty, is India defense. So a few things. I do want to also pull up the India VIX because heading into the last trading session of the week, and particularly with results on the election side also to watch out for, I wonder if people are going to take too many bets heading into next week. It's going to be a little cautious.
The stomach this market seems to have for crude at 117 is amazing because the reactions we saw even at crude at 104 and 105 a few weeks ago was very different. So that's how things change very rapidly, even though the ticks are the same. And we're closing with Brent close to 117 as we wrap up. The Nifty about 168 points in the green, 24,200, still too steep a hill to climb clearly. And the index closing below that, advanced decline showing declines on top. So tomorrow is going to be a wait and watch day. I think crucial to understand what comes out on the exit polls. Big picture, not going to make too much of a difference. This is a set of state elections at the end of the day.
And sentiment.
But sentimentally, there's always something that you want to look forward to. And everyone, post-market hours, what other fun than to look at election results or exit polls in this case. And then, of course, election results on the 4th. That's all the time we have. So from Alex, I, and the people who put the show together, thank you so much for watching. Meanwhile, exit poll night. The numbers will speak. Don't forget to tune in for all of our analysis across the NDTV network. Thank you for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो सुबह केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Good evening, you're watching Market Express with me Shreyanti Singh, and this is a show that gets you a lowdown of everything that happened in today's trading day, be it news and updates from within the country as well as across the globe as well. Let's get straight into the show. Take a quick look at what the markets were up to. Markets lost some of those early gains that you saw coming in, but managed to end the day in green. Nifty ended above 24,100 mark. Meanwhile, Sensex closed 600 points higher. When you talk about broader markets as well, they underperformed benchmarks. Let's also talk about the sectoral picture then, and markets ended firmly in the green, dominating the board, FMCG and realty leading the rally. In fact, while PSU banks as well as financial services on the flip side were lagging, keeping the gains really in check. Let's also move on and talk about oil markets that are back on edge. Prices climbed nearly 3% on Wednesday as well. And, right now also you do have Brent crude hovering close to $115 a barrel, with Brent crude touching a 1-month high after reports that the United States is preparing to extend its blockade of Iranian ports. The move is seen as likely to prolong supply disruptions from the Middle East. Now, this is a region that is critical to global oil flows, and that's something that you can very clearly see being reflected in the prices as well. Traders reacted swiftly to the prospect of tighter shipments, pushing both Brent and US crude higher for another session yet again. With the Iran conflict still unresolved and shipping risks lingering, geopolitics is once again setting the tone when it comes to oil prices. Let's also talk about Maruti Suzuki's fourth quarter numbers that showed a steady rise in revenue and operating profit, while margins stayed broadly flat and net profit as well dipped slightly. When you talk about the word coming in from brokerages, they remain positive on the outlook. Morgan Stanley is the one that kept an overweight call. with a target price near 17,900 rupees. Citi raised its target price to close to 18,500 as well, and Macquarie as well maintained outperform with a target close to 15,900 rupees. Let's also move on and talk about Dr. Reddy's Labs that wins Canada approval for a generic semaglutide injection entering the fast-growing GLP-1 space as well, and it's the first such clearance in a G7 market, boosting global credibility and also opening doors to emerging markets. While competition will rise, the early nod gives a head start, supporting near-term earnings as well as longer-term growth. And with that in mind, let's also move on, talk about something like a Vedanta that's in focus, delivered a steady set of numbers for the fourth quarter. And numbers were largely in line to slightly ahead of estimates. When you talk about the counter, though, it was buzzing away in trade, about 4.8% uptick coming in here for Vedanta as well, and revenue and EBITDA and as well as profit all come in higher on a year-on-year basis, with margins staying strong. The aluminium business, let's talk about that as well, because that showed healthy growth supporting overall performance as profit rises nearly 20% on a sequential basis. Let's also move on and talk about yet another earnings counter that was trading a little bit flat, at least towards the end of the trading session. We're talking about Eternal right now, that posted a strong set of numbers for the fourth quarter, beating profitability estimates as both food delivery and quick commerce drive growth. Margins improve with quick commerce really showing better unit economics, while other segments stay stable. Management stays focused on profitable growth, guiding for strong expansion in Blinkit with steady user additions and store rollout on track. Let's also move on and talk about the word coming in from brokerages when it comes to something like an Eternal, and this is after its Q4 update, of course, but you have Citi that maintained a buy rating, trimmed its target price to around 360 rupees. Morgan Stanley as well, that's the one that's staying in overweight rating and maintaining that really with a target price close to 250 rupees. Investec and UBS remain positive, but Macquarie keeps an underperformed call, flagging rising competition as well as pressure on unit economics. Let's also move on and talk about something like a Bandhan Bank that was surging sharply, hitting a one-year intraday high after a strong fourth quarter as well. When you talk about this particular counter at the end of the trading session, it went home with a uptick of about 11.2% thereabout, and that's something that you can see reflecting on your screens as well. But when you talk about the earnings fine print, asset quality is the one that improved with lower slippages, with better yields and funding costs supporting margins. And profit growth, that's the one that's aided by lower credit costs and strong fee income as the bank really sees stability return in its microfinance as well as unsecured loan book, alongside a rising share of secured lending. Let's also move on and talk about the brokerage verdict coming in here as well after the Q4 performance. You do have Macquarie, that's the one that's maintained an underperformed rating with a target price near 130. While Investec is the one that upgraded this particular counter to somewhere close to 180 with a hold stance. Now, when you talk about the word coming in from something like a Motilal Oswal, they're staying positive, raising their target to about 210 and citing improving asset quality, lower credit costs, as well as better margins. Let's also move on and talk about something like a Star Health and Allied Insurance that surged after a strong set of numbers in the fourth quarter. You're looking at a 3% uptick coming in for this particular counter. And Citi is the one that's gone ahead and maintained a buy rating, raised its target price as well to somewhere close to 660 rupees versus previous target of 650 rupees, citing a turnaround gaining pace and claims ratios that are improving. That's something that they've underlined as well, while new business growth remains healthy, keeping the company a preferred pick in the non-life insurance space. Let's also talk about something like a Garden Reach Shipbuilders and Engineers that surged more than 5%, went home with an uptick of about 6.5% after posting a strong set of numbers in the fourth quarter with sharp growth across revenue, EBITDA and net profit. Now, margins are the ones that expanded on a meaningful basis on better execution, while the bottom line, in fact, saw healthy gains on a year-on-year basis. When you talk about the company, it also declared a final dividend, reflecting steady operational strength as well as sustained order execution momentum. Let's also move on and talk about Greenply that also delivered its best quarter in several years with record revenue, operating profit and net profit as well. When you talk about the volume growth, that was quite strong, and that's both in the plywood as well as MDF businesses, along with improving margins, driving the outperformance, really pushing the stock to a 4-month intraday high, went home with that uptick of about 11.7%, as you can see reflected on your screens as well. And when you talk about promoter buying, that's been a theme in recent months, also lifting sentiment while management stayed confident of double-digit growth as well as further margin expansion going forward. Let's also move on and talk about something like an MV Photovoltaic Power that reported a strong set of numbers with sharp growth when it comes to the revenue as well as profits, driven by capacity expansion and better utilization. Let's also talk about some of the other factors here as well. So you're looking at higher module output as well as improved solar cell utilization, supporting operating performance through the quarter. The company is also stepping up its growth plans, announcing a large new cell module, and that's one facility that you're looking at that's going to be strengthening its position over the medium-term basis. Let's also talk about CEAT that remains in focus after delivering a strong set of numbers in the fourth quarter with healthy growth in both revenue and profits. For the year, the company crosses a key revenue milestone supported by market share gains, then that's across the replacement and the OEM segment. So those are the two segments that you're looking at here. Margins stayed firm as CEAT leans on pricing actions and tighter cost control as well to manage supply really, and that's something that you're looking at aside from the raw material challenges. Let's also talk about Sterlite Technologies that reported a strong set of numbers in the fourth quarter with sharp growth also that you were looking at across revenue, operating profit as well as net profit. So all three of these metrics, margins improved on better operating performance even as leverage remains on the higher side. And this particular company also announced plans to raise equity capital, which the street will watch closely for its impact on the balance sheet as well as growth roadmap. Let's also move on and talk about Motherson Wiring that posted a strong top-line growth in the fourth quarter, but margins came under pressure, and that's something that you see reflected, that mixed set of performance with that flat sort of performance for the stock as well. Operating profit, that's the one that grew only marginally as higher copper prices dent margins, leading to a miss on estimates. Delays in ramp-up at new plants, including the Pune facility, also weigh on utilization. Now, in terms of the word coming in from brokerages, they're staying positive on the long-term story at least, but still they're flagging near-term margin headwinds. Let's also move on and talk about Indian Bank that posted a steady set of fourth quarter numbers with profit and core income showing healthy growth. Asset quality continues to improve with both gross and net NPAs lower and stable. However, higher provisions weigh on the quarter. The bank also announced plans to raise capital and declare a final dividend, keeping the focus on growth and balance sheet strength. And when you talk about this particular counter, it was down about 2.5%. Let's also move on and talk about Federal Bank that wrapped up fourth quarter with a strong set of numbers, and that's something that you saw the street largely shrugging away as well. Profit after tax climbed over 22% on a year-on-year basis, supported by a sharp improvement when it comes to core income, net interest income. Let's talk about that as well, about a 33% rise that you're looking at here, taking operating profit up more than 55%. When you talk about the asset quality as well, that continues to strengthen with both gross and net NPAs easing sequentially. However, provisioning sees a sharp jump on a quarter-on-quarter as well as year-on-year basis, signaling a more conservative balance sheet approach despite improving fundamentals. Let's also move on and talk about HUL, and that's one particular counter that's going to be reporting its results tomorrow, and watch out for that one. About a 1% uptick in the stock ahead of the expectations of a steady quarter driven by high single-digit revenue growth. Volume-led expansion is also likely to support performance, while profitability is seen improving modestly, but with some margin pressure, mind you, from inflation as well. And when you talk about the word coming in from the analysts, they're expecting gradual demand recovery, helped by better urban sentiment as well as selective price hikes. Let's also move on and get you some other news and updates. ITC and Godfrey Phillips India are in focus today as cigarette prices are set to rise across segments according to channel checks and distributor sources. Now, sources in fact are suggesting that hikes of around 17% is something that you could be looking at, with premium packs, the likes of Gold Flake moving from about 115 rupees to 135 rupees per pack. Similar increases are also penciled in across value brands, pointing to broad-based pricing action in the industry. Moving on then, let's also get a little more stock specific while talking about something like a Laurus Labs that's in focus ahead of its fourth quarter earnings, about a 1.4% uptick coming in for this particular counter, with the street also expecting a steady improvement when it comes to performance. Revenue and operating profit are seen rising on a year-on-year basis, helped by growth across APIs, formulations, and the synthesis business. Now, when you talk about the margins, they're also expected to improve, driven by a richer mix from synthesis, even as API growth remains measured. Let's also move on and get you some business news. Then the US Federal Reserve is widely expected to hold interest rates steady tonight, marking a third straight pause, with inflation risks back in focus due to higher energy prices and geopolitical disruptions. The central bank remains firmly in wait and watch mode. Now, attention is now shifting beyond rates to leadership uncertainty, with this also likely among Chair Jerome Powell's final meetings, adding a fresh layer of overhang when it comes to global markets. Let's also move on and talk about oil. Yet again, a major fault line, in fact, is emerging in the global oil alliance. The UAE's exit from OPEC and OPEC Plus marks more than just a policy shift. It signals a recalibration of power within the cartel. Abu Dhabi controls roughly 4% of global oil supply and over 12% of OPEC's output. And this really makes it the group's second largest producer after Saudi Arabia. And when you talk about the word coming in from the analysts, they're saying that the move is political right now rather than economic, driven by widening regional rivalries, from Saudi-Pakistan defense ties to differences over Yemen, and the UAE's deepening alignment when it comes to the US and Israel. While the UAE was among OPEC's most disciplined members, its departure really could weaken unity, and this is just as energy markets remain stressed already and geopolitics increasingly dictate oil flows. Let's also move on and talk about the government laying the regulatory ground for higher biofuel use. The Road Transport Ministry has issued a draft notification proposing to expand the definition of fuel under the Central Motor Vehicles Rule. This would allow vehicles running on higher ethanol blends like E85 and E100, as well as biodiesel up to B100. Now, the draft also revises norms for hydrogen CNG blends and proposes really raising the permissible gross vehicle weight limit. The move signals a push towards alternative fuels very clearly, as India looks to cut fossil fuel dependence with newer, cleaner fuel standards. And keeping it going with this particular theme as well, a strong pitch for a cleaner transport future is something that was made by the Union Road Transport Minister Nitin Gadkari, saying that petrol and diesel vehicles have no future in India's public transport system, especially as global geopolitical tensions raise fears over fuel supply disruptions. Pointing to India's heavy dependence on imported fossil fuels, you do have Gadkari warning that this leaves the economy vulnerable during international crises. He has also urged automakers and fleet operators to fast-track the shift to alternatives like electric, CNG, LNG, ethanol, and the like. The minister also reveals that hydrogen mobility is already moving from promise to pilot, with trucks and buses being tested on select routes across the country. Moving on then, let's talk about the Samsung controlling family that has emerged significantly wealthier and more firmly in control 5 years after facing twin shocks following the death of the patriarch Lee Kun-hee as well. And back in 2020, concerns were rife that a massive inheritance tax and legal uncertainty around succession could weaken the family's grip on South Korea's largest conglomerate. Now, instead, an AI-driven surge in semiconductor valuations has transformed the outlook drastically. When you talk about the Lee family's combined wealth, that is more than doubled to around $45.5 billion, elevating them to Asia's third richest family, with the final installment of the 12 trillion won inheritance as well. The inheritance tax, in fact, due this month. The Samsung dynasty has not only weathered the crisis but also strengthened its hold. Moving on then, let's get you some national news. The West Bengal state is voting under sharp political focus. By early afternoon, you do have over 61% of voters that had turned out in the second phase of polling. Even as sporadic incidents of violence were reported across parts of the state, tensions briefly flared in Bhabanipur, turning the spotlight on a face-off between Chief Minister Mamata Banerjee and BJP leader Suvendu Adhikari at the same booth area. Now, this phase is widely seen as a critical test for the Trinamool Congress, with polling moving into its traditional strongholds in South Bengal and Kolkata. Now, the final round of voting is now underway, and that's across 142 assembly seats in 7 districts, with results due on May 4th. Now, that's something that you're watching out for on the political front as well, but let's also talk infrastructure right now. PM Modi has inaugurated the Ganga Expressway, Uttar Pradesh's longest expressway and one of India's biggest greenfield road projects. Built at a cost of over 36,000 crore rupees, the 594-kilometer 6-lane corridor links Meerut to Prayagraj across 12 districts. Now, this is designed as an access-controlled highway and expandable to 8 lanes. The project aims to slash travel times and transform connectivity in the state beyond mobility. The Ganga Expressway is envisioned as an industrial and logistics corridor, anchoring economic development across the heart of Uttar Pradesh, with Chief Minister present at the launch. Let's also move on and talk about a planned mass animal sacrifice at a temple near Sikandrabad that has been stopped following swift action by PETA India and the Telangana police. Acting on a complaint received on April 26th, you did have the police holding discussions with the authorities of the temple and informing them about the state's strict ban on animal sacrifice. Officials cited provisions of the Telangana Animals and Bird Sacrifices Prohibition Act as well, under which such practices at public places of worship are illegal. The intervention ensured that the ritual did not take place. Alright, and that's some national news as well, but let's keep it going with some more news coming in from the south of India. Protests have erupted across Kerala over undeclared power cuts, with angry consumers taking to the streets in the early hours. Now, this is in the Thrissur district as well, and residents marched to the division office past midnight after hours of outages, with demonstrations continuing till Wednesday morning. Protesters even lay outside and inside the premises, also demanding immediate restoration. Although officials cited a technical fault in a major feeder line, tensions in fact remained high. Similar protests were reported from Kozhikode and Nadapuram, highlighting growing public frustration over repeated power disruptions. Moving on to the word coming in from the Supreme Court then, that has ruled that existing laws are adequate to deal with hate speech, declining a plea to classify it and rumor mongering, in fact, as separate criminal offences under the penal code. Now, the court said that constitutional courts cannot compel Parliament to legislate, and stressed that the real problem lies in enforcement, not really a legal vacuum that you're looking at here, and that's the word coming in from the Apex Court. The petition filed in 2021 by advocate and BJP leader Ashwini Kumar Upadhyay was dismissed, with the bench pointing to existing provisions and prior directions requiring police to mandatorily register cases in hate speech matters. Moving on then, let's get you some international news now. Iran-backed hackers have reportedly leaked personal data linked to thousands of US Marines deployed in the Middle East as well. And the US Defense Department, in fact, is investigating the breach, with early findings indicating that some of the information released is authentic, according to the Wall Street Journal, and that's the reports that are indicating this. But troops in the region also received messages on WhatsApp warning that they were under surveillance, though officials are still assessing the scope and impact of the incident. Now, the hacker group, in fact, has claimed access to additional details related to US personnel and their families also. Separately, US President Trump said that Iran has reached out to Washington, describing the country as being in a state of collapse and seeking the opening of the Strait of Hormuz, pointing to parallel cyber and diplomatic developments. Let's also move on and talk about Middle East tensions that surfaced during a high-profile state dinner in Washington. US President Trump and Britain's King Charles as well shared his view that Iran should not be allowed to acquire a nuclear weapon, linking the issue to the ongoing Middle East conflict. The remarks came as the British monarch began a 4-day visit to the United States at a sensitive moment in ties between Washington and London. Now, Trump has repeatedly criticized British Prime Minister, accusing the UK of offering insufficient support in the prosecution of the Iran war. King Charles, in his own remarks, avoided direct reference to the conflict. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends.
Dalal Street powers higher today as benchmarks extended gains. Nifty ends in green, closes above 24,100 level. FMCG sector being the top gainer today, while rupee hits record closing low all time at 94 rupees 85 paise against the dollar. Brent hits 1 month high amid persistent disruptions near the Strait of Hormuz. Brent hovering over $114 a barrel. Reports suggest Trump met with the oil executives to discuss Iran war impact day after UAE announces exiting OPEC from 1st of May. Dr. Reddy's gets a Health Canada nod for its generic semaglutide injection. The clearance marks the company's entry into the high-growth GLP-1 segment. In exclusive conversation, the CEO says ready to sell semaglutide to at least 50% markets. Sources tell NDTV Profit that lower-end cigarette prices are set to rise after hike in king-size packets, with an expected price hike of 17%. Adani Green Sagar Adani points to the need for energy resilience amidst Middle East crisis, says group has committed $100 billion for energy transformation across India. 6-lane, 600 kilometers, 6 hours. Prime Minister Modi inaugurates 36,230 crore rupees Ganga Expressway, UP's longest road corridor linking Meerut to Prayagraj. Adani Group anchors investment push aligned with Viksit Bharat with 80% development of alignment of the road. The last and final phase of voting is underway in West Bengal. Violence mars phase 2 polling in battleground Bengal. Clashes reported as polling turns tense across multiple booths. Meta brings prepaid mobile recharges to WhatsApp users in India. Now you can recharge your mobile on WhatsApp without switching between apps. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the developments of the day that you must know about over the next 30 minutes. First of all, beginning with the markets, well, bulls took charge on the Lal Street today, with Nifty and Sensex really gaining over 1%, and broader markets also advanced but lesser than the benchmark indices. In fact, the mid-cap especially swung to the negative zone. Now, buying interest today was predominantly visible in real estate, FMCG as well as the auto stocks, while most of the sectors remained in the green, and some of the big boys coming in from the types of Bharti Airtel, Reliance Industries and the IT pack were the top contributors. Meanwhile, take a look at the crude oil prices, and they rose more than 3% on reports that US President Donald Trump is dissatisfied with Iran's proposal to really reopen the Strait of Hormuz. In fact, investors are also tracking developments on the OPEC, especially after the UAE announced its exit from this particular oil cartel from 1st of May. And amidst these circumstances, remember, let's take a look at our Indian currency. The rupee today fell to its weakest level in a month's time. In fact, it hit its record closing low today at 94 rupees 85 paise against the dollar, although the losses were contained by RBI's likely intervention. Now, the currency has been walking a tightrope there, with lower than 95 rupees per dollar is the limit that it had breached in its lowest point. All right, let's move on to an important and an interesting development which all of us are really proud of. Skyroot Aerospace has really flagged off its first orbital launch vehicle, Vikram 1, to Sriharikota, with a targeted launch window in the first half of 2026. Now remember that this marks a historic first, an Indian private company really preparing for an orbital launch vehicle developed entirely in-house. What does this really milestone mean for Skyroot Aerospace, and also what does it really signal for India's fast-growing private space sector? To discuss this and more, I'm joined by Skyroot Aerospace co-founder and CEO Pawan Kumar Chandana, who's joining in. Pawan, it's always a pleasure to welcome you on NDTV Profit. What a big feat. What does this mean for the aerospace capability of India? First, take us through that.
Hi. So I think this is a very important phase, that a private company in India is able to build a rocket which can launch satellites to orbit. And in fact, this is considered as one of the toughest feats in engineering, and very few companies in the world have this capability. And it's a very large commercial capability as the space sector in the world becomes $1 trillion economy in the next decade. So I think it's a very important milestone for India as a private sector, a company like Skyroot, being able to build it and just flagged off the rocket to the launch site, and you're soon going to start operations at the launch site and take off the rocket soon.
In terms of India's capability, with this particular capability adding to Sriharikota's, what is the potential that we are really looking at, and also globally competing with the developed nations when it comes to science and technology and aerospace?
So space is a very large commercial market today. It's more like a $600 billion economy, and it is set to become like $1.8 trillion by 2035. And the core of space, starts with launch, where rocket launches a satellite into orbit, and then the satellite gives services across the globe, whether it is communication services, Earth observation services, or the governments also might use it for exploration, etc. So I think the crux of the whole economy is launching to space, and that's where building a rocket and being able to launch to space becomes very important to build this $1 trillion economy. And Skyroot is taking its initial strides as the first private company to be able to go to the launch site and prepare for an orbital launch where the rocket has the capability to start launching satellites to orbit, and that's the flag off of the hardware to the launch site where we start assembling and get to a liftoff zone.
Pawan, it must be a proud moment for you, not just in terms of the technological breakthrough, but also to be working, representing India and working with ISRO. How is this whole experience? Take us through that as well. And what does this mean for you also personally?
I think personally, it's a very proud moment that, so a deep technology, as deep as, rocket science is being built by private sector in India. And, and very few companies, like I mentioned, in the world have this capability, and many of them have taken, more than a decade, to get to this capability. And Indian company, at the brim of doing this is, I think, a fantastic, proud moment. As an engineer and as an entrepreneur, I think this fills me with a lot of satisfaction, and also, to look forward to a launch and the liftoff soon. In fact, Skyroot has launched India's first private rocket to space in 2022. It's more like a small test launch, and now we have graduated to building bigger rocket which can put satellites into orbit. And then working with ISRO also is phenomenal, because in fact we utilize ISRO's launch pads for doing the launch, and we also utilize a lot of their test facilities in developing the rocket. Thanks to the government for giving access, and also for ISRO team to be supporting this entire journey going forward. And I think it's very important that strong private players should emerge from India. And then I think Skyroot is the first, opportunity to start launching from the private sector from Indian soil.
That's right, Pawan. In fact, looking at the engineering capability in India has always been there. But we have also a lot of times lamented about the brain drain that really takes place from India because of the lack of a conducive environment for it to really thrive here and grow here. With your personal experience as an engineer yourself, how much of the government support, what are the policy changes, what is the mindset change and the conducive environment you think has come in? And in my view, the Chandrayaan, success brought India on the global map, and that has also added to the momentum and motivation in this sector.
Absolutely, you're absolutely right. In fact, India has mostly doing services for the rest of the world. Though it has strong engineering capabilities, I think now is a chance where we build our own products and we translate into a product nation than from the services nation which we were before. And I think that's our attempt at Skyroot, and space being a very strong play for India, because India has been one of the top 5 nations globally. We have become the first country which has landed a spacecraft close to the south pole of the moon. We're the first country which has reached Mars orbit in the very first attempt, thanks to the success of ISRO. It really shows the capability of high precision, high tech engineering from India. And now I think is the time for from brain drain to brain gain. Where we see a lot of people, a lot of engineers who want to build cutting edge things come back to India and enable this these kind of journeys from India for the world.
Right, instead of copy pasting other technologies and R&Ds done by our own people, Pawan, we would like to really export this. So from the company's point of view, what is the journey like after this particular breakthrough? What is the potential market? How soon can you commercialize it? And how big is the potential for you to sell globally as an Indian company overseas? What is the roadmap there, and what are you looking at in terms of the commercial use?
Yeah, so I think very important to get to the first test launch of Vikram 1, which is India's first private orbital rocket. As the hardware just started moving to the launch site, and we start taking the liftoff soon. And after this launch, and rocket science is extremely difficult. So you'll have a lot of learnings from the initial flights. So we call it typically 2 to 3 developmental launches, where we iron out all the issues that can come in the rocket, and then starts regular successful launches. And then from I think this year we'll be doing multiple launches. We'll be proving a lot of the tech to be which is required for commercial launching. And then we have a good interest pipeline from customers across the globe, for launching their satellites using our rockets, and we'll start commercial launching as soon as we start having successful launches. And next year is when we'll see like a large number of commercial launches happening, and and more than, in fact, 70-80% or even more of the market is global. And then the amount of launch capability available in the world itself is less number of players doing this, and we need more and more players to do it. And Skyroot, being one of the will be hopefully like one of the key players driving more and more launches in the future.
All right, so one breakthrough and then a lot of things will fall in place for you, Pawan, on this journey. But as an engineering talent yourself, and you have converted and crossed over to the other side, and I know that how difficult it could really be. What would be the certain challenges or suggestions that you want to put forth which can make things easy for many other entrepreneurs like yourself to come in this space and make their breakthroughs as well? Any suggestions?
Yeah, absolutely. In fact, many engineers think that, they are engineers and they should focus on the technology. But in fact, like entrepreneur is nothing but a problem solver, and engineering is also problem solving. So I think, and in fact, like using the same scientific method to solve problems is the same way in which even you can solve a business as well. So I think first thing is to break the mindset that engineers should only do tech. In fact, like they can be phenomenal entrepreneurs. So I think it's very important to take that first step. If you see even globally, the best engineers have become the best entrepreneurs as well. And in fact, like brought together other engineers together, and then build great things and great companies across. So I think the first major thing is to take that, leave the comfort zone, take the first step, and build your idea from scratch, and then and never stop. I mean, like, of course, being an entrepreneur and building a company is never easy.
Yes.
You persist until you succeed, and I think engineers can make great entrepreneurs, and I think you should take the leap of faith and start the journey with your idea.
All right, Pawan, well said there. And of course, we know that how entrepreneurs need a lot of grit and determination and a lot of perseverance. And that's great. In fact, we are rooting for Skyroot's success with ISRO in that first launch. All the best to you and your team. Pawan Kumar Chandana, thanks so much for speaking to NDTV Profit. All right, so that was an interesting conversation. Let's move back to what's happening on the oil front. In fact, a major fault line really appears to be emerging within the global oil alliance. The United Arab Emirates, which is UAE, has reported exit from OPEC as well as OPEC Plus, and that signals more than just a policy shift. It points to a broader recalibration of power within the oil cartel. In fact, to discuss this, Somit is joining in to get us all the details on this development and what it really means for this sector. Somit.
Yes, UAE is quite an important partner when it comes to OPEC. It produces nearly 3.5 million barrels per day of oil and has been making investments to increase this production capacity to nearly 5 million barrels by 2027. Now, this was before the war started. UAE is around 4% of the global oil supply, 12% of OPEC supply, and second largest player after Saudi Arabia. Now, analysts believe the reasons for this exit may be more political than pure economic. There has been regional rivalry that has been growing as per analysts, and multiple issues is what they have cited, like Saudi Arabia made a defense pact with Pakistan. Saudi Arabia and UAE are not on the same page when it comes to the Yemen strategy, and UAE is also getting closer to Americans and the Israel. And this is not the first time someone has quit from OPEC, but UAE was its most compliant with the production quota in the past. So this might impact oil prices going forward. Now, this could also weaken OPEC's cohesion at a time when global markets are already under stress, as per analysts. Now, multiple countries have exited OPEC in the past. Ecuador has done it in 1992, then they rejoined in 2007, and then again exited in 2020. Gabon exited in 1995. Post that, they joined in 2016. In Indonesia has also exited a couple of times in 2008 and in 2016. Qatar had exited in 2019 because they were more focusing on gas from then, and Angola had exited back in 2024, and now UAE is will be exiting from the 1st of May 2026.
All right, thanks Somit for putting all that into perspective for us. Now let's move on to the pharma space, which has been buzzing of late. Well, Dr. Reddy's has secured approval in Canada for its generic semaglutide injection, marking its entry into the fast-growing GLP-1 segment. Notably, Canada becomes the first G7 market to really clear a generic version, giving the company an early mover advantage in a highly competitive space. And for more on that and what it means for the company as well as the sector, my colleague Varsha is right here with all the details. Varsha, tell us.
Well, this is a very big news and positive news, and investors were actually waiting for the Canada approval for generic semaglutide, which treats type 2 diabetes and of course helps in weight management. Now this marks company's entry into a highly competitive GLP-1 segment in Canada, also opens faster regulatory approval pathways across Brazil and other emerging market. While this is the first generic approval in the G7, Canada is the first country to give that, and this sets a global precedent for other regulated markets. Now this is a major win for Dr. Reddy's as it strengthened its position in complex generics. Also, this being among the first approved gives a competitive head start for the company, and company will have no competition for at least next 6 to 8 months in Canada for this product. Talking about the strategic importance beyond market size, so Canada itself is a $2 billion market, pre-generic market with 10 to 12 million of pens sold annually. However, its bigger value lies in enabling global regulatory acceptance. Onto the near-term earnings, when it comes to this product for FY27, Canada launch could contribute almost 150 million potential of revenue in FY27. That's a meaningful contribution at least in this year. Volumes are expected to scale 2 to 3 times as price declines. 6 more players in Canada are expected to get this approval, with Apotex and Sandoz likely to follow. Early approval gives Dr. Reddy a timing edge despite future competition. But emerging markets will be a long-term growth driver for the company going forward. India and rest of world are expected to have significant growth in FY28 and FY29. Lastly, the other stocks which should be in focus on the back of this news is of course OneSource Specialty, as that is a CDMO player for semaglutide for Dr. Reddy's, and of course the Shell Engineering, which makes injections or pens for semaglutide.
All right, thanks Varsha for putting all that into perspective on what it really means for Dr. Reddy's as well as the space. And we did speak to the management of Dr. Reddy's to understand what is the potential and what are the plans at the company's level. Listen in.
Very significant. First, it's a great recognition by a very respectful health authority. So we have a deep respect for Health Canada and for the way they conduct their applications and registration process. It's obviously the approval in India, which was very, very important for us as well as Canada, allow us to use this approval with the registration process in the other markets. Eventually, we want to get for more than 90 markets, including the 2 markets that you mentioned. The last one will be in the United States when the patent will expire. Yeah, no, we targeted and we are in the process of all those markets using both the Indian approval as well as the Canadian approval. Notable markets will be markets like Brazil, Turkey, markets in Southeast of Asia, market in Latin America. Basically, every market that from IP standpoint, from patent point of view, we can launch a product.
All right, so that was all about the plans at Dr. Reddy's. Now moving on, the lower end cigarette prices may get more expensive, with sources indicating a spillover from the recent increases in the king size packs as well. Mahima is here with all the details on the companies which also stand to be impacted apart from the budget.
So channel checks are suggesting that another round of price hikes is happening for cigarettes as a whole. Now the conversations with distributors points towards a 17% price hike expected. Overall gold flake premium prices are expected to move from 115 per pack to almost 135 per pack in May 2026. Gold flake premium contributes around 35 to 40% of sales volume of ITC overall volumes, and in terms of similar price hikes could be expected from Godfrey Phillips also going forward and other categories of cigarette for ITC as well. There's also channel checks suggesting that Classic Connect could also see price moving from 390 per pack to 420 per pack. This is what distributors are telling us right now. So price hikes on the card, yet another round of price hikes, let me put it that way, on the cards for all of these cigarette makers.
All right, thanks Mahima for those exclusive details. So smokers beware, your budget is going to get more stretched because of more expensive cigarette prices. All right, speaking at the Economist's Resilient Future Summit 2026, Adani Green's Sagar Adani points to the need for the energy resilience amidst the Middle East crisis. In fact, he says that the group has committed $100 billion for energy transition across India. Listen in.
The government has provided any and every policy support that it needs to provide. It's done, again, as I said, an exceptional job. If you see the manufacturing capacity that's been added in the country over the last couple of months and the last 2 years, pretty much, it's been north of 50 gigawatts of manufacturing capacity that's come up in the country. That's all due to the policy encouragement by the government of India. Last year, we crossed 55 gigawatts of renewable energy installations in the country for the first time ever.
All right, need for energy resilience in the country. All right, moving on to political developments, and voting is underway in the second and final phase of the West Bengal Assembly elections 2026, with polling being held across 142 constituencies spanning key districts including Kolkata, Howrah and Hooghly. Now, this phase is particularly crucial as it will largely determine whether the Trinamool Congress retains its dominance in South Bengal or if the BJP can really make a deeper inroad into this particular state. Now, 78.68% voter turnout has been recorded till 3 p.m. As has been highlighted and has been published. But polls were really marred by clashes at multiple polling booths. As polling concludes later today, all eyes will shift to the exit polls, which are expected to offer the first indications of how this high-stakes battle between TMC and BJP is going to play out in the state of West Bengal. So that will be very, very closely watched out for. In another important national development today, well, Prime Minister Narendra Modi has inaugurated the 594 kilometers Ganga Expressway, which is one of India's largest greenfield infrastructure projects that was really completed in less than 3.5 years, connecting Meerut to Prayagraj. Now, this 6-lane corridor, expandable to 8, is expected to significantly boost connectivity, cut travel time, and also unlock the economic potential across 12 districts of the state of Uttar Pradesh. Now, the project has a strong private sector footprint as well, with Adani Enterprises executing nearly 80% of the stretch alongside IRB infrastructure. Now, the expressway also features an emergency landing strip for the Indian Air Force and AI-enabled systems to enhance road safety. Let's now listen in to what Prime Minister had to say at this particular inauguration ceremony.
एक्सप्रेसवे मेरठ से आगे बढ़कर हरिद्वार तक पहुंचेगा। इसके और बेहतर उपयोग के लिए फर्रुखाबाद लिंक एक्सप्रेसवे का निर्माण कर इसे अन्य एक्सप्रेसवे से भी जोड़ा जाएगा। ये है डबल इंजन सरकार का विजन। ये है भाजपा सरकार के काम करने की स्पीड। सब देख रहे हैं आज पूरी दुनिया कैसे युद्ध, अशांति और अस्थिरता में फंसी हुई है। दुनिया के बड़े बड़े देशों में हालत खराब है, लेकिन भारत विकास के रास्ते पर उसी रफ्तार से आगे बढ़ रहा है।
All right, a major infrastructure boost there, Ganga Expressway inaugurated. With that, it's a wrap on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much for tuning in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
But
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, a show where we get you the hottest companies in KYC. And right now, of course, the flavor is earnings season. So I've got you something which is hot and fresh. But before that, I'm going to give you some hints. Try to guess it. It's very easy. It's the largest private health insurer in India. This is the first hint. The second hint, a very strong Q4 results have come in, and yes, this is something which you can guess it very fast because it's happening right now. Also, let's look at the third hint. It's backed by Rekha Jhunjhunwala, and also remember folks, they are promoter as well. The stock is up 30% from January 2026 lows as well. So there has been a good momentum in this stock, and when we talk about this company, of course it's easy to guess. It is Star Health Insurance, and of course Allied Services is also there, and this is the company which we'll talk about. And of course the most important reason is the Q4 numbers. A good turnaround is happening in this business. Largely the size of this business is larger for a KYC show, but nevertheless the interest is very high in this counter. Business turnaround has gathered momentum. Now what are the key triggers ahead? That's the first question we'll pose to the management. Apart from this, there are a lot of questions which I have marked. What led to a strong Q4 numbers? Is there a sharp improvement in the loss ratio? Their underlying profit which is there, that has actually come up. Remember, there are some accounting adjustments at play as well, and the revival of new business channels by diversification. That's what the brokerages have given a thumbs up. But what's the outlook ahead for FY27 and the market share loss in the retail health segment? Is this systemic, or will this continue going ahead as well? That's a one concern in my analysis, but net the strength or the positivity in the Q4 numbers are strong. Street expecting further price hikes to offset medical inflation. That's the key query to be asked, and we'll try to understand that as well. And also the net income claim ratio, that has been better versus ICICI Lombard. So definitely the street is bullish on this counter. And to understand the entire picture, we'll have Nilesh Kambli. He's the CFO at Star Health Insurance. Well, he'll give us the entire picture. But before that, let's understand what is Star Health Insurance. I've given you a little bit of hint. A lot of you will understand what the company is all about. But for our viewers and for the uninitiated, it is India's largest standalone health insurer. Apart from that, they offer health, personal accident and travel insurance. Of course, these are the ancillary services which I'm talking about. And remember, it's the first insurance to settle over 1 crore claims. That's an interesting take I've picked out from their exchange filings. The network is over 900 offices and 8 lakh agents, a strong banker and an FI tie-up. When a banker, it means bank tie-ups. Company has over 15,000 hospitals and over 18,500 employees. That is the coverage we are seeing for Star Health. Digital channel is driving almost 20% of the fresh retail sales, and that's a key trigger for this. Also, 81 insurance partnership, that means with 81 banks, इनका धंधा हो रहा है. That's the way to put it in a very simplified manner, and of course backed by Rekha Jhunjhunwala and as a promoter. Interesting. But before you understand, there are some key abbreviations you should know when you are judging an insurance company. It's very technical, but nevertheless I'll make it as simple as possible. GWP means gross written premium. Let's see the second abbreviation which should be there in your radar. This is GEP, which is nothing but the gross earned premium. I'll try to give you a net premium so you understand what are the operational parameters to look at. But this is very much important. It's called COR. So it's called combined ratio. This is very much important to judge a company on overall how an insurance company is doing their works. But enough of abbreviations. Let's see the claim snapshot, how things have panned out. The retail claim settlement ratio is higher, is at 92%, and this is actually auguring well for the company. Almost 11,900 crore plus claims were paid in FY26. So this is the claims data which I'm talking about, but the fourth quarter numbers were really strong, and that is why we are calling this company to understand. Growth and operational metrics largely have improved if I had to simplify it. But if you want to ask, Sharad, इसमें कुछ details है क्या? So the third highlight, let's pull out and show you what are the details. The loss ratio, that has improved for the third straight quarter. That means you can see the company's overall profit which is there is going well operationally speaking for an insurance company. The retail health market share, that has declined. That's a bit of concern. Also, the profit recovery, that has gained momentum, and the brokerages have turned bullish for this counter. So the Q4 highlights are strong, and the underwriting profit, that has turned positive at roughly 206 crore rupees. So this is very much important when you judge a company. Ind AS numbers, they have normalized it for an 8% investments, and that band actually stands at 1100 crore rupees. That means there are two accounting strategies, And of course, they are following what IRDAI has stated. And from 1st April onwards, we will see one single accounting strategy. For last 2 years, they have been showing both of these numbers. So these are the Q4 highlights, how the numbers were, and largely the performance for Star Health. But let's talk about the operational parameters, what it means for the company. But whenever we get a company, of course, it's an insurance company, so I have tweaked the operational parameters also to judge the company. So I have got key ratios instead of the cash flow statement. Of course, income statement, balance sheet थोड़ा अलग लगेगा आपको क्योंकि कंपनी ही अलग है और इसको हम एनालाइज भी करते हैं तो अलग ढंग से करते हैं. Return ratios would be there, and let's get into the more details about it also. This includes, of course, the shareholding pattern, the street trade, how much money has been made in this counter, and the valuations. We'll try to check this company's valuations over the last 5 years and where does the company stack. And lastly, the analyst take. What is the analyst community actually looking out for? How many buys, how many sells, how many holds? We'll get you all of those details. But let's start the first parameter, and of course I've taken them in a sequential manner so you understand a little bit more about it. Operational profit, slightly it has recovered from Q3 numbers. It's coming at 154 odd crore rupees. But net, the top line and bottom line numbers, they have done really well. Remember, there's a lot of technicalities at play, and just to put that simplified manner, the operational numbers have been really good for the income statement. But net, I would say it has beat the street estimates, what the street was estimating. So I'm giving this a strong thumbs up when it comes to the income statement. Let's talk about balance sheet. And balance sheet, remember, इंश्योरेंस की कंपनी है. इंश्योरेंस की कंपनी में रेगुलेशंस बहुत रहते हैं, सो दे आर बाउंड टू फॉलो व्हाट IRDAI हैज टू से, especially on the ratios front. So their discipline will be very strong. So that is why if you look at the net worth or investment, these are the numbers, you can track them. But net, to put perspective, it's a very stable balance sheet and a stable business to actually look at. So इसमें ना कुछ बहुत बढ़िया दिखेगा आपको, ना कुछ आपको बहुत खराब दिखेगा. So put that in perspective, neutral rating देंगे balance sheet के लिए. But let's talk about key ratios. No, cash flow is not that important because of course the business model is different. Key ratios is very important. This is where the combined number comes. I'll explain you what combined is. Combined is something when you have something below 100%, which we are seeing here, that means you are doing well, and that augurs well. Even the solvency ratios at an average is at 1.5 times, and this is comfortably holding above the 2 times. But the best number to look at would be that. But remember to understand that this is the important graphics. Combined ratio is below 100, it's better for insurance companies. That is where the company has come out with the good numbers. Solvency ratio should be 1.5 times or higher, and that is also doing well. So dono tick hua, and overall the return ratios, I will be giving this a strong thumbs up as well. Apart from that, let's talk about return ratios, how things have panned out. And largely in an insurance business, you generally get something in single digit of return ratios. आप कोई peer को उठा लीजिए या कोई global peer को उठा लीजिए, ज़्यादा ROE नहीं मिलता. This business model is as such. It's at 3%, it's around 6.9, it's at around 6%. So definitely they might look for new venues, but it's a very stable model. So that's why I've given a neutral rating for this setup. And looking at the return ratios, the investment yield of this insurances, this is also very stable. So बहुत stable return ratios देखते हैं, तो there isn't much to look at here. Because of that, I will be giving this a neutral rating as well. So balance sheet and return ratios, both of them have been, you could say, in a neutral rating. But apart from neutral ratings, let's talk about shareholding, and nothing much has moved. Remember, Rekha Jhunjhunwala as a promoter, they are there and they haven't sold any stake. This is the last 2 years data I'm talking about, but there is a change. FI's favorite 27% stake, and then they have started selling 19% here, 15% here, and that's where the concern comes. FI's selling has intensified, but on the other hand, DIs have been lapping from 11, 15 and now 20%. So pretty much interesting, and it actually evens out what FI is selling, DI is buying, promoters are holding it steady. So steady moves in this shareholding segment. So I would be giving this a neutral rating. But apart from that, let's talk about the street cred, how much money has been made. Of course, if you're a long-term investor who is holding it for the last 5 years, IPO के बाद आपने profit देखा ही नहीं. That's the concern. 5 years, stock is down 39%. So the stock has tested the patience of the investors. But in the short term basis, if you have added your positions, January lows, stock is up 30%. And in the last 1 year itself also the stock has done well. It's up 39 odd percent. Fourth quarter business turnaround and a good technical setup is also coming in, at least for the short term positional traders. But long term basis, the valuations were pretty high on their IPO. That's what the street is concerned. So net it's a neutral rating. Valuations, look at that 5-year peak valuation, which was this is the peak, 8.5 times price to book. And even if you even that out, for the last 5 years the average is at 3.95 times, but now you see it's at 3.79. so the stock, after giving an up move recently, also is still below its 5-year average numbers when it comes to the valuation. So right now also valuations seem attractive. That's why I've given a strong thumbs up when it comes to Star Health Insurance. So let's talk about the analyst take. What analysts are talking about it. Remember, a total 23 analysts have coverage in this stock as per Bloomberg I have taken. In that, almost buy and hold, dono ko jod do, 83% of the analysts are still bullish on the stock. Stock has recently, gone up. And because of that, the target potential is almost near that market price of roughly 534 rupees per share. But net, the analyst community is quite strong, bullish on this counter. So there is a strong thumbs up when it comes to the analyst take. But let's do the revision for the KYC ratings, which we have got this company today. And this, of course, is good. Income statement, key ratios doing really well. And this fourth quarter, there was a good surprise coming from the company, and it also beat the street estimates. Shareholding and street cred, let's give it a neutral rating right now, but the valuations and the analyst take still suggest a bullish sentiment for this counter. So let's add up all the KYC ratings, and this comes to 6 out of 8 for the company, and it's pretty much interesting on the higher side, and it'll be pretty much interesting. And to understand more about it, we would be joined in by the management as well. But I had a conversation with the management. Do listen in. We are having the CFO of the company, Nilesh Kambli. Good afternoon, Nilesh. Always a pleasure to speak with you. A very strong turnaround in this quarter, which we have seen in terms of numbers, especially the loss ratio is something which I have seen. Just could you give us the key details about what led to this strong performance?
Thank you for having me on the show. Q4 traditionally has been a great quarter for us. This year, more so with the various initiatives that we have taken. We have been talking about price increase in our portfolio. We have been talking about underwriting guidelines, which have been strengthened. We have been talking about quality of the business with the strengthening of underwriting guidelines. We have been talking about claims initiatives in terms of preventive and wellness measures like home healthcare, telemedicine, condition management program. All these initiative started since the last 4 to 6 quarters, and that has started to give us results consistently. If you see the loss ratio, it improved in quarter 2 by 80 basis point, quarter 3 by 100 basis point, and we see a improvement in quarter 4 as well. And we believe, with the kind of initiatives that we have taken, we should continue to see a gradual improvement in the loss ratio.
All right, so gradual improvement in the loss ratio, that's the guidance coming in. But just to put in perspective, what are the targets have you set internally, or if it's in public, for FY27 for your key parameters to be tracked?
See, we are not giving any short-term targets. What we have mentioned is by FY28, we'll have a profits around 2,200 crores, which is an ROE of mid-teens to high teens. We believe we are well on course to achieve that profitability target with a mix of a healthy combined ratio and investment return.
Important data or the number which you should be tracking if you are tracking Star Health. But apart from this, there has been a revival of the new business. I've seen in the numbers also, the new business numbers have been really strong. Is this because of the China diversification, and will this continue for this diversification in the next 2 to 3 odd quarters?
See, we believe, the GST reduction has given a good boost to the industry, and we believe structurally, the growth will continue for the entire industry. It will slightly taper down compared to what the growth rates that we saw in Q3 and early part of Q4. But we believe on a steady state basis, a mid-teens to high-teens growth in retail portfolio is something which will be experienced by the industry with a mix of both volume and value growth.
Right, and I was just checking your numbers. There is, of course, the accounting. If you know, there is GAAP, there is IFRS also, and the way your PAT numbers are there, looking at those numbers, it goes after the adjustment post, a stronger 1,000 crore rupees. I just want to understand a little bit about this migration which is happening from your accounting estimates, and by when we can see the normalized numbers, you will start reporting. Will it be the next financial year, or side by side both of these, reportings will happen, both of these accounting treatments?
Yeah, a very good question. IRD has now made it mandatory for IFRS to be or Ind AS to be implemented. They have given an option either 1st April 26 or 1st April 27 for companies. We are going ahead and implementing IFRS effective 1st April 26. Our official set of numbers, which will be regulatory reported, will be 30th June 26. So there is no confusion at all. We started this process since the last 2 years. On a quarterly basis, we have been reporting our Ind AS financials, which will now be official effective 30th June, and that is what we have always maintained. This is an accounting norm which will reflect the true set of profitability for insurance companies, and that is a welcome step from the regulator. In terms of FY26, we see that our underwriting profit is very strong, and based on the normalized investment yield, the normalized profit is 1,200 plus crore, which is a 13% ROE for FY26.
So these are the numbers even I was checking. So it's pretty much, of course, the accounting treatments are there. So one should take that as well in your analysis and your investment objective as well. And once that happens for the entire insurance industry, then definitely we'll have more buyers, and the Indian industry, the insurance space will have a good chance of re-rating. But I was just checking, brokerages did raise a little bit of concern. The fourth market, in this fourth quarter, there was a market share loss in the retail health segment. Is that pertaining in this quarter also, and what's the outlook ahead for this?
One has to look that Star Health has a 31% plus market share, and it has maintained this market share in the last 4-5 years in spite of competition, in spite of new players coming in. And we have been focusing on growth with profitability. We just don't want to grow for the sake of growth. With such a healthy market share and a growth rate of close to 20% in retail health, we believe it's the right strategy to go forward. And the market also will normalize around 15 to 18% growth rates, and we are well positioned to maintain that growth rate. So we believe we'll be 30% market share in the near future as well.
Pretty much interesting. And of course, the street is expecting some calibrated price hikes also, because medical inflation is also at play. So can we expect some kind of a price hike, or are you going to wait it out at least for a couple of more months?
See, we have maintained that, price hike will be an annual affair. We have seen in the past, when you take a price increase after 3 years, a 20-25% price increase is something which is not appreciated by the customers, and it's very heavy on their pockets as well. A small annual price increase is something which is preferred. We have tested that in the last year. The results are really good, and we believe that that strategy of price increase will continue in the future as well. This will help us to beat inflation, as well as it will be affordable to the customers as well.
I was just analyzing the company, and the brokerages also are bullish, especially in the net income claim ratio. That has improved, and it's better than ICICI Lombard, at least for their health portion. I just want to compare, don't want your view on your peer, but I just want to understand, industry leading numbers are coming in, and this will continue going ahead for this net income to claim ratio.
Yeah, I think the loss ratio is a function of the portfolio mix, the retail versus group portfolio, and I think one has to focus on the overall combined ratio also, because a loss ratio with a higher expense ratio will not be beneficial. So I think it is company specific. It is based on the portfolio maturity, the portfolio segments in which you operate, and it's very difficult to compare across the sector. But we believe we have one of the best in class combined ratio, and we'll continue to improve on that.
Right, and the company has got an underwriting profit. That is a very important technical parameter to track. But apart from the technical portion, AI and digital aspect. That is something which your company is also focusing on. But just explain us, just to give us, you don't need to give us numbers, but explain us the AI. How much is it changing for the company and for the industry as a whole? Because this is a very important portion, especially on the insurance front as well. So how are you deploying it, and what benefits are coming?
So in terms of deployment, we have just initiated and we are starting to deploy it. But yes, across the segments, across the business verticals, it will make a lot of difference. To give an example, in the digital business where we use telecallers, we believe a lot of that work can happen through the AI. Customer service, we deploy more than 500 people. A large portion of that can be handled through AI. We do a lot of claims processing. We process more than 25 lakh claims. And with the help of AI, along with human interventions, we can reduce the errors which happens and, provide a best-in-class customer service. So, and at speed, which is not humanly possible with the kind of tag that we have to adhere to. So across business segments, across verticals, we believe AI can make a big difference. We have started in a small way in each of these sectors, doing POCs, but we believe we should be in a better position to implement it as we move.
Well, that's the management of Star Health, as they have, talked about the Q4 earnings and also importantly, their growth outlook going ahead. Of course, they haven't mentioned the FY27, but for FY28, they have given a good set of, growth outlook. And remember, there's an accounting adjustment also at play. That means they will be coming to the new accounting standards, the globally accepted ones, from 1st April 2026. So it'll be pretty much interesting to talk about that. And the operational parameters, if I talk about it, that has done well. And the loss ratio, which I'm sure you must have known by now, that has done really well. So bullish commentary and a stable business, and definitely a good up move coming in recent times. And right now also we are seeing a good movement in the stock prices. So that's all, folks, for this company, in a very stable company, but net it is a very strong move coming in, especially on these numbers. So that's all, folks, for KYC. Stay tuned to NDTV Profit.
Presented by Canara Bank. Together we can.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show, just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Powerful Tech Guru.
Whoa, I'm no guru.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. What do you do for your short-term requirements when you have to park money and you don't want to leave it lying in your savings bank account? You've probably seen a lot of stories that tell you that's the worst thing to do. But you need to have it accessible as well, right? So a lot of people have talked about arbitrage funds, they've talked about liquid funds, they've talked about things like income plus arbitrage funds. But there was a change in the way that derivatives are treated in terms of the cost that is paid. And so does that change the math for you and how much arbitrage funds will yield? Let's ask Vishal Dhawan, who is the founder and chief executive officer of Plan Ahead Wealth Advisors. Vishal, thanks so much for taking the time. So let me first ask you to describe how each of these products works and why we're talking about arbitrage funds having a lower return expectation than before.
Thanks, Alex. It's a pleasure to be here as always. So I think there are two things that are important to keep in mind. One is the budget that got presented, a couple of months ago, did increase the cost of the way STT would get charged on futures and options, as a result of which arbitrage funds, which tend to use a lot of F&O derivative transactions, automatically saw a possible increase in expenses because of the frequent trading that they end up doing in that segment. The expectation is that that would probably end up impacting the cost by somewhere between 0.2 to 0.35% per annum. So clearly, that's one sort of impact that is coming through. I think there's a very important other thing that happened, which started a little earlier, that arbitrage returns tend to be very linked to interest rates in the economy. And therefore, if you go back in history and look at the returns that you made on arbitrage funds 2 years ago versus the returns that you made in the last 1 year or so, you'll find that there has been about a 1% shift in arbitrage returns downwards. And while a lot of people may end up attributing it only to this cost change, the bigger reason is the fact that interest rates have come down. And because interest rates have come down, and arbitrage funds tend to park a part of the money in debt kind of instruments, depending on what are the alternatives available, there's been a natural progression downwards in terms of expenses. So these two have combined together to actually reduce arbitrage returns. So the costs are a smaller segment as compared to the overall return impact.
Okay. So that's interesting. So that's the latest. But for those people that are unaware of how this works, let's run through how each of these works. And there are three products that we're primarily speaking about today. One is your liquid funds and your ultra short-term debt funds. Then there is the arbitrage funds, which a lot of people had started preferring because of the equity taxation. And then there's the income plus arbitrage funds, which have that fund-of-fund treatment, by my understanding. Vishal, please correct me if I'm wrong. And so therefore the tax treatment is not as adverse as your fixed income funds.
That's correct. So I think, there are two aspects to it. One is, what is the kind of holding period you should have on this money that you have kept aside for shorter term needs to get the tax benefit? And the second is, what is the product design itself aligned to? So if you look at liquid funds, for example, they're typically designed for money which is being kept for a few weeks, most often, because most liquid funds will have an exit load up to 7 days. So if you have money, for example, for just a day or two, you may not find the liquid fund very efficient because it has an exit load. What a liquid fund does is it goes and invests in very short-term and money market sort of instruments. And the returns there will largely come from the interest income that these instruments actually generate. And therefore, they're a good place to park emergency funds where you don't know exactly when I will require the money, but I expect and anticipate that it'll be a few weeks to a few months. In contrast, if you look at the arbitrage funds, what they're actually trying to do is find equity arbitrage opportunities, which means that if there is a particular stock in the cash market and another stock in the futures market where there is an arbitrage available between the two, the fund manager will try to lock in this arbitrage by buying in cash and selling in futures simultaneously. So the intent is to try to not take risk of directional movement of the markets, but simply lock into the game at that moment. Now, when that happens, the typical sort of impact is that the volatility tends to be much lower, because if you're a fund manager and you don't find these opportunities, you may end up then parking it temporarily in debt instruments itself. Now, because of the tax treatment in these instruments, which become long-term after a 12-month period, and then get taxed at equity levels, which is 12.5%, you will typically find that these instruments are ideally suited for 1 year plus if you're doing it purely for the tax reason. But even if you hold it short term, and these are not instruments which are designed in our view for 1 month holding periods, but you need to have at least a 3 to 6 month holding period before you go to an arbitrage fund. If you went there, you would still get a short term tax. And the short term tax for someone who's in a high tax bracket is only 20%. Whereas if he parked it in the liquid fund, it would actually end up being at the marginal tax rate, which could go up to 30, 33, 35%. The income plus arbitrage product basically tries to combine debt plus arbitrage opportunities together. It's a very interesting proposition for a lot of investors in the higher tax bracket because, like you rightly mentioned, Alex, because of the way it's structured as a fund of funds, it gets the benefit of a long-term capital gain treatment. The only difference is that the holding period needs to be at least 2 years to get that 12.5% long-term capital gain. So very clearly, depending on what time frame you're going to hold each money for and which tax bracket you are under, the choice between liquid arbitrage or income plus arbitrage may vary.
Yeah. So first and foremost, what do you need the money for is the question you need to be asking. And Vishal, most people don't ask that question before they invest in anything, which is why we're doing this program. But having said that, beyond these three, there's also hybrid SIFs, which is something that has been launched in the recent past. Can you describe how they work and how they're different from what you've described already so far?
Yeah, so I think the important thing to remember is that the specialized investment funds or SIFs are not really simple cash parking instruments. They're basically designed as income generating strategies where essentially you use a combination of arbitrage and fixed income on one side. And then you also try to see if there are some selective opportunities available in derivatives or in the form of, special situations, which might create some additional opportunities to make returns. So the idea here is, how do you get a return which is higher than a traditional arbitrage fund, but keep the volatility low as compared to the traditional hybrid fund, which normally had exposures in equities which were anywhere between 30 to 40% going all the way up to 70 to 80%. So they are very different because of the way they are structured. Like you rightly pointed out, these are products which are relatively newly launched. Because they're relatively newly launched, you don't have a lot of live track records to go by, though most of them would have some sort of back testing data which would be available. But you need to keep in mind that a lot of what you see on arbitrage funds or income plus arbitrage or on liquid funds has already got demonstrated in a live environment, whereas a lot of what you see in hybrid SIFs is essentially back tested data and some data because the oldest hybrid SIF is now roughly about 6-7 months old. The advantage of the hybrid SIF is that it also gets equity tax treatment. If you hold for more than 12 months, it will be taxed at 12.5%. And it also allows you to come in with very limited sort of minimums because the minimum investment in a hybrid SIF or any SIF is 10 lakh rupees, which is higher than what you would give in a mutual fund like an arbitrage fund or an income plus arbitrage or a liquid fund, but lower than traditionally where people went to these kind of arbitrage instruments, which were essentially alternative investment funds or what are called AIFs. And what it's done is it's created a category in between where these sort of instruments come in. So I think the way to think about this is it's an in-between product between a more large value, high net worth oriented AIF and a traditional mutual fund that you would normally use. But it's clearly not a direct replacement for an arbitrage fund, for example, because it's trying to do something different because it's using derivatives, equity, debt, all of this together in one single structure to be able to try to get you a more appropriate risk adjusted return.
Okay, so let's put this in that framework of a time that you should be willing to hold for. If you talk about liquid funds at the absolute base, describe the entire landscape for us, Vishal.
Yeah. So we would say typically liquid funds for a few weeks to a few months. Look at arbitrage if you have at least a 3 to 6 month investment horizon and longer. Look at the income plus arbitrage category if you have a 2-year plus investment horizon. And look at the hybrid SIF category if you have a, in our view, 2.5 to 3-year investment horizon, simply because there is no track record there. And therefore, even if there are some months in which things don't go well for the fund managers, there is enough time for a recovery to happen for you to be able to get the optimized sort of rate of return adjusted for risk on this portfolio.
Okay, so that's well put. The other thing to bear in mind, of course, is that if you are only investing in one specialized investment fund, in this case a hybrid fund, your minimum holding has to be that 10 lakh amount. You can't, unlike in mutual funds, you can't pull out a small amount of money. You have to maintain a 10 lakh limit, right?
That's correct. So it is targeting a very different segment because the product is more complex. So I think we need to understand that the architecture around SIFs has partly been designed around the fact that it is assuming that the investor coming in there is more aware, has a higher tolerance for downside risk because there is derivatives being used. And there are guardrails which are being put on the side to ensure that the investor is not taking unbridled risk or the fund manager is not taking too much risk in this entire process. One of the very other sort of important things, if I may add to this, is also that because there aren't so many track records, you may end up having more than one hybrid SIF in your portfolio. Unlike, arbitrage or liquid or income plus arbitrage, because there you have track records to go by. You might decide that I'm okay with concentrating my money. Whereas in a hybrid SIF, because there's no track record, you may deliberately end up putting it across multiple schemes. And that essentially means 10 lakhs plus 10 lakhs if you want to do 2 schemes, for example.
Yeah, that's an important point. All right, so the relevance exists for what we've discussed in the first half. SIFs is more conditional, and of course you need to have a certain amount of scale of investment if you want to participate in that. Vishal, thanks so much for taking the time. Pleasure speaking with you.
Always a pleasure. Thank you.
All right, let's bring on board Mohit Gang, because there's another interesting conversation that we've got lined up, and this has to do with multi-cap funds. Now, we've spoken about several equity categories, but this is one that forces a fund manager to put a minimum of 25% into small cap, a minimum of 25% into mid cap. And you've seen what happened to the equity markets in the month of April. You've seen a pretty sharp rebound across the board, but concentrated in broader markets as well. How have the top funds by assets under management performed? And is there a copy-paste of some of these flexi-cap funds into the multi-cap fund category? Let's find out and speak to Mohit Gang about it. Mohit, thanks so much as always for taking the time. Firstly, what are the top funds by assets under management, and what stands out about their functioning?
Hi, Alex. Always a pleasure to be speaking with you. Look, multi-cap is a very intriguing category, and it's not a very old category, and hence there are not many funds which have a pretty decent sized AUM. So in a way, it's a good category to be having in your portfolio because the AUM is a pretty neat and a manageable kind of AUM. But if you look at the top 3 funds out there, the Nippon Multi-Asset being the topmost fund in terms of the assets under management, almost around 46,000 odd crores. That's the largest in the industry. Then you have ICICI Multi-Asset, and you have Kotak ICICI Multi-Cap and Kotak Multi-Cap. These are also pretty decent size. ICICI is around, I think, 15,000 odd crore, and Kotak is around, my sense is 23,000 odd crore, roughly in that band, 22 to 23,000 odd crore. So these are the 3 largest. And then there are a few others ranging all the way from 2,000 to around 10,000 odd crore AUM.
So that kind of gives you a landscape. Think about it from this perspective, right? The largest flexi-cap fund has assets under management of over 1 lakh crore rupees. And so the scale is very, very different. The largest, of course, is 46,000 crore rupees, but then most of them are below that 20,000 crore rupee mark. So there's quite a bit of nimbleness that is possible, Mohit. You don't have the necessity of a very long tail, do you?
Oh, absolutely not at all required. I think that's what makes the category very fascinating, Alex, because the AUMs are manageable, as I said, and because the mandate of the category is to be at least 25% allocation in mid, small, and large, all three categories, and the remaining 25 to be allocated as the fund manager desires to. Because the mandate is such, they need to be nimble because they have sizable allocation in mid and small cap categories. Now, to be very good at mid and small allocations, you need to have a fund corpus which is manageable, which can move a little swiftly between categories and stocks, and that's what gives them that definitive edge over let's say a flexi cap category, which to my mind is an immediate competitor of this category.
Interesting. Okay, what stands out about the top schemes by assets under management and the fund managers and the styles that they have used?
Okay, look, so I think if you go with Nippon, I think Nippon is the flagship fund out there, managed by Sailesh Raj Bhan himself, who's the CIO equity for Nippon, and he's been at the helm for pretty long, I think almost 2 decades now, and maybe even more, right? And though he has 2 co-fund managers, but I think that's where Shailesh's style comes into play. I think he's always been more a mid-cap guy. If you see his past track record also, he has been great at selecting mid-cap stocks, growth stories, a little growth oriented, right, and growth at reasonable prices typically. So that's what his typical philosophy has been, and which has actually done very well. The track record is fantastic. Even at that large size of AUM, he's been able to navigate the market cycles beautifully well, right. So that gives Nippon by far is the largest in the category. Then you have ICICI and Kotak. Again, I think let's say if you were to look at Kotak, Kotak has 2 new fund managers. I think there is Devender Singhal, who's the main fund manager for this fund. But if you compare it with Kotak Flexi Cap, Alex, Kotak Flexi Cap is again one of the largest Flexi Cap funds in the industry. I think after Parag Parikh, perhaps Kotak will be the second largest in the industry in terms of AUM. So Kotak has that burden of performance on flexi cap and not so much on multi-cap. So multi-cap actually goes a little unnoticed under the radar, which gives it a slight bit of edge, which gives certain flexibility to the fund manager to do a little, deviate a little from the mainstream funds and not be index again, right? So I think that's where Kotak stands out. The AUM is quite manageable to a large extent. And then you have ICICI. ICICI has almost all the funds on the shelf. They're like a large departmental store, if I were to call it that. And almost all the funds are quartile 1 funds. Typically, if you track ICICI, they kind of just hover around the benchmark indices pretty neatly, right? So I think they do that benchmark tracking quite nicely. Plus, they believe a little more intently on the value philosophy because of S. Naren's overarching, being the overall CIO at ICICI. I think that gives the overarching value theme to the ICICI funds. And typically, if you see Indian markets for last 3-4 years, they have been more dominantly value cycle oriented than any other cycle. And that's what has given the edge to ICICI funds. And that's where the fund stands out. And as I said, the track record of these funds is not very old. So the recency bias of value cycle kind of holds good for ICICI fund.
Okay, so we've covered quite a bit of ground. The tendency, Mohit, is always to compare it with the flexi cap category. And my curiosity was whether there is a replication of portfolio at all. Because ultimately, the reason for the split, and some newer investors won't know this, but the reason for the split between multi-cap and flexi cap was because the regulator came in and said, wait a minute, you're not being true to label. Your flexi cap funds are like large cap funds, and so people were forced to have at least 25% allocation to mid cap and small cap, and that's how the multi cap was born.
Oh, absolutely, Alex. I think the problem with flexi cap is that they're becoming almost like large caps, right? So today, if you don't want a client to have a large cap allocation, you can very well live with a flexi cap allocation, and that will suffice for large cap. There is hardly any flexi cap which is overweight mid and small and underweight large today. So I don't think so. There is any scheme in the market today which does that or which goes very actively in the mid and small space. They've all been pretty much large cap oriented. The large cap allocation hovers between 60 to 80% in most of the flexi cap funds, right? So the gospel out here, Alex, is that you never pick a flexi and a multi-cap fund from the same fund house. There can be cases where the replication is extremely minimalistic, but still the style bias, the philosophy behind it, I think pretty much is identical, and then there is no real diversification to be earned when you take a flexi and a multi of the same fund house. Just to give you some numbers out here, let's take the overlap which is highest in the industry. I think my analysis shows that it's Edelweiss multi-cap versus Edelweiss flexi-cap. I think the fourth funds have almost 65 to 70% portfolio overlapping, right? So there is absolutely no merit in having the two. The second highest overlap which I see is on Axis, Axis multi-cap versus Axis flexi-cap, both having almost 40% identical portfolio or overlap. Again, 40 is too high to be having these categories from the same fund house, right? All the other funds, Alex, the three largest ones, Nippon, Kotak, and ICICI, they're between 21 to 30, right? So Nippon is at 25, if I'm reading it correctly, Kotak is at 27, and ICICI is at Aditya Birla is at 21, right? So, I missed out, Alex. I think Aditya Birla also has a pretty large flexi cap fund in the market, which is again their flagship fund, right? So the overlap is around 20 to 30 odd % within these categories also. That's not very high. It is a bearable overlap, but again, the style overlap is pretty high. The way these are managed is pretty identical. So I would rather refrain from having these two funds from the same fund house.
Okay, just to complete then, and Mohit, the category has been finding buyers. There are people who've been investing in it because it offers you that edge if you want that allocation to the mid and small cap category without buying a mid cap fund or a small cap fund directly, right? So should this form a part of your core? And if you are to allocate right now, should you go ahead and start a SIP or double down on your SIP in the multi-cap category?
Okay. Yes. The clear answer is it should form a part of your core portfolio, Alex. I think having a fund which encompasses large, mid, and small with a very, very defined targeted proportion of 25% each, and then going a little overweight on whatever the fund manager deems appropriate is, I think, a great pick in the portfolio. I would any day prefer a multi-cap over a flexi-cap in a portfolio. Flexi-cap to me is identical to large cap. So you have a flexi, you have a large. I think you are more or less sorted in that category, right? So having a multi-cap gives me that extra edge, a little extra aggression in the portfolio. If I am a long-term investor, okay with a little more volatility, want a slightly higher return profile from my investments, then I will go for a multi-cap fund, pretty much. There was a second part to your question, Alex.
Which is that if you are to deploy right now, should you double down and should you increase your allocation to this?
Oh, absolutely. Look, for some time now, we've been pretty bullish on mid and small cap cycle coming back in India. To start with, we were not so keen on the small caps when the year started. I think we've changed that stance last month on, and both mid and small are now pretty much good buys at whatever valuation they're quoting. So if you see April month alone, I think the small cap index, the small cap 100 index has rallied almost 17% NX, which is to my mind the third highest rally in a single month in small cap indices which our markets have ever seen. So there is a sudden chirp and bounce back in mid and small cap segments, and an investor cannot be always very conservative, hiding behind the cocoons of flexi and large caps. If you are a long-term investor, you need to have mid and small cap. If you are not completely having those by virtue of having single mid and small cap funds, then you need to at least have a multi-cap fund. So the clear answer is yes, double down on your SIPs on the multi-cap segment, at least if you haven't had separate SIPs running for mid and small. But if you have separate SIPs for mid and small, then might as well proportionately increase all the three categories.
Got it. Got it. All right. So that gives you a sense of how the multi-cap category is functioning and what you should do. Mohit, on that note, thank you so much for taking the time. Pleasure speaking with you as always.
Thank you, Alex. Thank you.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and don't forget to tell us what you think. If there's a specific topic that you'd like us to cover, then let us know in the comment section and we'll pick it up. This is TV Profit.
Brought to you by SBI, the banker to every Indian truly.
वैसे रिस्क प्रोफाइल के हिसाब से मुझे इक्विटी म्यूचुअल फंड्स में इन्वेस्ट करना चाहिए, पर स्मॉल मिड लार्ज इतने सारे सेक्टर्स समझ नहीं आ रहे हैं इन्वेस्ट कहाँ करूँ।
मल्टी कैप फंड, इनकी मदद से स्मॉल मिड लार्ज तीनों मार्केट कैप्स में एक साथ आसानी से इन्वेस्ट कर सकते हो। अगर एक फंड से मल्टीपल सेगमेंट्स और सेक्टर्स में आसानी से इन्वेस्ट करना है तो तुम्हारे लिए मल्टी कैप में निवेश हुआ।
सोचा समझा निवेश।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना से संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
अरे बेटा, ड्यूलक्स है और उसकी वारंटी तो और भी शानदार। पेंट से भी शानदार वारंटी, से शानदार पेंट से शानदार वारंटी, से शानदार पेंट वारंटी।
ड्यूलक्स, डिसाइड करना मुश्किल हो जाएगा कि पेंट ज्यादा शानदार है या उसकी वारंटी।
बोनस म्यूचुअल फंड्स में इन्वेस्ट रिस्की है ना?
ऑनलाइन शॉपिंग करती है ना सब डिटेल्स चेक करके। वैसे ही इन्वेस्ट करने से पहले रिस्कोमीटर मुझे फंड का रिस्क दिखाता है और रिस्क प्रोफाइलर अपनी रिस्क टेकिंग कैपेसिटी, यानी रिस्क है
लेकिन सोचा समझा रिस्क।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
सवाल ये नहीं कि खबर क्या है,
सवाल ये है कि किस पर भरोसा है।
फर्क होता है खबर में और उसकी कहानी में।
हम कहानियां नहीं सच दिखाते हैं
और वो हमें बनाता है
भारत का विश्वास।
Do you think that the traditional working systems are capable of at least expanding at the pace at which AI is perhaps, expanding?
There's a massive data explosion that's happening. So we're seeing data being created in ways that we've never seen before, in sizes we've never seen before. Why doesn't every security practitioner know why it's important to have security at runtime? We need to evangelize this.
देखा, म्यूचुअल फंड्स रिस्की है।
हाँ, लेकिन जैसे तू अपनी कैपेसिटी के हिसाब से वर्कआउट करता है, वैसे ही रिस्क प्रोफाइलर मुझे अपनी पर्सनल रिस्क टेकिंग कैपेसिटी बताता है और रिस्कोमीटर फंड का रिस्क बताता है बिफोर आई इन्वेस्ट। यानी रिस्क है
लेकिन सोचा समझा रिस्क। म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
अब आ गया न्यू योनो, जो देगा फिंगरप्रिंट या फिर फेस आईडी से लॉगिन करने का पावर। न्यू योनो देगा पावर टू एवरी इंडियन। Brought to you by SBI, the banker to every Indian.
बोनस म्यूचुअल फंड्स में इन्वेस्ट रिस्की है ना?
ऑनलाइन शॉपिंग करती है ना सब डिटेल्स चेक करके। वैसे ही इन्वेस्ट करने से पहले रिस्कोमीटर मुझे फंड का रिस्क दिखाता है और रिस्क प्रोफाइलर अपनी रिस्क टेकिंग कैपेसिटी, यानी रिस्क है
लेकिन सोचा समझा रिस्क।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
We
We are now joined by R.C. Bhargava, Chairman of Maruti Suzuki, to talk on the results and more. Sir, firstly to start off with, crude prices continue to remain high. Now, at this moment, the impact of the same has not been passed on to consumers. But if petrol prices increase, what could be the impact of that? Historically, has Maruti seen any impact on demand whenever retail fuel prices have shot up?
Normally, petrol prices or diesel price increases have not had any sustainable impact on demand for cars in the past.
Okay, speaking about the commodity cost, now until March, commodity cost for the company was largely benign because of the war. But now I believe company will start seeing the impact of higher aluminium, copper and steel prices. What could be the impact of the same on the margins? And if you don't pass it on to consumers, what kind of price hike would you require?
No, that's not correct. If you look at our last year's accounts, it's the commodity prices last year which resulted in a 2% increase in the material cost as a percentage of sales. And so prices last year actually were adverse. This year, we are considering the whole matter. We haven't taken any decisions yet, but we have to take all factors into account as to the war, the impact on prices, exchange rates, what will happen, and then we'll take a decision on what should be the price. I can't give you anything more exact than that.
Right, sir, but I was specifically focusing on the war. Because of the war, the increase in commodity prices was still not impacting Maruti in fourth quarter. But starting Q1, will that lead to increase in cost?
The war impact has still not been fully felt at all. You know, the war has mostly affected the supply of goods passing through the Hormuz Straits. And fuel prices have gone up generally.
But sir, aluminium prices have also increased because of war, specifically in that time period. So won't that have any impact on Maruti's margins in the first quarter?
I am not able to give an answer to that question straight away because I don't have the data.
Now shifting focus on the demand, post GST cut, passenger vehicle was seeing a double-digit growth. Now second half was great on the back of that, but April month registrations have been in low single digits. So is it that the GST-related benefits are now largely behind us?
No, you please remember also that when there is a waiting list of 190,000 cars, customers are reluctant to register and then say, we'll have to wait 1 month or 1.5 months or more than that to get their cars. So one of the conditions for demand to be steady and strong is that waiting list periods have to become reasonable. Which happen gradually now. But I don't think demand has decreased.
So you mean to say that GST-related benefits are still not behind and we could continue to see double-digit volume growth?
We are expecting double-digit growth, 10% growth this year also, yes.
Right. So the 10% is your FY27 volume guidance. Also, if you could give us some understanding on the extent of order book of your products?
The order book, as I said, we have 190,000 cars which were pending at the beginning of this month. And that hasn't changed very much in April. So, and of that 190,000, 130,000 were cars which were in the 18% GST bracket. More than 2/3 were in the GST bracket of 18%, small cars.
When it comes to the export market, we have seen a decent performance in FY26. But when it comes to FY27, what is your target and any newer markets that you're looking at?
We have to keep adjusting because of the war. There have been certain changes in the demand pattern. And there have been areas where we will be exporting afresh. So all in all, this is not something which is fixed forever, but we expect that the total exports this year will be very similar to what we exported in 25-26, for about 4.5 lakhs.
And because of the war, was there any delay in shipments for Africa and Europe market?
Nothing significant so far. The exports to the Gulf area have stopped. They've just recently, I believe, resumed for Saudi Arabia. But at the moment, the Gulf countries are not taking cars.
And Gulf would be what percentage of your total exports?
Not a big percentage, but it's being made up with other places, no?
Okay, just one question on the financial side. Now, other income declined significantly both on YOY and Q-on-Q basis. What is the extent of MTM losses, mark-to-market losses in this?
No, it's not a loss. It's a market and it's an impact of mark-to-market. As you know, the rules require that your investment should be marked down or up depending at the close of the month. And most of our investments are debt instruments. And debt instruments fluctuate depending on the yields on those. Recent times, the yields on securities have gone up substantially. Therefore, the interest rates and the value of their value has declined. That is what is reflected. But this keeps changing. It's not a real loss in any sense.
Thank you, Mr. Bhargava. Thank you for joining us and giving us the way forward for Maruti. Well, the 10% volume growth is the key takeaway coming in from Maruti for FY27.
Welcome to NDTV Profit. My name is Varsha. Well, Dr. Reddy's is in focus. This is on the back of company's semaglutide approval in Canada. Investors were waiting for this approval though. Health Canada has authorized a generic semaglutide injection by Dr. Reddy's lab. Now, to speak more about this and what is the opportunity lying ahead, we are here joined by Mr. Erez Israeli, who is the CEO at Dr. Reddy's lab. Well, sir, welcome at NDTV Profit. Always pleasure to have you. Starting with the Canada, which is the first major regulated market to greenlight a generic semaglutide, how significantly does this Health Canada approval accelerate your filings in other, non-G7 markets like Australia or UK?
So very significant. First, it's a great recognition by a very respectful health authority. So we have a deep respect for Health Canada and for the way they conduct their applications and registration process. It's obviously the approval in India, which was very, very important for us as well as Canada, allow us to use this approval with the registration process in the other markets. Eventually, we want to get for more than 90 markets, including the 2 markets that you mentioned. The last one will be in the United States when the patent will expire.
And you've also stated a goal to launch in 87 countries by 2026. Now, with the Canada approval secured, which specific emerging markets are now the immediate priority for the next 12 months?
Yeah, no, we targeted and we are in the process of all those markets, using both the Indian approval as well as the Canadian approval. Notable markets will be markets like Brazil, Turkey, markets in Southeast of Asia, market in Latin America. Basically, every market that from IP standpoint, from patent point of view, we can launch a product.
Right. And Mr. Israeli, talking about the competition, as more companies are expected to get the approvals, but you are amongst the first in the G7 market, how much of a timing advantage do you realistically have before competition can catch up?
I believe that the market in Canada will be competitive relatively soon. Not that many players, but we are not expecting to be alone. Having said that, it's not an easy product to get approval. So we are going to see a period of time in which there will be relatively less competition. And obviously, as time will go by, more and more companies will get it. At the same time, we believe that the demand for the product, especially when there will be more affordable prices, will increase as well. So it's a very nice opportunity for actually quite a few years to come.
Right, but on that note, sir, with 5 to 6 players expected, how a sharp could price erosion be over the next 2 to 3 years, if you could, highlight us?
So I don't know exactly how steep will be the price, but it will be a normal generic in a way, as at least in Canada, the price is linked to the reimbursement price. The reimbursement price, when more than 3 players are coming, is normally going down around 75%. So I'm assuming that something similar will happen also to this product.
Right. And Mr. Israeli, when it comes to the target market share, what is the expected or, your target market share in Canada in maybe, in next 12 to 18 months?
As I believe that there will be at the beginning 1 or 2 generic players plus the innovator, we should have a very decent market share. We are preparing ourselves to serve even up to half of the market if will be needed. I don't know if we'll get that, but I'm assuming that it will be a significant market share, more than you normally get, let's say, when the market is more crowded, let's say, number of players. So let's say any number from 25 to 50% will be very reasonable in this case.
Right. And also, sir, I just wanted to highlight on the Brazilian market also, as the, regulatory body has rejected a registration request for generic sema version. Your views on the same, what's the next update, if you could give us on the Brazilian market?
We will be in Brazil, for sure. We got the comments from the Anvisa, and obviously we will work on them, and we are working with the partners in Brazil, and I believe that we will get approval in the next coming months.
Okay, understood. So in India, you're setting up the Obesity Center of Excellence. Is this a strategy, you plan to export to markets like Brazil or Turkey to, build brand loyalty before the generic wave hits those regions?
Yes, just in those markets, we will not do it by ourselves, we'll do it with partners. Naturally, we are an Indian company and we have the capability to do that in India. In the other markets, we will have to do it with the partners. But it's very, very important for us to address both diabetic as well as obesity. And we just need to remind everybody, we will not launch eventually only generic version of Ozempic. We will launch also Wegovy, as a generic version of Wegovy, as well as generic version of the oral product. So altogether, we believe that obesity is very, very important phenomena that we want to help, of course, to manage for the entire humanity, actually.
Right. And so also, how critical is your partnership with Nestle, for specialized nutrition in the success of the SEMA launch? Are you positioning Dr. Reddy as a metabolic health company rather than just a drug manufacturer?
Nutraceuticals are very important for us. We said that we want to be even the #1 player in nutraceuticals. We have a great brand, Celevida, for diabetic in India. We very much believe in it, and we'll absolutely use that. That brand is under the JV that we have with Nestle. So yeah, the combination, we want to address not just the drugs, but also everything that can help patients to be healthy.
Right. And, so oral semaglutide is a game changer. Now, the Canadian approval is for the injectables. How far behind is the oral, semaglutide pill version? And do you expect to be the first generic player to launch the oral format in maybe next 2 to 3 years?
I don't know if we'll be the first, we will try, but for sure we'll be one of the first, and we are about less than 2 years away from that.
Right. And sir, also with, Revlimid revenues expected to taper off after FY26, do you see GLP-1 portfolio, including semaglutide and liraglutide, filling that multi-$100 million earnings gap?
I believe that this is a group of products that will grow a lot. And the reason for that it gives a certain benefit to patients that the other groups believe in that way. So yeah, about the size, it also depends on the pricing, but for sure it's a growth engine and a growth category, no doubt about that.
And sir, how central will be semaglutide for Dr. Reddy's in the next 3 to 4 years?
It's going to be an important product. For sure, one of our top products in the next coming years. This and our biosimilars together will be a major and significant growth engine for the company. But more than that, it is allowing us to invest more in the peptide in general. So our growth is peptides, biosimilar, consumer health, and innovation. So semaglutide is a very, very important pillar in that growth trajectory and a growth strategy.
Right. And so lastly, before I let you go, what is the price point or price range of this generic version in Canada that you'll be launching?
We are now discussing it with the customers.
Okay.
But it will be normally, as expected, there will be less competition. The price should be higher at the beginning, and as competition will increase, it will go down accordingly.
All right. Well, thank you so much, Mr. Israeli, for joining us and having a conversation with us. And congratulations for the Canada approval, and all the best for the business.
Thank you so much for having me.
Nirav Sheth, CEO Institutional Equities at MK Global Financial Services, with us on the show. Nirav, thanks for joining in. Could it be sell in May and go away for Indian markets, or will it be difficult to predict May until we know the resolution of the conflict?
I don't know why we are even keen to predict what happens in May, right? So you made a point that, we can't necessarily call out the resolution of the conflict. And the channel that it hits us through is obviously the capital flows and the current account deficits because of what happens to the oil prices. But I think the general expectations of the market is that, there'll be a resolution sooner than later, because if you look at the last I checked, the December crude futures, they were trading at about 74. The current Brent prices are about $110 and all. And it's very asymmetric. I've held this view for a long time. So far, I've been wrong. Right, so it's not that Iran is trying to win the war, right? They're just trying to have a saving face so that once you called out ceasefire for good, the current regime has legitimate reasons to rule, right? So so I'm in an optimist camp. You still have earnings growth in the region of about 12% for FY27. Trading at roughly about 17 odd times, which is lower than last 5 year historical averages. So I'm fairly constructive on the markets, Neeraj.
Interesting.
And I mostly am.
But Nirav, the point being, the telltale signs are not necessarily the most positive, because two things, right? Three things actually. We don't know when the conflict will end. Frankly, at best, it's a guess. Nobody quite knows. Brent, as we speak, is at 111, which is what it was during the worst period of the conflict in the last 30 days. So in some sense, no respite from crude either. And almost every FII that we speak to, or a broker who caters only to FIIs, says that their clients have a lot of options right now. They don't want to come to India because other markets growing better are available cheaper. Why should Indian markets do well?
Right. So I think, to get slightly into more details, right? So you can make a case that, for example, South Korea is cheap, right? Because earnings are growing very fast, and there's a part of an AI trade. So let me give you a sense, right? You can argue that TSMC or some of these memory companies, Hynix and all, they're trading at about 8 or 9 times earnings, around 30%. The variability in their margins is from 5% to 85% operating margins, right? Today you're operating at 85% operating margins, right? And therefore, to try and assume that you will have peak multiples on peak margins doesn't necessarily make sense. So that's the nature of the beast. It's like saying that Hindalco trades at 6 times EV to EBITDA. It deserves to trade at 6 times EV to EBITDA. I concede that unfortunately, India is not there in this AI space ecosystem. That is something that we need to find a solution to this, right? My personal view is that it is a tremendously path-breaking technology. We don't know when it's going to hit us, but it is surely going to hit us at some point of time in the future. To that extent, we are not a part of that AI trade. And my personal assessment is that it is not so much about growth. It is about the fact that we just don't have an AI play. And therefore, when you're talking about a $5 trillion market cap of NVIDIA, when you're talking about 1.5 trillion market cap of TSMC, we don't have a corresponding bet in the Indian market, right? And to that extent, I think, yes, will not be the favored market for the FIs. Now flip the question and think about it, that what are the options that the Indians have got? You got fixed deposit, which is sort of getting about 5.5–6%. Property markets are almost giving you a similar kind of returns. And in the worst case scenario, you end up going 9 or 10% in the Indian market. So you should not get too worried about where the Indian savings are going till the time we open up capital convertibility, which is not going to happen for a long period of time.
Okay, but
it's a cause of concern.
Okay, Nirav, okay, so good point. But so the argument, I think, my opinion, and so of course, it should not be that we don't have an option and so therefore we have to invest in equities. That is actually something that shouldn't come to pass. I'm just focusing on the 12% earnings growth that is being penciled in. I'm wondering, Nirav, if that is a little optimistic given what we know so far, and the fact that Brent is likely to stay elevated as per anybody's guess. At this moment, it's at 110 plus. So do you think that you might have to revisit that maybe towards the end of the first half?
Well, very possible. So one of the things that we want to keep in mind is that the 12% earnings growth we are talking about now for FY27 also comes on the back of the fact that my FY26 earnings have been downgraded to some extent, right? So also please try and appreciate the fact that, let's say this conflict were to continue for 3 or 4 months, then it's very likely that we will have a couple of percentage notches downgrade in the earnings. That doesn't do anything to my FY28 earnings. Please understand that. There is only so much valuation that you will give to my next 2 quarter earnings. A lot of the value for most of the companies will sit in terminal value, right? Unless you are making a case that India is a banana republic and then... So even if you take $110 today, the total hit to the government, right? If I don't increase my retail prices of the petroleum, will be close to about 3 lakh crores for the entire year. You are running a gap of roughly about 15 or 18,000 crores a month on petrol and diesel, and you add about another 8 or 10,000 crore that is coming because of reduction in excess duties that the government has taken. Is it a hit? Of course it is a hit. But can we take it on our chest and move on? Of course we can take it on our chest and move on.
Okay. To what extent, and Nirav, the follow-up to that is that the impact of this is going to be unequal, just as geopolitically, and if you look at it globally, the impact of the conflict is also unequal. If you look at higher energy costs, there will be pockets of resilience, relatively speaking, and there will be opportunities to be had as well. People have been talking about the energy transformation story as one of those. But the only point is that if you look over the last 1 month, the kind of rally that you've seen across the board in April means that if you're trying to deploy right now, quite a few of those opportunities don't look as mouth-watering as they did earlier.
Yeah, exactly. Because, a month back, you would have worried more about what is going to happen to the conflict. This is exactly what we are discussing right now. And there's a price to pay for that, right? So every time that you want to have more certainty, you'll have to end up buying something at a price which makes you slightly uncomfortable. But I'm in the same camp. I think electrification, renewables, these are big themes, and it's high time that India understands that. You are spending about $110 billion on oil. why would you not spend a couple of $1 billion in subsidy and try and, force feed the electrification story going forward? And this will happen as we move forward. So, yeah, you need to be slightly more, the point I'm trying to make is that it is during this period of uncertainty that you'll have to try and deploy the capital, right? So, we've gone through pandemic and see what has happened, right? You're nowhere close to what was happening in pandemic. So, and we'll have these kind of problems occasionally. It happens all the time. There's nothing new.
Okay, Nirav, we'll leave it at that. Thanks so much for taking the time out and being with us today. Really appreciate your time.
Thank you so much for having me, Neeraj.
Presented by Canara Bank. Together we can.
घर में नया काम करवाया है, पढ़ी लिखी स्मार्ट बहू जो आई है।
मम्मी जी, स्मार्ट तो आप हैं। घर में दो लक्ष्मी एक साथ ले आई हैं।
दो लक्ष्मी?
एक घर में, एक वहाँ ऊपर।
पीएम सूर्य घर।
सोलर भी तो घर की लक्ष्मी ही है, बिजली बिल जीरो जो कर देती है।
स्मार्ट है बहू मेरी।
सब ऊपर वाले की दया है मम्मी जी।
पीएम सूर्य घर मुफ्त बिजली योजना का लाभ उठाएं, 78,000 रूपए तक की सब्सिडी भी पाएं। अब बिजली बिल होगा जीरो। हर घर सूर्य घर।
यार ये हम कैसे भूल गए? किससे शुरू करना होगा?
वहीं से शुरू होगा। अब सबको मिलेगा ऐप से शुरू करके योनो नेट बैंकिंग पे कंटिन्यू करने का पावर। न्यू योनो देता है ओमनी चैनल बैंकिंग का पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
एक नए भारत की शुरुआत, a healthy nation, a healthy India. Possible with one simple habit, hygiene. Dettol बनेगा स्वस्थ इंडिया, unites us all.
लेकिन ये जिम्मेदारी किसी अकेले की नहीं, हम सब की है।
क्योंकि जब हाइजीन बनेगी हर घर की पहचान,
तभी तो होगा एक स्वस्थ और विकसित भारत का निर्माण।
I am the change.
I am the change.
I am the change.
I am the change.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Ankit Singh started a gym. For this, last year he took an interest-free loan of 5 lakh rupees under CM Yuva scheme.
मैंने मुख्यमंत्री युवा रोजगार योजना के तहत मैंने 5 लाख का स्टार्टअप लिया है, लोन लिया है। उसी स्टार्टअप के थ्रू मैंने ये जिम डाला है।
Rajkishore Kesharwani's shop was not doing well. Then he took a loan under the CM Yuva scheme and strengthened his business.
सरकार ये स्कीम दे रही है, वो तो हम जैसे युवाओं के लिए सबसे बढ़िया ऑफर है एक प्रकार से।
Around 1.5 lakh youth in Uttar Pradesh, like Ankit and Rajkishore, have benefited from this scheme so far.
CM युवा स्कीम के माध्यम से गारंटी मुक्त युवाओं को स्वतः रोजगार के साथ अपना कारोबार आगे बढ़ाने के लिए प्रारंभ किया है।
Under the leadership of Chief Minister Yogi Adityanath, this initiative is not only making youth self-reliant, but is also building a strong foundation toward making Uttar Pradesh an employment-generating state.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Good evening. You're with us on The Big Question here on NDTV Profit. I'm Vikram Oza. Tonight, we're putting that spotlight on the global oil map, as it were, which may have just been redrawn because now United Arab Emirates, the UAE, which is one of OPEC's most influential producers, or would I say was, has now decided to quit both the OPEC and the OPEC Plus. And with that now, the UAE is ending decades of coordinated supply and pricing discipline. So through their exit, Abu Dhabi is signaling that they are opting for more freedom, for more flexibility, and a rapid ramp up in production, most likely towards 5 million barrels a day. That's the likelihood. Now, in that scenario, just for context to understand this, OPEC still controls close to half the world's oil supply, and the UAE alone accounts for about 12% of that output. So you see it over there. After Saudi Arabia, there is Iraq, there is Iran. You're seeing there, the three of them on top, and then there is the UAE, which has been the fourth largest oil producer in the OPEC cartel, which means that its exit now dents roughly 15% of OPEC's production capacity. That's the size we're looking at, and it exposes fractures that are deepening within the cartel itself. So at first glance, for sure, this looks like a strategic windfall where India is concerned. And we're talking about the impact on India now. Why? Because for decades, cartel-led supply management of oil has meant higher and perhaps more rigid oil prices, something that the large importers like India have had to absorb. Remember the UAE, if you're looking at a map, and just pull that up, right now if you look, the UAE for India is the fourth largest source of crude oil. And this is after Russia at one level, and then you have Saudi Arabia, then you have Iraq as well. Ahead of the US, UAE is contributing a lot by way of crude oil for India. So now a UAE that is independent of the cartel could mean the injection of fresh supply at lower, at softer prices and easier access that does not have to go through the important one, the Strait of Hormuz, because that's the trouble area. When it comes from the UAE, India stands to gain because that's the trouble point. So again, India is the world's third largest oil consumer. This is important. Importing about 88% of our crude is the one that really defines how our economy moves. So any shift towards a more competitive oil market, on the surface, it looks like a buyer's opportunity. But here is the catch. Nearly half of India's crude and almost 60% of our LNG still flows through that important choke point, which is Strait of Hormuz. It's a very volatile geopolitical choke point in the world right now. And with OPEC unity crumbling, the Middle East tensions are rising as well. And the supply risks, the shipping risks are increasing. So cheaper oil is far from guaranteed. In fact, volatility itself may now be the biggest risk, even as we're looking at the UAE's exit from the cartel. So are we moving into a buyer's market, or is it simply a more chaotic, a more uncertain market? That's the question that we're asking, and it's right up there. As the UAE exits OPEC, the questions rise whether this is a net benefit for India or not, or is this going to look at a more chaotic oil market where price instability could be the order of the day? That's the debate that we have, and we've got a great panel to take this on. Let me introduce you to them. Joining us on the show is Mr. S.C. Garg. He's former Power Secretary to the Government of India. Joining us from Noida with a policymaker's perspective on what this oil shift means for India's economy and energy security. From the center of the Middle East oil story, we have David Roche on the panel. He's with us from Dubai, and he's a strategist at Quantum Strategy, getting us those insights into the geopolitics behind the UAE's decision to exit OPEC. For the Global Markets View, Aditya Saraswat is joining us. He's connecting with us from London, and he is Senior Vice President at Rystad Energy. He's going to break down the supply and pricing implications for us. And from New Delhi, Purva Jain is also on our panel, Lead Energy Specialist for Gas and International Advocacy for South Asia at IFA. And IFA is the Institute for Energy Economics and Financial Analysis, and she's going to give us a sense of what this moment really means for India's longer-term energy strategy. So I would suggest that you raise your hand every time you want to interject, perhaps disagree, or even add a point to any of the points that your co-panelists are making. But with that, let me go across to Aditya first in London. Aditya, with the UAE, which is now unconstrained by the kind of quotas that OPEC puts and is now targeting 5 million barrels a day, like I was telling our viewers, are we seeing the beginning of a kind of structural erosion of that so-called OPEC premium that importers like India have paid for decades now? Or do you think that's too simplistic and it's overstating the impact, especially on the oil prices?
Thank you for having me again, Vikram. I think it's not a collapse essentially, but then it's a meaningful compression certainly, because UAE accounted for 25% of their capacity. And with that being away, OPEC loses a major share of its ability to ramp up or pull back production to manage the market. So certainly, I think with a free market being availed with the fourth largest producer, as you rightly pointed out, it becomes much easier for importing countries like India to benefit from the prices of the grade which suits the Indian refiners the best. In the past, we were paying close to as much as $8 per barrel about non-OPEC price benchmarks, but that can very well come down. But all depends on how and when the Strait of Hormuz opens up, and that sort of reduced premiums can be realized starting next year at the very earliest.
Fair enough. David, just going with what you're hearing right now, what Mr. Saraswat is pointing out from the UAE, this kind of exit that we're looking at, does it reflect a purely economic calculation on the part of UAE, or do you think this is primarily a political rupture with Saudi Arabia that could actually redraw Middle East oil diplomacy and have a larger impact on oil importing countries like India?
Oh, it's both economic and it's political. The economic side is pretty simple. If you weaken a monopoly like OPEC, you end up by putting more product on the market at a lower price. And that's the good story for India. I don't need to expand on that. It's there, and I'm sure we'll be talking further about it. But behind this lies politics. There is a huge amount of resentment within the Gulf states against each other. There is a resentment against America for failing to defend them. And there is the shifting policy of not relying anymore on Saudi Arabia, but the UAE in particular is getting very close to Israel and the potential for Israel to play a big role in the defense of the UAE. Whereas Saudi Arabia is going with Pakistan as a nuclear power. So you can see that there's much more than simply oil. There's the fracturing of traditional relationships, which may not have given peace, but they did give some modicum of stability. Now, I think what we want to bear in mind about that is we have to make an assumption about who is going to control the Straits of Hormuz. If, as appears likely to me, but it's not a done deal, Iran ends up in control of the Straits of Hormuz, or at least the northern shipping passages, then essentially you've got two problems. The first is that Iran is going to be facing a fractured structure of Gulf states, which will be weaker. And that gives Iran a great deal of strategic autonomy to create more mayhem. The second thing you're going to face is that when all this is done and the United Arab Emirates is pumping more oil, you've got to remember that its pipeline, the Fujairah pipeline, can only take 1.5 million at the moment, and it might expand to 2, but that's about it. So the added oil we may all be adding into our economic equation may be under the control of Iran to actually get out of the Gulf. In other words, what I'm saying is fractured Gulf states on the one hand, a more powerful strategically controlling Iran on the other hand, means that these tankers will not flow freely. Right. And if they don't flow freely, then all the economic good news about more oil at cheaper prices doesn't ever leave the Gulf.
So that is a moot point, whether tankers are going to move freely or not. If you're going to have the strains that we do currently in the Strait of Hormuz, Mr. Garg, you know, for every $1 fall in oil prices, it saves India roughly 10,000 crore rupees. And you may correct me if I'm wrong, but does this kind of move by UAE, does it realistically give the finance ministry any fiscal breathing room, or do you think that is overstating it? Or does the higher volatility actually neutralize those headline gains if you go by what David is pointing out?
See, you don't start counting your chickens the moment somebody makes an announcement
Yes.
that it's exiting the OPEC. I think that's very premature kind of thing. OPEC is essentially a price-setting, price-controlling mechanism. It was set up for this purpose. Its whole function is, we all know the oil market, only 2 to 3% change in the supply situation can alter the demand-supply equation and can maintain the price. That's what the OPEC was doing. By controlling production in the times of excess supply and generating more production when the supplies are tight and the demands are more.
Yeah.
So at this moment, there is an enormous destruction of supply of about 10 million barrels a day. That's very high. The UAE capacity, spare capacity, is about 2 million barrels a day at best. You can't ramp it up. If there is a 10 million tons of oil supply shortage, even if the UAE can get 1.5 million barrels a day, it's not going to make any difference or much difference. So the whole thing we need to watch for is that how does the Strait of Hormuz behave? Do we have this choke point out? Does the world see a more demand-supply situation about the oil? Is there a free market or free supply situation? In that case, supposing for a minute that this gets restored in 2 months' time or 3 months' time, and the oil supply market becomes very essential, very normal. At that stage, the UAE's ability to pump in more than 1 to 2 million barrels a day can make a difference.
Right.
But be aware that the other OPEC members and even non-OPEC members are in the market. They sell oil for getting revenue.
Correct.
If the price is crashing, everybody loses.
Right.
UAE or anyone loses. So it's not that.
So there is no immediacy as far as the material gains are concerned from an UAE kind of exit of a cartel that we know as OPEC and OPEC Plus for the power it yielded, and indeed perhaps will, because yes, it is a crumbling, but the fractures, though they run deep, we still have them. So Aditya, if you're talking about the UAE ramping up production independently, and we're really raising a question on how much that can really move the needle when it comes to prices. But if the UAE does ramp up that production, can India do with Gulf producers what it has been able to do with Russia? You know, play suppliers against each other to extract deeper discounts. Do you think at least that is a possibility? And of course, the big question mark on the Strait of Hormuz remains, because we don't know when that is going to get resolved.
Certainly, I think that's a great context to put any further ramp up from UAE. First of all, Strait of Hormuz. Secondly, to your question, it certainly gives India that sort of bargaining chip, because the discounted barrels coming out of Russia started between $12 to $18 per barrel and has now compressed down to close below $5 per barrel. So that is one, and it allows an alternative and similar grade crude coming from the UAE to be digested within Indian energy system. But we also have to be mindful that because of the supply disruption, and if you add on top of the inventory releases, we have lost close to 1 billion barrel of crude. And by the time everything gets normalized, we're looking at close to 2 billion barrels of inventories lost, which would take months to refill and can be replenished as 2 to 3 million barrel per day of additional liquids demand.
Right.
So when you look at a surplus capacity coming out of the UAE, that can very well be absorbed by incremental demand coming from the energy system, right? So, so depending on how and when this additional supply-demand balances play out, how the world goes about replenishing their inventories, can certainly move the needle across different pricing benchmarks. But any sort of free supplier in an open market benefits importing countries like India.
Purva, to set this in context, because nearly half of India's crude and 60% of LNG, these transit the Strait of Hormuz, which is that choke point, and UAE has these pipelines that run through Fujairah, and they bypass it. So does this exit of UAE from the cartel, does it effectively make the UAE India's perhaps insurance policy in a crisis? Does that at least happen?
Thanks, Vikram. It's difficult to say how the crisis will emerge in the future. We have seen so much in the last 5 years. So what exactly will happen in the future and what can be an insurance policy? I think when it comes to fossil fuels is very difficult to define right now. But what it does, and I agree with what my fellow panelist has been talking about, that it does give us that little bit of leeway of higher supplies and lower prices. But again, we shouldn't jump the gun and see that how much of the capacity will be ramped up. And if it does, then India is in a position, because structurally we are an oil dependent economy. So we could bode well with the lower prices and higher supply. But I think one more aspect that needs to be seen here is the global aspect and the global perspective on this. What we are seeing is like a shift in the oil producers now. They are looking at, a higher supply and taking market shares, because there have been early signs of demand destruction or substitution, if you can say, in a lot of economies. We are seeing, the transport sector, especially in the transport sector, there have been early signs of demand substitution. And I guess that is a fear, or that is a strategy that the oil producing nations are looking at to grab a higher market share, instead of looking at price as the key point and looking at volume as the key point for them.
So looking at oil producing countries, David, taking away from what Purva is saying, among the largest is Saudi Arabia. What if Saudi Arabia responds to the exit of UAE from the cartel with aggressive kind of production of its own, those kind of production cuts that are brought on to defend prices? In that scenario, could India actually end up paying more in the short term, you think?
Yes, it could, of course. I mean, you're looking really, I think, at the breakup of the OPEC monopoly over time for political reasons, and now for economic reasons, that one member with 15% of capacity has decided to go it alone and compete with it. So that will create other tensions within OPEC of other countries wishing to go it alone and not be shut out of their markets because they're being undercut on price. Now, Saudi Arabia could try and rein all that in by cutting production, but I think it's extremely unlikely. Saudi Arabia has its own problems, including a 5% of GDP budget deficit for these enormous, rather silly projects that it's building all over the desert. So it needs the revenue. So I think that's pretty unlikely.
Right.
To come back to just one point that was made, and I want to put that completely, make it straight.
Yes.
It is not possible for the Fujairah pipeline to make to make the UAE, into an oil producer which is de facto located outside the Gulf. And the reason for that is very simple. Number one is because the capacity of that pipeline is only 1.5 million barrels a day, and it is already fully being used.
Right.
So you cannot pump into it an extra 3 million barrel a day. It does not provide an insurance policy for India. Also, the American blockade, if it's going to be a factor in the future, is actually running south of Fujairah. So you already have got an impediment to shipping even from that particular outline, which is limited. I just wanted to say that because I think there are lots of things that could be good or bad for India.
Yes.
But the Fujairah pipeline is not the Deus Ex Machina that
So you're saying that cannot be an insurance policy the way we have it, because it just wouldn't be enough. But Mr. Garg, if what we are hearing from David about the possibility of the cartel breaking up, could a cartel-free UAE now at least be more open to rupee-based trade at scale? Because you're seeing an exit right now of the UAE, but does it mark a meaningful shift in India's energy trade architecture, you think?
See, the rupee trade is not the issue. All of these countries are major exporter to us. Their imports is much less. So what do they do with the excess rupee which they have? And by the way, as far as UAE is concerned, UAE dirham is pegged to $. So even if you have a dirham rupee trade, It's actually a US dollar trade. So it does not really make any difference. And sometimes some people expect that if there is a trade in rupee, we are benefiting.
Correct.
It's really not the case. Rupee, what is the underlying exchange rate at which the deals are done? That is what decides. So it's not something which we should look for. But what I see as a major trend forward, if the solar and the wind energy gets boosted up substantially, there are already signs that the global demand for oil is tapering off, barring the temporary disruptions. In that situation, if the demand for oil comes down, then there is a problem because all these suppliers, their production capacity is more than what the global demand is. And in order to sell, they compete fiercely. Then there is a situation of in country like India benefiting in terms of prices.
Correct.
But then they lose the game.
Right.
Because the suppliers, as I said earlier, are in the game to get revenues. If they don't get revenue, why would they sell? So they will ultimately come up with some agreement
Right.
to control the supplies to maintain the price.
So you're very confident that there is not any real benefit immediately right now, but in a scenario where we are seeing a softening of prices even, Mr. Garg, is this the right moment for India to aggressively fill its strategic petroleum reserves while the supply dynamics are in flux?
Reserves don't get built up in a day. There is no addition to reserve strategic reserves in last 10 years. We should have done it. We had opportunity to do a deal with the UAE. They had actually agreed to do a lot of investment for us, but that project didn't take off. We must do it.
Right.
There is no reason for us to have such a small supply for these strategic reserves.
Right.
We should at least have for about 2 months, or if not for that, 45 days at least.
Right.
I think that investment is very much called for.
So that should have been an ongoing exercise, but this is not essentially an opportunity. But Aditya Saraswat, for refiners like IOC and BPCL, do you think this is fundamentally a margin expansion story at all, or do you think policy pressure force gains to be passed straight on to consumers?
I think in the times like this in 2026, I don't think there are any sort of changes needed from the domestic refinery setup. They are complex enough to accommodate and digest all sort of grades out there. But starting 2027, I think that's where things would become a lot more interesting, and depending on how supply demand plays out. But tying it back to India, we have a lot of medium sour crude on float because all of the Middle Eastern countries would want to gain back the market share, and that's where we could get some competitive prices for the imports in the country.
Yes.
Secondly, we were at 3 million barrel per day oversupply condition before the conflict. So as and when this situation dies down by hopefully end of this year, we could see it coming back to those pre-conflict oversupplied conditions, which would pull down the prices back to pre-conflict level at $60 to $70 per barrel, and that would be, I think, an ideal opportunity for building up of any stocks, from tying it from your previous question, and secondly for any refiners to make any meaningful adjustments, because if you do it now at very high Brent prices, essentially you're eating up your margins, and in an inflated environment as we are seeing already globally, that puts more pricing pressure on the consumers and customers like us.
Right.
So the name of the game is to wait for the prices to fall back, because the supply is there. It's just waiting for the Hormuz to be opened and benefit from the prices.
Well, one
as
waits.
when situation normalizes.
Yes, that normalization of the situation is a big question mark right now. But David, what about the Chinese factor? If China moves faster to lock in long-term supply from a more flexible UAE, if I may call them that, do you think India risks losing out despite appearing well-positioned today at least to make some gains, if at all?
No, I think, look, if you get a normalized energy market and you get greater competition between former OPEC members to produce more oil at lower prices, clearly any importing country does particularly well. But I think we have to inject into that happy scenario of a geopolitical floor, which is that oil has been shown to be extremely risky. It's made by risky states and it's exported through risky chokeholds geographically. So, I mean, that premium on oil is not going to go away. And I would say to you two things. If you put the two things together, the breakup of OPEC, the instability possibly of continued influence in the Gulf of Iran, and the fact that we have all been shown how inadequate our reserve systems are, then I think you are going to look at two things. One is a big strategic shift away from oil altogether. We are going to have higher oil prices, which will make renewables more competitive. And we're going to have a strategic need to depend less on the sort of geographical areas that produce oil because they are so unstable and they're going to go on being unstable.
Yes.
So if you put those things together, you're looking at really quite a new paradigm, including a new paradigm for renewables.
So, Mr. Garg, to be able to wrap this up in one line, if I had to ask you, has the weakening of, if I may call it, coordinated supply management, has it made India more powerful as a buyer at all? Or do you think we are more exposed to global oil chaos?
See, a country which is so much dependent on the energy supplies cannot really be in a driving seat, cannot be the real power. We must count our mercies if some such opportunities come to see that our oil bill goes down a bit. I don't think we have any reason to celebrate.
All right, fair enough. So clearly the UAE's exit may weaken the old oil order as we know it, but it does not guarantee cheaper energy, only a perhaps maybe more volatile, maybe a more politically charged market as well, like David Roche was pointing out. But for India, this is less about celebrating the lower prices, if at all those come. It's more about navigating risk with smarter strategies, whether it's to do with renewables, whether it's to do with pumping up our reserves. All of that is in play. There is an opportunity for that, for sure. But many thanks to our panel for their insights this evening. S.C. Garg, David Roche, Aditya Saraswat, Purva Jain. Thank you for joining us, sharing your insights on this important subject. We will be tracking it. To our viewers, of course, this is true. A weaker cartel could mean softening of oil prices. How deliberate it's going to be. But there are political pressures at play as well. So it does leave room open for more volatility. And within that, for India to navigate and ensure energy security is going to be an important piece. We'll be tracking that very closely. I'm Vikram Oza. From me and the entire team on The Big Question, good evening.
Presented by Canara Bank. Together we can.
Bhaskar, our first order. Help us build the chutney business from label to website.
Ankit Singh started a gym. For this, last year he took an interest-free loan of 5 lakh rupees under CM Yuva scheme.
मैंने मुख्यमंत्री युवा रोजगार योजना के तहत मैंने 5 लाख का स्टार्टअप लिया है, लोन लिया है। उसी स्टार्टअप के थ्रू मैंने ये जिम डाला है।
Rajkishore Kesharwani's shop was not doing well. Then he took a loan under the CM Yuva scheme and strengthened his business.
सरकार ये स्कीम दे रही है वो तो हम जैसे युवाओं के लिए सबसे बढ़िया ऑफर एक प्रकार से।
Around 1.5 lakh youth in Uttar Pradesh, like Ankit and Raj Kishore, have benefited from this scheme so far.
सीएम युवा स्कीम के माध्यम से गारंटी मुक्त युवाओं को स्वतः रोजगार के साथ अपना कारोबार आगे बढ़ाने के लिए प्रारंभ किया है।
Under the leadership of Chief Minister Yogi Adityanath, this initiative is not only making youth self-reliant, but is also building a strong foundation toward making Uttar Pradesh an employment-generating state.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Good evening, you're watching Market Express with me Shreyanti Singh, and this is a show that gets you a lowdown of everything that happened in today's trading day, be it news and updates from within the country as well as across the globe as well. Let's get straight into the show. Take a quick look at what the markets were up to. Markets lost some of those early gains that you saw coming in, but managed to end the day in green. Nifty ended above 24,100 mark. Meanwhile, Sensex closed 600 points higher. When you talk about broader markets as well, they underperformed benchmarks. Let's also talk about the sectoral picture then, and markets ended firmly in the green, dominating the board. FMCG and realty leading the rally. In fact, while PSU banks as well as financial services on the flip side were lagging, keeping the gains really in check. Let's also move on and talk about oil markets that are back on edge. Prices climbed nearly 3% on Wednesday as well, and right now also you do have Brent crude hovering close to $115 a barrel, with Brent crude touching a 1-month high after reports that the United States is preparing to extend its blockade of Iranian ports. The move is seen as likely to prolong supply disruptions from the Middle East. Now, this is a region that is critical to global oil flows, and that's something that you can very clearly see being reflected in the prices as well. Traders reacted swiftly to the prospect of tighter shipments, pushing both Brent and US crude higher for another session yet again. With the Iran conflict still unresolved and shipping risks lingering, geopolitics is once again setting the tone when it comes to oil prices. Let's also talk about Maruti Suzuki's fourth quarter numbers that showed a steady rise in revenue and operating profit, while margins stayed broadly flat and net profit as well dipped slightly. When you talk about the word coming in from brokerages, they remain positive on the outlook. Morgan Stanley is the one that kept an overweight call with a target price near 17,900 rupees. Citi raised its target price to close to 18,500 as well, and Macquarie as well maintained outperform with a target close to 15,900 rupees. Let's also move on and talk about Dr. Reddy's Labs that wins Canada approval for a generic semaglutide injection, entering the fast-growing GLP-1 space as well. And it's the first such clearance in a G7 market, boosting global credibility and also opening doors to emerging markets. While competition will rise, the early nod gives a head start, supporting near-term earnings as well as longer-term growth. And with that in mind, let's also move on, talk about something like a Vedanta that's in focus, delivered a steady set of numbers for the fourth quarter. And numbers were largely in line to slightly ahead of estimates. When you talk about the counter, though, it was buzzing away in trade, about 4.8% uptick coming in here for Vedanta as well, and revenue and EBITDA and as well as profit all come in higher on a year-on-year basis, with margins staying strong. The aluminium business, let's talk about that as well, because that showed healthy growth supporting overall performance as profit rises nearly 20% on a sequential basis. Let's also move on and talk about yet another earnings counter that was trading a little bit flat, at least towards the end of the trading session. We're talking about Eternal right now, that posted a strong set of numbers for the fourth quarter, beating profitability estimates as both food delivery and quick commerce drive growth. Margins improve, with quick commerce really showing better unit economics, while other segments stay stable. Management stays focused on profitable growth, guiding for strong expansion in Blinkit,
with steady user additions and store rollout on track. Let's also move on and talk about the word coming in from brokerages when it comes to something like an Eternal, and this is after its Q4 update, of course, but you have Citi that maintained a buy rating, trimmed its target price to around 360 rupees. Morgan Stanley as well, that's the one that's staying in overweight rating and maintaining that really with a target price close to 250 rupees. Investec and UBS remain positive, but Macquarie keeps an underperformed call, flagging rising competition as well as pressure on unit economics. Let's also move on and talk about something like a Bandhan Bank that was surging sharply, hitting a one-year intraday high after a strong fourth quarter as well. When you talk about this particular counter at the end of the trading session, it went home with a uptick of about 11.2% thereabout, and that's something that you can see reflecting on your screens as well. But when you talk about the earnings fine print, asset quality is the one that improved with lower slippages, with better yields and funding costs supporting margins, and profit growth, that's the one that's aided by lower credit costs and strong fee income as the bank really sees stability return in its microfinance as well as unsecured loan book alongside a rising share of secured lending. Let's also move on and talk about the brokerage verdict coming in here as well after the Q4 performance. You do have Macquarie, that's the one that's maintained an underperformed rating with a target price near 130, while Investec is the one that upgraded this particular counter to somewhere close to 180 with a hold stance. Now, when you talk about the word coming in from something like a Motilal Oswal, they're staying positive, raising their target to about 210 and citing improving asset quality, lower credit costs as well as better margins. Let's also move on and talk about something like a Star Health and Allied Insurance that surged after a strong set of numbers in the fourth quarter. You're looking at a 3% uptick coming in for this particular counter. And Citi is the one that's gone ahead and maintained a buy rating, raised its target price as well to somewhere close to 660 rupees versus previous target of 650 rupees, citing a turnaround gaining pace and claims ratios that are improving. That's something that they've underlined as well, while new business growth remains healthy, keeping the company a preferred pick in the non-life insurance space. Let's also talk about something like a Garden Reach Shipbuilders and Engineers that surged more than 5%, went home with an uptick of about 6.5% after posting a strong set of numbers in the fourth quarter with sharp growth across revenue, EBITDA and net profit. Now, margins are the ones that expanded on a meaningful basis on better execution, while the bottom line, in fact, saw healthy gains on a year-on-year basis. When you talk about the company, it also declared a final dividend reflecting steady operational strength as well as sustained order execution momentum. Let's also move on and talk about Greenply that also delivered its best quarter in several years with record revenue, operating profit and net profit as well. When you talk about the volume growth, that was quite strong, and that's both in the plywood as well as MDF businesses, along with improving margins, driving the outperformance, really pushing the stock to a 4-month intraday high, went home with that uptick of about 11.7%, as you can see reflected on your screens as well. And when you talk about promoter buying, that's been a theme in recent months, also lifting sentiment, while management stayed confident of double-digit growth as well as further margin expansion going forward. Let's also move on and talk about something like an MV Photovoltaic Power that reported a strong set of numbers with sharp growth when it comes to the revenue as well as profits, driven by capacity expansion and better utilization. Let's also talk about some of the other factors here as well. So you're looking at higher module output as well as improved solar cell utilization, supporting operating performance through the quarter. The company is also stepping up its growth plans, announcing a large new cell module, and that's one facility that you're looking at that's going to be strengthening its position over the medium-term basis. Let's also talk about CEAT that remains in focus after delivering a strong set of numbers in the fourth quarter with healthy growth in both revenue and profits. For the year, the company crosses a key revenue milestone supported by market share gains, then that's across the replacement and the OEM segment. So those are the two segments that you're looking at here. Margins stayed firm as CEAT leans on pricing actions and tighter cost control as well to manage supply really, and that's something that you're looking at aside from the raw material challenges. Let's also talk about Sterlite Technologies that reported a strong set of numbers in the fourth quarter with sharp growth also that you were looking at across revenue, operating profit as well as net profit. So all three of these metrics, margins improved on better operating performance even as leverage remains on the higher side. And this particular company also announced plans to raise equity capital, which the street will watch closely for its impact on the balance sheet as well as growth roadmap. Let's also move on and talk about Motherson Wiring that posted a strong top-line growth in the fourth quarter, but margins came under pressure, and that's something that you see reflected, that mixed set of performance with that flat sort of performance for the stock as well. Operating profit, that's the one that grew only marginally as higher copper prices dent margins, leading to a miss on estimates. Delays in ramp-up at new plants, including the Pune facility, also weigh on utilization. Now, in terms of the word coming in from brokerages, they're staying positive on the long-term story at least, but still they're flagging near-term margin headwinds. Let's also move on and talk about Indian Bank that posted a steady set of fourth quarter numbers with profit and core income showing healthy growth. Asset quality continues to improve with both gross and net NPAs lower and stable. However, higher provisions weigh on the quarter. The bank also announced plans to raise capital and declare a final dividend, keeping the focus on growth and balance sheet strength. And when you talk about this particular counter, it was down about 2.5%. Let's also move on and talk about Federal Bank that wrapped up fourth quarter with a strong set of numbers, and that's something that you saw the street largely shrugging away as well. Profit after tax climbed over 22% on a year-on-year basis, supported by a sharp improvement when it comes to core income, net interest income. Let's talk about that as well, about a 33% rise that you're looking at here, taking operating profit up more than 55%. When you talk about the asset quality as well, that continues to strengthen with both gross and net NPAs easing sequentially. However, provisioning sees a sharp jump on a quarter-on-quarter as well as year-on-year basis, signaling a more conservative balance sheet approach despite improving fundamentals. Let's also move on and talk about HUL, and that's one particular counter that's going to be reporting its results tomorrow, and watch out for that one. About a 1% uptick in the stock ahead of the expectations of a steady quarter driven by high single-digit revenue growth. Volume-led expansion is also likely to support performance, while profitability is seen improving modestly, but with some margin pressure, mind you, from inflation as well. And when you talk about the word coming in from the analysts, they're expecting gradual demand recovery, helped by better urban sentiment as well as selective price hikes. Let's also move on and get you some other news and updates. ITC and Godfrey Phillips India are in focus today as cigarette prices are set to rise across segments according to channel checks and distributor sources. Now, sources in fact are suggesting that hikes of around 17% is something that you could be looking at, with premium packs, the likes of Gold Flake moving from about 115 rupees to 135 rupees per pack. Similar increases are also penciled in across value brands, pointing to broad-based pricing action in the industry. Moving on then, let's also get a little more stock specific while talking about something like a Laurus Labs that's in focus ahead of its fourth quarter earnings, about a 1.4% uptick coming in for this particular counter, with the street also expecting a steady improvement when it comes to performance. Revenue and operating profit are seen rising on a year-on-year basis, helped by growth across APIs, formulations, and the synthesis business. Now, when you talk about the margins, they're also expected to improve, driven by a richer mix from synthesis, even as API growth remains measured. Let's also move on and get you some business news. Then the US Federal Reserve is widely expected to hold interest rates steady tonight, marking a third straight pause, with inflation risks back in focus due to higher energy prices and geopolitical disruptions. The central bank remains firmly in wait and watch mode. Now, attention is now shifting beyond rates to leadership uncertainty, with this also likely among Chair Jerome Powell's final meetings, adding a fresh layer of overhang when it comes to global markets. Let's also move on and talk about oil. Yet again, a major fault line, in fact, is emerging in the global oil alliance. The UAE's exit from OPEC and OPEC Plus marks more than just a policy shift. It signals a recalibration of power within the cartel. Abu Dhabi controls roughly 4% of global oil supply and over 12% of OPEC's output. And this really makes it the group's second largest producer after Saudi Arabia. And when you talk about the word coming in from the analysts, they're saying that the move is political right now rather than economic, driven by widening regional rivalries from Saudi-Pakistan defense ties to differences over Yemen and the UAE's deepening alignment when it comes to the US and Israel. While the UAE was among OPEC's most disciplined members, its departure really could weaken unity, and this is just as energy markets remain stressed already and geopolitics increasingly dictate oil flows. Let's also move on and talk about the government laying the regulatory ground for higher biofuel use. The Road Transport Ministry has issued a draft notification proposing to expand the definition of fuel under the Central Motor Vehicles Rule. This would allow vehicles running on higher ethanol blends like E85 and E100 as well as biodiesel up to B100. Now the draft also revises norms for hydrogen CNG blends and proposes really raising the permissible gross vehicle weight limit. The move signals a push towards alternative fuels very clearly as India looks to cut fossil fuel dependence with newer, cleaner fuel standards. And keeping it going with this particular theme as well, a strong pitch for a cleaner transport future is something that was made by the Union Road Transport Minister Nitin Gadkari, saying that petrol and diesel vehicles have no future in India's public transport system, especially as global geopolitical tensions raise fears over fuel supply disruptions. Pointing to India's heavy dependence on imported fossil fuels, you do have Gadkari warning that this leaves the economy vulnerable during international crises. He has also urged automakers and fleet operators to fast-track the shift to alternatives like electric, CNG, LNG, ethanol, and the like. The minister also revealed that hydrogen mobility is already moving from promise to pilot, with trucks and buses being tested on select routes across the country. Moving on then, let's talk about the Samsung controlling family that has emerged significantly wealthier and more firmly in control 5 years after facing twin shocks following the death of the patriarch Lee Kun-hee as well. And back in 2020, concerns were rife that a massive inheritance tax and legal uncertainty around succession could weaken the family's grip on South Korea's largest conglomerate. Now instead, an AI-driven surge in semiconductor valuations has transformed the outlook drastically. When you talk about the Lee family's combined wealth, that is more than doubled to around $45.5 billion, elevating them to Asia's third richest family, with the final installment of the 12 trillion won inheritance as well. The inheritance tax, in fact, due this month. The Samsung dynasty has not only weathered the crisis but also strengthened its hold. Moving on then, let's get you some national news. The West Bengal state is voting under sharp political focus. By early afternoon, you do have over 61% of voters that had turned out in the second phase of polling, even as sporadic incidents of violence were reported across parts of the state. Tensions briefly flared in Bhabanipur, turning the spotlight on a face-off between Chief Minister Mamata Banerjee and BJP leader Suvendu Adhikari at the same booth area. Now, this phase is widely seen as a critical test for the Trinamool Congress, with polling moving into its traditional strongholds in South Bengal and Kolkata. Now, the final round of voting is now underway, and that's across 142 assembly seats in 7 districts, with results due on May 4th. Now, that's something that you're watching out for on the political front as well, but let's also talk infrastructure right now. PM Modi has inaugurated the Ganga Expressway, Uttar Pradesh's longest expressway and one of India's biggest greenfield road projects. Built at a cost of over 36,000 crore rupees, the 594-kilometer 6-lane corridor links Meerut to Prayagraj across 12 districts. Now, this is designed as an access-controlled highway and expandable to 8 lanes. The project aims to slash travel times and transform connectivity in the state beyond mobility. The Ganga Expressway is envisioned as an industrial and logistics corridor, anchoring economic development across the heart of Uttar Pradesh, with Chief Minister present at the launch. Let's also move on and talk about a planned mass animal sacrifice at a temple near Sikandrabad that has been stopped following swift action by PETA India and the Telangana police. Acting on a complaint received on April 26th, you did have the police holding discussions with the authorities of the temple and informing them about the state's strict ban on animal sacrifice. Officials cited provisions of the Telangana Animals and Bird Sacrifices Prohibition Act as well, under which such practices at public places of worship are illegal. The intervention ensured that the ritual did not take place. Alright, then that's some national news as well, but let's keep it going with some more news coming in from the south of India. Protests have erupted across Kerala over undeclared power cuts, with angry consumers taking to the streets in the early hours. Now, this is in the Thrissur district as well, and residents marched to the division office past midnight after hours of outages, with demonstrations continuing till Wednesday morning. Protesters even lay outside and inside the premises, also demanding immediate restoration. Although officials cited a technical fault in a major feeder line, tensions in fact remained high. Similar protests were reported from Kozhikode and Nadappuram, highlighting growing public frustration over repeated power disruptions. Moving on to the word coming in from the Supreme Court, then, that has ruled that existing laws are adequate to deal with hate speech, declining a plea to classify it and rumor mongering, in fact, as separate criminal offences under the penal code. Now, the court said that constitutional courts cannot compel Parliament to legislate, and stressed that the real problem lies in enforcement, not really a legal vacuum that you're looking at here, and that's the word coming in from the Apex Court. The petition filed in 2021 by advocate and BJP leader Ashwini Kumar Upadhyay was dismissed, with the bench pointing to existing provisions and prior directions requiring police to mandatorily register cases in hate speech matters. Moving on, then, let's get you some international news now. Iran-backed hackers have reportedly leaked personal data linked to thousands of US Marines deployed in Middle East as well. And the US Defense Department, in fact, is investigating the breach, with early findings indicating that some of the information released is authentic, according to the Wall Street Journal, and that's the reports that are indicating this. But troops in the region also received messages on WhatsApp warning that they were under surveillance, though officials are still assessing the scope and impact of the incident. Now, the hacker group, in fact, has claimed access to additional details related to US personnel and their families also. Separately, US President Trump said that Iran has reached out to Washington, describing the country as being in a state of collapse and seeking the opening of the Strait of Hormuz, pointing to parallel cyber and diplomatic developments. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Presented by Canara Bank. Together we can.
Water overflowing, what could it be?
Ankit Singh started a gym. For this, last year he took an interest-free loan of 5 lakh rupees under CM Yuva scheme.
मैंने मुख्यमंत्री युवा रोजगार योजना के तहत मैंने 5 लाख का स्टार्टअप लिया है, लोन लिया है। उसी स्टार्टअप के थ्रू मैंने ये जिम डाला है।
Rajkishore Kesharwani's shop was not doing well. Then he took a loan under the CN Yuva scheme and strengthened his business.
सरकार ये स्कीम दे रही है वो तो हम जैसे युवाओं के लिए सबसे बढ़िया ऑफर एक प्रकार से।
Around 1.5 lakh youth in Uttar Pradesh, like Ankit and Rajkishore, have benefited from this scheme so far.
CN युवा स्कीम के माध्यम से गारंटी मुक्त युवाओं को स्वतः रोजगार के साथ अपना कारोबार आगे बढ़ाने के लिए प्रारंभ किया है।
Under the leadership of Chief Minister Yogi Adityanath, this initiative is not only making youth self-reliant, but is also building a strong foundation toward making Uttar Pradesh an employment-generating state.
We are now joined by R.C. Bhargava, Chairman of Maruti Suzuki, to talk on the results and more. Sir, firstly to start off with, crude prices continue to remain high. Now, at this moment, the impact of the same has not been passed on to consumers. But if petrol prices increase, what could be the impact of that? Historically, has Maruti seen any impact on demand whenever retail fuel prices have shot up?
Normally, petrol prices or diesel price increases have not had any sustainable impact on demand for cars in the past.
Okay, speaking about the commodity cost, now until March, commodity cost for the company was largely benign because of the war. But now I believe company will start seeing the impact of higher aluminium, copper and steel prices. What could be the impact of the same on the margins, and if you don't pass it on to consumers, what kind of price hike would you require?
That's not correct. If you look at our last year's accounts, it's the commodity prices last year which resulted in a 2% increase in the material cost as a percentage of sales. And so prices last year actually were adverse. This year, we are considering the whole matter. We haven't taken any decisions yet, but we have to take all factors into account as to the war, the impact on prices, exchange rates, what's to happen, and then we'll take a decision on what should be the price. I can't give you anything more exact than that.
Right, sir, but I was specifically focusing on the war. Because of the war, the increase in commodity prices was still not impacting Maruti in fourth quarter. But starting Q1, will that lead to increase in cost?
The war impact has still not been fully felt at all. You know, the war has mostly affected the supply of goods passing through the Hormuz Straits. And fuel prices have gone up generally.
But sir, aluminium prices have also increased because of war, specifically in that time period. So won't that have any impact on Maruti's margins in the first quarter?
I am not able to give an answer to that question straight away because I don't have the data.
Now shifting focus on the demand, post GST cut, passenger vehicle was seeing a double-digit growth. Now second half was great on the back of that, but April month registrations have been in low single digits. So is it that the GST related benefits are now largely behind us?
No, you please remember also that when there is a waiting list of 190,000 cars, customers are reluctant to register and then say, we'll have to wait 1 month or 1.5 months or more than that to get their cars. So one of the conditions for demand to be steady and strong is that waiting list periods have to become reasonable.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
The Lal Street powers higher today as benchmarks extended gains. Nifty ends in green, closes above 24,100 levels. FMCG sector being the top gainer, while rupee hits record closing low at 94.85 against US dollar. Bajaj Finance AUM crosses 5 lakh crore rupees for first time. Net profit in line with estimates, while net interest income misses the street estimates. Meanwhile, Rajiv Bajaj to step down as non-executive director from the board in July. Brent hits 1-month high amid persistent disruptions near the Strait of Hormuz. Brent hovering over $114 per barrel mark. Reports suggest Trump has met with oil executives to discuss Iran war impact day after UAE announces exiting OPEC from May 1st. Dr. Reddy's gets Health Canada nod for its generic semaglutide injection. The clearance marks the company's entry into the high-growth GLP-1 segment. In exclusive conversation, CEO says that ready to sell semaglutide to at least 50% markets. Sources tell NDTV Profit that lower-end cigarette prices are set to rise after hike in king-size packets, with an expected price hike of 17%. Adani Green Sagar Adani points to the need for energy resilience amidst Middle East crisis, says group has committed $100 billion for energy transformation across India. 6 lanes, 600 kilometers, 6 hours. PM Modi inaugurates 36,230 crore rupees Ganga Expressway, ups longest road corridor linking Meerut to Prayagraj. Adani Group anchors investment push aligned with Viksit Bharat with 80% development. Bumper voting in Bengal's last phase of voting, 89.99% turnout recorded till 5 p.m. Violence mars phase 2 polling as clashes reported at multiple booths. Meta brings prepaid mobile recharges to WhatsApp users in India. Now you can recharge your mobile on WhatsApp without switching between apps. FOMC briefing tonight. Fed likely to hold rate cuts for third straight meeting. Now this is likely Jerome Powell's final meeting under current chair as his term ends in the next month. 5 election battlegrounds. Stay tuned for the exit polls of the year with India's most tracked election team decoding the sharpest exit polls data on NDTV Profit. Hello and welcome viewers. You're watching Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. And viewers, bulls have taken charge on the Lal Street today, with Nifty and Sensex gaining over 1%. Broader markets, however, they have advanced but lesser than the benchmarks. And this buying interest was predominantly visible in the realty, FMCG and auto stocks. Meanwhile, crude oil prices rose more than 3% on reports that US President Donald Trump is dissatisfied with Iran's proposal to reopen the Strait of Hormuz. Investors are also tracking developments on the OPEC, especially after the UAE announced its exit from the organization. And amidst these circumstances, the rupee today has fallen to its weakest level in the closing. And in fact, it's very close to its all-time low as well. And although losses were contained by the RBI's likely intervention, the currency has been walking a tightrope. Let's get in my colleague Jasmeet Singh for a market roundup of the day.
Well, a good day for markets today. Well, if you look at Nifty 50, it ends in green above the 24,100 mark. In terms of top gainer, we have stock like ITC and Tech Mahindra gaining over 3.5%. If you look at the broader market, it has ended on a mixed note. Something like a mid cap 150 has ended in red, but small cap 250 ends in green. In terms of top gainers in small cap 250, we have stocks like Devyani International and Sapphire Food, both gainers of small cap 250, where Sapphire Food has gained over 20% for the Devyani International has gained over 13%. In terms of mid cap 150, Nifty that ends on a red note. The top losers in mid-cap on Nifty are stocks like NTPC and JSW Infra, top losing about 4% in today's trade. If you look at the key sectors, the sectors end on a mixed note. Now, something like a top gaining sector, we have Nifty FMCG gaining about 1.5%, and the top gainers are ITC and Radico, which led the gain about 4% in today's trade. If we look at the other key highlights, we have Nifty PSU Bank is the worst performing sector of the day, which is down about 0.5%. In terms of top losers, we have Indian Bank and Union Bank both losing about 2% in today's trade. If you look at the key trends, we do make a note that the overall Nifty Oil and Gas, Nifty Metal, they gain for the third consecutive session in a row. While lastly, Nifty Bank, Nifty Financial Services, Nifty PSU Bank, they extend the losing streak for the second day in a row and lose in today's trade.
Viewers, 9% return or 9% downside? Well, two clear-cut scenarios for Indian markets. In our conversation with Amish Shah, Head India Research at BofA Securities, we have understood that these two possibilities very clearly. He also said that given the current uncertainty, on the potential end to the conflict, it would be better for investors to stay away from crude-sensitive sectors. Let's listen in.
The risk reward as we look at it is quite balanced for Nifty right now. So if you assume that the conflict goes beyond June, then I think in our worst case we talk about 9% downside for Indian markets from where we are. At the same time, if the crisis were to come to an end, in our base case we are assuming market delivers 9% returns from current levels. So I think at this point in time the risk reward is quite balanced. Our base case is that the crisis will come to an end by June, and therefore we are more on the optimistic side, assuming that there will be 9% gains. But in the near term, clearly, given the uncertainty, you would want to stay away from the crude impacted and the conflict impacted sectors and stocks.
Here's Bajaj Finance has reported a mixed set of numbers for the March quarter with some pressure on the key profitability metrics even as growth remains strong. Net interest income came in slightly below the estimates while net profit too was marginally shy of the street expectations. Now to get more details on the company's quarter four results, let's cut across to my colleague Shivam.
Well, yes, Bajaj Finance has posted a mixed set of results for quarter for FY26, and starting with the net interest income that has seen a growth on the back of good growth in asset under management, but it were lower than the estimates. The AUM growth was led by the growth in CV and tractor segment, and also the gold loan segment has contributed in the growth in AUM. The operating expense has seen a rise owing to the increase in financing cost and staff expense, and if you look at the GNP and NNPA, that has reduced on a sequential basis, which reflects better asset quality. Also, the provisions have lowered, but the company has made an additional ECL provision of around 142 crores. Now, looking at the AUM, which stood around 5 lakh and 9,000 odd crores, which has a growth of 22%, and the OPEX to net total income, which is an important metric for the company, that stands around 33.8% versus 33.6% on YY basis. Also, there are few one-off transactions, such as that in quarter third of FY26, the company has recognized a accelerated ECL provision of around 1400 odd crores, but in quarter four, the company has recorded an additional ECL provision of 142 crores, and this was towards the management and macroeconomic overlay. Now, if we look at the profit after tax figure, that has increased to 5,500 odd crores. The operating profit has also seen a growth of around 21%, and net interest income has also seen a growth of around 20%. So overall, the set of results for Bajaj Finance were mixed.
Meanwhile, in a key boardroom development, Rajiv Bajaj will step down as a non-executive director on the company's board, marking an important leadership change alongside the earnings announcement of Bajaj Finance.
In price owes itself to many things, but most of all.
And viewers, Adani Power has reported a strong operational performance for the March quarter, with the profit surging over 60% on a sequential basis to just over 4,000 crores. Now, the growth was driven by improved plant utilization and also higher power demand. And revenue for the quarter rose over 14%, while EBITDA has seen an uptick of nearly 12%, also reflecting steady operating momentum. So overall, the numbers point to robust execution and even sustained demand tailwinds for the company in the power generation space.
And keeping with the earnings momentum, we have Vedanta that has delivered a strong Q4 performance, beating the street expectations across the key metrics. The headline number first, net profit has jumped nearly 20% to 9,352 crores, comfortably ahead of the estimates. Revenue has also came in strong, rising over 12%, and EBITDA has stood at 18,447 crores. The real momentum came from its core businesses. The aluminium segment has seen revenue growth of over 11% sequentially, while zinc, lead and silver revenue have surged 19%. So growth was clearly led by the aluminium and zinc segments. And Zinc India has performed particularly well, supported by a sharp rise in silver prices. So overall, a solid quarter powered by strong commodity prices and even robust performance in its key segments. And whereas the Reserve Bank of India has issued final amendment directions on revised lending norms for urban cooperative banks aimed at strengthening the credit frameworks and even improving the flexibility. So the central bank has rationalized the definition of unsecured advances while also enhancing lending limits for consumer durables to boost the retail credit flow. Also, Tier 3 and Tier 4 urban cooperative banks have been given greater discretion when it comes to housing loans, allowing them more operational flexibility. So these changes are aimed at improving the credit discipline while also enabling UCBs, to better cater to evolving borrower needs and also support the credit growth. And here's India's monthly economic review for April flags a mix of emerging risks and even steady domestic indicators. Now, the report warns that El Nino conditions are likely to keep the southwest monsoon below the normal, which may pose a downside risk to economic growth. And at the same time, system liquidity remains a surplus along with a steady credit growth, offering some support to the economy there. However, early signs of cost push pressures are visible in wholesale prices, while inflation risk are seen tilting towards the upside. So the ongoing Middle East war is expected to adversely impact the Indian industries in FY27, with energy and oil importers likely to be the most impacted sectors. And logistic costs are also expected to remain elevated in the near term, even as demand side indicators continue to show reasonable resilience. And viewers, all eyes are on the FOMC briefing tonight, with the US Federal Reserve widely expected to hold interest rates steady for a third consecutive meeting. And while policy is likely unchanged, investors will closely track Chair Jerome Powell's comments on the inflation risk amid the rising energy prices and even war-related disruptions. So the focus is shifting beyond rates to the outlook on future cuts and even growing uncertainty around Fed leadership. So for more details, my colleague Jasmeet is joining us now.
Well, thank you for that. FOMC preview remains a key focus to watch out of how does the overall meeting pans out. If you look at the current rates, they currently stand between 3.5 to 3.75, and this is expected to be the third straight meeting where the rates are expected to be unchanged, while the last time the rates were changed back was in Jan 2026. Now, if you look at the other key aspect of this particular meeting, given the current war and energy crisis, the expectation for inflation hike and weaker economic growth is something to watch out for. Further, the focus remains on the overall, the tone of the meeting of how does the following rate cuts happen in the coming time, and also how does the inflation is panning out for the overall US. Now, if you look at the other key aspect why the meeting remains a key focus is on the back of the chair change. While this might be Powell's final meeting before his tenure ending in the month of May, and the focus will be on who will be the next leader appointed. Further, the focus also remains on the overall change in the particular leadership, given it has been an overhang and causing a lot of distress in the overall economy. Now, while the focus also remains on how does the inflation rate, at the same time the Fed rates and also the new chair pans out under the current tenure of the Trump.
Right. Thank you so much, Jasmeet, for that market roundup. And viewers, L&T Semiconductors is betting big on design-led growth in the chip space. Speaking to us at the Resilient Future Summit in Delhi, Sanjay Gupta, India Country Head and Chief Development Officer of L&T Semiconductors, established the fundamental importance of innovation. He said that large part of the value, as much as 80%, actually comes from design and not manufacturing. He's also highlighted that their focus is on building India-based intellectual property and also strengthening a fabulous model, which means designing chips without owning fabrication plants. And listen into that portion of that conversation.
Semiconductors is all about innovation, and in a semiconductor chip, almost 60, 70, 80% of the value is generated from design. So we are propagating a theme of India-based IP design, India-based fabless design. And then these designs can be manufactured ideally in India, but if India does not have a fab, we can use the global fabs like Global Foundry or TSMC or UMC for that matter. So our pitch is going to be the fabless product design, because that is where the maximum amount of intelligence, innovation, and the sovereign requirements for the country can also be taken care.
And viewers, Anjali Ravi Kumar says that protecting gig workers during extreme heat is now a top priority. Speaking to us, the Chief Sustainability Officer at Eternal highlighted a structured CHAS checkup framework designed for delivery executives, and she's pointed that over 8,000 restaurants have already committed to offering a seating and even access to fresh drinking water for gig workers. In addition, Blinkit stores are being used as shelter points, with dark stores distributing glucose to help the workers stay hydrated. Let's listen in.
So we have a three-pronged approach to protect our gig workers from the impact of heat, and we know that's going to grow. So I call it the CHAV, CHAS and checkup framework. So CHAV literally means shelter. So we have, and full credit to our restaurant partners, we have roped in close to 3,800 restaurants into a restaurant shelter network, which means these restaurants commit to providing our partners with a place to sit, space to charge their mobiles, and of course a roof and fresh drinking water. And this is a big benefit to delivery partners, because they don't actually spend a lot of time at the customer's end. They spend much more time waiting at the restaurant. So it's so powerful that restaurants have come forward to support the delivery community in this way. The second is around, Blinkit stores also have now shelter facilities for delivery workers, so that they can, chill and wait between orders. The second element is CHAS, which is hydration, and this becomes very necessary during heat months, right? We all know this. So we have a glucose distribution program, which we run with through the Blinkit stores primarily, and we are also encouraging restaurants and customers to come forward and offer delivery workers water.
And viewers, exit polls are now beginning to trickle in for the key assembly elections across 4 states and 1 union territory: West Bengal, Tamil Nadu, Assam, Kerala and Puducherry. Now, these early projections will offer the first glimpse into voter sentiment after a high-voltage, multi-phase electoral exercise. While West Bengal remains the marquee battle to watch, with a direct contest between the Trinamool Congress and even the BJP, Tamil Nadu has seen a three-cornered fight, and Assam, Kerala and Puducherry bring their own unique political dynamics into the play. Let's go across to my colleague Gauri Dwivedi, who is tracking the very latest numbers and also trends that's coming in. Gauri, over to you.
It's an extremely important set of exit poll numbers, and I want to qualify this, that these are exit poll numbers that have come out. Pollsters have come out with some of these data points, and some of those trends do indicate two very important factors. One is that most pollsters do indicate that BJP will retain power in Assam. That's very significant, which means that the bastion of BJP in the northeast remains, and Congress hasn't been able to make much of a dent in Assam, despite some indications that lower and upper Assam may vote differently. That's point number one. Point number two, as far as Tamil Nadu is concerned, most polls do indicate that DMK is set to return to power. MK Stalin will come back, is what most of the polls do indicate. And the AIA DMK has not been able to create that kind of a dent. More importantly, the new factor, the X factor in the Tamil Nadu elections, which was actor Vijay, he's been able to get, by some polls, about 23% vote share. And that has really hit AIA DMK and its chances to form the government. The last, most importantly, Battle of Bengal. Well, there has been bumper voting in both phases, phase one as well as today as well. The second phase, which just ended, about 89.1% has been the kind of voting, bumper voting. And some polls, and that's where the pollsters have swung from forming TMC government to forming the BJP government. So there is an entire host of numbers, some predicting that BJP may actually form government in Bengal for the very first time. There are some that indicate that Mamata Banerjee may actually strike gold once again and come back to power for the 4th consecutive time. Remains to be seen how Bengal really shapes up. But one thing is for sure, this will likely have a huge impact in terms of the national political landscape as well. If MK Stalin retains power, he continues to be a very strong opposition leader. If Mamata Banerjee comes back, then she, of course, will be the towering opposition leader for the Indie bloc. And finally, in Kerala, if Congress comes to power, it will have some sort of a very important, I wouldn't say solace, I wouldn't say consolation, because Kerala is a very important state, but it will add some muscle to the Congress as well, which right now has only 3 state governments in India.
Right. Thank you so much, Gauri, for taking us through those exit poll numbers there. And in fact, viewers, the battle for Bengal is reaching its final moment of truth. As voting concludes and exit polls begin to trickle in, the big question now is, are we really looking at a status quo or the start of a political reset? And this isn't just about one state. The verdict here could, well set the tone for national politics going ahead as well. So joining me now to decode the numbers and the narrative is Yuvraj Pokharna. Welcome to the show, Yuvraj.
Thank you. Thank you for having me.
Yes. So, Yuvraj, we've seen the exit polls, getting the direction right, but also missing the scale, especially in West Bengal. In 2021, that they projected a close TMC-BJP contest, but the actual result was a landslide for the TMC with over 210 seats there. So how seriously should we really take today's numbers as well, where half of them are saying that BJP, will come to power, whereas half of them are saying that TMC will stay. So what's your take on it?
Himanshi, for starters, I don't compare this election, or I don't juxtapose this election campaign of the BJP with regards to the 2021 poll. The 2021 poll that the BJP, again, wholeheartedly fought was completely on 1M, the Modi plank or the Modi magic. But if we juxtapose the 2021 poll campaign with the current 2026 poll campaign, we can easily vivisect the campaign into 5 to 6 M's. The first M being Modi, the second M being Mamata, the third M, majority. That is, BJP is now vying on the Hindu consolidation. The majority is 73% voters of the state. Those are Hindus. So BJP has successfully consolidated those. The fourth one is the Muslim factor. And the fifth, one of the most important factors that decides any election in India currently, is the M, Mahila factor. And just on a lighter vein, the sixth M factor to me is the Machli factor. Every leader vying for people's mandate is somehow brandishing a machli, a fish. Ke Omi machli khate, Omi machli khate. So these are the 6 factors that to me I find are the 6 deciding M's of 2026 Bengal campaign.
Right, Yuvraj, TMC's strength has been direct benefit schemes and also grassroots delivery, while the BJP is pitching governance, infrastructure and even central schemes here. So what really seems to be resonating more with the voters this time?
Himanshi, if we divide the Bengal for the purpose of understanding into 2 phases. Phase 1, taken into consideration, which was done on April 23rd, consists of northern part of Bengal, which is mostly rural area. It consists of the Hindu majority, Matwa, and the Bongbashi population, Rajabongshi and Matwas, Hindus. These are tribals, these are ACs, these are what we call in Bengali the Choto Lok, or the depraved and deprived classes. So they have very limited issues. The issues of Muslim Bangladeshi infiltrators resonates with them. The issue of Hindutva resonates with them. And they somehow are now, after a 15 years governance or misgovernance, depending on what side of the spectrum you are on, of the Mamata dispensation, is now turning into grave anti-incumbency. So they somehow see Narendra Modi and the Hindutva-led BJP party as their whole savior. They are now ambitious. They want all the central schemes that so far Mamata Banerjee has not allowed to penetrate in the hinterland of Bengal. They are now aspirants कि हमको ये scheme चाहिए, हमको आवास योजना चाहिए, and they are now vying for the Annapurna Bhandar Yojana, which is the counter of Modi against Mamata, where Mamata Banerjee is giving 1500 rupees to Mahila women, the women voters of Bengal. Modi ji has announced 3000 rupees, exact double amount per month. So this is the hinterland, northern Bengal. If I come to today's voting, it is what we call the presidency area.
Yeah.
The fortress